Hos Coprix får du denne uken 25% rabatt på grill- og wienerpølse fra Gilde. Da er det fort gjort å spare penger. Velkommen til Coprix.
You've always had that sociopathic je ne sais quoi about you.
Also at 1:30, we will get US retail sales. And later at 3 p.m. UK time, Fed Vice Chair for Supervision, Michael Barr, will testify before the House Financial Services Committee. Barr has been leading a review of the supervision and regulation of Silicon Valley Bank in light of its collapse. And Mark, regulation around the smaller end of those banks, the regional banks, certainly very much in focus and changes to that. From our perspective, though, from the macro, from what you're looking at on the Markets Live team, I'm guessing it's the US retail sales that take centre stage. Now we're done with the China data, as well as, of course, debt ceiling meetings.
It's absolutely yes, retail sales. And I think one of the things is I'm starting to flirt with the idea, and I shouldn't say this on live TV because I haven't formulated the idea well enough, and I know I'm going to regret saying it, but I'm starting to flirt with the idea that we may not actually see a US recession this year. I haven't really convinced myself, but maybe we're just going to get a mid-cycle slowdown. If the Fed pauses preemptively, and it will look preemptive if they pause right now because inflation is still strong, labour market's still strong, we're not going to recession yet, then we might just get a bit of a mid-cycle slowdown because of the banking turmoil, squeezing credit a little bit, and then we'll ignite another inflationary wave towards the end of the year. I should say, I'm still trying to convince myself of this idea, and if I was really, forced to make a call now, I still think US recession starts at the end of this year. But you'll expect to see me talking more about this idea as the data comes in over the coming months, and that's why US retail sales will be absolutely in my focus.
You've done it now, haven't you? You've opened that box. Right, coming up, we will get to the stocks to watch, including Vodafone. We mentioned this earlier on this hour, the British telecom giant announcing jobs cuts. We'll discuss that and the other stocks that could be on the move next. This is Bloomberg.
Good morning.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to Bloomberg Markets Europe. 8 minutes or so until the start of cash equities trading. The futures picture looks a little bit red. US futures also in the red this morning. Not by a huge amount, though, down 0.25% on E-minis. Let us get to the stocks to watch. Joe Easton joins us from our equities team, and he has a rundown of the stocks that could be in focus. Good morning to you, Joe. Let's start with the telecom space.
Morning, Anna. So Vodafone's statement today is looking pretty messy. While the headline numbers were slightly better than expected in terms of some of their sales, the new CEO, Margherita Della Valle, is wasting no time in warning about the job that lies ahead in terms of turning this business round. She's highlighting very weak markets, and the key markets for them including Germany, Spain and Italy. Germany, for example, 30% of the company's sales, and they're seeing a 6% decline in profit. Overall, she thinks the group profit will be flat for the full year, and as we flashed up earlier in the show. They're cutting around 11,000 jobs over the next 3 years, and also reviewing their Spanish business. We can see on the share price here why they're needing to do that. That's really underperforming the broader market in terms of Vodafone. Then I'm also going to stay in the telecom space, but look at Telecom Italia. Now, some news broke last night that the Italian state is dropping its bid for Telecom Italia's mobile network division. They were actually in a 19 billion euro bidding war with KKR. Both firms were looking to buy that business, but there could be some potential antitrust concerns, and we think that's the reason that the Italian state is pulling its bid for that unit. Now, the big concern is really what this means for KKR, because some investors had expected KKR to up their bid in order to fight off the Italian state. But given the Italian state withdrawing, that might not happen. On that stock. We can see it's been rallying over the past few months as this bidding war progressed, but this definitely looking a bit negative. Final bids for that unit are due in June, and Telecom Italia's bonds did fall yesterday. The stock could be weaker as well. Meanwhile, Boohoo, we've got up on the screen here. This one is pretty mixed. The revenue could fall by as much as 5% at the fast fashion retailer, but they're saying that their profit could actually improve in the second half of the year.
Kun indekser. Kjører bare indekser. Frem til å ha mye mer kapital. Jeg ikke handle aksjer for under 1 million.
The other stock that I wanted to mention is ASOS. This is the big rival. This stock is getting absolutely slammed at the moment. It fell 21% yesterday after JP Morgan announced a massive price target cut. And also lots of investors are actually worried that ASOS may have to do a capital raise, a potential rights issue, as they're leaking a lot of money at the moment. ASOS and Boohoo both tend to trade pretty closely together, as we can see. Those stocks are in a bit of trouble, but potentially a bit of positivity from Boohoo today.
Okay, yeah, interesting. Cracks in the fastest end of fast fashion. Thanks so much to the ever-fashionable Joe Easton, our equities reporter. Joe, thanks for that. What's going on in London? And the mood seems to be pretty negative there.
Kaller seg one-offs. Så de leverte det dere ventet. Men det Finansavisen, vi kan jo ingenting.
Then you could make an argument that stronger wages in the UK, or persistently, strong wages mean more rate hikes. That rate differential might push the pound higher, but we're seeing the opposite today. What's happening?
Yeah, I think that despite, contrary to my initial reaction on the initial readings that we got that had to be corrected, this was a very poor set of data in terms that it was negative on the growth side on jobs, and yet inflationary is still high. So
Veldig rar den bevegelsen hadde går i USA. Altså. Det har vært sånn hver dag. Du åpner ned, og så closer det opp. Åpner ned, closer opp. Åpner ned, closer opp. Åpner ned, closer opp.
Okay, Mark, thanks for spending the past hour with us. The Open is up next. Futures have been pointing slightly weaker. US futures also slightly weaker, waiting for US retail sales later on. ZEW data out of Germany, and the debt debate continues. This is Bloomberg.
Fy faen, tenk at det er 17. mai i morgen. Jeg aner ikke hva faen jeg skal gjøre for noe. Det er kjipt liv, altså. Hallo. Nei, bare samme som det går. Full fokus på USA rettigheting. Ikke noe mer. Det er ikke noe. Det er liksom, det er helt dødt. Full fokus på samme som det går. Gjeldstak og sommerferie vil bli avslagt. Greit, kom igjen på det.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means, you know, for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Right, guys, I guess we're talking now. You know what?
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep Green World Cup. This is a three.
As the economic picture does. To be okay is getting ready to make this decision.
Denna Reclamen for Bodo. A response auf Weitero. Som fler deg til Bodo. Og 40 Andre Verdens Vakrista Stetter.
We're seeing a little bit of pressure on the DAX, down 0.1%. Same actually for some of the other indices around the world. Japan actually boosted higher by some optimism in the economy. Overall, US futures also pointed higher, but we're not sure why.
Yeah, Fed officials coming out, a number of them suggesting that maybe they're comfortable
Lite
with
tidlig å gjøre det, men
from the Fed in terms of their decision making. And of course, you have those debt ceiling talks. The Republicans, McCarthy, coming out and saying there has been no progress so far.
Venter litt med å tåle den har ikke satt seg helt ennå, men jeg synes markedet er ganske småslapp.
The FTSE 100 currently down 0.2%, lining up with the futures, which pointed to a bit of a risk-off sentiment across these markets. The China data then, that disappointment, as we said, across the data spectrum coming out of China. But for me, what really stood out was the unemployment rate amongst the young population, 16 to 24 at a record high. That is a major concern for the government of China. The response, of course, in terms of the fiscal and monetary response is going to be crucial. The CAC current over in France down 0.3%. The FTSE 100, of course, here in the UK down 12 points. We're looking and gauging that wage data and the unemployment numbers. So some claims ticking up, the wages coming in higher than the previous month, but slightly lower than estimates. So a bit of a mixed picture, but as we mentioned, the pound taking a hit, and we'll look at that shortly. The Italian FTSE currently down 0.2%.
Men har ikke fått satt seg ennå, så det gjør meg litt så småskummelt.
And in Spain, the IBEX off by 11 points. Across these assets then, let's switch it on, see how things are shaping up. The focus on Japan, really interesting story there, just highlighting for you as we switch the board in terms of the topics, getting back to levels last seen in the 1990s. Japan is looking attractive to many an investor. There is no recession in line, or at least being lined up for Japan at this point. And of course, inflation and the inflationary dynamics there are very different indeed. The corporate impulse around returning cash to shareholders has driven this rally as well. We'll see if that can continue. Can Japan be an outperformer this year? The futures in the US pointing lower by 0.3%. Sterling, there's the knock there, down 0.3%, pairing some of the heavier losses on the pound. 124
gevinst på den ene, tatt gevinst, sitter fortsatt short her. Går short på nytt her oppe, så kommer opp. Går ikke long med det første. Futuresene ser tyngre ut, oljeprisen holder seg litt tilbake.
$75 a barrel on Brent as things stand, Fran.
Tom, so there are 20 groups that make up the stock 600, and actually all of them are on the downside. So we're seeing a lot of pressure on telecoms, for example, down 8%. Basic resources, construction, really there are only two industry groups that are on the rise today overall as an industry group, and that's technology gaining 0.2%. Utilities also on the up. Of course, a bit of worry about volatility going forward, and then margins is probably the one thing that analysts are trying to figure out.
Okay, we kick off here in the UK
gevinst
then.
på
Wage
shorten
growth, as
nå
we mentioned,
ute.
accelerating in the first quarter, suggesting little
Fortsatt
let
short
up
der, tok
in
gevinst
the
på
inflation
shorten, gjort
pressures
2
worrying
shorts
the Bank of England.
allerede.
Let's get the analysis then with Bloomberg's UK
Fortsatt short.
correspondent Lizzie Burden. Lizzie, let's break down these
Kjøre
numbers
ny
then
short.
for us. What stood out
Du
to
skal
you?
falle videre.
Well, actually, Tom, Bank of England bets have been pared back off the back of this data. And as you say, the pound has fallen against the dollar and the euro. And what markets seem to be focusing on is the payroll numbers. A big miss there. But economists that I've just been speaking to are saying this is subject to huge revisions. So what they're actually focusing on in their commentary this morning is the narrative that, yes, the labour market's still tight, but you're seeing signs of cooling. So if you look at unemployment, it held steady, but actually you saw it was expected to hold steady, but it ticked up slightly. Pay growth wasn't as high as expected, but there was still an increase, and economic activity fell. But you did see a record in terms of the number of people who are economically inactive because they're long-term sick. Now, that's not a good look for the government, given it's one of its top 5 priorities to cut National Health Service waiting lists. And they're not going to be helped in that endeavour by another figure out this morning, which is that the number of days lost to industrial action was up again in this data, including doctors and nurses. So you can see the strikes problem feeding into the inactivity problem, adding more pressure on the government to settle with the unions.
Lizzie, we also heard from the BOE chair, really interesting on AI and how that will transform our economies going forward. Any clues on the future path for rates?
Yeah, really interesting comments on AI, saying it could be a win-win in terms of boosting productivity and living standards, but also for the central bank, which the former Bank of England Governor Mervyn King was on Bloomberg TV complaining about yesterday.
Det penger på shorten? Veldig penger på shorten. Det veldig penger på shorten nå?
Given the war in Ukraine and the pandemic.
Fytte helvete, nå har vi penger.
But in terms of the future path for rates, Hugh Pill says he hopes that the hikes are over. It's the clearest sign yet that we've had that the tightening cycle is done. And he will take the opportunity to apologise.
Veldig penger på shorten. Veldig penger på shorten.
Britons need to accept that they're poorer. He said that he acknowledged that it is the poorest Britons who are going to suffer the most, but he says it is the blunt tool of interest rates that's going to have to be used to deal with this problem.
Lizzie, thanks so much. Our UK
gevinst. Masse penger.
Joining us to dissect markets is Tristan Hansen, multi-asset fund manager at M&G Investment. Tristan, thank you for joining us. I mean, there's a lot going on, future path for interest rates, but also trying to understand inflation. Then we have a good story on Japan today. What do you think will be the main diversification? How you win at portfolio management and you go in the next 3 months?
Well, I think one of the major features so far this year is trying to keep things quite tight because it's been a very uncertain, difficult economic backdrop whereby you've had ongoing strength in the labour market until recently, perhaps, and some of that UK data is quite interesting. While some of the other indicators have been softening a bit, meanwhile rates have carried on rising, and yet the market is pricing in rate cuts. So it's been quite a convoluted, difficult consequences of COVID and war in Ukraine, etc. I think the key going forwards here is going to be to watch the labour market and those job claims data in America on Thursday and ongoing weeks. Because if that labour market cracks, then I think the narrative about inflation will fall to the background and it will be more about growth and jobs growth.
And it will be clarity clearly in terms of where the Fed goes next. Are you ready? It sounds like you may not be ready to bank on a pause yet from the Fed. Are you starting a position around that? Do you push back on the idea, the bets that there are going to be cuts coming through towards the end of this year?
Yeah, we wouldn't position around an individual meeting or an individual couple of meetings, but I think we are towards the end game of this rate hike cycle because you're already seeing cracks in the system with regards the banking system in America, the jobs data potentially softening here. They've done a lot. They've done 500 basis points since the lows. These effects always work with lags.
Yeah, but so you're expecting a pause in interest rate hikes. Are you actually expecting a cut, or is that wishful thinking from the market?
Who knows? I think I'd be surprised if they're cutting this year, but in the last few cycles when they have started to cut, they tend to cut by quite a lot over the course of the subsequent year. So on a risk-adjusted sort of probability basis, the market is pricing in some chance of cuts, but if they cut, they'll probably be going further. And that's how you get this kind of expectation of rate cuts on a sort of risk-adjusted basis.
Can they cut and keep quantitative tightening going? How are you thinking about the path forward for QT from the Fed?
Well, it's a complicated situation, isn't it? I think the direction of change will be towards easing off, and then they've got time now to wait and see what the after effects of the 500 basis points so far has been. And I don't think they need to be in a hurry at this point in time. Inflation's already starting to come down a bit. I think pausing makes sense here.
All right, Tristan, thank you so much. Tristan Hansen, they're a multi-asset fund manager at M&G Investment, stays with us.
Okay, let's check in on some of the stocks on the move for us today. A couple of telecom companies, Vodafone updating in terms of its strategy. The relatively new CEO at the helm of that company, of course, the earnings numbers coming through as well. But in terms of detailing efficiencies planned, including 11,000 jobs to be cut. They are reassessing the business, strategically reassessing and reviewing the business in Spain and Germany, so crucial for Vodafone as well. That remains in focus. They're trying to streamline this business.
Hvis vi går videre opp nå, så dekker jeg meg mellom
3%. The fourth quarter services revenues actually came in as a beat, but this is the restructuring and a few more details coming through from the new CEO in terms of how to position this company. They are, though, forecasting essentially flat revenues for the year. Telecom Italia, bad news in terms of the bidding process, at least from the perspective of Telecom Italia, one of the big state lenders over in Italy, pulling out and ending its bid for the networks business of Telecom Italia. There was a bidding war going on with KKR, and that is a part of the Telecom Italia business that had been at one point valued at about $21 billion, the network parts of Telecom Italia. So that moves to KKR in terms of their response. Boohoo coming in with an upgrade, a little bit more optimistic after the struggles in terms of supply chains and inflation, of course, for the fast fashion retailer. Look at that, the stock rallying 11%. A little bit of respite as they upgrade their guidance in terms of what they expect for the rest of the year, improvements that they're seeing coming through from the cost cutting at Boohoo, and they are starting to see a little bit of deflation in the supply chains as well. So a little bit of optimism coming through for that stock that has been under pressure. Right, coming up, Atlanta Fed President Raphael Bostic says he would hold off from raising interest rates again. More from our exclusive.
Prøv den nye kapselmaskinen L'Or Barista Sublim. Med en kapsel av din favorittkaffe får du oppleve fyldige smaker og forførende aromaer. L'Or Barista Sublim, kaffenytelse i hver kapsel.
Ops har alltid festdagene. Nå får du 30% på frukt og bær til 17. mai-kaka, 8 på Coca-Cola uten sukker til 89 pluss pant, Birkenstock-sandaler til 6,99 og 40% på Coop Kaffe. Hurra!
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Jeg egentlig markedet som faen.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. season is here.
We haven't had a shocker yet.
They are mint.
Nå må det vises Tysklands styrke faktisk. Henter seg bra nå, altså.
I think it's going to be choppy.
Bloomberg breaks the numbers
Og nå har også Tyskland Dagsson en jævla støtte her oppe.
with exclusive expert
Så
analysis.
mulig den må bare gå lang.
Where is the upside in this market?
Do we get answers to that today?
The bottom line speaks for itself, and that's what moves markets.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
Hvis jeg går lang nå, så går jeg 0. Da har jeg tatt inn det jeg tjente i sted.
In today's environment,
Da må jeg gjøre på
so
nytt,
much
ja. Sånn er
uncertainty
det.
in the economy, I don't think we can really rule out anything. If I had to have a vote right now,
Det ser ganske bull ut her nå, altså. Man tar imot på
but
støtten
as
her.
you noted, we got
Halla,
inflation reading,
halla.
jobs number, or jobs report that's got to come out.
Ha bunker opp med BP og vår vil du holdt solgt til... Nei, de tjener penger som faen.
We at the Federal Reserve probably have more work
Er du på den?
to try to bring
Jeg er
inflation
på, ja.
back down.
Ja.
And most importantly, we should not be fooled
Jeg tror jeg må
by a
bytte
few
rett
months
indeks
of
i
positive
helvete.
data. We still are well in excess of our 2% inflation.
Nei, det var bra på åpning her, og så fikk jeg en rett i fleisen. Tyskland fant ut at nei, jeg skal ikke ned likevel.
Ja, det hørtes ut som Tyskland i et nøtteskall, det. Det hørtes ut som Tyskland i et nøtteskall, det.
Ja, men jeg skjønner ikke hvorfor. Det har ikke kommet noen news som jeg kan se.
Nei, det må jo være... Det snakker om at den er så ekstremt shorta.
Ja, det er faen ikke rart.
The long end of the curve, I think, is potentially more interesting because on a multi-year horizon, you've got 1.5 to 2% real interest rates if we're right that inflation comes back down. In the long run, there's a question mark over
Får logge meg inn på TV-en her,
that. If
så
we
er jeg
start to
klar.
worry about growth first, the market, I think, will put aside concerns about inflation for the time being.
Skulle hatt mer penger, så det er shorta nå. Jeg har ikke mer penger.
Quite attractively valued at a positive real yield.
So maybe look at the long end of the curve with the 10-year. You could lock in what 346.
Har du shorta akkurat nå?
On the 30.
Akkurat nå hadde jeg shorta hvis jeg hadde penger.
Has been relatively resilient. Do you see that resilience holding up amid that concern around slowing growth?
Ja, det var bra åpning, kjempebra. Og så er jeg 0.
There has been a surprise so far because at the back end of
you're
last year,
short.
people were waiting for earnings to sort of fall off a cliff. They've been relatively resilient, although not fantastic in aggregate, but that's been enough to get the market higher. But if we are at a turning point in terms of growth,
Jeg skjønner ikke hvorfor den er så veldig sterk nå. Altså, det er bra støtte her nå, men det er ikke noe... Asia er blandet, USA var relativt slapt i går. USA hentet seg inn på close.
Ja, det hentet seg bra inn i går.
Ja, men det gjør det hver dag på Nasdaq, altså. Det åpner ned, og så henter det seg inn på close hver dag.
And given where the S&P's rating is, 18 times PE on a forward basis, I think it's going to be...
Så er det noen spesielle news som har skjedd i natta. Jeg har jo ikke tilgang til den rapporten den.
Nei, ikke noe sånn spesielt, bare litt dårligere enn ventet på detaljhandelsindustri i Kina. Har du penger på shorten, eller?
Nei, jeg har penger om et par tikk.
Nå har du penger.
Nei, jeg er på tikket og havner i pengene. Så nå er jeg pengene. Nå er jeg pengene.
Det var der jeg skulle shorta selv. Jeg var litt tidlig ute.
Ja, da gikk han rett opp igjen nå. Så jeg fikk ikke tallet. Thank you. Hårene ned. Jeg har jo en sånn støttelinje her på banknivåene. Å, herregud, TD 365 sitt chart suger i forhold til trading vi også. Og 15.904 har jeg glemt opp det.
TradingView er vel mye mer detaljert.
Ja, ekstremt mye mer detaljert. Eneste som er kjipt er at du må betale for TradingView, og så må du betale for spesifikke markets da. Så jeg har jo delay på alt som ikke er futures. Men USA har ikke delay på, altså på de store tech-aksjene og Og spotpriser av gull og sånt er ikke delay, heller ikke på Forex-parene, men på sånn som Vixen og Daxen og sånne ting har jeg delay. Og så har jeg delay på hele Oslo.
Det er jævlig choppy nå, altså. Ja. Jeg lurer på hvorfor at det er sommer, det er veldig lite volum her.
Folk venter på tallene nå.
Ja, klokka 11,
I think if we get some volatility in the macro data, which would be
UK Labour Report klokka... Det kom en Labour Report klokka 8 I dag, og så kommer den klokka 11 fra Tyskland. Både Eurozone og Tyskland. Og den UK Labour Report kommer en time siden.
That's always a tricky question, isn't it? Because what can I see that others can't? I would look at
Well, that's how you earn your fees.
Well, that's right. Well, taking good risk-adjusted probabilities. I would say Asian markets are an interesting area. And if you're worried about a global growth...
Jeg holder nå bare short, men jeg tok en jævla forsiktig igjen, så det ikke noe...
Okay, long end treasuries and maybe tilting towards Asia. Tristan, thank you very much.
Tok en liten føler, så du kaller det.
Hansen, multi-asset fund manager at M&G Investments. Okay, let's get the Bloomberg Business Flash now with Sarah.
Fredag blir å være choppy før tallene. Tyskland blir å punkte klokka 11, så sendes Daxen til Auschwitz.
Ja, men jeg tror faktisk at det som skjer nå, at folk kjøper mot tallet. For det her er veldig spesiell bevegelse.
Det jo nesten ingen som kjøper Daxen.
Jo, den går jo opp. Da er det short-covering sikkert.
Ja, for hva var det? Jeg fant ut I går, siste uka vel 83% short.
Kødder det så mange?
Ja, den helt vilt.
Det ikke så rart da. Jeg vil gå longer nå, hvis ikke den kommer videre ned sånn.
76% short I dag, ja.
Hvordan du ser det, Tredje?
Det vel på MC Markets, så får jeg vel se...
Men det alle på MC? Det... Ok, det på IG. Ok, så det alle IG, så sitter alle short-Daxen.
I'm Sarah Halls, and this is Bloomberg. Tom, Francine? Sarah, thank you so much. Sarah Halls in Dubai.
Men IG-klaren gir vel ikke bare informasjon om IG, men den gir vel informasjon om instrumentet I seg selv. For den ser vel I ordreboka hvor mange det som ligger short og long. Ja. Så 76% av alle handler I Daxen nå short. Da det ikke så rart at han pumper. Alle har lyst til å shorte driten her. Men jeg kan gå på short på ny topp, du må bare si ifra. Jeg har posisjonert meg jævlig lett.
Jo, men nå kommer det tall 11 da, så kan det gå alle veier nå.
Ja, 1,5 time på hente inn. Jeg posisjonert sånn at vi kan faktisk gå på til all time high, og det går inn og fint.
Det vel nesten på all time high.
Jeg vil bare 1,6% unna, eller noe sånt, 1,3% unna. Skal se, vi
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest.
Men det
Nei, vi 0,6% under all time high.
Det kan hende at den blir kjørt opp mot all time high, skjønner du.
Apply that to someone's scalp.
Folk ligger sikkert med giga-stopploss på all time high.
Det jo letteste shorten I verdenshistorien da. 16,288 ATH, vi jo på 15,9 og sånne greier nå.
I want black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Eller 16,288 all time high I
det lettere å se det på IG, synes du, kontra TV?
From the world of politics to the world of business, every weekday at 5 p.m.
Jeg fant det ikke på TD. Vi satt og lette I går.
Hva er lettere på TradingView, synes du?
Og se på en måte hvor langt unna det ATH og eller sånne ting.
Det på grafen generelt.
Grafen altså TradingView og Webull synes jeg har de 2 beste grafene, plattformene, mulighetene, alt. Det en helt egen liga, kan ikke sammenlignes. Så hvis det noe man skal sette barn etter, så det TradingView.
Det her ser ut som man kan gå ganske rett opp nå, altså.
Ja.
Welcome back to the Open, everyone. We are 22 minutes into European trade.
Tom was telling you if you test på all-time high, og så... Ja, jeg vil jo aldri bryne.
Japan that lifted a lot of the Asian stocks, that's also lifting some of the US futures, not really translating at the moment European stocks, but they're kind of moving sideways. If you look at the DAX, it's pretty much flat. So China's consumer spending and industrial activity grew at a slower pace than expected in April. That's adding to concerns that growth in the world's second largest economy is losing momentum. Now let's bring Bloomberg's Jill Dices from Hong Kong. Jill, good morning.
Fått med den voldtektsgreiene I Bergen, eller?
Ja, men det jo artig at 2 av dem jo faen med sånn her... Det jo sånn her... Hva heter det for noe? TikTok-personligheter har jo seg skikkelig cringe.
Du ser den her, nå vurderer jeg rett og slett ta shorten min og gjøre på nytt, altså.
Gå på short på nytt?
Nei, og så dekker man også stoppe litt, for det som skjer nå at du kan få teknisk... Det kan bryte opp mot all-time high, hvis det bare 0,6 unna.
Retail sales popped 19% or so, but that was still also under economists' expectations. And fixed investment actually gave up
Nei, det ikke 200% Hvorfor det stor forskjell på futuren og DAXen? Nei, han langt unna all-time high her, altså. Hæ? All-time high på futuren, så han bare, det jo så lite mening nå. All-time high på futuren, så vi bare 0,5% unna.
På futuren?
Ja, mens på selve DAXen så vi 2,6% unna.
Ja, for du ser gjerne her nå, det her sånn der... Det her veldig sterkt, altså.
Ja, akkurat nå så ligger DAXen med delayen jeg har da, så ligger han på 15,904 og all-time high 16,288, så det jo 300 og noe tips unna. Men på futuren så her, så det all-time high på 16,08, og nå vi på 15,925, så da vi jo bare 80 tikk. Nei, ikke det engang. Ja,
se her nå. Men de tallene kommer 11, eller?
Ja. River han av gårde.
Ja, men det ikke noen nyheter som jeg har fått som gjør det. Det jo bare teknisk.
Ja, ingen nyheter her heller. Jeg har oppe newsdesken og alt.
100 penger fra DAXen på all-time high, ifølge Prosecco.
Det må være enda mindre nå. Ja. 78 poeng til meg. All-time high.
Okay, great context. Thank you. Jill Dices out of Hong Kong on that China data. Let's switch focus to UK data, though. The growth in terms of wages in the UK coming in higher wage growth, but versus the previous month, but not as high as some of the estimates. And you're seeing a repricing in terms of across the gilt curve and also the pound under pressure as well.
Det kan bli spenstig det her.
The Bloomberg economics team saying that this data shows clear signs that the heat is starting to come out of the jobs market in the UK. And you can see
akkurat nå så tror jeg det sånn hipp som happ, for du får tall 11.
Yields down, the pound off by 0.2%. Stay with us. This is Bloomberg.
RSI Daily, ja. Daily RSI er ikke så, hun har ikke truffet 70 eller noe. Men 1 minute RSI, den er hard.
Så 76% er short aksjen nå.
Ja, I dag.
Det er faen meg sjukt, altså.
Det begynner å nære seg litt sånn 2008-tilstander når det kommer til short-prosent.
Men det som skjer er at nå har du market makers som kan kjøre alle stopplås. Hvis det der er offentlig informasjon.
Ja, alle som har tilgang til statement-informasjon har tilgang til det.
Ja, for det er på IG det står?
Ja, du kan finne på de fleste brokerne. Det er jo sånn informasjon om instrument, så skal du kan se i øyeboka hvor hardt eksponert et instrument er, long eller short.
That's the surprising finding of data analyzed by Bloomberg from Reed Recruitment.
Nei, Marius, folk eller institusjoner driver jo og kjøper nå når de ser at nesten alle er short. Da har jo de lyst til å presse ting opp I taket, for at da får du masse likviditet av folk som sitter short som blir pushet I stopplåser.
Ja, det er manipulering.
Det er bare sjukt at man får det til på fuckings Germany 40-indeksen. En fuckings indeks. Jeg har skjønt om det har vært I Equinor som har vært borte før, eller BS-en, men Hvor mye portefølje har de oppe I mai, forresten?
Det litt usikker på. Det I pluss.
Herregud, Lerøy har jo dødt til 5% på Open. SalMar 2,3% på Open.
£760 million of spending on infrastructure and regeneration. Manchester is one of the oldest devolved areas in England, and there are signs that that's really beginning to pay off. What's on Jeremy Hunt's plate now is whether he can spread that success to other regions.
Jeg gjør ingenting nå, jeg blir ikke helt klok på den bevegelsen som jeg har her, altså.
Jeg er ennå short fra 15.908, men det er såpass liten posisjon at den kan jeg holde forbi all time high. Så. Det er deilig det. Åh, jeg er så godt å sette en posisjon som trenger man ikke å stress.
Ja, jeg er I null nå, så det var den gevinsten.
Ja.
Welcome back to the Open, everyone. 30 minutes into the and here are your top stories. China's consumer spending and industrial activity disappoint in April, calling into question the strength of the economic recovery.
Så hvis du har rett, han skal nok låne seg heller opp mot ATH, og så derifra ser vi hva som skjer når tallene kommer.
Signs that the UK labor market may be starting to cool, even as wage growth accelerated again in the first quarter.
Det her jo helt vilt.
Jeg tok tapet, så gjør jeg alt på nytt. Jeg long nå, med. Så tar jeg bare går short etterpå på nytt.
Yeah. Will the PBOC, more importantly, step up with additional support? Currently, the downside for European equities, 0.2%. We continue, of course, to watch the politics of DC and the talks that are expected later today in Washington.
Hvis hele verden short nå, hvis hele verden short nå, ja, så kan det jo gå ganske mye opp.
Ja, når over 2/3 av de som handler det instrumentet short, så
Tech is performing quite well.
Kan det bli hardt.
Short opp nytt.
At least so far in the session, tech up 6%.
Jeg kommer til å gikk en videre opp.
Bottom of the list though, telecoms, and you can look to Vodafone, but Telecom Italia as well, and the decision by a state lender to pull away from a bid for the next of that business. Telecoms, the worst performing sector.
Det kan jo gå opp helt til
Now, the latest 13 show Michael Burry, the money manager made famous in The Big Short, now has a big long when it comes to China. For more, let's head over to Valerie Teitel with the very latest. Valerie, tell us more about some of these positions.
Look, Michael Burry is going big on China.
Over
the first quarter, he tripled his exposure to JD.com and doubled his exposure to Alibaba. taking his 50 billion portfolio now
Jeg liker ikke Doxen, altså. Han
1%
gir litt mening.
to Chinese tech names. Now, his 13F filing also showed he had hardly any exposure to U.S. tech. It was all China as the
Men det
tech
kan
trade
gå
heats
videre
up.
opp.
He's
Men det er litt motstand her nå.
for Chinese tech to outperform the U.S. He also was a big
Ja.
holder of some U.S. regional
Da stiger
names,
det opp her.
notably First Republic, PacWest, and Western Alliance. He's been quite vocal about his positioning there. Now, that stands at odds from what we've heard from Warren Buffett's Berkshire Hathaway. In their 13F filing, showed they exited their U.S.
Du har ikke hørt noe mer
regional
fra kontogreiene?
and U.S. Bancorp.
Nei.
And Val, another
De har bare fått pengene.
trend that we're seeing in terms of these hedge funds is the money that is
Betalt pengene,
flowing
altså, hvis det er
into
ok.
AI, the AI
Ja, det
trade.
har de
What
ikke
are the
gjort.
details on that?
Two of the most notable family
Skilled check.
offices, that's Tepper's Appaloosa and Druckenmiller's Duquesne, both increased their holdings of NVIDIA. Now, NVIDIA stock has been one of the main winners from the AI buzz. The stock is up almost 100% year to date. And also these family offices both increased their holdings of other tech names. Tepper invested a new position in Cathy Wood's ARC Innovation Fund.
Surgassen
And then
har
when it comes to
pumpa videre.
Druckenmiller's Duquesne Fund, they've invested
Herregud, det er 8 longer gass.
who's one of the big investors in OpenAI, who is the holder of ChatGPT. They've also invested in Google and some other healthcare AI names and added to their U.S. big tech names as well. That's Uber, Amazon, and Meta. Clearly, their
Line short på
offices are
16,
chasing this
12.
AI
Ja.
trade and are still very positive
Det er nok ikke
on
dumt.
big tech in the U.S.
All right, Valerie Teitel, thank you very much indeed for the latest on those hedge fund filings and that support, that money coming through for AI. Let's stay on the AI conversation and tech in particular then, and bring in Shmuel Chafetz, founder and chairman at Target Global, managing a pan-European tech investment firm with more than 3 billion euros in assets AUM. And to date, the business has backed about 13 unicorns and 7 IPOs, including the likes of Delivery Hero and Revolut. Not an IPO.
En ting jeg ikke liker med trading, er at han ikke klarer å ha holde grafene som profesjonelle ut fra timeframen.
But let's start with the AI question and how you
Å,
differentiate
herregud, Daxen ser dum ut på 5 minutters timeframen.
real world benefits. How are you looking at that?
Hva tenker du?
Nei, det ser jo ut som han burde ha poppet en Viagra klokka 9, og derifra er det bare skjøtt rett på.
Ja, men det er noen news ikke vi har fått med oss, for det der er ikke normal bevegelse.
Det er ingenting.
Men det må det være. Han kan ikke bare snu fra å være ned 0,2 til å gå i blått på 1 minutt.
We're not seeing autonomous cars down the street, maybe in San Francisco somewhere, but you're not seeing it yet. It's a huge technical problem.
Nei, eneste nyheten jeg har fått opp til enighet i jordbruksoppgjøret, det tror jeg ikke på i den tyske børsen, skal jeg være helt ærlig.
Men tallene i Tyskland kommer klokken 11.
Ja.
Han har hentet det der da.
It's still nascent. It's still something that even the people.
For det er jævla
I feel
kontent her nå.
and I understand, that some of the earlier technology, it took a long time to adopt, like even the browser and the web, but this is changing everything like now. I mean, I know kids that are not even going on Google anymore because they just put in, ChatGPT. So where are we going to be in 6 months and 9 months? Is there a worry that we're going to be overrun actually by how fast this thing takes over?
I think that, again, I think we're overestimating how mature this technology is.
Skal vi se, jeg setter og ser gjennom de store tyske avisene, og ingen spesielle ting som er poppet i avisene de siste timene.
That's going to happen faster. But the ability to put it in mission-critical systems in healthcare, in business applications, in financial services, that's quite far away. I think that's still
what's far away.
Hva sa for noe at du er?
Jeg er short fra det her nå.
Oi, jeg skal kolla til her, så jeg har noe. Jeg har en masse å spille på. Jeg vurderer å gå på short her oppe.
I think we're very excited, for instance, about the possibility of taking things in a company and actually using AI to get
Ja, den bevegelsen så skjønte jeg ikke noe, ass.
Into a process. So, for instance, for customer support, right, you can put a lot of it in the hands of an AI.
Jeg kan ta gevinst, så kan jeg gjøre det 1000 ganger.
Deep understanding what you need and really
Jeg vet ikke hva jeg gjør det.
Det er jævla dumt å gjøre det også, for man er vel på det her, så kan du jo faktisk bare blafre ned her.
The thing that again,
Det var jo ikke noe logikk i den bevegelsen i det hele tatt.
Quicker is much like the cloud, AI will enable people to build things
Nei, jeg tror sånn har lyst til å pushe videre opp, da.
It'll restart the
For
cycle of innovation.
Jeg vet ikke, kan være en liten fake-out. Kanskje man skal opp og teste det på nytt, og så går igjennom.
So how are you investing along some of those themes? Are you sitting on the sidelines until you see more clarity, or are you starting to put money into play?
I mean, you can't sit on the sidelines
at
the end, but I think that we're looking a lot at enabling technology. So the data side, I think data integrity and the way that you get data and structure data and bring data into this process is super important, right? Because in the end, it's sort of a garbage in, garbage out type of thing. And to me, every software company is an AI company. A software company that doesn't have an AI strategy is on the way to demise. So it's not investing in AI companies, it's making sure that every software company that we're invested in understands how it leverages AI to make its business faster, better, more cost efficient. That's like a cloud strategy.
What does if you target it, are there targeted pieces of this ecosystem that look like good value right now?
I think everything that's an enabler looks like good value. So something like NVIDIA, that to me looks like good value because it's pretty clear. I think companies that have a clear strategy around how they leverage AI for their core product, so enterprise software companies have a clear strategy, that to me looks like good value. I'm a little skeptical about sort of the level one, right? The ChatGPTs, OpenAIs. Again, they're brilliant businesses or brilliant technology companies. They still don't have a proven business model. They still have, it's still a question of where the value in this industry is.
Jeg er jo på motstand her, da, så det er jo å bryte gjennom. Bryte han gjennom, så går han nok hele veien opp til det short-nivået.
That's going to be the proprietary piece of
Talk to us more broadly about the funding environment now for startups. We've seen job cuts, closures and collapses. How bad is it out there?
It's pretty bad. I mean, I've been doing this for 15 years, a bit more, and it's definitely the worst I've seen, including 08, 09. And I think it's the worst because of the unclarity, right? There's so many moving pieces, macro.
Lurer på om jeg skal gå null, altså bare dekke meg og ikke gjøre noe, for den bevegelsen her er bare helt sånn kunstig fjern. Du har hele Europa. Du har småtung, så er det Dagsen på day high. Med ræva makro. Nå er det voldsomt da, jeg har jo veldig zooma inn da. Det er ikke sånn sykt, men det er bare jævla spesielt.
Det er ganske vilt hvis du ser på det på 5 minutter timeframen også.
Ja, jeg så på 3 minutter også. Ja, jeg slår på nytt da. Det gir meg ikke.
So nobody wants to misprice and ever ask.
Det kan ikke gå opp på så dårlige nyheter. Da er det gærne.
To deploy money, not to sit on money. That's the truth of this industry, right?
Ja da.
And it's going to have to change. So I think it will take another quarter.
Ja, ja. Det kommer ned dit igjen, så går jeg bare null. Jeg har ikke tjent en dritt.
Jeg er penger nå, så... Nei, kom an. Fuck off. Gå videre ned.
Is this because of the ecosystem, or is this also just because of, you know, the banking crisis? So the fact that SVB went under, there's not, I guess, a more natural place for the ecosystem to flourish.
I wouldn't overestimate how impactful SVB was in the industry, right? In the end, we had a very stressful weekend.
Fikk en fin en der.
We started, I think a lot of people in our industry.
Ja, han skal ned. Det er ikke noen grunn til at skal være der oppe.
Treasury management companies, right? I think it's a super interesting place.
Det er grunn til at det er shorter.
But you know, obviously,
jeg fikk 11 tikk på den.
Det er bra jeg sitter short fortsatt.
The Bank of England stepped in, everything worked. No
Ja.
any money.
Da må jeg gå igjen.
So in reality, it didn't have an impact. Everything that's happening in the macro, from interest rates to and everything else.
Og så snur det i det han må gå. Nei.
Optimism is everything. So we invest in money-losing companies.
Det hadde bare vært for tragisk.
So optimism is everything, and right now it's very hard for people to be optimistic. And that just...
Jeg er enig på Seco-gambler, men der hadde han lyst til å snu. Kanskje han klarer det. Kommer han under, så skal han retrace ganske langt ned igjen, ja. Jeg har så der. Kom igjen. Test EMA-en nå i hvert fall.
watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. Even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless.
Balance.
Emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to Bloomberg Daybreak Europe. Good morning. This is Bloomberg Surveillance. Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open. 44 minutes into the European trading day. You're flat across these European equities. Futures in the US on the S&P E-minis in similar state. Nasdaq futures, though, pointing to a modest gain of about 0.1% as we weigh up, of course, the meeting that's expected on the debt ceiling. A bit more action, though, in the gilt markets with the yields down by about 7 points at 7 basis points at the front end.
When it
comes to wage growth and
sånn slip sammen nivå. Markus, det du gjør at hvis du trykker selv, la oss si at du skal gå short en halv kontrakt. Hvis du da trykker selv på en halv kontrakt, så går du short. Hvis du trykker buy på en halv kontrakt, så går du long. Men hvis du ikke bruker hedge, så fungerer det sånn at du nuller ut kontraktene dine. Hvis du har shortet for en halv kontrakt, eller en kontrakt, og så prøver du å kjøpe en kontrakt, da nuller du på en måte ut posisjonen din som allerede i markedet, på det nivået. Men hvis du trykker hedge, så setter du nye og nye posisjoner, så da kan du gå long og short samtidig.
Now, as you say, Morgan Stanley cutting about 7% of their workforce.
Sell er lik short, buy er lik long.
We understand that it's mainly going to affect.
Hva faen, jeg var jo ordentlig penger, jo.
Ja, han bounsa på 15,940 i det du gikk.
Men ja, du vet, jeg må gå. Jeg må bare sitte for å bare gå som det går. Jeg får ikke trade. Nå kom snekkeren, jeg må bli ferdig her.
Så du hjelper snekkeren?
Ja, jeg må si hva han skal gjøre da, men jeg tror det skal ned uansett, så får jeg bare trade når jeg kommer tilbake. Det får bare bli. Jeg har bare små posisjoner.
Skal jeg ringe deg hvis det popper ordentlig ned og du står gevinst?
Jeg tror det at hvis det faller videre nå, så kommer det til å falle ut hele dagen, for det er ingen grunn til at det skal opp. Det er kun, det jeg tror skjer der nå, er kun marketmakere som kuker og setter folk i stopp. Det er ikke noe grunn til noe annet, hvis det ikke er noen news.
Ja, skal du bli borte da resten av dagen, eller?
Nei, jeg er her. Jeg kommer til å gå frem og tilbake. Jeg må bare hjelpe til, så jeg blir ferdig her, liksom.
Ja, men det skjønner jeg. Du må jo prioritere huset litt også. Så lenge posisjonen ikke er så stor, så er ikke det noe stress.
Nei, det er ikke noe å si. Det er ikke noe stor å
vente. Ricky tapt forresten nesten $10,000 i går.
La meg gjette, han gikk short.
Yep.
Ja, og så fikk han rett i trynet på close, eller?
Ja, på alle swing patterns så fikk han rett i trynet.
Jeg regner med det. Og der fikk jeg gadd å trede i går i USA.
Det var vel på grunn av debt ceiling-håpet.
Ja, det er det som skjer nå. Det er det som skjer nå. For nå er det kun spekulasjoner på hva gjelden og de vil gjøre. Det er ikke sånn som det greiene her nå. Det her er liksom bare sånn. Du må bare være med, liksom. Du kan ikke. Sånn som det der draget her. Det er jo 90 grader rett opp uten grunn. Ja. Jeg ser jeg holder posisjonen. Jeg går i pluss ut dagen i dag, 100%.
Har du det?
Also, to some extent, remarkable. But when you look at inflation, Francine, you had a double revision up for this year, 5.8%, and next year is 2.5%. So again, that's another big revision. Excuse me, 2.8% next year from 2.5%. Overall, that's the biggest concern for finance ministers here, who say ultimately for the consumer, this is becoming a headache. Politically, too, it is difficult to manage because, as you know, there is now a big election cycle that's kicking off in Europe with the big Greek elections, but also moving into the European elections next year. So a lot of the focus and the momentum here is what to do with
Veldig, veldig små posisjoner, så jeg er forberedt på å kan holde dem lenge. Så det her er ikke noe... det her er mer forberedt som en sving enn en scalp, egentlig.
There are clearly some signs that the inflationary dynamic is beginning to change. From an overall level, it's moderating downwards from where we were a year ago, but inside that inflation, we're still seeing core inflation at too high a level. And I do believe that across 2023 and 2024, the ECB and governments can take the steps that are needed to get inflation back down to a level that it will not be the challenge that it is today for living standards and for the ability of households and businesses to trade and live.
And that was Pascal Donahue, the head of the Eurogroup, speaking to Bloomberg exclusively yesterday, to say, well, trust on the European Central Bank. They have to do their job. But again, this inflation headache is not going away for policymakers anytime soon. I mean, that was the clear message yesterday.
Okay, Bloomberg's Europe correspondent Maria today on the ground in Brussels, of course, on the inflation headache for these Eurozone leaders. Thank you. Coming up, US House Speaker Kevin McCarthy says debt ceiling talks are, quote, nowhere near a resolution. We bring you the latest. This is Bloomberg.
I helvete så det pump.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that.
Prøv den nye kapselmaskinen L'Or Barista Sublime. Med en kapsel av din favorittkaffe får du oppleve fyldige smaker og forførende aromaer. L'Or Barista Sublime, kaffenytelse i hver kapsel.
Hos Coprix får du denne uken 30% rabatt på 400 gram Coop karbonadedeig. Da det fort gjort å spare penger. Velkommen til Coprix.
Prøv den Prosecco. Prøv å holde deg til stoppen din og sånn. Jeg mener jo personlig at du går egentlig ikke imot markedet med å gå short her når ting tungt og det ingen grunn til at det skal oppover.
Piker det da?
Ja.
Jeg får liksom ikke fulgt med for å bli sånn det blir.
When it comes to the debt ceiling aimed at ending the debt ceiling stalemate in Washington. That should be a little bit later today.
Men jeg har sett rundt, det ikke noe news nei, å finne. Forrige nyhetene fra Tyskland at Zelensky takk Tyskland for hjelpa. Faen har det å si.
Also at 1:30 we're getting US retail sales and a little bit later 3 p.m. UK
Nei,
Fed Vice
Barr
will testify before the House Financial Services Committee. Now this is important because
Ja, man har kontostørrelsen til det. Jeg kommer snart I pengene på en shorten min.
Okay, let's get a roundup of the first word news now.
Jeg også heldig at jeg trodde jeg gikk short på toppen rett før den store candlen.
Saying that the US is already paying a price for its failure to raise the debt limit.
Men jeg tar så sinnssykt små posisjoner at det gjør meg ingenting å sette feil.
Helt riktig, Prosecco. Jeg også fikk noe rett I trynet. Jeg kjente bra på åpning, og så fikk vi rett I trynet.
House Speaker Kevin McCarthy, meanwhile, says the two sides are nowhere near a deal on the debt ceiling.
Jeg også trodde det. Helt likt som Prosecco.
A runoff election with President Erdogan falling just short of enough votes for a first round victory. Erdogan won 49.5% of the vote, with the main opposition challenger gaining just under 45%. The need for a runoff election to be held on May 28th suggests a more divided electorate than in 2018 when Erdogan won in the first round. Elon Musk has responded to news that he was subpoenaed by the US Virgin Islands in the JP Morgan Epstein lawsuit. In a court filing, the US territory said it had reason to believe Epstein referred or attempted to refer Musk to JP Morgan as a client. In a tweet, Musk said the notion that he would listen to financial advice from Epstein was, quote, absurd, adding that he never advised him on anything. The US is
Tok du dekka deg? Tok du gevinst nå?
Nei, jeg akkurat ikke I så vidt. Nå klarte jeg break der.
Jeg tar ikke gevinst, jeg må bli sittende. Jeg gidder ikke gjøre det. Jeg har ikke noe tro på dette. Jeg vil ikke trade på bevegelsen heller, for det liksom ikke noe vits. Jeg sitter bare rolig.
Ja, den her må poppe litt ned, nå skal jeg gidde å ta gevinsten.
Nå massiv støtte her nå.
Ja, jeg ser det. Nå må poppe ned. Så får jeg ordnet marginene mine litt.
I går hadde jeg 80% avkastning.
Det høyt. Jeg må på overtid I dag på grunn av det skal være sånn jævla fotballkamp her mellom Bodø, Glimt og Tromsø.
Ja, jeg har hørt om Bodø Glimt.
Ja, de et eget lag, det der fansen der.
It gives them another chance to try to find some common ground and get their staffers working again on talks ahead of what could be as soon as a June 1st deadline for the debt ceiling to get raised.
So,
Bill, have the two sides made any progress so far? How long can this actually go on for?
Well, I guess there's been
consider
that the Democrats' original position was that there would be no negotiating at all. They are sitting down, they do have...
Han ligger liksom på tippen til at eller på tikket at jeg kan går I pengene.
Jo, men det jo akkurat her støtta her. Det akkurat her støtta her, og der fikk jeg giddet dekke meg. Så bryter han, så bryter han. Og hvis du ser sånn egentlig, jeg gjør det litt vanskelig da. Hvis du ser her, den rangen her en ganske tight range. Hvis du zoomer litt ut liksom, så ser du at det liksom, det ikke snakk om big greia, men det en vanvittig... Den bra, men det liksom ikke så ille. Kan fort stenge på det lov her nå. Og når tallet kommer nå klokka 11, så... Men når jeg har kjempestøtter nå, så ser jeg på 15-minutter-chartet, så ser jeg at her det liksom midt på støtta.
Ja, nå går jeg I pengene da.
Jeg gir ikke ta gunst.
Du blir sett av den?
Ja,
Ja, men da setter jeg. Å, helvete. Der kom han. Der kom han. Boom! Nice. Han på bunnen her også. Bare legger ned, så bryr jeg meg ikke. Ja, han har danset på samme nivå 3 ganger nå, så jeg bare tok han på bunnen med en gang. Nydelig.
Yeah, we're seeing a lot of anxiety at the moment. You know, I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover.
Før om jeg har sett ballefeil med en ordinære posisjon fra I dag, så er jeg opp 26 tikk så langt, så det er jo... Man må bare jobbe med det man får.
In that environment, so it's causing quite a lot of anxiety, which means, you know, for us, because we're...
Oi, hvis du sett fra 15,970, da setter du jo veldig bra da. Så jeg godt, da henter du fort inn her. Andre.
But it is, you know, it's very different, and it's not something people have had to operate in for a long time.
Hallo! Da var jeg skikkelig penger, og...
Ja, jeg tok han helt på bunnen av wicken der.
Hallo!
There's no question this industry is composed of some bad actors and some good actors.
Nei.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Jeg vet ikke... Hvor er det du er hen nå? Hvor er det... Ikke hvor du er hen hjemme da. Hvor er det du står advarslet? På Instagram, eller Facebook, eller hvor er du hen?
This is Bloomberg Surveillance, early edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program.
Jo, men det, er det min konto, eller er det en annen konto? For det er 4 stykker som later som av meg. Nei, hør det jeg sier. Det er 4 stykker som bruker mine bilder og lurer på. Hva advarsel står det da? Det må stå noe mer enn bare advarsel. Står det advarsel voksent?
Well, good morning, everyone. Let's check in on the markets.
Kan du ta bilde av det og sende det til meg?
A bit of a reversal. British pound firmly in focus. Some of the other things that we're watching out for is, of course,
kan du ta bilde av det?
In general. Now,
gjør det så jeg kan se det.
A bit of a reversal because we saw some pressure.
Du klarer print screen, greit det? Ok,
a bit more of a catch up. Certainly the DAX now getting
det er mora mi.
2%.
Jeg er på Dr.botox, og det står advarsel. Hvor er du nå da? Jeg er hjemme. Nei, men I helvete, er du på Instagram eller er du på Facebook? Åja! Jeg er hjemme! Dama har blitt dement, tror jeg.
Du har svart noe sånn sett på spørsmålet ditt da. Oi!
Det blir alltid galt når man jager det ekstra, ender alltid med å gi tilbake bedre navnet. Helt enig. Nå er jeg ordentlig penger I hvert fall.
Ja, jævlig bra. Jeg tok 11,5, rett under 12 tikk I salen.
Jeg skjønte ingenting av den der greiene, så jeg gidder ikke ta gevinst. Fuck dette her.
Nice. Jeg kunne tatt tapet på den for jeg startet på I dag, og så hadde jeg enda vært I pluss med litt.
Ja, nå jeg I pluss da.
Ja, jeg setter jo enda med en kontraktfeil på 15,909.
Hvis jeg skal gjøre alt etter boka nå, så skal jeg ta gevinst på de der oppe og sitte på de der nede. Men jeg gidder ikke. Jeg en sær jævlig dag. Jeg bare sur.
Ja, men da må du heller holde etter boka. Du skal ha noe snart.
What's the biggest unknown right now, what the Fed does?
For the Fed?
Yeah, so I think what the Fed told us was that May was their last hike. You know, their game plan from here is really to pause and wait and see for the rest of the year. They removed their implicit hiking bias. They told us that policy rates are currently restrictive. They are causing credit conditions to deteriorate. Powell, even without looking for a recession this year, also told us that we're basically nearly there, if not already there. So we think May was their last hike. So we looked at the last 7 hiking cycles as well, going back to the 1980s. You know, how long did that take from the Fed's last hike to their first cut? That on average was 6 to 7 months. So if May was the last hike, that takes us to the end of this year. We do think there is some reason to believe that it could be quicker this time, just because of the sheer pace and magnitude of the hiking cycle.
But so we just have this IEA saying, look, oil demand will rise more than expected in China rebound. When you look at also what the market is pricing in with, for example, the Fed cuts, which a lot of people are pushing back and saying, look, it's just too soon to see cuts this year. Does a rebound in China, you know, fall into that equation that we could still possibly avoid a recession?
I think what we saw from the China data this morning is that it is softening. Chinese government bond markets priced a lot of that in already coming into April. So we didn't see a big move there. But you know, we know that this growth story in China that's coming this time, it is very consumer services led, which is domestic. So the spillovers are smaller into the rest of the world. So we don't think that's going to be a big driver in terms of whether we go into a recession in the US or not. It's more going to be the domestic growth and inflation data there.
So how do you construct a portfolio in this kind of environment?
Yeah, so the markets have really been coiling in the last month, not doing that much. As you mentioned earlier, there's a lot of cuts already priced in for the Fed as soon as July. We think a cut could come as soon as September instead. But you still got to be in those end of cycle trades. So looking for lower yields, steeper curves, high quality duration. You know, May was probably the Fed's last hike, and history tells us to buy the last hike. We like owning duration in the US the most. You get the added tailwinds that you come from tensions around the debt ceiling that's still ongoing, regional banking stress that could re-emerge. So we still like duration. I think the way you square that circle with being afraid that the data is going to be a bit stronger near term and pushing those cuts further out is just to own more duration in the belly of the curve.
So when you look at, is that across the board? Is that in the US? I don't know if you look region by region and whether you make differentiations.
Yeah, so we do like US duration the most, but the UK market is one that we're actually thinking is starting to look quite attractive from a valuations perspective as well. So it's a good diversifier in your portfolio. Inflation is still very persistent. It's probably got one of the most persistent inflation problems among the developed markets, but those valuations have also repriced significantly this year. We like to look at, for example, where the 10-year UK yield is trading versus Germany and the US. And that spread is at levels that we haven't seen since 1997, putting aside the trust period that we saw. So I think that's a good long duration diversifier to start edging into.
Yeah. Again, when you look at the UK, and I don't know how actually, you know, concretely, apart from how you just say you play the UK and what you make of the data out today, like if we start seeing quite a big hit on the labour market, how does that change your equation?
Yeah, so I think it's important to put some context around that. Last week we saw the Bank of England give us hawkish forecasts. They really shifted up their growth and inflation forecast. They kept their tightening bias intact. But then the communication and the press conferences after were also a lot more dovish. And if we look at the labour market report today,
fin gevinster nå.
tentative loosening in the labour market, which is good.
Ja, jeg finner den her. Jeg begynner å nærme meg å være i fengene på det siste.
Participation rate did tick up, but now we're left with the highest number of
Siste kontrakten her. Jeg kan til og med betale den nå, så jeg er nå godt i pluss, men det ser ut så det skal ned.
Det er ingen grunn til at det skal opp. Det som skjedde i stad var kun bare tull. Alt var bare tull.
So I think the Bank of England still stuck. You know, there's still more data to chew before the June.
Jeg kan egentlig ta gevinsten og si fuck off. Men
so we'll have to see how that data develops. We do think there's going to be enough inflation fuel in the tank for the BOE to still keep their foot on the pedal and give us some more hikes.
So where do we end up by
den ligger helt på støtta nå. Akkurat der han ligger nå.
I think they're going to give us 2 more hikes
Han må bryte
to get
der.
to 5% terminal rate. There could still be a lot of strength in the UK economy over the summer. Then when they hit 5%, they can then pause, take a look at the data, and then of course it depends as well what the Fed is doing in the tail end of this year.
Kim, when you look at the Bank of Japan, and this is probably the most interesting financial experiment of all times, I mean, do you see value, or are we still in a wait and see?
Nå henger PC-en min seg.
Because we don't 100% know what what the governor will do, and
Ja.
he'll be able to do what he's announced.
Nå forresten på det der
And the Bank of Japan is taking note of that. They are talking about upside risk to inflation. So you've got core about
foreløpig av det jeg har regnet ut her på mattestykket. Jeg driver ennå og prøver litt forskjellige formler med det vi pratet om I går. Så det ikke så jævlig mange kontrakter som skulle tro det da. For det sånn at hvert fulle tikk på Nasdaqen med 1,5 kontrakter vel $5, det ikke det? Quarter ticks vel $1 på en kontrakt, det ikke det?
Hallo. Skal sjekke. Hvor du vil ha sendt den, liksom? På Facebook, eller hvor? På mail? Ok, men du har jo ikke mailen min. Hvordan faen har du sendt det til meg på mail, da? Du har ikke sendt noe til meg. Ja, men prøv å sende det til meg på Facebook, da.
Solar energy, wind power, battery operated cars. The transition from old to new energy forms.
Du trykker på send, og da huker av deg deres på den da.
Bruce Flatts Brookfield Asset Management.
Faen, det ikke rart jeg ikke kan PC når jeg født av deg, liksom. Nei, men jeg har jo arvet dine PC-egenskaper, men du jo på et nivå jeg aldri har hørt om før. Sånn seriøst, liksom. Jeg tror en apekatt har bedre PC-egenskaper enn meg. Nei. Kan du lese hva som står der, da? Står det...
The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem.
Ja, drit nå det. Hva står det advarsel? Hvor står det advarsel?
Transactions across a range of industries.
Ja, og så...
Studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology. The only
Advarsel under meg, altså jeg... Advarsel under meg, altså jeg skjønner ikke hvor du en gang. Jeg der nå. Ta host, du har masse slim med halsen, jeg hører ikke hva du sier. Faen, du har jo blitt helt gæren. Jeg så hvor jeg nå. Jo, advarsel der da. Ja, der står advarsel. Ja, det advarsel. Det jeg som har laget en overskrift som advarsel at folk blir svindlet. Det ikke noe som... Jo, det min TikTok. Nei, min Instagram. Jeg har skrevet advarsel. Jeg har skrevet advarsel. Nei, jeg har skrevet advarsel at folk ikke må bli lurt.
I know that's also from a weaker assessment of previous years. So overall, how would you describe the report? Is it as strong and bullish as maybe some of...
Vi må ta deg på sånn internettkurs. Ja, men det mener jeg liksom. Det her hårreisende. Jeg har lagt ut en advarsel, og så singer du meg og sier at jeg Nei, faen. Ok. Du sikker på at ikke du drikker? Du sikker på at ikke du har begynt å drikke?
economic gloom and the concerns that we're seeing for the world economy, for
Ja.
industrial activity, and especially in the OECD, where demand has been relatively weak over the past quarters. But we are expecting strong growth this year. In the context where supply is set to fall
Veldig bra.
the rest of the year, that might again put the market
Ja, det var derfor jeg la det ut. Det var akkurat det som har skjedd. Jeg la et advarsel på at ingen må stole på noe. Men den er grei.
Yeah, so
Det er bra.
as you said, a lot of the indicators for China,
Nei, du er
especially
kjempesmart.
manufacturing
Grete.
and industrial activity has come in weaker than expected in contractionary terms. But we're seeing for personal mobility, the service sector is holding up strongly, not just in
Det er en ny type dement.
pushing up gasoline
Ja, det er bra å prøve å ta vare på det, da.
recovery is continuing.
Nei, men Jones forutsatt at det er forutsatt at en hel tikk, altså ikke 0,25, men en fullstendig tikk er $5 på Nasdaqen. Så kan du, hvis du har 20 000 kroner på kontoen, så overlever du å sette feil 150 ticks med 2,5 kontrakter.
Riktig.
Ja. Nei, det er vel 0,5 USD per hele tick. Altså, da mener jeg altså per poeng, ikke per quarter-poeng.
Inflation is running high, and there is concern that we are going into contractions in many areas.
Ja, da har du spreaden din da, men jeg tenker på hvor mange dollar du har per tick. For det hørtes litt heftig ut, egentlig. 150 tick er jo ganske mye, da.
Ja, på denne gevinsten vi har på ene nå, er på 13 ticks, 150 tick. Det er jo herfra ned til hit.
Japan, Korea is growing only by
Jeg var på dass, kommer tilbake.
50,000 barrels a day, and
Det blir ikke mitt
that's
redning på nå, sorry,
with
altså.
about 1.9 million that we're expecting for the non-OECD countries. So it's a market of two halves, if you can put it that way. But we are expecting demand to continue to recover.
For så vidt jeg har forstått, så tikker jo kontraktene på, altså du har jo quarter ticks, og så har du, altså du har komma-tikkene, og så har du fullstendige ticks. Og så er det et fullstendig tikk, altså et fullstendig poeng, ja, er $5. Så det er $1. Ja, ok. Så da hvis du har 2,5 kontrakter, så er det bare $2,5.
But this is also coming at a time when seasonally refinery activity is weak and demand is weak in between the winter and the summer season. So it would be interesting to see now when further supply cuts are starting this month, not just from some of the OPEC plus countries, but also from Canada, where wildfires are shutting in production. And you have the seasonal ramp up both in refining demand and in driving demand.
Men prøv nå bare for å dobbeltsjekke teorien. Ja, en grunn for at vi prøver å finne ut av det er at vi skal få satt opp et spreadsheet som du kan ha en fastsatt regel i forhold til eksponering og risiko for å sette feil i, ja, eksempelvis Nasdaqen. Så hvis du er sikker på at, la oss si du har 20 000 på kontoen din, så kan du da, la oss si at du har 2,5 kontrakt som du setter feil med, og det skal du kan sette feil med maks 150 tick, så har du enda til overs marginer til å trade aktivt på kontoen din uten at det blir marginskviser. Liksom det som er greia.
So obviously we've seen that they're adjusting their production regular basis. So if the market tightens, we hope that they adjust their forecast or their ceilings as needed.
Ja, det var planen. Det er ikke bare greit for nybegynnere, det er helt fantastisk for John Sogan. Han har gjort 100% på en dag, og så begynner han å bli god i gassen, og så går han opp fra 1 til 3 kontrakter til 10 til 20 kontrakter. Han bare 10 000 kroner på kontoen. Så han fikk det fort.
But what we saw is that a lot of refiners in Asia, both in China, India, that have access to discounted Russian crude has been processing record rates during the first quarter at the start of the year that has helped ease some of the tensions on the product markets. And so going forward, again, on the refining side, we're seeing activity shifting east, continued shift. There's new capacity starting up, but also those that have access to discounted Russian crudes have a better margins than the benchmark margins that we see elsewhere. But if we do see industrial activity and gas oil demand remaining weak, we could see some of the refining activity in Europe, also in the US, lower than earlier expected, and we have reduced our forecast for activity in those areas for the rest of the year.
Toril, thank you so much. Toril Bozzoni, there, head of the IEA's oil market division, with, of course, the report out this morning. Now, coming up, another warning from Treasury Secretary Janet Yellen on the debt ceiling deadlock, after House Speaker Kevin McCarthy says they're nowhere near reaching a conclusion. We'll have plenty more on the debt ceiling debate shortly. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding, and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lack right here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gant. Hi, Leanne.
Var helt ned igjen.
China's consumer spending and industrial
Ja, den går litt overalt.
grew at a slower pace than expected.
Men hva var det vi ble enige om? At når du var feil vei 150 tikk, så skulle du maks være eksponert for 15% av kontoen, så du hadde marginer til å trade aktivt innimellom, var det så?
Ja.
Ja, nei, hvis en tikk er $1, så hvis du har da må du faen meg ha, hvis du har 10 000 kroner på kontoen din, så kan du bare sette feil med en kontrakt, 150 tics, for å ennå ha marginer til å trade aktivt.
Jo, men det går fint, det.
Så utifra det regnestykket, så er det da hvis en kontrakt så er det $150, så det er jo da du får jo egentlig et ganske linært regnestykke der da. Om tilnærmet.
In a court filing, the US territory said it had a reason to believe Epstein referred or attempted to refer Musk to JP Morgan.
Så på 20 000 kroner kan du ha 2 kontrakter, på 30 000 kroner kan du ha 3 kontrakter.
Så det er en kontrakt per 10 000.
En kontrakt per 10 000, så kan du sette feil med 150 tikk og eksponere deg da for 15-20% av kontoen frem til et visst nivå.
Du merker vel at det er sånn sommervolum nå, altså.
Plutselig kan du ta med en utgangspunkt i margin, hovedsakelig. Altså, det er snakk om at når han trader da, hvis han blir settende feil i en posisjon, så må han være sikker på at hvor mye margin på kontoen han har til overs, for å ikke bli marginskvisa. For problemet blir jo ikke at kontoen går i null. Problemet er jo at hvis du har for mange posisjoner oppe, samtidig så blir du margin caller på den
posisjonen
som er mest i tap.
Nei, på alle. Alle går ut med alle, selv når det er gevinst.
Have really not made any progress at all. This is the last chance for McCarthy and Biden to speak before the president is scheduled to leave on a trip to Asia on Wednesday. So I think both sides are going to see whether they can make enough progress to get the staff back working a little more effectively. With early June being still the expected.
Men du blir jo giringa, de blir mindre eksponert på seg, jo høyere kontostørrelse du har i utgangspunktet. Så hvis han hadde handlet med en kontrakt på 5 000, altså han kunne ikke ha støttet feil 150, så hvis han nå handler med 5 000, så kan bare han ha en halv kontrakt, så han kan plassere som en bet, som han kan sette feil med. Og da har han bare en halv kontrakt igjen å trade med aktivt, ellers risikerer han å bli marginskviser hvis han setter feil med begge. Men på 10 000 så har han en kontrakt han kan sette feil med, og da eksponerer han bare relativt til giring av 15% av kontoen, så han enda har marginer til overs, for å da kan trade aktivt imellom. Og da forbedrer han jo marginene sine hele tiden. Men hva er det TD gjør deg? $66 margin per kontrakt, er det ikke det? På Nasdaq? I hvert fall. Jeg må ikke tatt utgangspunkt i G40, jeg bare tatt utgangspunkt i Nasdaq.
We've seen this in the past, and we've seen it many times in the past. It's always a last-minute agreement. The Republicans are trying to make some changes.
På Germany 40 så har du faen bare $40 margin. Nei, glem det. Det er $80 margin per kontrakt, rett under den $79. Så Germany 40 har litt større margin på enn Nasdaq.
På Germany, ja. Ja, på Germany.
Ja, det er vel 60, siste sjekket var $66 på Nasdaq.
And U.S. equity futures, I think both declining now before this other round of talks in Washington aimed at ending the debt ceiling stalemate. Then we also have a renewed push by Japan's corporates to increase buybacks and focus on returns and helping boost sentiment in Asia. That's not quite translated here in Europe.
Jeg må gå frem og tilbake helt til, for nå har jeg fått snekkere som endelig gjør ferdig, så det blir veldig bra.
Ja, men det er jo herlig at det endelig kommer i mål.
Ja, fy faen.
Kunne vi forresten kjørt et møte om denne morgenmailen før du får det over på, du vet hva?
Ja.
Så har han en innspill der, så du kanskje blir å være enig. Jeg vurderer å ringe han Stig og høre om han lever, jeg.
Du, jeg vet ikke hva som skjer med han. Han ble bare helt borte.
Suppose somebody is watching and says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do it.
Jeg tror alle venter på tallene klokka 11, for det her som å se maling størkne.
Emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Fy faen. Nå det nye greier på ChatGPT kommet med webbrowsing. Rett og rått.
Jeg lagde min TD-konto og satte valutaen til NOK. Hver av mine kontrakter koster 80 kroner på dagsen. Yuki, vi long og short. Vi shorta på åpning, og så har vi shorta her, og så gjør vi ingenting. Så jeg i null for dagen. Tjente på åpning, tappte etter åpning, tjente litt nå, sitter rolig. Men det jævla bull her, ass.
Altså, det her så sjukt. Vet du hva jeg nettopp altså, det tror jeg psykogen blir litt artig. Vet du hva jeg nettopp spurt ChatGPT om, Johans? Jeg sa, vi har gående en diskusjon på hvor mye en tikk i Nasdaqen verdt. Kan du ta og søke på internettet og finne den eksakte verdien av ett tikk, forutsatt at du går fra, la oss si, 13 000 poeng til 13 001 poeng med at du har handlet en kontrakt. Ok, så går han til å search på webben, og så gir han meg linker til alt han har sett på, og så skriver han the value of one tick, 0.25 points on the E-mini Nasdaq 100 future contract is currently $5. Og da gikk han inn på en sånn offisiell side som snakker om Nasdaqen, og da har oppdaterte verdier.
Det litt sjukt. Jeg gir ikke gjøre noe, jeg sitter rolig. Men det der chat-opplegget, du må jo faen meg utkonkurrere masse manual labor etter hvert da.
Ja, det kommer snart ikke til å finnes jurister og alt mulig rart. Hvis du skal ha ChatGPT på websøk, så må du ha ChatGPT Plus, og så må du enable websøk beta. Jeg søkte jo på å være beta-tester på det for lenge siden, men jeg tror det skal være gjort tilgjengelig for alle som har ChatGPT Plus.
Wasn't as high as expected, but there is still an increase. So as the morning goes on, really economists and markets converging, and the bottom line is the labour market is still tight, but it's showing signs of cooling.
So Liz, what does this mean for the government?
I mean, we know that Rishi Sunak's #1 priority is halving inflation by the end of the year, so any sign that he could make that happen is going to be welcomed, not though that unemployment has ticked up. But the worrying number today for the government is the number of
Hva da? Det som ute? Ja, den som der nå. Ja, den helt strøken, den ubrukt. Det var ingenting å si. Nei. Ja, sjekk om den starter da. Nå, den I bilen også? Den ser vel helt jævlig ut. Den ikke noe front på, tror jeg.
and it really puts pressure on the government to settle those strikes.
Ser den bedre ut, liksom?
When you look at the labor market and someone from
Ja,
Går
det greit, Sebastian?
we understand that some people have left the workforce because of long COVID or
Klosser? Ja.
because of the pandemic.
Ja. Ja.
To get them back in.
Ja, men nå skal vi gjøre det nå etterpå når vi henter bilen.
I mean, this is the headache for the government at the moment, in
Ja.
particular Mel Stride, the
Ja, ja.
secretary. So
Gjør det.
in the budget, they already did these
Ja, ja,
child
ja.
reforms. The good news is that you can
Ja,
see students coming back
Ja.
to the workforce. That's what's driving this reduction
Ja.
in economic inactivity.
Skal jeg hente det nå, eller?
Get the long-term stability.
Ja, jeg får ikke tredd den uansett.
Waiting list, which is why I say
Kort
that
tilbake.
doctors and nurses striking is a difficult problem. The other approach that the government may want to take is you had Mel Stride saying that potentially maybe cut income tax if people come back to the workforce. That wouldn't necessarily solve the same problems that childcare could, in the sense of closing the gender pay gap.
Vi betalte ChatGPT for informasjonen.
So you have to ask, when money's tight, how does the government want to prioritise the way it's going to do this?
Yeah, and how do they grow? Lizzie, thank you so much. Lizzie Burden, our UK correspondent. Now, Trader is also pricing in another 25 basis point hike at the next Bank of England meeting in June. The former governor, Mervyn King, says COVID and the war in Ukraine have thrown curveballs at the central bank. He says the BOE should not be making such precise forecasts.
The circumstances of a pandemic and what's been happening in Ukraine mean that it is foolish to try to pretend that one can forecast accurately. That's far too precise. We do not know enough about the future to make those forecasts.
What the fuck?
What we need to do is to identify risks.
Former Bank of England Governor Mervyn King there speaking to Guy Johnson. Now, the chief executive of the London Metal Exchange also says the resumption of nickel trading in Asia hours has pushed up in volume, but not back to the level before the crisis in March 2022. Matthew Chamberlain spoke to Bloomberg's David Inglis in Hong Kong.
Coinbase cryptocurrencies, hva I helvete?
Asian hours trading for nickel after the nickel events of March last year. We're really pleased about that. Yeah, it's just nice to wake up in London, turn on my screen and see that there've been 500, 600 lots of nickel traded. And I think that's really indicative of how important this time zone, this geography is to our contracts. We're really pleased about that. And actually, if I look at nickel generally, April, which is our first month with the Asian hours reopened, volume full month, full month, outright volumes up 10% on the prior month, 60% on the prior year. Obviously, that was just after the events of March. But it feels to me like we're building back.
What was pre-pandemic Asia hours nickel, just for context? Like, so at 500, 600.
So you'd normally see over 1,000 pre-pandemic.
Trader, du må se det. Jeg sendte på Discord.
It's this process of rebuilding trust.
Well, I was going to get to that reputation. Do you think you've managed to salvage that completely? Like, that's an abstract concept, obviously. Where are you on that conversation?
We're very conscious that trust is something that takes a long time to build or to rebuild. But I would like to think that our market believes we're doing the right things here.
I want to start with OTC sort of transparency. How has that been received, over-the-counter sort of positions?
Yeah, so there's always going to be a tension here because understandably banks don't want to reveal their OTC books. But I think there was a real feeling after March 2022 that as a community we needed to come together to stop this kind of thing happening again. And that's why we put in place the OTC reporting requirements. And I think people have taken them in the spirit that they're intended. We're not gathering that information for commercial purposes. We're not gathering it to try to bring it on exchange. We're gathering it purely so that our market surveillance colleague can have a comprehensive view of risk. So I'm really grateful that people have taken that, as I say, in the spirit it was intended, and I think it's working well.
Well, that's the Chief Executive of the London Metal Exchange, Matthew Chamberlain, speaking to our David Inglis in Hong Kong. Now, we'll be covering all things UK every week on Thursdays at 9:30 a.m. UK time. In our half-an-hour special this week, we're joined by one of the UK's most prominent financiers, Guy Hands. Coming up, billionaire bets, investing titans load up on AI stocks. We take a look at what's in and what's out from the latest 13F filings. That's next, and this is Bloomberg. You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook, and the reason they haven't turned the pages is that their business actually remains pretty sound.
Then Bloomberg's Michael McKee speaks with Chicago Fed President Austin Goolsbee.
We should gather further data, and we should be extra careful about raising rates too aggressively.
The most in-depth coverage and analysis of the Fed, right here on Bloomberg, your global business authority.
Now, the latest 13F filing show Michael Burry, the money manager made famous in The Big Short, now has a big lung when it comes to China. Now, for more, let's bring in Bloomberg's Valerie Teitel. Valerie, he basically fully loaded up on JD.com and Alibaba. Unexpected, frankly.
Yeah, well, so he's been building a position in Chinese equities since late last year around the China reopening narrative. But in the first quarter of this year, he has tripled his exposure to JD.com and doubled his exposure to Alibaba, taking China tech. 20% now of his 50 billion portfolio is now exposed to Chinese tech. And, as this tech trade heats up, there's a lot of discussion of whether U.S. is going to outperform Chinese tech. Michael Burry is clearly in the China camp. He only actually has one U.S. tech holding name, and that's Zoom. But it's really taken over by his massive holdings in these Chinese tech names, especially Alibaba and JD.com.
Yes, we love going through these 13F filings because it basically gives us an inside glimpse into what these big hedge funders are looking into. If you look at, AI is a big bet for almost everyone.
Yeah, so especially when it comes to the family office's name, that's David Tepper's Appaloosa and Drunken Miller's Duquesne. Both showed quite a sizable position building in AI names, one of them being NVIDIA. Both of those funds increased their exposure in the first quarter. And Tepper's fund made some new positions in Kathy Wood's ARK Innovation Fund. And then when it comes to Drunken Miller, he invested quite largely in Microsoft last quarter, who is an investor in OpenAI who holds ChatGPT. He also invested in a healthcare AI company and Alphabet. Those were of his new positions. But it seems like the NVIDIA holding that they're building, NVIDIA has been a stock that has gone up almost 100% in the first quarter. It's been really a beneficiary of this AI buzz. But, in these 13F filings, we only know their holdings at the end of the first quarter. So it's a bit unclear whether they're chasing the trade or hopefully they were in it from the beginning of Q1 and benefited from it.
Yeah, also unclear to me actually whether Burry, so he made his name as a contrarian, right? This is all, we know it because of 2008 and some of the bets that he took in subprime there. Is this because he's bullish on China, or he just thinks that the fears on China have been overdone?
Well, look, the fears on China have really only escalated in the past few weeks when the Chinese data has soured. If you go back and see when he initiated these positions, it was clearly just bullish on the China reopening narrative, which has been thrown a bit of cold water on when we've gotten some sour data like the data we got overnight from China. But he is a bit contrarian, especially when it comes to his holdings of U.S. regional banks. The 13F filings showed that he held First Republic, PacWest, and Western Alliance. Now that stands at a bit of a contrast to what we've heard from Warren Buffett, Berkshire Hathaway, who's kind of soured on the U.S. regional banks, and the 13F filings there showed that Berkshire actually exited their positions totally of BNY Mellon and U.S. Bancorp.
All right, thank you so much, Valerie Teitel there with the very latest on some of these 13F filings. Now, Fed rate hikes and negative social media sentiment helped cause Silicon Valley Bank's collapse. That's the view of the company's former chief executive officer, Greg Baker, submitted the comments in writing ahead of a U.S. Senate Banking Committee hearing later today. Now, SVB was seized by regulators in March, with its failure setting off a number of other bank runs. Well, Stefania Bianchi, our senior finance editor in Dubai, joins us now. So, Stefania, tell us a little bit more about what Greg Baker said.
That's right. As you say, Francine, he's saying that comparisons by the media between SVB and Silvergate Capital, which announced its plans to wind down just a few days before what happened with SVB, that they all contributed to its failure. And, you know, discussions and rumours online really led to this unprecedented bank run, which we now know led to its collapse.
So what is a wider impact of his written testimony?
Well, look, I think since the collapse of the likes of SVB and Silver Capital, executives have really been under pressure at these failed banks to really understand what went wrong. So I think people will be watching this hearing closely to really get more details of what went wrong and what could have been done to prevent these collapses and potentially any future collapses that may come in future months.
So, Stefania, what can we expect from today's committee hearing concretely?
So this is the first time that Becker will be speaking publicly since March 10th, and that was when SVB was placed into receivership. So again, I guess we'll hear more details of what went wrong. But also there will be executives from Signature Bank. We'll have Scott Shea, the former chairman of Signature Bank, and other executives who will testify. And we already know from their written testimony that they believe that Signature Bank's liquidity position was actually, you know, it wasn't too bad. I mean, it should have actually allowed the bank to stay open. But at the same time, they're saying that they understand why regulators took the actions that they did. So it will be interesting to hear both sides of that argument.
Stefania, thank you so much, Stefania Bianchi there with the very latest, of course, on SVB. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Treasury Secretary Janet Yellen says the US is already paying a price for its failure to raise the debt limit. In a letter to lawmakers, she cited rising borrowing costs for government securities maturing in early June. Yellen also reiterated her warning the Treasury could run out of cash as soon as the 1st of June. House Speaker Kevin McCarthy, meanwhile, says the two sides are nowhere near a deal on the debt ceiling. Now, Microsoft's takeover of games maker Activision Blizzard has won approval from the European Union, putting the bloc at odds with regulators in the UK and also in the US. The EU says the $69 billion deal is pro-competitive and would kickstart the market for cloud streaming games. Microsoft is mounting legal challenges to the rulings blocking the deal. The US is preparing to buy up to 3 million barrels of crude oil to refill its strategic petroleum reserve. The country's emergency stockpile is at its lowest level since 1983 after the release of over 200 million barrels to curb high energy prices. That was last year. Deliveries into the government reserve are planned for August, with contracts to be announced in June. Bloomberg has learned that Amgen's deal to buy Horizon Therapeutics is to be challenged by US federal regulators. The Federal Trade Commission is expected to file a lawsuit later today to block the $27.8 billion biotechnology deal on fears it could hamper innovation and slow the pace of drug development. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Thank you so much, Leanne. Coming up, we'll discuss the inflation headache facing European finance ministers as they meet for a second day. We'll be live in Brussels, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenevec bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
This is Bloomberg.
Look, in today's environment where there's so much uncertainty in the economy, I don't think we can really rule out anything. If I had to have a vote right now, I'd probably vote to hold. But as you noted, we got two more inflation readings. We have a jobs number, a jobs report that's got to come out. There's a lot more information we're going to have as to what's going on.
We at the Federal Reserve probably have more work to do on our end to try to bring inflation back down. And most importantly, we should not be fooled by a few months of positive data. We still are well in excess of our 2% inflation target, and we need to finish the job.
Atlanta Fed President Raphael Bostic and Minneapolis Fed President Neil Kashkari on the U.S. Central Bank's next move to tackle inflation. Now, European finance ministers are meeting for a second day in Brussels. Let's bring in Bloomberg's Maria Tadeo from Brussels. So, Maria, good morning. Inflation, the biggest word for lawmakers. What can they actually do about it?
Yes, it is, Francine, because on the one hand, when you look at the economic projections that were released yesterday by the European Commission for the spring forecast, they do say the economy is pulling ahead more than expected. There has been real resilience in services, but when you look at inflation, the story is not over yet. And in fact, you had two upwards revisions for this year and next. And by the end of next year, you'd still have inflation, if you believe the forecast, at 2.8%. That means still above the European Central Bank target. Now, when we spoke to finance ministers, but also in particular the German finance minister, he sounded downbeat to some extent, repeating, yes, the economy may be doing better than expected, but the job when it comes to inflation, and this is a number one issue, is not done yet. Let's take a look.
Price stability is our priority, and then we want to prevent severe economic downturns, and so we have to coordinate the monetary and the fiscal policies.
And that was Christian Lindner, the German finance minister, speaking here to reporters in Brussels just a few minutes ago. And Francine, in some ways, he also encapsulates these talking points that we've heard repeatedly from finance ministers. Now it's the idea to really take a sober look at fiscal policy, because you don't want to counter the actions of the central bank. There has been a real stress about this coordination between the fiscal policy and the monetary policy. We know the European Central Bank has asked for tailored fiscal policy at this point to rein back some of that stimulus. The IMF is also calling for it. The question is, how are European finance ministers going to deal with that? Well, you know that for a lot of people in Europe, they still say they feel that pain when they go to buy things on the supermarket, when they see it on their everyday lives and the cost of living over the past year.
Yeah, I'll say, I mean, it's very, very tough across the board. So that takes us to the ECB. What are the implications for policy?
Yes, and Francine, we've already seen this downshift to 25 basis points. If you look to the future, obviously, there are a number of decisions that are coming up. You're looking at June 2. You listen and read the words of the Vice President of the European Central Bank, Luis de Guindos, on Saturday on the Italian media. He said, we've made that downshift. That is probably the new normal, so around 25 basis points, and we've entered the home run of monetary policy, perhaps suggesting and indicating that they have entered the next stage. But when you look at the market, they still predict there could be even 3 more hikes. Ultimately, you see that deposit rate that would peak at 3.75, and then, Francine, beyond that, and we talk about the lag between monetary policy, the actions taken by the central bank, and the feed-through to the real economy, you see higher for longer, potentially no rate cuts until the back end of next year.
Maria, thanks so much. Bloomberg's European correspondent Maria Tadeo there in Brussels. Now let's also take a look at some of the key things that markets are watching out for today. 10 a.m. UK time, we'll get the German ZEW investor sentiment survey for May. Last month's reading showed outlook unexpectedly declining. Now at the same time, we're due to get preliminary readings of first quarter Euro area GDP. 1:30 p.m. UK time, Canadian CPI data will be published. Also at 1:30, we're getting U.S. retail sales, and then later at 3 p.m. UK time, Fed Vice Chair for Supervision Michael Barr will testify before the House Financial Services Committee. This is important because Barr has been leading a review of the supervision and regulation of Silicon Valley Bank in light of its collapse. Now, coming up, we're joined by the Richmond Fed President, Tom Markin. That's also at 3:30 p.m. UK time, so that's going to be a fantastic interview, and we won't, of course, want to miss that. Oil demand will rise more than expected on the China rebound. That was our great interview with the IEA head of markets in terms of what that's doing to oil markets. Look, it has huge implications for what OPEC Plus could decide early next month when they talk about production cuts. Bloomberg Surveillance Early Edition continues in the next hour. Kriti Gupta in New York and Edwards here in London.
Får vi se. Har den pushen ner eller den pushen upp?
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15, but these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
Top-end venture is sort of 3x net of fees. Ideally, you're hoping for more than that. You're hoping for 5x or more. You're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today...
So yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds.
Ska vi se, forecast är minus 37, previous var minus 32. Så konsensus är minus 37.
And so I think it's
some
skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
From the world of politics to the world of business, Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and
Det kommer også employment change og GDP. GDP er en forecast på 0,1% på quarter over quarter, og GDP year over year er 1,3% expected.
5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Her kom det inn. Ok. Germany's EU conditions kom inn bedre enn forventet. Minus 34,8. Det er vel bull, ikke?
You think about where the economy was and where inflation was last summer compared to where it is today, we've seen really positive things happen.
We should not be fooled by a few months of positive data. You know, we still are well in excess of our 2% inflation target, and we need to finish the job.
It is foolish to try to pretend that one can forecast accurately. We do not know enough about the future to make those forecasts. What we need to do is to identify risks.
This is
Veldig lite bevegelse på de tårene.
edition with Anna Edwards and Kriti Gupta.
Så langt i hvert fall.
London, 5 a.m. in
No
New York
spikes.
and 5 p.m. in Hong Kong. Our top stories today. China's recovery is quickly losing speed. That's leading to calls for more policy stimulus to boost growth. Not so great expectations. House Speaker Kevin McCarthy warns that the two sides are nowhere near a deal as he prepares to negotiate raising the debt limit with President Biden. And what's the latest 13F filings? What are they telling us about the US economy? Two billionaires' family offices bet on artificial intelligence, while Berkshire Hathaway dumps regional banks and wagers on Capital One. Lots to digest this morning. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Some fascinating news around. We follow the debt story, of course. We've got data crucially around the retail space from the United States later on, the strength of the consumer in focus. But markets overall not reflecting any of the excitement, I suppose, Kriti. Fairly stable.
Fairly stable. Look, it's a little bit of a litmus test today to see if that consumer momentum that really has been holding up the economy is still holding up the economy. Anna, you just talked about those headlines where you saw a lot of people saying, look, the Chinese data is slowing down a little bit. The debt data or the debt ceiling saga is ongoing with not really tangible progress. So nevertheless, futures are going to have a little bit of a negative bias right now, mostly unchanged, but that's really where the retail
Economic sentiment vårt
US stock market. So a little bit of a wait and hold pattern until we get those results starting in less than 60 minutes. Anna, the 2-year yield though continues to trade in that range as again we balance all of those different macro narratives. 398 on the 2-year yield, already seeing a bid into treasuries, especially on the front end of the curve. That is a big deal when talking about where the direction of the dollar is going to go next, because once again interest rates are now kicking back into the dollar story. It's not just a haven play anymore, and that's something we're going to talk with later in the show. The FX story continues to be front of mind as we digest everything that's going on in Washington, both on the fiscal front and the monetary front as well. NYMEX crude, our classic recessionary gauge, that's what I'm going to call it now, 71 handle. And I think the theme for today is technical ranges not going anywhere until we have real catalysts. At least that's the macro story. A lot more going on the macro.
Det var kjedelig da.
Right, let's have a look at where the macro story takes us here in Europe then. We've just had some data coming through on the German economy. The German May ZEW investor expectations falling to minus 10.7. The estimate was minus 5. So this is a survey of the expectations of the investment community, and it's moving in a more negative direction, more negative than had been expected as well. So certainly worth keeping that in mind as we look at what's happening in terms of appetite for risk assets. This is what we see on stocks right now. It was a fairly positive picture, but not moving much, actually. So there was quite a bit of green on that map, but only slight gains. This is the Vodafone share price, down by 4.2%. This is a company that is taking restructuring action, cutting 11,000 jobs, we've heard from the telecom giants here in the UK. They have businesses not just in the UK, though, outside in Germany and in Spain, notably, and that restructuring activity will take place across some of those areas. So we'll watch for further details there. A relatively new CEO, although she's been with the business for many, many years. Telecom Italia, also in the telecom space, that stock actually not moving all that much right now, but the stock has been in focus as a result of, and was weaker earlier on, because they've seen a bid from KKR. They'd also seen a bid from Macquarie and a state-backed business. That state-backed business and Macquarie have decided to step away from the bid for Telecom Italia, and so as a result, we are not seeing any more expectations of bid activity, and so the stock slumps. The pound is at 125.27, pretty flat against the US dollar. It really dropped earlier on. So a few hours ago, we got labour market data around the UK, and the wages picture actually a little bit more mixed. But in terms of the payrolls, the number of jobs in the UK and the way that is changing, that dropped by an amount we haven't seen for a very long time, and that spooked markets. The slowdown in the labour market in the UK then seeming to loom large on people's radars, and that really dropped the pound. But it has recovered. It's now flat against the US dollar. Brent crude in here as well, Chrissy. You had the WTI price. Here's Brent. We've got the SPR news flow, the Strategic Petroleum Reserves out of the United States, and also paying close attention to the growth story out of China. In the last hour on Bloomberg TV, our colleagues spoke to the IEA, and they were certainly talking about growth in China as a driver higher for oil prices.
Yeah, certainly something that we're still seeing, though. There are those macro concerns. You're not still seeing very much momentum, even a 0.3% gain. Still not that significant. As we get a lot of those kind of signals from perhaps abroad, China, of course, is going to be part of that commodity story and the consumer story globally. In fact, their consumer spending and industrial activity grew at a much slower pace than expected in April, adding to concerns that growth in the world's second largest economy, well, might just be losing momentum. We're joined now by China economy and government editor Jill Deeses. Jill, walk us through the data we got today. What are we taking away from it?
Yes, well, I think that that's right, that this was a lot slower than expected. Remember that we were comparing this data in April to a year ago when Shanghai was in lockdown. So already there was a really weak base for comparison. And we didn't even see some of these numbers match those expectations. Industrial output grew at half the pace economists were expecting. Retail sales spiked 19-something%, but ultimately didn't really match expectations there either. We saw a bit of a slowdown in fixed investment growth in the first 4 months of the year. So all of this is just combining with a bunch of recent data that we've also gotten out of China, whether that be really, really sluggish imports, export growth that hasn't been as strong as we would have hoped. The housing market hasn't looked particularly great recently either. Looks like it's kind of losing some of that rebound momentum that we saw in the first 3 months of the year. All of this is sort of telling us that there are some pretty serious concerns about the state of the economic recovery and that sustainability going forward. And so
De som har tankar om den här talen, det ser ju egentligen ut som markedet går blankt fan i den.
Chinese policymakers have to revisit whether there's additional support that they might need to pull forward. That could be a rate cut by the end of the year. You know, there's a lot of different options that maybe we'll need to consider exploring here.
Yeah, absolutely. I wanted to ask you about that, Jill. How do policymakers respond then to this data set? All the three pieces of data we just showed on the screen were worse than had been expected. So how will the PBOC and others react?
Yeah, so I think that that's ultimately what economists are looking for. You know, there might be that the PBOC has some room to cut policy interest rates in the coming months. Remember, the Fed is likely to pause their interest rate hike cycle as soon as June. So maybe that gives the PBOC a little bit more room there. But we've also talked to some other economists who are saying there could be other policy measures that need to be considered here. Maybe that comes into the form of like a you know, subsidies or other kind of fiscal stimulus that can stimulate demand there, because ultimately this comes down to business confidence and household confidence, which just really isn't there yet for this recovery to be sustainable.
Jill Deeses, creeping us on our toes, a crucial story in the China, even as we feel like in the last couple of years, perhaps we've started to see China and the U.S. on the economic front maybe diverge just a little bit, certainly folding back into the narrative. We thank you as always. Well, back on the economic front, sticking with that story, it's a busy week for U.S. retail as well. We're going to get Home Depot earnings before the opening bell today, plus retail sales data over at 8:30 a.m. Again, a litmus test for the broader economy. Bloomberg's Simone Foxman joins us now. Simone, walk us through what the economists are expecting when it comes to the data first.
Well, we do expect U.S. retail sales to have picked up in the month of April to 0.8% from last reading negative 0.6%, but most of that is going to be on the back of auto sales and gas stations to some degree. So when you strip those things out, we're going to get a much weaker number, something like 0.2%. And when you look at all of this retail sales data adjusted for inflation, the consumer is spending less on goods than they were during the height of the pandemic. And that's especially clear on an inflation-adjusted basis. You know, I think we've we've seen consumers switch to spending on services generally. Their expectations for inflation are very high. We saw that in the New Michigan Consumer Sentiment Index. And this is maybe our first read a little bit on what is happening in the second quarter.
Yeah, absolutely. A really interesting first read. We also get a kickoff on the string of earnings that we're going to get from big box stores in the United States today with Home Depot. What are we looking for there, Simone?
Yeah, the interesting bit about Home Depot as well as Lowe's, which reports next week, and as you said, there's a string of earnings coming out, is that home improvement stores among the big box retailers have been seen as a bit of a defensive play. They were really hot during COVID because people were staying home, they were improving their homes, and now people are stuck in their homes with bank rate saying it's 30-year fixed rate mortgages at 6.9%. But we do expect to see some same-store sales slow down. That is the broad expectation from analysts. We expect to see some margins contract on the back of higher spending on employees. Goods remain pretty high, but volatility is possible here. We tend to see a big move on this stock. However, I think when we look ahead to the next 10 days really of these retail sales, we expect to see some weakness among consumers. We expect to see them shifting into lower tier brands, whether that's private label or just simply higher cost brands. And we expect to see consumers spending less on discretionary and more on staples. Does that mean they're shopping at Home Depot? That's kind of the outlook we're going to see today. And last quarter, I should say, executives there, including Ted Decker, were pretty negative on the outlook. So anything a little bit more positive would be an upside surprise.
A little bit of a low bar for Home Depot, if you will. Bloomberg Simone Foxman, we thank you as always for walking us through that story. Certainly tradable. Again, less than 60 minutes till we get those earning results. Also in the going to be big movers in the stock market, the result of the latest 13F filings showing billionaire investing titans Stanley Druckenmiller and David Tepper loaded up on stocks benefiting from the artificial intelligence boom during the first quarter. Charlie Bassick, our global finance correspondent, joins us now for the details. So AI, huh? What's so great about AI? Why'd they get in?
We know that Stan Druckenmiller thinks about AI like it could be the next version of the internet in terms of the success through the next cycle. We also know that he believes that we are facing a hard landing ahead of us. That's according to remarks that Stan Druckenmiller made about last week over at the Sohn conference. Now, he increased his stake in NVIDIA. We know David Tepper of Appaloosa is also increasing his exposure to AI. When we look at Druckenmiller's holdings as a whole, though, I think it tells you a different picture about how he feels about stock picking as we head into that hard landing that he believes, selling out of 28 positions, adding 19 new ones. And so I think the net selling and buying pressure when you look at these big funds is very interesting. When you look at the whole community in aggregate on the heels of AI, as well as how we know technology is done overall, technology was actually the biggest sector increase among all of the 13F filings as collected and scoured by Bloomberg. And financials, no surprise, was the biggest sell. That is a big reversal from last year.
Right, and on that note, Shonali, very interesting because so there's AI and technology on the one hand, then there's banks on the other and financials. What do we know about Berkshire Hathaway and Warren Buffett's bets on the banking sector? He famously came to its rescue in 2008, at least in part. A more nuanced view, though, now of the regional banking turmoil.
Yeah, absolutely. Much more nuanced view. And I would point out, Anna, that he has been kind of souring here on the banking sector really before we even saw a lot of these banking troubles bake in. Think about last year when he really cut his entire stake in Wells Fargo after betting on that bank for decades. Now he is going a little further here. We are watching him step back from the likes of BNY Mellon and US Bancorp. His increasing of the
Har du treffposisjonen din på
and why is that? Because
GDP-USD?
we saw them really increase their provisions for loan losses very, very meaningfully here in the last quarter after they reported earnings. They're only down about 4% on the year.
Ja, foreløpig reagerer han ikke en piss på tallene. Han skjønner.
You know, an antithesis to Berkshire here a little bit was Michael Burry, where he did add a lot of the regional banks, including First Republic in the first quarter. So you're seeing, you know, very big differences here between Berkshire's long-term play and some of the more opportunistic trading you're seeing from Scion over there.
Shonali, thanks very much. Bloomberg's Shonali Basak with the latest on financials. And coming up, we'll talk to Esther Reichelt, Commerzbank FX strategist. We'll get her take on the dollar with the debt ceiling conversation continuing. What does she think will drive the dollar in that context. We'll also talk about the pound, big loser earlier on in session today, recovered from those losses. And later today, we will have an exclusive interview with the Richmond Fed President Thomas Barkin, and also hear from the Chicago Fed President Austin Goolsbee. We spoke with the Atlanta Fed President Raphael Bostic in an exclusive interview.
Look, in today's environment where there's so much uncertainty in the economy, I don't think we can really rule out anything. If I had to have a vote right now, I'd probably vote to hold. But as you noted, we got 2 more inflation readings. We have a jobs number, a jobs report that's got to come out. There's a lot more information we're going to have as to what's going on.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20+ experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook, and the reason they haven't turned the pages is that their business actually remains pretty sound.
Then Bloomberg's Michael McKee speaks with Chicago Fed President Austin Goolsbee.
We should gather further data, and we should be extra careful about raising rates too aggressively.
The most in-depth coverage and analysis of the Fed, right here on Bloomberg, your global business authority.
This is Bloomberg
Det samme det er ikke influensa hovedproblemet, det er streaminga. Streaminga tar opp enormt mye, og så har han jo da så mange browsere på samtidig. Så har han ikke noe spesielt sterk PC, han har en drit-PC.
Are they still holding their own, even in the face of this persistent inflation? We're still at a 4.9% reading. That does not necessarily bode well for people whose disposable income is withering slowly, which brings me to this chart. For our radio audience, stick with me. Basically, we're looking at retail sales both on a nominal basis and then adjusted for inflation. Now, going all the way back to as far as the data goes, the lines go pretty similar. You see this kind of steady increase, a decrease during COVID, and then a big pop. But then it diverges. And here's what's so important about it, because on the surface, it kind of looks like, well, retail sales are actually growing. Maybe the consumer is spending more. That's this white line for our TV audience. But then when you adjust for inflation, that's where you start to see this gap, a little bit more of stagnant, all the way going back from June to 2021. And that stagnation is what's concerning. Although, I gotta say, on the surface, still good news, because even adjusted for inflation, consumers seem to be holding their own. There isn't that drop yet. Will we get that drop today? That's going to be the big question. Let's bring a little bit more market analysis to this conversation. Joining us now, Justina Lee, our Bloomberg Markets reporter. Justina, what do you make of this chart? For me, retail earnings are going to be that litmus test, but what else could shake this line?
Yeah, I think the question really here is how has consumer demand been affected by a year of monetary tightening? And I think that's going to be a really big question for people trying to read whether there's going to be a U.S. recession or not. Because on one hand, we're still seeing, slowing but pretty strong headline inflation number. But at the same time, we are expecting to see a bit of a kind of slowdown in retail sales. I mean, industrial production data today is expected to show a bit of a stagnation. And so I think the question for Fed officials here is really, do they think that a recession or like a contraction of that demand is going to come fast enough for them to not worry as much about inflation anymore? And kind of based on what we've been hearing so far is that, there are a few officials that say, okay, maybe we can pause right here. But maybe cuts this year have been too optimistic on markets' part.
Yes, we keep hearing from guests, Justina, who tell us that even if the markets are pricing it, they don't see the need for cuts. Not everybody, but we hear that often. I know that you've been thinking about the link between the markets and the debt ceiling fears, the way the markets will
Ja, det kan være sånn. Altså må i hvert fall få seg en bedre PC, for det der er helt
wondering about it the
håpløst.
other way around, the role that markets play in focusing minds on
Nei, det er vel en veldig late response til tallene, tipper jeg.
would that bring to the table?
Og jeg fortsetter sånn 16 tikk til, så er jeg ute for dagen. Faktisk i
There are
pluss.
definitely pockets where you see anxiety of debt ceiling. I mean, most notably, exactly, or like, the spreads of credit default swaps. I mean, that's actually for the U.S. above
Hvor du har
Brazil
renter igjen,
right now, which is
Sondre.
pretty mind-boggling. And at the same time, there's a bit of a bump, in
Eller
the T-bill
Savura.
curve.
Nei, det er
We see
Sondre.
that the
Ja.
bills kind of that are expiring after the X-date are kind of getting that bit of bump in premium. But I think kind of overall, markets are not panicking. I mean, if you look at the fact that stocks have been like sideways, but not really too anxious. And if you kind of think about kind of
Ja, da har vi samme entry på den ene posisjonen, men jeg er i pluss for dagen, selv om jeg lukker den her nå, for at jeg har hentet inn såpass mye fra de andre tradesene.
That's where you find the Markets Live blog. This is Bloomberg.
Så om jeg skal se om han bounce av EMA-en her, så vurderer jeg å ta han. Hvis han starter å indikere at han skal bounce til oppsida igjen, kan jeg bare ta det lille tapet der, så går jeg ut av dagen i pluss. Det gir short, ja, jeg gjør ikke. Og faen, jeg angrer på at jeg ikke holder den jeg hadde fra 1565 da. Det hadde jo blitt nice, men jeg tok den jo for så vidt nesten på samme nivå. Ja, det ser ut som han skal prøve å bounce her. Så, nei da, fortsett nedover. Jau da. Jeg må ringe han.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com.
Litt til.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency. We're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. President Biden meets with House Speaker Kevin McCarthy and other congressional leaders today to try to avert a default. McCarthy says the leaders are nowhere near a deal to raise the debt limit. The standoff has been roiling markets as investors bet whether a deal can be reached. Elon Musk has been issued a subpoena by the U.S. Virgin Islands in a lawsuit over the late disgraced financier Jeffrey Epstein. Court papers say authorities had reason to believe that Epstein may have referred or attempted to refer Musk.
Pratet nettopp med Jones, som han jo av oppfatning at det her skal ned. Om ikke det går ned akkurat nå, så skal det ned i løpet av dagen eller uka. Tallene jo give or take som expected, men da jo piss negativ med unntak av unemployment raten. Så det litt sånn her, hvis du stresset og vil ha det på et bedre nivå, så kan du ta den her. For han skal sikkert en liten tur opp igjen før han stup, men hvis han først bryter her, så går han til helvete. Det må du ta opp mot hvor eksponert du Jeg så lite eksponert at jeg kan sette i denne traden jeg setter nå helt opp til all-time high, og enda være good. Så jeg stresser ikke i det hele tatt. Men hvis du tyngre eksponert, så vil jeg ha passet posisjonen litt, for det litt sånn ekkelt nivå å være i. For du vet med dagsen, jo flere folk som shorten, jo mer går det driten her opp.
This is a really interesting story, isn't it? Because it has that cyclical dimension around the Chinese growth story, but also the geopolitical dimension that you referenced, deteriorating relations between the US and China in the driving seat when it comes to this decision-making at Morgan Stanley. I should note that this is part of the 3,000 jobs that Morgan Stanley is cutting and that Bloomberg reported they are cutting earlier this month, so these aren't new numbers, but we're finding out a little bit more about the complexion of those job cuts, which I think is really important for those in the financial services sector. Now, coming up on the programme, we'll talk FX. Chrissy, Esther Reichelt joins us, Commerzbank's FX strategist. We continue to look for developments around the debt ceiling. How will the dollar trade through all of that? A key question to tackle this week. We'll also ask about the pound, which has recovered somewhat from earlier losses. This is Bloomberg.
Hvordan tar det ut på tallene fra USA, så kommer klokka 2:30. Så... Neste nivå jeg må passe på jo... Vi ligger jo så helvete i support-zonen nå da. Altså bryter den her, så historisk sett så bryter den et godt stykke ned. Ja.
Forget a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only one in
Det gøy å få den ned på
seniors graduating this year should follow their footsteps and go into finance. about
tror ikke han skal helt ned på Han har jo vært flere ganger nede på 15
and that's despite all those recent layoffs at companies like Meta, Amazon,
15-7-tall og tasta og
paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance
blank
to
er
recruit
ganske
many
interessant
laid-off tech workers.
område.
A degree in
Det
tech
ligger
could set
jo
you up for a lot of potential
Nå skal vi
jobs
kjøpe
and a
her
safety
selv.
net if any of
Ja.
those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed
Jeg vet ikke hva jeg gjerne har holdt talene inn, så jeg skal jo på jobb, så det er jo noe piss å få følge med når jeg skal drive og slåss med fotballsupportere. Det er vanskelig å få følge med på trade samtidig.
They may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
Ja, skulle nok det. Ja, men at Paul Jones da skal sette klar og huske å sende meg melding på å skal selge noe greier, det tror jeg er mye å be om.
Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know.
Men kan jeg kan få melding om trader eventuelt, men det er liksom
Not so great expectations. House Speaker Kevin McCarthy warns that the two sides
Ja,
are
heldig dere.
nowhere near
Det er litt
deal.
vanskelig å kjøre i politibiler og trade samtidig.
And what the latest 13F filings
Hey,
tell us about
son,
the US economy, two billionaire families'
ja,
offices bet on artificial intelligence, while Berkshire Hathaway
Ja, jeg må
bets
bare
on
sette
digital
på
banks
lyd,
and
for jeg
wagers
har
on
rett.
Capital One. I'm Kriti Gupta in
Så.
New York with Anna Edwards in London. Anna, a lot going on the macro
Jeg
front.
vurderer også å bare
Going
holde
on
den
in the
her i
micro
uka
front as
eller
we
to.
kind of wait for
Bør
some sort
jo
of
gå
direction
ned i
from Washington, both on the debt
sopplesene og
ceilings
sånne
are
ting ser
saga,
ut,
but
men
also any developments that we're going to get from the G7. What it means for markets is a whole lot of nothing, it feels like. What are you seeing?
Yeah, certainly in a bit of a wait-and-see mode ahead of those debt conversations later and the data coming out of the US perhaps later on. Of course, the debt ceiling, the big talking point this week. Stocks Europe 600 then, with that in mind, Kriti, going nowhere, as you mentioned, down by 0.1%. Most sectors have been in negative territory for this morning, although there have been some areas of brightness around technology, for example. Vodafone in the technology space is down by just over 4%. This is a business that under a fairly new CEO, she's been with the company a long time, but new in the CEO seat, is restructuring. They operate across Europe, not just in the UK, also Germany, Spain. They are announcing this morning 11,000 job cuts. Big restructuring exercise. The market unsure at the moment about some of the numbers as well. So the stock down over 4%. The pound is at 125.41, really recovering from being down 0.4% against the US dollar earlier on. We got this payrolls number that seemed to catch the market's attention in the way that it doesn't normally. Distracted us from maybe the unemployment rate and the wages conversation, which were maybe more complicated and still suggested a tight labour market. But that payrolls drop substantially into negative territory really sent the pound dropping earlier on in trade. And Brent crude is down by 0.4%, also turning around some strengths of earlier on in the day. We've seen the strategic petroleum reserves narrative building in the US. They're topping up those stocks. That pushed the oil price a little bit higher, Chrissy. And so that's certainly something we're watching, as well as the Chinese growth story. What do you see in the US markets?
Yeah, I think it's a similar theme, Anna. The idea here that when you kind of similar to the pound, that nitpicking of data to just kind of get any incremental hint about where the economy is going, that's what's going to dominate markets in a market that, by the way, is doing a whole lot of nothing this morning. Futures are relatively unchanged. Really, again, waiting for that retail sales data and to start the retail earnings that we're going to get in, again, less than 30 minutes. Two-year yield, 397, just shy of that 4% level. Remember, we are seeing a small bid into the bond market early on into the session, and that's marginally taking the dollar with it. But again, that strength you're seeing in the pound is going to be pressuring the dollar just a little bit as well. NYMEX crude, Anna, you hit at 74 on handle on Brent. The spread between NYMEX and Brent is widening, though. So you are seeing a 70 handle on crude, down about 0.5%. I love to look at the commodities.
Ja, men så natta han gikk litt til minne, og han er ute og kjører og fikser noe greier.
Later into the pre-market session, it's not necessarily looking good, Anna.
Yeah, okay. So oil prices down, futures a little bit softer. Let's talk FX, though. We're joined by Esther Reichelt, Commerzbank FX strategist. And Esther, give us your thoughts on how the dollar performs here, because, of course, the debt ceiling debate is the big subject in Washington. It is having an impact on some markets, not necessarily stocks, and arguably it is having an impact on treasuries. What is it doing to the dollar? What should it do to the dollar in various scenarios?
Well, that's a super interesting question, and I think this uncertainty about this question is what's currently driving the market. I mean, I guess everybody was a little bit surprised about the US dollar actually appreciating despite this US debt ceiling debate. I mean, there are some comments about this whole risk being priced out, looking at this low volatility levels and so on, but this does not really fit to the news flow we get. So, and I think it does more indicate that the market is actually leaning towards a stronger dollar, or to go in with a stronger dollar into this whole US debt ceiling uncertainty. Because there is a huge uncertainty about how markets will actually react if we might see a hypothetical default. Because it's not about the US not being able to pay their debt, but rather about, like for political reasons, not wanting right now. And given this uncertainty about how markets react, it's always good to have the US dollar because it's a safe haven, it's one of the most liquid assets, and I think that's what we are actually seeing right
Jag
now.
har sett alerts på EVM själv, så jag
It's the
bilder
no-brainer,
bort
it feels like, to
10 minuter
do the
kortare.
dollar call. But I have to say, are you worried at all about becoming a crowded
Så
trade?
sånn som han Johnson tilbake etter hvert, men så ikke vi så tallene. Da søker han hel polsk familie av snekkere i lag som skal få gjort mye arbeid. Ja. Det blir ikke så veldig aktiv streaming fra Antwerp på ettermiddagen, tipper jeg.
Well, absolutely. I mean, I'm very concerned that this US dollar strength we're right now seeing is just due to this whole, basically traders not knowing what to do. And this sentiment could shift very easily because the risks right now are clearly on the US dollar side. Concerns about regional banks' performance in the United States, this whole debt ceiling debate. This could easily shift against the US dollar. But right now, everybody's looking what everybody else is making, and the US dollar trades strong. This could easily shift with some more like concrete negative news on the debt ceiling debate, maybe later today. But I guess the likelihood of this shift against the US dollar sentiment will increase the closer we get to this actually debt ceiling or default deadline.
Okay, yes, so we'll continue to monitor it and check in with you perhaps the closer we get to June 1st then, Esther, if these conversations continue. Stepping away from the dollar dynamic and to the pound, a few hours ago we got this data out of the UK labour market and the payrolls number, which isn't a number that seems to get a lot of attention from commentators usually and from economists, and yet that seemed to be the thing that was driving weakness in the pound earlier on. The pound has recovered a little from that, or entirely recovered from that. I wonder what you make of that data set this morning.
Actually, this data today basically confirmed my view that, like the market is expecting the Bank of England that the Bank of England wants to do a rate pause rather sooner than later. So any data indicating a cooling of the economy, they jump on, trade the pound weaker, pricing out interest rate hikes. However, it's pretty clear that inflation is still very high at the UK. Inflation risks continue. And I mean, like, if you look at the wage increases, they are still strong. So this still indicates that the Bank of England has to do more. So what we see is the Bank of England is rather reluctant, waiting for the possibility of a rate pause. But of course, nobody doubts that the Bank of England will do what is necessary if there are inflation risks. And this mixed data, therefore, was also reflected in a very mixed pound sterling performance. Everybody's shifting between, okay, so this is arguing for a rate pause, or rather, well, the Bank of England actually has to do more, which is, of course, then supporting the pound sterling again.
Esther, I want to go from the G10 story to the EM story and very casually avoid the pound as an EM currency joke that there is. I want to talk to you specifically about the lira here and whether or not, in the absence of any real direction from a lot of these G10 countries, where you are essentially navigating the same stories, inflation at the end of the day / debt ceiling, is there an extra incentive to perhaps take on a little bit more risk-taking into the EM FX world, perhaps a little bit more incentive to trade a currency like the lira?
Oh, well, definitely not right now. I mean, we are heading towards runoff elections in Turkey. There was a huge disappointment by international investors, which had hoped for a more market-friendly government, and which does not seem to be the case right now. I guess for Turkey, actually, it's very difficult to trade it. All the exchange rate is still very steered, and there is a strong incentive of the Turkish government to keep it stable until the runoff elections. But it's also clear that there is a huge depreciation pressure. So Turkish lira basically seems like a one-sided trade, and it's difficult to get onto the other side.
Esther, very quickly, I want to talk to you. Actually, you know what? We're going to wrap it up there, but we thank you, as always, for joining us. We really appreciate it. Really covering the gambit when it comes to FX and the story there. Esther Reicholt of Commerce Bank, we thank you, as always. Atlanta Fed President Raphael Bostic says he's starting to see the Fed's policies to fight inflation take hold, but not to rule out any more surprises. He sat down for an exclusive interview with Bloomberg's Michael McKee.
When I think about the trajectory of inflation, I think that we've made a really good progress on it. If you think about where the economy was and where inflation was last summer compared to where it is today, we've seen really positive things happen. We're not at the 9 and 10% levels. We're in 4.5 to 5 range. Now, look, that's still two times what our target is. So there's still a ways to go. But I do think that we've seen a lot of some of the froth really come out of the inflation measure. You know, one of the things I look at, one of the measures I try to keep track of is the number of goods in the basket of this that's used to calculate the CPI that are showing inflation above 5%. Right now, in the latest report, that came under 50%. Less than half now are in that range, or at one point it was 70 or 80%. So I think we're seeing that breadth narrow, and that's a really positive sign. So I think we are starting to see our policies really work.
But do you rule out any more additional rate increases?
No. Oh, no. Look, in today's environment where there's so much uncertainty in the economy, I don't think we can really rule out anything. Look, I think we are in a place now where we've been in restrictive territory for something like 6 to 8 months. That's about the time you'd expect to see our policies start to bind on the economy. And when I talk to businesses, they tell me they're starting to feel that bind, and that's a really positive thing. But as you know, we've had surprise after surprise after surprise over the last few years, and most of them have been to the negative when it comes to getting closer to our inflation target. So I've got to keep that on the table for sure. But right now, I'm feeling like let's see how our restrictive policy is working, and that'll give me a sense of what our next move needs to be.
Well, you still have a PCE inflation report and a CPI.
You got two more, exactly.
Before your next meeting. What are you thinking now, though, for the June meeting?
Well, if I had to have a vote right now, I'd probably vote to hold. But as you noted, we got two more inflation readings. We have a jobs report that's got to come out. There's a lot more information we're going to have as to what's going on.
Atlanta Fed President Raphael Bostic speaking with Bloomberg's Michael McKee. Now later today, we'll have an exclusive interview with the Richmond Fed President Thomas Barkin and also hear from the Chicago Fed President Austin Goolsbee. Coming up on the program, Macron's EV pitch, how the French president is trying to convince Elon Musk that France is the next big place for Tesla. More next. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1, so it's ready right when you pull up your car.
how do you manage these kind of two different staffing needs, right? And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Chrissy Gupta in New York. Now, the French President Emmanuel Macron is looking to woo investors to the country with his Choose France event that's been taking place, turning on the charm offensive with Tesla CEO Elon Musk in the Elysee Palace on Monday. Macron is hoping to make northern France a hub for the production of electric car batteries. Bloomberg's Oliver Crook joins us now for more. And Oliver, you've of course been very close to the autos story across Europe. What did we get from that meeting that took place at the Elysee?
So apart from that pretty awkward video that you just showed, you got some sort of vague commitments. You had Elon Musk saying to Le Maire, actually, that he will probably make a significant investment in France at some point in the future. So from that standpoint, nothing terribly concrete apart from this sort of agreement. But, you can understand why France wants this. In Germany, Tesla employs 10 to 11,000 people. They have a Tesla factory just outside of Berlin. But this prompts a couple of questions. One, how will the French car makers react? Already, Tesla's blowing up the whole model for the auto industry and legacy automakers. And Musk, though, is someone with a rather sizable appetite for challenges. Is that appetite large enough to take on French labor laws? Musk is not exactly known for being someone that believes in a sort of work-life balance reputationally. And obviously, just a few weeks ago, you saw, Paris burning because Macron was trying to reform the labor market. So these are some of the questions, I think, going forward for it. But again, this is really part of Macron's bigger plan to attract more business. And again, it is still actually quite an attractive place for business if you look at the EY surveys in terms of attracting foreign investment. In Europe, it tops the chart.
How does that square then with this kind of massive push for the EV, the electrification process? Because he also was very vocal when it came to President Biden's Inflation Reduction Act and being competitive. How is this being received by his international peers?
So for Macron and for Europe more generally, you have this situation where Macron is talking about reindustrializing the economy. So the French economy is only about 9% industry. In Germany, that's close to 20%. And so you really, though it may not be the biggest companies, actually the biggest companies in Europe, as you know, is in France. It's LVMH. But its revenue is 30% dependent on China. So this is all about reducing dependencies from externally, but also creating, stimulating the economy that actually employs people. Volkswagen has more than 600,000 employees. LVMH is like around 100,000. So it's all about developing this and reindustrializing the economy. And he's walking a fine light, though, because he's talking a lot about we need to produce in Europe, we need to put Europe first. But the name of this event yesterday was Choose France, right? And he brought 200 business leaders, and he got $13 billion worth of investment. But this is a bit of the line that you've got with the state aid rules rolling back, and it's going to be sort of a conflict for Europe going forward.
Okay, so he's talking to Musk. He's talking about Tesla. Tesla has feet in various parts of Europe already then, Oliver. What about the AGM that's taking place at Tesla today? What's going to be in focus there?
That's right. I think one of the main things that's going to be in focus is Musk's strategy that is really he's developed over the last couple of quarters of price cutting, of putting volume over margin. And this is a tactic that investors have not necessarily rewarded. And you saw it double down even yesterday. Yesterday in Germany, Tesla has cut prices additionally to those who are buying fleet, large bulk Tesla. So right now for Model 3, you get about 30% off for these fleet things with all of the subsidies and 25% off for the Model Ys. That is definitely going to be one of the questions. Investors are not necessarily convinced about the strategy, at least not all of them. You also had the story on Friday that was a bit buried. They had to recall basically all of their cars in China for a software update to deal with the braking. That's 1.1 million cars, so that may come up. But then again, there's also this question of, is Musk too distracted? So maybe the appointment of a new CEO at Twitter helps us out there, but there are already shareholders that are saying that they want a meeting with the board to discuss CEO Elon Musk's performance. So all of this to watch for the AGM later today.
Okay, we'll keep that in focus then in terms of the auto space. Thanks so much. Oliver Crook joining us there from Berlin. Coming up on the programme, back to one of the things we talked about already, the strength or lack of for the US consumer. Home Depot is out with its earnings report shortly. We will get a preview next. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Let's get a look at some of the stocks we're watching in pre-market trading in the United States. Starting off with Warren Buffett and the companies. Berkshire Hathaway has chosen to up their stake in HP and Capital One, already cashing the Buffett bid this morning. This is really important as we see Berkshire Hathaway kind of returning to a little bit of the old guard, dumping some of the regional banks, instead going to some of the classics. Capital One Financial, HP up about 1.5%, Capital One up about 6% as well. He's not the only investor we're keeping an eye on, though. Michael Burry getting his bets as well. This time, not in the States, though. It's abroad. Alibaba and JD.com, although both kind of dropping from that overnight Chinese data, they are on Michael Burry stories radar, both dropping by the tune of about 1% and 0.6% respectively. You look at his portfolio, though, almost 20% of his portfolio is just those two names, Alibaba and JD. So he is getting that exposure to the Chinese internet story. That's going to be really important. As we talk about the tech story, let's talk about the tech story right back home, and specifically in biotech. Amgen right now, their $28 billion deal for Horizon Therapeutics, well, it's getting challenged by the FTC, and that is a really big steal in the biotech space. Amgen shares higher by 0.6%. Horizon, on the other hand, the target taking a little bit of a hit, down about 17% in the pre-market. But again, all eyes on those retail earnings. We are in the countdown to Home Depot reporting ahead of the opening bell today. Analysts warning the results may just show a little bit of pain, signs of weaker consumer spending. The shares are already down about 0.3% in the pre-market. Drew Redding, Bloomberg Intelligence analyst, joins us now on what to expect. Drew, thank you as always for waking up early. What is on your radar? What is the gauge of success for Home Depot?
Sure. So I think it's important to first point out that Home Depot has been on an amazing run the last couple of years, but we think that some of the tailwinds that they benefited from during that time are starting to fade a little bit. And the most important one is the trends we're seeing with the consumer. So from the macro perspective, you have still high inflation, you have real wages, which has been pressured for the better part of a couple of years. And you've got credit card debt, which has started to explode. So it's kind of showing the pressure that the consumer has been under. But at the same time, at the company level, Home Depot's facing challenging comparisons. They've got commodity deflation. They're facing some weather-related challenges. And most importantly, and something that we're looking at for the remainder of the years, we think we're going to start to see more of a moderation in big-ticket spending. And that's really what's driven the home improvement retailers over the last year.
Drew, good morning to you. So we could see the weather having an impact here. We could see a pullback in consumers' enthusiasm for those big ticket items. What about conversations, though, around whether you move or improve? So if the housing market is looking difficult to navigate, you might decide to do improvements. Does that act as a bit of a buffer to a company like Home Depot?
Yeah, we certainly think that that has been a big driver of their success recently. They'll tell you that home improvement space has decoupled from its traditional relationship with housing turnover in the existing home market. Now, typically when you think of housing transactions, when you put your home on the market, and then, as soon as you make a purchase, you tend to fix them up. But because there's been such a lack of mobility in the market due to higher interest rates and generally weak affordability, we have seen people stay put and make investments in their home.
Drew, talk to us a little bit about the backlogs that we're seeing with the same store comps. And we're talking about these specific kind of metrics. Which one is going to be top of mind for you?
So certainly everybody's going to be looking at the trends in same store sales. The consensus is for a low single-digit decline this quarter. We think that there could be some risk to that due to some of the factors we mentioned. But more importantly, I think there's risk for the full-year outlook. Home Depot guided to about flat same-store sales during their last call, and that outlook kind of assumes that the broader home improvement market declines only in the low single-digit range. And when we look at our expectation for the market over the next year, we're kind of thinking that the market is down anywhere, from 5 to 7%. So we think that there is downside risk to the full year outlook. And I think that's something that investors have been kind of latching onto, is that while you saw Lowe's be a little more cautious in their outlook, Home Depot has kind of maintained a little bit of that enthusiasm by keeping their comp guidance flat. So we do think there's some risk in that regard.
Drew, thank you very much. Drew Redding joining us there from Bloomberg Intelligence, and we'll certainly stay tuned for those numbers due from Home Depot imminently. That is it for early edition. Surveillance is up ahead. Tom, John and Lisa will be with you. They'll certainly be talking you through the corporate earnings stories as they come in. They'll be hearing from Tiffany Wilding, Chief Economist at PIMCO. They'll be getting a take on the U.S. consumer through those corporate earnings, but also the retail sales numbers. They are due later on today. That's the data point of the day. And of course, building towards that debt conversation in Washington later on today. We'll see what comes of that, if anything. Do we have to get closer to X date to see any progress? Stay with us. This is Bloomberg.
one of the most fascinating entrepreneurs because you also started really young. What did you learn? Did you always think that you'd be an entrepreneur?
Probably, yes. I think, which is a bit sad,
From
isn't it?
age, what, 5?
Well,
6?
maybe, I'm not sure. I come from a family of entrepreneurs, so even though I probably can spell the word and still can't occasionally, it's sort of in my blood. But it's really fun starting a business. And fun growing a business. I feel it's a real privilege. And I started my business officially at 18, but I think I knew I wanted to do it very differently from about 15. But I'm sure it's, if you're surrounded by it, it feels very natural. So yes, it's fun.
And it started how? You started by you went to Florence. It was in Italy, and you started handbags.
Yeah, so I knew I was actually given a handbag by my mother when I was about 16, one of her old handbags, and I remember how it made me feel, and I think fashion is fascinating for the mood-changing, the confidence-boosting aspects, and the sort of tribal aspects of what fashion does. And so I went at 18 to Florence, knowing that was the home of leather goods, which is what interested me. I just wanted to learn, actually, and be surrounded by craftsmen who, making things is important, and that's going to be very interesting, I think, over the next sort of 10 years. I think the onshoring of craft and manufacturing is going to be fascinating, actually. I watched the offshoring, I literally saw it, and I think we're going to be seeing that coming back to local. We have to. When we're all looking at our objectives in terms of carbon, proximity is going to be key.
Concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg.
I'm leaning towards the bond market view that we're in for some volatility.
We're kind of bouncing into a ceiling at a floor, effectively.
We think the market's a little bit generous in terms of Fed cuts coming.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation.
I'm in the camp that it's not going to go neatly back to 2%. I think there's another upside surprise waiting out there in the inflation data.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures just a little bit softer. Here's the top line from Secretary Yellen this morning. TK, you'll love this one. Time's running out for the debt ceiling conversation.
I thought it was going to be the Boston Red Sox. It's day by day, tick by tick, and we're going to stagger towards where something actually gets done. I believe there's a meeting today.
There is.
Is that like the first, we moved from Secretary Yellen forward to an actual meeting with actual substance where they'll say, wait for Wednesday.
Speaker McCarthy and the President of the United States coming up a little bit later.
Yes.
Compare and contrast this. From Brainerd over the weekend, the National Economic Council Director saying the staff are very engaged. I'd characterise the engagement as serious, constructive. Speaker McCarthy says this. You'll love this, Lisa. Goes on to say, we're nowhere near reaching a conclusion. He found that ongoing staff-level meetings are not productive at all. The talks so far have not produced agreement on anything. Do you think they've got different staff telling them different things about the state of conversations down in Washington, D.C.?
I think that right now there is a different political calculus to seem like there's progress on one side and not making progress on the other side to try to negotiate perhaps a better deal. All I can say is it's clear as mud, and people are so excited to talk about this yet again, and that is definitely what's going to dominate. My favorite was Janet Yellen coming out and saying, look, this is making the U.S.'s borrowing costs more expensive if you look at the front end. It's like the one area of markets that actually starts to care. It's like, we're going to use that because that's all we got.
We're already seeing us pay the price for this mess and the delay around the conversation. Secretary Yellen actually doubling down on her warning that the ex-state is going to fall sometime in early June and maybe as early as June 1st. We'll come back to that a little bit later. TK wants nothing to do with this conversation. Let's talk the US consumer. Later on this morning, 8:30 Eastern time, US retail sales. We get some earnings from Home Depot. They're dropping right now. Lisa's going to go through that for you. Tomorrow, Target. After that, Walmart. Just getting the top line from Home Depot right now. They see full year comp sales down 2 to 5%. They had seen it previously, Lisa, as approximately flat. So that's a slight downgrade to the outlook from them for sales.
There is a question about whether this really is reflective of the broader consumer or whether this is a Home Depot specific and housing specific type of story. Those shares lower by almost 5%. They said that it has to do with lumber deflation and unfavorable weather. So perhaps there is something that is more specific to the industry rather than a larger statement about the retailers, including Target tomorrow and Walmart on Thursday.
Over the weekend, they made very clear it's been a very cold spring across this nation. Certainly, we've experienced that in New York with just the first warm days here in the last couple of days. So, yeah, weather's part of it. But lumber deflation really gets my attention, and you're going to see that across other products where they don't inflate. And, John, what you're going to get here is a feed through the income statement where you've got less inflation, less nominal GDP, that animal spirit of the nation, on a price in units basis, perhaps leading to a lesser revenue in the you go down the statement.
Getting some commentary and some numbers as well. So the commentary reads as follows. They observed more broad-based pressure across the business. To Lisa's point, the weather in California disproportionately impacted the results. For the outlook, full-year EPS down 7 to 13%. Lisa, they had previously seen things down in the mid-single digits. So it's a downgrade to the outlook from Home Depot this morning.
In a big way. I mean, the idea that fiscal year sales and comparable sales they see down 2 to 5% versus flat earlier really highlights this pressure. Again, how much is this a Home Depot issue and how much is this a broader kind of retailer issue is sort of one of the questions of how do you take the idiosyncratic stories and turn them into some sort of broader macro play.
Very quickly, to flip it to a broader view, the Home Depot in Beijing had a tough time over the last months too. We should not forget China's statistics today were a little soggy.
Disappointing.
Tangential, but nevertheless disappointing.
We'll talk about the downsized prices in China in just a moment. Home Depot in the pre-market negative by more than 4%. Tomorrow, Target. The day after, we'll hear from Walmart as well. The broader market just taking a move lower, just a little one on S&P 500 futures, negative right now by 0.2% on the S&P. Yields come in as well, Lisa, by 3 basis points on a 10-year, 346.63.
We'll get a broader read on the retail sector at 8:30 a.m. As you were mentioning, we do get those retail sales, and it's expected to be dominated by auto purchases as well as what we see more broadly in gasoline. However, how much is this really going to be inflation-driven? Home Depot shares lower by almost 5%, as you were saying, as we get the sense that perhaps there is some sort of shift in the consumer. 10 a.m., I'm really focused on this, actually. Senate banking hearing is going to be taking place with Silicon Valley Bank executives, including former CEO Gregory Becker, who says that it's the Fed's fault for basically saying that rates were going to remain low and then raising them. And then at the same time, there is going to be a separate hearing in front of the House Financial Services Committee with Fed Vice Chair for Supervision Michael Barr. So I really want a split screen of Greg Becker basically saying it's the Fed's fault, even though he sat on the board of the San Francisco Fed, but I digress. And then basically Michael Barr coming out and saying, terrible management. Yes, we could have done better, but, you know, banks are going to fail. And then also today around 3 p.m. is that meeting between President Biden and House Speaker Kevin McCarthy. Do we get any sense of how these talks are progressing? The one area of the market that really cares is the one-month T-bill yield, which has gotten to about the highest since at least 2001. Wow. So we are seeing some moves on the front end, and Jenny Yellen is going to talk about that.
Imagine being an investor last year, sitting in tech stocks and getting absolutely hammered and turning around. Well, I listened to the Fed. They told me it was transitory. They told me it was transitory. Can you believe he's blaming the Federal Reserve for that? They told me it was transitory.
Federal Reserve and social media. I mean, talk about finding the most convenient kind of blame games in town.
Wow. Marvin Lowe joins us now, Senior Global Macro Strategist at State Street. Marvin, wonderful to have you with us on the program. Tom wanted to talk about the note from SocGen's Kit Jukes this morning. He said this: US data will dominate sentiment and will probably deliver solid retail sales, decent industrial production. The debt limit remains a major issue, but for now, evidence of recession is missing. Marvin, is recession evidence missing right now for you?
Yeah, I mean, it's certainly not clear. I still think that a recession is unfortunately somewhat unavoidable after the banking situation, and you know we're waiting for that to make its way through the economy. But the consumer is still strong, jobs are still robust based on the latest numbers, and inflation is proving sticky.
I look, Marvin, at the inflation proving sticky, and yet there's a single headline from Home Depot. Granted, it's a commodity. Granted, it's volatile. But lumber deflation. Are we going to see more headlines like that?
You know what? Probably. You know, the good side of things has been a bit more volatile in this discussion. You know, it does come down to services, wages in this economy, and that's really where the Fed is focused on. And it is the stickiest of the sticky, if you will, parts of the inflation discussion.
But on a global basis, I mean, I looked at copper very carefully this morning. I looked at Newcastle coal in Australia, folks. This is north of Perth. And, you know, I look at these commodities, and the fact is they're rolling over, indicative of a slowing China, maybe a misguess on the Pacific Rim. How do you fold that into your investment allocation at State Street?
Yeah, I mean, for sure, it is signs that you've got growth problems that are starting to emerge as we go through, the 1-year anniversary of this aggressive tightening cycle within the developed markets. Those recessionary signals are all over the place. It is this kind of one slice of the American consumer that's making it harder to play. But I think if you can look past the timing of this consumer, which again, with some of these retail earnings, with some of this data that's coming out softer, you do get to a much slower growth type of discussion. And if you're willing to put those investments in place, they're out there.
Do you think that this is disinflationary to the degree that would give a bit of a reprieve to the Fed, especially if the stress that we're seeing in the banking sector is real, but a slow burn that isn't going to necessitate some sort of real response?
Yeah, for sure. So I definitely am in the camp that this credit tightening that I expect in the second half of the year is going to have a bigger impact on the economy than maybe some of these risk assets are saying, particularly on the default side of things, particularly on just overall loan growth slowing, and you do get a more disinflationary type of world once we get there. The timing is really hard. It's not really the expertise of global macro to pick one month over another. But going into 2024, I think that those headwinds seem much stiffer.
Where is the debt ceiling debate on your radar? Are you excited? Do you wake up every morning to get a sense of the machinations between the different discussion points that the two parties have?
You know what? If you talk to my coworkers, they would say I get overly excited about it. So yeah, I certainly do think that the market is a bit sanguine about it this time, particularly given the volatility on the deficit side of things. It's just a lot harder to pick the date when we're going to run out of money, and that really creates a problem for Washington, which seems to need that impetus to get things moving. I'm also very cognizant of the amount of reserves that moves around once we get the deal. And that in and of itself creates more challenges for bank deposits, at least in the short term, potentially in the intermediate term, kind of just given how the shape of all these short-term curves are somewhat inverted at this point.
Marvin, let's say we knew the ex-date was June 1, June 1st. Would there be a different practical ex-date, a deadline that we had to really come to an agreement on to pass the legislation needed to ultimately skip the dreadful outcomes that most people are predicting if we do go through that ex-date?
Yeah, I think there would be a greater sense of urgency for sure. We are running out of time very, very quickly. The president is still apparently going to the G7. So, again, the litany of conversations that are coming out of Washington show different degrees of concern. And that in and of itself is a concern when you're talking about a date two weeks away. So how you get there is really some sort of, hopefully, acknowledgement that June 1st is a date that we should focus on in a temporary agreement to get us past, or else, we go into territory that we've never been before.
I thought you were done then, Marvin. Just got trigger happy on this side of the desk.
Marvin's
Apologies.
Killing it.
I just hear the gap. And I'm like,
yeah.
Let's go. Marvin Lowe, State Street.
I'm worse than you.
Marvin, thank you. You are. That's true. I won't disagree with that. Home Depot in the pre-market down by more than 4%, down close to 5% this morning, cutting the outlook for 2023. Get a read on the US consumer through the week. Retail sales coming out in a couple of hours' time, Tom. Then it's on to Target, then on to Walmart.
We talk about 2-year yield collared, and so, we're making jokes with Bramo about the euro at 110 collared as well. Home Depot's collared. And the range here, coming off the pandemic celebration recovery, everybody's down at Home Depot. John, I love the Milwaukee 18-volt lithium-ion cordless belt sander. Really helpful at home. That's really, use that on the nails of the dogs. And, they're collared. Home Depot's collared 265
Sounds like animal cruelty, Bramo. Don't know about you.
Sounds like he's a little bit sick of the bills that he's paying at the groomer.
You got that
How do you
right.
feel about that?
We do this every quarter. Are you ready?
Yeah, let's go.
Have you been to a Home Depot yet?
No.
Okay.
There's one down below us. There's one right.
I know. You've never been?
He's never been.
Have you not done any home improvement ever?
I have the help go.
Like
every
paint,
quarter, still never been.
hooks, pictures.
No. Stock is down by more than 4%. In the next hour, Ed Yardeni of Yardeni Research. US retail sales about 2 hours away from New York. This is Bloomberg.
A
Surveillance road trip to Home Depot. That's what we're working on. Yeah, keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. President Biden meets with House Speaker Kevin McCarthy and other congressional leaders again today to try to avoid a default. And McCarthy says the two sides are nowhere near a deal to raise the debt limit. The standoff has been roiling markets as investors bet whether an agreement can be reached. Ukraine says its air defense system defeated what it called an exceptional Russian missile blitz overnight. The attacks included 6 hypersonic missiles that were aimed at the capital city, Kyiv. Ukraine says it destroyed 18 Russian missiles. Global oil demand will rise more than expected this year because of China's post-pandemic rebounding. That's according to the International Energy Agency. The IEA says world fuel consumption will rise by 2.2 million barrels a day to a record 102 million. The agency expects demand in China to hit an all-time high. Wells Fargo has agreed to pay $1 billion to settle a shareholder lawsuit. The plaintiffs accuse the bank of making misleading statements about its compliance with federal consent orders. Now, that was in the wake of the 2016 scandal over the opening of unauthorized customer accounts. Wells Fargo ended up paying $3 billion to settle the government probe. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Multi-trillion-dollar industry. There's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week. Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep bringing World Cup.
This is a 3 as the economic picture does.
Is the okay is getting ready to make
Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook, and the reason they haven't turned the pages is that their business actually remains pretty sound.
Then Bloomberg's Michael McKee speaks with Chicago Fed President Austin Goolsbee.
We should gather further data, and we should be extra careful about raising rates too aggressively.
The most in-depth coverage and analysis of the Fed, right here on Bloomberg, your global business authority.
We're only a couple weeks away, but because of the timeline to pass something in the House and pass something in the Senate, you got to have something done by this weekend. And we are nowhere near any of that. I appreciate the president sliding into talk after 97 days, but there is no move.
Round 2 of high-level talks. A little bit later today, there was House Speaker Kevin McCarthy sitting down with the President of the United States later on the debt ceiling debate, saying that talks aren't constructive, they're not productive. At the same time, Lael Brainerd is saying talks are constructive, they are somewhat productive. You're loving this, aren't you,
I
TK?
hate it with a passion.
But you've got 2 weeks of it.
We may have more of that. You know, they're going to kick the can. The can is kept in a hermetically sealed vault in Providence, Rhode Island.
Who gets to kick it?
I don't know who's going to kick it. That's actually
Kevin
a good
McCarthy
question.
and maybe President Biden. It's like who gets to kick the
Maybe
can.
it'll be a joint kick. Who plays Lucy and holds the damn can?
Let's get to
Probably
the price
Wendy
action
Schiller.
briefly. On the S&P 500, we are just a little bit softer on the S&P. We're negative by 0.14%. Yields a little bit lower by 3 basis points. Slightly defensive to kick things off this Tuesday. If you want a stock move, here it is. Home Depot, trying to get up off the floor. We are negative by 4%. Coming out with earnings a little bit early this morning, about 20 minutes ago, 15 minutes ago. And ultimately indicating that the outlook has soured. It's not as good as it was before. They've had to cut the 23 outlook, Tom. This comes ahead of earnings a little bit later this week from Target, from Walmart. All of that still to come, and retail sales at 8:30 Eastern Time.
This goes back to goods and David Rosenberg talking about goods disinflation, good deflation. The headline is lumber deflation, and there's a lot of other things besides lumber, and you wonder where it's going to be. Oil this morning, $71.11 is not $100 a barrel. You know, it's changed.
I'm with you. The data out of China, did you want to talk about that? Downside surprise, retail sales, industrial production, take your pick, not looking good over there relative to the boom that people expected at this point of the year.
We'll see that at 8:30 this morning. Right now, not a history lesson, but where are we right now in the silliness of the debt ceiling debate? Joining us is a real authority on this, Wendy Schiller, is director of the Taubman Center for American Politics and Policy at Brown University. Okay, Wendy, so there's the Public Debt Acts of 1939 and World War II, 1941, and then we get to Eisenhower in 53, and the debt's an outrageous $275 billion, and the Senate has a conniption, and they call up Goldfinger, and they sell $1 billion of gold at Fort Knox to cover the debt. I mean, that's the history of this madness. Are we repeating history, or is it new this time?
Well, Tom, I think you're raising an excellent point about sort of the relative scale of debt. I mean, that's what's historical. I mean, right? It's just a huge amount of debt. Now, can we handle it as far as GDP? Well, people say that we can. But even 1974, the Budget Control and Empowerment Act set deadlines for the debt ceiling, as you well know. May 15th, yesterday, was, the traditional deadline. It was do or die. You had to do it by then. And basically, the House and the Senate, no matter which party controlled it, met the deadline under Ronald Reagan. And somehow that deadline, like everything else in Congress, has gone away. So right now they're facing, just continuous raising of debt, continuous deficits. At some point, somebody's got to cut something. And we've been at least more than 10 years from a major budget agreement to cut the budget. If Obama had to do it and Biden was his VP, I think Biden recognizes that there are going to have to be some cuts made. I think they're looking for a short-term window, get a clean debt ceiling for the next couple of weeks, and hammer out a longer agreement.
I mean, I got like 10 questions here and no time for it. Let me just cut to the chase as well. The cliche, kick the can down the road, translate that into modern political theory.
Well, the fundamental fact is that most people, given the size of the federal government and the budget itself, cannot trace or track what their member of Congress does, senator or House member, or even the president, and the impact it has on their lives. We keep hearing doom and gloom. The world's going to end. The stock market's going to crash. Nobody can buy a house. There'll be no mortgages. But people don't quite grasp it. And politicians know that people don't grasp it. So they can kick it down the road. They can find all sorts of gimmicks, and they can keep spending. And the other sort of dirty little secret is that Republican members of Congress still benefit from discretionary domestic spending in their districts. So they say they want to cut it, but in fact, if you try to cut agricultural spending, good luck with that. Can't get it done. So this is the real conundrum, particularly the size and scope of the budget.
Edgar Denny, who's going to be coming on the show of URW Research in about a half an hour time, says that he ultimately thinks that this is going to play out like 2011, except with a more clumsy kind of legislative result. Do you agree?
Yeah, I mean, I do. I think, I would say 2011 and 2013, right? So the grand bargain plus also shutting down the government by the Republicans on the budget side, and then the Republicans doing really well and taking the Senate back in 2014. Republicans do not see a downside to shutting down the government or having an interruption in the flow of federal dollars, just for a little while, because they want to show that the world will still go on. And given that that's the mentality, and even more so now than it was 10 years ago, that's a huge challenge for the Democrats. And where's the Senate in all this? I mean, they basically said, no, we're not going to take the House bill. We're done. But that's not responsible. So the Senate's a huge part of this. And it's the same balance of power scenario as 2011, Republican House, Democratic Senate, Democratic President. So I think that's the big problem. But they know they need a temporary clean because they're not going to get it done in 2 or 3 weeks. And I think can McCarthy get that through his caucus? And that is another pushing it back to McCarthy and the Republican caucus in the House.
Wendy, you were saying that basically this has played well for the Republicans if you shut down the government for a bit. Is this how we can understand the difference in tone between Kevin McCarthy and Lael Brainerd, one saying that there's no progress and one saying talks are constructive?
Sure. I mean, the rhetoric has to be, the federal government is bad. That's what the GOP rhetoric is. They give more power to the states, scale down the government, the federal government. And to do that, if you shut it down, then people will realize they don't need it. That never happens. Of course, once you shut it down, people realize they need it very badly in every aspect of their life, and the Republicans cave. But they get political credit for trying to control spending. So this is a playbook that has been very successful for them. And keep an eye on the 2024 House elections, because that's where Kevin McCarthy's attention is can they keep the House? Can they protect those New York and California Republicans newly elected, and he stays Speaker? And that is all he cares about. And understanding what kind of deal he'll cut comes from that motivation.
Wendy, just a final word. You alluded to this just a little bit. Have you got in mind what you think the practical deadline actually is going through all of this?
I mean, it seems to me end of June, early July, by July 4th. I think that's sort of symbolic. They also go on vacation for a week or two, July 4th. I think that's something symbolic. And I think that if they haven't reached it then, not only is there sort of financial catastrophe, but I think there's a lot of political price to pay because they go home to their districts and they're going to hear about it.
So you think that June 1 date is just to put a little bit of cushion there, pad things out just a little bit from the Treasury?
Yeah, you'd certainly hope with people this smart that they'd be strategic about that deadline and knowing, giving themselves a little bit of room there. And I think they'll have to get a temporary clean one passed. This is going to be another test of McCarthy and his power over his caucus.
Wendy Schiller of Brown University. Wendy, thank you. As always, TK, you thought we only had a couple of weeks of this. You might have, say, 6. You might get 6 weeks of this.
That's a can down the road. What happens after 6 weeks? And the answer is in the Wikipedia, it's really cool. They have the debt ceiling raised by President Obama. Then you go down 3 paragraphs. The debt ceiling raised by President Trump. And then you go down 3 paragraphs. And they got the debt ceiling raised by President Biden. Why is there any other trend? I don't see any other available outcome other than to do this. And what I was doing while Wendy was talking there, I went and looked at the Kentucky public disbursements from the federal government. It's ginormous. What are you going to do? Cut off the checks to Senator McConnell's Kentucky? It's not going to happen.
Alluded to that, and your point of view from the investor perspective right now, and this is captured by the Fund Manager Survey put out by Bank of America this morning. The Global Fund Manager Survey suggesting that is overwhelmingly the consensus view, that it's not even viewed as a major risk, Bramo, because most people just assume this gets dealt with.
And that's the reason why, if it does happen, where we do get some sort of shutdown, people will simply buy treasuries because it's a short-term disruption that will cause the things to go along the way that they always have gone along. How much does this actually increase the risk of some sort of massive fissure if there isn't this sort of market pressure? I mean, really, I keep going back to this.
It's a massive fissure dropping into a toxic brew. I just...
Stir it all up.
He's trying to stir it up.
Big time.
The massive debt ceiling fissure.
Most crowded trades in the BofA survey.
Yeah, I like your
long
tweet on that.
big tech, short banks and short...
We're investing a lot in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bramo romanticising about freshly cut grass in the commercial break.
Don't
believe
me
it or
like
not.
that.
Believe it or not. It's amazing. Amazing.
I was tearing up.
Wasn't it beautiful? We'll come back to that another time.
No, we
the hay
won't.
fever.
We're not gonna be coming back to that.
Pollen counts high today, just so you know, in New York.
Thank you for that PSA.
Anytime, that's what I'm here for. Your equity market on the S&P 500, slightly negative by 0.1%. On the Nasdaq, totally unchanged. Yesterday, snap day, 2-day losing streak, I think, on the S&P with some marginal gains. Check out the bond market. Let me go through some levels for you. 2-year, 10-year. The average on the 2-year over the last month, 4.02%. Right now, 3.98. The average on the 10-year over the last 30 days, 347.58. Right now, 347. The equity market hasn't done much for a month, and I have to say, the bond market hasn't done much. It's kind of like the bumpy road to nowhere. But something did break in the last week. Euro dollar did. In the FX market, this currency pair, this was the biggest move lower for this currency pair going back to September last year. Trying to bounce back from that and reclaim 109, 108.93. But I have to say, the data's starting to turn in Europe in an interesting way. We had the German ZEW investor confidence read a little bit earlier. It's not that well followed compared to, say, the business confidence EFO index, which we talk about a whole lot more. But it's another one, Bramo, on top of a few others that I think we have to pay attention to, that things in Europe may be not going in the right direction. And I'd throw into your toxic brew the latest data out of China as well.
I would completely agree. This is sort of the tailwind that really maybe is already used up or already getting a sense of perhaps not being as strong as people previously thought. There was a belief that Europe could somehow emerge sort of dominant and stronger than the U.S. And people are checking that, especially as earnings, other than Home Depot, usually are coming out better than expected.
This is pushing back against the big consensus view. I'm not saying that consensus has shifted, but you're starting to see a change emerge from the likes of Mislav Matejka at JP Morgan, dropping that overweight Europe versus the United States, saying this: the activity upswing seen around the turn of the year, which was helped by the falling gas prices in Europe and by China reopening, is unlikely to transition into an acceleration in the second half. That's the story for Europe. For some of the data, let's get to Home Depot. Lisa mentioned it. Home Depot in the pre-market was down almost 5% at one point. It's -4 right now. Came out a little bit early this morning, in the last 30 minutes or so, Tom, basically cutting the outlook for 2023. And this tees us up for a broader conversation around the consumer this morning with retail sales, onto tomorrow with Target, the day after with Walmart.
Widely expected, widely anticipated that we would see some form of slowdown. It was greater than expected. On every level, it just simply came in greater than expected. And as you mentioned, John, the outlook was tepid, to be polite.
Big week for the consumer and for the Fed speak too. A slew of Fed speak today. You're going to hear from the following: Mester, Williams, Goolsby, Logan, Bostic, and a whole lot more. Chairman Powell on Friday. Andrew Holdenhorst of Citi weighing in on the mess, on what we might expect and what we might hear from the chairman, writing the following: he is unlikely to signal a bias for actions at the mid-June FOMC meeting, instead emphasising that policymakers will be data dependent. The crucial information will be whether Powell echoes his colleagues' concern that inflation is at risk of getting stuck above 2%. Tom, I have to say, some splintering in the Fed speak in the last 24 hours.
Maybe led by the former Vice Chair Richard Clarida. We've been wonderful to have him grace our show on the Fed day, and it's a percolating debate about the above 2% idea. Let's go to Andrew Hollenhorst right now. He's chief U.S. economist at Citigroup, acclaimed for really being out front on a set of rate increases many people did not see coming. Andrew, I want to go to the unspeakable, which is the 3-month Treasury bill has gone back up to 07, 08 levels. What is the ability of the 3-month Treasury, given what you see at Citigroup, to go up to where it was in 1999-2000, to get up to a 6% level?
Yeah, so it is interesting, Tom, that we've seen these rates that have gone up quite rapidly as the Fed has responded to inflation. And I think that's where I would just take the conversation back to. It really still all depends on inflation, what John was just talking about, and we have some different views across the committee. I think that's a healthy thing. There's some discussion now. Is inflation going to get stuck above 2%? Is it going to come down towards 2%?
Right.
Markets are expecting a pretty rapid slowing in inflation. Fed officials are a little bit more cautious about that. But if you look at where they have their forecast at the end of this year, they have core PCE inflation around 3.5%. So they really do see it slowing. In that world, you're going to see those short rates that aren't going to go a lot higher than where they are now. In a world where inflation stays higher, you could start thinking about higher policy rates again.
People like you are taking all sorts of different inflation measurements. I noticed Goldman Sachs publishing this morning off their London desk a trimmed core CPI number. Should our viewers and listeners be looking at fancy economic inflation metrics, or should they, like the Fed, just be looking at core CPI and top CPI?
So I think you want to look at all of it. That's really the approach that we take. There are so many different measures of inflation you can look at, to your point, Tom. The Atlanta Fed has an underlying inflation dashboard. All of those metrics are running quite high. You want to be careful, though, because if we start getting into the game of, let's throw out this component, let's add this component, let's adjust this component, you can get any inflation number that you want. If we just look at the monthly core CPI readings, they've all been, for the last 5 months or so, right around a 4 or 5% reading. So like John was talking about, you actually have some, kind of stability on average in certain indicators. And core CPI is one of those indicators where it's just kind of consistently coming in around 5% annualized. And that's a problem for the Fed.
Andrew, do you think this effort is time sensitive? Or does the Federal Reserve have the luxury of pushing out the appropriate time horizon to get inflation back to target?
So it's not going to make a big difference to the economy if the Fed hikes in June or waits in June, maybe hikes later on. So on the economic fundamentals, that timing is not crucial. But on the communication, the timing can be extremely important, because if the Fed doesn't hike in June, if the Fed guides that they're going to be on hold, then the market is going to price back in cuts. And that's kind of what the Fed has been dealing with. And if the market prices in cuts, then you get a lower 10-year yield, you get more stimulus for the economy. By the way, the housing market has bottomed. It's coming back now off of that bottom. So that kind of communication is what the Fed is managing more than anything else when they're deciding what to do on a meeting-by-meeting basis. Economically, they are in a situation now where I would agree with St. Louis Fed President Bullard saying that policy rates are now at the lower end of a reasonable range of what could be restrictive. So they want to be looking at data. That's what they're doing. Depending on where that data comes in, is going to determine their next step.
With that in mind, Andrew, given that we are seeing very subtle signs, and I put the emphasis on subtle, that we're seeing some splintering on the committee, just a different range of views, subtle shifts over the last 24 hours, does the chairman not have a role to play this week to get a hold of the narrative and really push forward with what you're indicating?
So the chairman has a big role to play. I think the question is whether he is going to play that role this week, or that's something that we're going to wait a little bit later for. The issue with this week is we have a core CPI reading. We're waiting for a core PCE reading. We're waiting for a jobs report. We're waiting for another CPI inflation report that's going to come out right ahead of the June FOMC meeting. So when you're in this very data-dependent period, it's going to be hard for any Fed official to push too hard towards either being on hold or towards hiking. You really want to see the data. So I think that's more what we're going to hear from Chair Powell. Yes, at some point he needs to bring this committee together, because we are hearing very different views on inflation. Some Fed officials calling it discouraging, some Fed officials calling it encouraging. ultimately, Chair Powell is going to have to bring the committee together.
In a little bit, we're going to be speaking with Ed Yardeni, who thinks that if disinflation continues at the pace that we've currently seen, that CPI could reach 3 to 4% by Christmas. And this is their wonderful life forecast that stocks seem to be buying into. How do you push back against that? I understand that the housing market is rebounding, but some of that hasn't even gotten factored into that weakness, into CPI as is. How do you push back at a time where there are signs of disinflation?
Yeah, so no doubt you have goods prices that have slowed. You have shelter prices that are slowing. Now, if I look at forward-looking indicators, it's not as clear that that slowing is going to continue. The important thing to keep in mind in analyzing inflation is that this is a dynamic process. So we had shelter prices that were running very strong. They're still running strong, but they're cooling. Goods prices were strong and they've cooled. This has shifted now into non-shelter services inflation. And that is probably the worst place for inflation to be showing up. That's where it has the potential to be most pernicious, most persistent, most long-lasting. So I would really be concerned if I were a Fed official about what's going on in services inflation. I wouldn't take it too seriously, but I would be a little bit concerned about University of Michigan 5 to 10-year inflation expectations that moved up to 3.2%. I think that's more kind of qualitative than quantitative, but that's the highest reading that we've seen in some time. That's telling you that these inflation expectations are becoming embedded in the economy.
Andrew, are the debt ceiling debates and the discussions that we keep hearing and the likely fiscal cuts that are probably going to follow, is that disinflationary?
If there were going to be cuts to spending, that would be disinflationary. But remember, as we're hearing about the negotiations around the debt ceiling, the caps on spending are probably not going to apply to overall spending. There'll be certain categories of discretionary spending that get capped. Things like defense spending can continue to grow. That can be inflationary. So I'm not sure that what we get out of this is ultimately going to be all that deflationary.
Andrew, looking for hikes in June, looking for hikes in July. Andrew Hollenhorst and a team over at Citi together with Veronica Clark. Great to catch up with you, Andrew. As always, buddy. Your equity market negative 0.1% on the S&P. I'll keep going through the calendar, the diary for you this morning, 8:30 Eastern Time. US retail sales a little bit later on today. We'll hear from Speaker McCarthy and President Biden in their debt ceiling negotiations, TK. Then on to tomorrow.
When is this afternoon?
Target, then Walmart, coming up on Thursday. 3 p.m. Eastern Time, I believe.
Close?
3 p.m.
That's sort of when their day starts.
I imagine by the time that's concluded that they come out and do those individual press conferences.
Yeah,
you know the ones,
sidewalk, the driveway.
We love those. They get in the driveway, get in front of the mic.
Yeah, Anne-Marie's got a brass
There was no progress.
That was good.
Yeah. Well, I mean, what Wendy Schiller said I thought was fascinating, that basically there is no incentive for Republican representatives to come out and say that there was a lot of progress because this is something that plays well for the constituents. So how do you read the Democrats coming out and saying, it was fantastic. We had such a good collaborative
they're not going to say that today. I mean, are we
it was trash.
seriously? Are we right today? They're going to say they're making progress. The staff is talking, but they totally disagree, right? Because they're playing to their constituencies.
I have no idea because I don't have a crystal ball about what they may or may not say. I can tell you what they have said. That's our orb, isn't it? That's our orb.
Yes.
I can tell you what they have said. Kevin McCarthy coming into this has basically suggested there has been no progress. Does he stay on repeat a little bit later?
Well, and again, how much is the incentive? We see you. We see you, Tom.
What did you learn from that? Did we ever find out what that was about?
This is, folks, for those of you without the unfortunate, this was Saudi Arabia and President Trump
what was
looking
that
at
about?
some.
What was that? I still don't know. They all had the orb.
It was the golden glow of OPEC and the
That's what it was?
experience of connecting. And I have no clue.
I think there was actually something serious to it that was lost on Western minds.
Oh, there was?
I think so. What's important about this? Brammo gets me going, and you guys don't know this, but I'm trying to help Mayor Adams here, and I got the mower out. I mean, I'm trying to help Home Depot as well. And John, for $82 large, you're into a push mower to help mow Central Park.
Is that how much a push mower costs?
It's like, it's made in Asia, and it's great, and you got to resharpen it.
Are they really like $82 now? Wow.
Yeah, well, the locks are $1 million. I used to have a lock, which is a fancy golf.
I used to work that petrol one when I was a kid.
Yeah.
Do the back lawn.
We call that Briggs and Stratton, American engines.
Is that what it was? Briggs and Stratton.
And it takes forever to get it started.
Yeah.
And then like a puff of gas comes out and you smell it.
Yeah, I take it down to get it sharpened.
It's great.
John, I take it down to get it sharpened. Madison in the 70s somewhere. Sharpen.
And then you go out into Central Park.
With a cigar.
I can't see that.
That right.
At all. The cigar piece of it, absolutely. Every afternoon in Central Park, you can find TK with a cigar. Equity futures on the S&P negative 0.1%. Chuck Grom, Gordon Haskett on retail earnings coming up next.
And he'll also be with a beverage of his choice as well. You know that. Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and congressional leaders heading to another session of debt limit talks today to try and avoid a default. President Biden has said he was optimistic a deal could be reached, while House Speaker Kevin McCarthy expressed that ongoing discussions were not productive at all, and leaders are nowhere near reaching an agreement. The former CEO of Silicon Valley Bank says the Fed and social media contributed to the lender's collapse. Greg Becker testifies before the Senate Banking Committee today. He's expected to blame the fastest pace of hikes by the Fed in decades. According to his prepared remarks, Becker also will point a finger at negative social media sentiment. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
In today's environment where there's so much uncertainty in the economy, I don't think we can really rule out anything. If I had to have a vote right now, I'd probably vote to hold. But as you noted, we got two more inflation readings. We have a jobs report that's got to come out. There's a lot more information we're going to have as to what's going on.
Great conversation with Mike McKee and Raphael Bostic there, the Atlanta Fed Bank president. Tons more coming from the Fed this week, including Chairman Powell on Friday. Going into all of that, your equity market more broadly, just a little bit softer this morning. We're negative by 0.1%, a whole lot softer, more negative than that. Home Depot in the pre-market, down by almost 5%, out about 45 minutes or so ago, coming out and cutting the outlook, Tom, for 2023. Comparable sales could decline between 2 and 5% this year. They've blamed a whole bunch of things. Unfavorable weather, lumber deflation, contributing to the drop. I think other people might have a different view on things.
There's a wide set of ideas here, and I do suggest weather comes into it, but that's always been true. They're up 17% per year for the last 10 years, and I think weather debates have been there each and every quarter. Good, bad, and indifferent. I mean, I'm just not going to go to the weather.
Have you noticed it's only FX when it's bad?
Yeah.
You know, and it's only weather when it's bad. But when it's good, it's us.
I was going to say the exact same thing. It's like, how much is weather the new FX trade, this dollar strength, or the dollar fluctuations, or whatever it is that we've got? Yeah.
Let's talk to an expert. We're not, I mean, Lisa's an expert on this because she's at Home Depot 3 times a week. John and I are clueless on this. Somebody really competent is Charles Grom. Chuck Grom is senior retail analyst at Gordon Haskett and joins us right now. And what's so very cool about this, out of the College of the Holy Cross, is this is one of the coolest things on the securities research side. This gentleman is a CPA and a CFA, and that is bulletproof across Wall Street. Combine the two, combine the accounting, Chuck, and also the financial analysis of the CFA designation. Is Home Depot a different company than the company we've known for 20 years?
No, not at all. I mean, I think there's a lot going on with the consumer right now, and you touched on it in terms of the weather impact. But I think the key line out of the Home Depot release today was demand starting to normalize, and I think that's something we haven't heard from Home Depot in quite some time. And I think that's the big issue, and understanding how long that's going to last is really going to weigh on shares here in the near term. But let's face it, I mean, March was very unfavorable from a weather perspective, but April wasn't. And we don't know the exit rate for the month of
Right.
April right now, but we suspect it was weak. And so you can't hide behind weather right now.
One of the distinctions they have is they own the pro market, or at least that's the verbiage. Do they still own the pro market, and is that the Home Depot distinction forward?
Oh, 100%. I mean, let's face it, nothing really structurally has changed here with Home Depot. Stock's down a little bit pre-market. They didn't have a great first quarter. They're cutting the guide for the year. But pro business, north of 50% of their sales, they still dominate that part of the market, particularly relative to peers. Lowe's is way behind at close to 25%. So again, that has not changed at all today.
How much is this really a housing-specific sector issue, a construction-related issue, just simply because there has been so much investment in people's homes, there has been purchases, and prices have gone up so much?
Yeah, I think it's all of that. I think demand normalization again is the key here. But you know, when rates are this high, people are not moving. But let's face it, people have jobs, so they're still investing in their homes. We're just seeing category demand normalization across the board. And I do think that their seasonal business, we'll learn more on the 9 o'clock call, was also soft because of some of the issues with weather here.
We are seeing Lowe's shares down in sympathy. As you can see, those shares down almost 4% as well. So people seeming to believe this is a sector-specific issue. Moving ahead to Target tomorrow and then Walmart on Thursday, how much are we going to see a similar trend in those retailers at a time when a lot of different stores are saying that they can pass along price increases and then some?
I think retailers are going to have a much harder time, taking price from here. I think we're starting to see the consumer push back. We're seeing consumers start to trade down into companies like Walmart and into categories and private brands in particular. So we're cautious on Target. We're more optimistic on Walmart. I think that the key thing here is we're starting to go through a discretionary recession across retail. And I think we're actually already in it. And I think we're going to start to hear that from a lot of companies over the next couple of weeks. If you rewind the clock, the past couple of weeks we've heard from Costco, their business has been softer. It's very atypical for Costco to have that volatility in their business. So Costco's volatility is there. Home Depot's business is softening.
Right.
It's happening everywhere.
One of my big themes, Chuck, is management's adapt. How does retail adapt to the slowdown you describe? Is it layoffs? Is it protect the margin and EBITDA at all costs? What's the prescription here looking at history?
Well, I mean, the number one thing they need to do is protect the balance sheet and control inventory levels. And if there's anything that good happened in 2022 was demand started to soften and inventories started to get in better shape. Are they there yet? Not really across the board, but they'll start to get there. And, for Home Depot, their SG&A expense control was very, very good in the first quarter. That's why even with softer business, they were able to come in with earnings of 382. So the first thing will be inventory. Second thing will be cost control. And I think the third leg would be job cuts down the road if business continues to deteriorate.
Chuck, that phrase, discretionary recession, can we dig into that just a little bit more? Is that up and down income brackets? Does that go from goods to services? Can you give me a little bit more detail on what you're looking for there?
Well, I think it's a little bit more goods than services right now. I mean, you look at the travel industry and anybody that's been at the airport or been on an airplane the past few months, they're always full. So people are definitely shifting spend towards services. But I think it's the categories that my companies sell into. We're just seeing softness across the board. Whether it's consumer electronics, whether it's home furnishings, whether it's home improvement in this case. Again, all three of those are starting to see weakness.
Chuck, how much is this going to really challenge the fact that companies have been raising prices beyond their input prices? In other words, that profit margin has to come in much more than people are expecting.
Yeah, I mean, that's a really good point. And I mean, and that's what we're going to have to watch, elasticity across the board. We're starting to see it in discretionary areas start to normalize on the price front. We'll start to see it in CPG areas, food areas in the coming months as inflation starts to starts to pull back. I'll just point out that just traffic across retail has been very, very soft over the past 2 months, and that's always a harbinger of things to come. And it doesn't look good. The consumer's pulling back, and frankly, like none of this should be a surprise after the past couple of years of splurging across the consumer space.
Chuck, I'm looking at this weekend buying the American push mower for $82 from Home Depot. I mean, we got to mow Central Park. I got to do my part for Mayor Adams. Where's their perfume section? What part of Home Depot is where they really make the margin as they get to 16% EBITDA?
It's really pretty even across the board. It really in the seasonal areas, home furnishing area, that's where the margins tend to be the best. But if you go back to here, this print for Home Depot, again, like it's not pretty, but the gross margins are actually pretty well protected, and their inventory levels are in good shape. So it's not a great print from Home Depot this morning, but it's also not the end of the world in my opinion.
Chuck, this was smart. Let's do this again soon. Chuck Grom there of Gordon Haskett. Thank you, buddy. Appreciate it. That phrase, discretionary recession. Just making notes as Chuck was talking. Consumer electronics, home improvements, Lisa, home furnishing. Are we going to see that later this week in Target and Walmart as well?
And he says yes, and he says that traffic has been really light and that's a leading indicator, and he thinks that in general consumers are pulling back. But to me, the fact that this is the leading signs at a time when the consumer is king, and that's what's been driving all the upside surprises in both inflation as well as growth, doesn't bode that well.
And John, you mentioned this yesterday. I think it just goes back to charge card usage. You really, we got productivity coming out today and a bunch of bow tie economic stuff, baloney. It's about charge cards and about what people are actually doing with credit in this time. Not only small business but individuals as well.
We started to see some signs of that. I think that got drowned out by the regional banking issue.
Yes.
But from the major banks, Lisa, we started to see some signs of that. Just credit starting to build. Starting to see people carry over balances month to month. The kind of things you start to see where weakness starts to come through.
We got that survey yesterday from the New York Federal Reserve, and it showed that credit card receivables, the outstanding balances, have not gone down in the first quarter for the first time for the same kind of period in 20 years. Normally, people pay off the bills from Christmas time, from the holidays. They did not do that this year, and that really raises some flags to some people.
When do you have the time to look for that data? I mean, are you sitting at home waiting for the charge card data?
Yes, I am.
Some of us like to read some of that data.
Hold on,
hold
on with the homework, guys. The Fed's coming out with charge card data.
Actually, no joke. I actually do call the kids over. I'm like, check this out. Isn't this interesting? And their eyes start to glaze over, and they start to look at their phones. And I say, no, this is important.
It's nice that you share that with them. I think it's nice.
Basically, I might as well be talking to them all.
I'm watching the new Pitch Perfect 3 at home. That's it's a little different. It's just great.
This is really important stuff, though, guys. I mean, look, Doug Cass this morning writing in almost immediately and saying this is classic pull forward in demand. Just like some of the tech names, we saw that with the likes of Home Depot, people doing things with their homes through the pandemic, all of that good stuff. We pushed out demand for travel and leisure when it came to airlines and flying and vacations and all of that stuff. So how long, Bramo, before we see this go from goods to services?
This is what people are expecting, the disinflation that Adiardini talks about.
Cass is down in Florida. He's got 2 parrots in his house. One's called LIFO, the other's called FIFO.
Is that right? Can you confirm that?
Yeah, I can confirm.
I'm sure that's true. I doubt it.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
So I notice in a couple of drugstores, even in my area, which is not the poorest area in Washington, D.C., it's a nice upscale sort of area. When I want to get razor blades, you have to go to the front of the place and ask somebody to unlock it. Why are you locking up razor blades and other things that I might want to buy?
Yes. So, this is a national problem. And, this isn't, random theft. This is organized crime. And, state legislation has put guidelines on, how much the theft that you can steal before you're convicted. So it's a $1,000 limit. But we have been partnering with other retailers and sharing our camera feed. I know some of our partners here from Walmart are here, but we are all part of an organization that's coming together that says if you've, we can put our camera feed together and tell that that person has been in our store, in their store, and the numbers are higher than 1,000. So we've been able to impact these theft rings most recently.
What are the things that are unlocking key the most? What are people trying to steal the most, other than razor blades? I guess?
I will tell you, it started at razor blades because that's such a high ticket item, but it's a lot of cosmetics. But really what happens is that they take advantage of what I would call the elbow move, and they just come in and swipe the counter. And so it's just a matter of categories now.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
I'm leaning towards the bond market view that we're in for some volatility.
We're kind of bouncing into a ceiling at a floor, effectively.
We think the market's a little bit generous in terms of Fed cuts coming.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation.
I'm in the camp that it's not going to go neatly back to 2%. I think there's another upside surprise waiting out there in the inflation data.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide on TV and radio. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market just about negative on the S&P 500. Big week for the US consumer. Later on this morning, 8:30 Eastern Time, retail sales in America. Target numbers tomorrow. Walmart earnings the day after that. This morning, Home Depot, that stock is negative by 4% in the pre-market after cutting its outlook for 2023. TK blaming lumber deflation, disinflation, take your pick, and also the weather. But I think other people going this morning a little bit further than that.
Well, Chuck Brown was great there, and I think Lisa really underscored it, the idea of units through the door. It is about bodies, and whatever it is in retail, you got to get them through the door, whether it's physical or online, and that seems to be the problem, and that leads to a diminished comp sales statistic or set of statistics, I should say. And what we've got to remember is this is a dominant, well-executed machine, sort of the Apple computer of retail, if you will. And if Home Depot's struggling like this, what are the others doing?
Maintaining margins. Chuck Grom talked about that at Gordon Haskett. But then he came out with this phrase, and I think this phrase got the attention of all of us. Discretionary recession. He went through things line by line. Consumer electronics, home improvements, home furnishing. Doug Cass, as he said 10 minutes ago, Lisa, we had this big pull forward of demand in certain parts of consumer spending, and this was one.
This is the reason why I'm looking at Target shares in pre-market trading down 1.6%. Lowe's shares down more than 3%. The sympathy trade here points to something that is larger than just a Home Depot story. And perhaps this is just because people are jumpy, but really any kind of forward look that perhaps there was this bringing forward of demand that now is cooling at a rapid pace is concerning for people who, again, keep leaning on the consumer to defy all expectations of weakness.
So I think the first two questions you and I both had, is this up and down the income brackets? Does this go beyond goods to services? Because services has been really robust. We were talking about the airlines through this week and airline spending. Anyone who's been to an airport knows that things are booming right now, Bramo. Does that start to fade as well?
This is really the issue for a lot of people. And I know that, for example, Ed Yardeni's been talking about the disinflation that is expected to happen at an increasing pace. This is what the stock market's banking on, that this will actually cause a massive disinflation that will allow a soft landing. And this is the reason why things are going to end up being much better than all of the naysayers and bears out there say.
I don't think you can do a static analysis. Yes, disinflation is going to lead to a lower nominal GDP, some pressures, including on retail, but all in all, it's ambiguous. There's going to be other advantages there. And I'm going to go to the optimism of someone like Neil Dutta that says, hey, you know what? Less inflation, actually better inflation-adjusted incomes across the many deciles of America. So it cuts both ways. I do a more dynamic analysis there.
So where does that leave the Federal Reserve? We've got a range of views in the last 24 hours. President Kashkari, we have a long way to go before we get inflation back down. On the other side of things, I would say President Goolsbee of Chicago, indicating that May was a close call for him. Speaking to CNBC in the last 24 hours. We have a long way to go over in Minneapolis, over in Chicago. I think we need to be extra mindful. Two different views there, TK, at the moment.
Yes, it's really important. I'm glad you brought this up. We made a joke yesterday. There's 432 Fed speakers this week. Got some traction, but they're all different. And Goolsbee has a character and mindset, I'm going to blame it on the giant Gary Becker at Chicago, of looking at a more complex, holistic analysis rather than the algebra of two plugins of our start.
The bottom line is everybody's pushing back against the idea of rate cuts before year end. And the market's sort of buying it, kind of moved a little bit yesterday, and then kind of retraced some of that. So I think your point, John, about what role does Jay Powell have to play in basically putting a cap on this, saying we don't care what happens, we're not cutting rates. I mean, again, that will be a read my lips kind of moment, but still.
Just starting to see this subtle splintering, aren't you, between Fed views in the last 24 hours. And I said this earlier this morning, I put the emphasis on subtle. It is really subtle, but I wonder if this is one of those weeks where the chairman has to come out and get hold of the narrative. Should we do the debt ceiling stuff? I know you love this, TK. Compare and contrast this. Brainerd, formerly of the Federal Reserve and now at the administration, over the weekend, talking about the debt ceiling negotiations at the staff level. Said the staff are very engaged. They characterised the engagement as serious, as constructive. Kevin McCarthy, the Speaker of the House, coming out and saying this: we're nowhere near reaching a conclusion. He said that ongoing staff level meetings are not productive at all. The talks so far have not produced, Tom, quote, agreement on anything. That's kind of the groundwork. How the stage is set a little bit later for talks between the Speaker and the President.
To look at the Republican side, the only time there's going to be agreement is when somebody goes, we can't cut the Social Security check in Kentucky or Florida, and name a bunch of other states as well. And you can take it right over to the left as well. That's the sole catalyst I've ever witnessed.
Next stop for this market, 8:30 Eastern Time. US retail sales right now in the equity market on the S&P 500, negative by not even 0.1%.
It's come back.
Home Depot is negative 4%. I can tell you that joining us right now is Ed Yardeni of Yardeni Research. Been looking forward to catching up with Ed this morning. Ed joins us right now. Ed, let's talk about this. Are there reasons to be bullish this morning for you?
Well, I think that the economy has been proven to be quite resilient. We have been in a recession. We've discussed this before. It's been a rolling recession. And notwithstanding that, consumers continue to spend. Multifamily housing continues to be built. And then we have a lot of infrastructure spending that's still ahead of us and onshoring. So put it all together, we have an economy that's faring remarkably well.
Ed, you had a resiliency to be in the equity markets, given your economic analysis. It was pretty grim last October into November. And you said, look, the gloom is just not applicable. Is it applicable now, or can you still stay on board American equities?
Well, I thought in late October that we might have made a low on October 12th of last year, and that was mostly because I saw a tremendous amount of pessimism out there, as much as there was back in early 2009. And surely things aren't anywhere near as bad as they were back then. I mean, maybe I'm wrong about that. Maybe this banking crisis will morph into something as ugly as that, but I certainly doubt that. And so I think that, you know, as Chauncey Gardner once said in the movie Being There, the book too, in the spring there will be growth. A lot of forecasters were anticipating an economy-wide recession by now. They were expecting that earnings would tank, and the second quarter earnings season's gone fairly well.
What do you make of this idea of a discretionary recession that we're beginning to see, perhaps in the earnings of Home Depot, perhaps in the earnings that we may get throughout the remainder of this year?
Well, I think we have had a recession in the goods sector. consumers pivoted away from buying goods to buying services. And as a result of that, retailers got caught with a lot of inventories that they didn't expect that they would have to hold. And so they discounted and they stopped their ordering. So there has been a recession in the goods sector, I would say, for about 6 months. I hope this is the tail end of it, and we'll see how, as you said, the Home Depot issue suggests that we're not out of the woods yet with regards to goods. But people are traveling, the airports are busy, the restaurants are packed. A lot of baby boomers my age are retiring, and what do they do all day? I guess they play golf and they go out to eat and they travel.
Well, Ed, as they travel around and go out to eat, there is this sort of divide between those who see this as a more persistent inflationary input for longer and those who see this as something that simply supports the economy while other areas disinflate. That's sort of the wonderful life scenario that you put out there. How do you draw the distinction? When do you say, okay, people who are just retired and playing golf and traveling around all day are going to boost inflation to a degree that's going to be uncomfortable? How do you push back against that?
Well, I think it is going to turn out that the truth about inflation is somewhere between transitory and persistent. I mean, it's definitely been transitory on the goods side. We've kind of round-tripped on inflation there, particularly in durable goods, but even in non-durable goods. Even food inflation is moderating, and people thought that that would persist. Transportation costs for hauling around food and other commodities and goods, that inflation rate's come down dramatically. So we're still stuck with the services inflation rate. A lot of that is rent. We know the rent inflation is already coming down on a 3-month annualized basis. And then we've got that kind of sticky core super inflation rate, whatever the Fed likes to call it. I think that'll moderate. I mean, that's the one that's hard to predict. But I think if you got disinflation kind of across one area, it'll disinflate too.
Let's have a Ed Yardeni Yale question right now on monetary theory. Can a central bank have as part of its management financial stability? There seems to be a primal call for central bankers to do more than in the U.S. inflation and jobs. Can they actually manage, as doctrine, financial stability?
Well, I wish that the dual mandate was only one mandate. Central banks really should just focus on financial stability. If we have financial stability, I think it implies that they have to keep inflation down. I think financial stability is good for the labor markets. This dual mandate that we have, I think, doesn't have its priorities straight. And the other central banks are also have as a top priority keeping inflation down. And I think making financial stability the top priority would do that as well. The Fed, as you know, just put out a financial stability report, and it was remarkably calm. They didn't seem to be fazed at all by the banking crisis. I hope it's not arrogance on their part. They seem to believe that they've managed to contain it and that they've done a good job there.
Ed, appreciate your insight. Always enjoy listening to you. Ed Yardeni there of Yardeni Research. I think we all hope the Fed's not being arrogant right here. What sounds so bad about golf all day? I think that sounds great.
I think that sounds great too.
Great.
No, I mean, when we get to retirement, can I just say, why do we call it financial stability when markets go down, but not when markets go up? I mean, for 10 years, when markets were going up in an unsustainable way, nobody was saying, I'm worried about financial stability. They should really get monetary policy in line with it. But all of a sudden, markets potentially could go down and there are risks, and then all of a sudden, it's an issue.
Wasn't there a whole institution of perma-bears that was saying exactly that for like a decade?
Yeah, they were just wrong. So maybe that was the issue. But, why are people calling on the Fed to respond to that? Just saying.
TK.
Perma-bears for a decade. That's a really, Corey, it is tough to be permanently bearish. It is really
You're telling me.
You get to sound
really
smart
difficult.
for a long time, though.
Nah,
Every 10 years, you're brilliant. No, seriously, Joe Granville
It's true.
101. Every 10 years, you're brilliant.
True, I agree.
That's all there is to it.
Equity futures on the S&P, negative by 0.1%. Isaac Boltanski of BTIG on the debt ceiling coming up next.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden meets with House Speaker Kevin McCarthy and other congressional leaders again today to try and avert a default. McCarthy says the two sides are nowhere near a deal to raise the debt limit. The standoff has been roiling markets as investors bet whether an agreement can be reached. There's a sign that economic uncertainty is now leading to a pullback in home improvement spending. Home Depot cut its outlook for the year after the first quarter sales dropped more than expected. Comparable sales were down 4.5% the first 3 months. The company says earnings could fall as much as 13% this year. It's another sign that former Vice President Mike Pence is preparing to run for the Republican nomination for president. Pence's allies have formed a political action committee to support him. Pence has said he'll announce before late June whether he will challenge his former boss, Donald Trump. Ukraine says its air defense system defeated what it called an exceptional Russian missile blitz overnight. Now, the attacks included 6 hypersonic missiles that were aimed at the capital city, Kyiv. Ukraine says it destroyed 18 Russian missiles. Bloomberg's learned that U.S. regulators will challenge Amgen's $27.8 billion deal to buy Horizon Therapeutics. The FTC is expected to file a lawsuit today. It'll argue that the combination would hamper innovation and slow the pace of drug development. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Richmond Fed President Thomas Barkin.
Everybody's got a recession playbook, and the reason they haven't turned the pages is that their business actually remains pretty sound.
Then Bloomberg's Michael McKee speaks with Chicago Fed President Austin Goolsbee.
We should gather further data, and we should be extra careful about raising rates too aggressively.
The most in-depth coverage and analysis of the Fed, right here on Bloomberg, your global business authority.
The staff is very engaged. I would characterize the engagement as serious, as constructive. When I talk to CEOs, to business leaders around the country, they tell me things are actually going very well.
We're only a couple weeks away, but because of the timeline to pass something in the House and pass something in the Senate, you got to have something done by this weekend. We are nowhere near any of that. I appreciate the president slightly needed to talk after 97 days, but there is no move.
Compare and contrast, Lael Brainerd there, the National Economic Council Director, speaking on CBS with House Speaker Kevin McCarthy on the same issue, saying very different things about the direction of travel going into talks between the President and the House Speaker a little bit later on this afternoon, around about 3 p.m. Eastern Time. Later on this morning, retail sales in America, 8:30, 1 hour and 13 minutes from now. We've got a flavour of what's happening in retail from Home Depot a little bit earlier. Cutting their outlook, the stock is trying to bounce. We were negative 5%. We're now negative just 3.2% in early trading, down to about 279 on that stock in the pre-market. For the broader market, we're negative 0.1% on the S&P 500. TK yields come in, fall down just a little bit by 2 or 3 basis points through the curve. 2's out to 30s. On a 10-year right now, we're down about 2 basis points to 347.75.
Modest surveillance correction, but we always correct when we're wrong, and I was wrong. Home Depot, I'm assuming, leading over the last 10 years. Lowe's has outperformed Home Depot on a per-year share return. I would not have guessed that.
There we go.
That's a really different part to the mix as well. Right now in Washington, and we're going to try to take a different spin here. Isaac Boltansky joins us, Director of Policy Research at BTIG. Exquisitely good on the distillate of when we're done with this. Isaac, first question. The morning after this is fixed, what happens?
We go on to fight about other things, Tom. Then the morning after, then we're going to refocus on whatever the next big legislative deadline is. And that may be the spending bill at the end of September, it may be the farm bill. But when we get this off the table, I think the market can go back to worrying about everything else, because the debt ceiling is so important.
Look, Isaac, and this goes back, folks, to Pete Peterson, the gentleman from Nebraska who called me up. He was quite elderly at the time. And he and I talked about his ageless concern, Isaac, where the former Secretary of Commerce made clear he was forever worried about this debt. The Peterson Foundation publishes that CBO interest expense over the next 10 years will go from $640 billion to $1.4 trillion. That's the interest expense. Every American knows that's nuts. Why shouldn't we be concerned about this?
We absolutely should. We absolutely should. But DC has an inability to focus on the long term, right? We are focused definitionally on short-termism. And even when we have these discussions regarding the debt ceiling and maybe spending, we've already taken off the table talks about addressing long-term entitlement reform, which is we know is one of the larger drivers of our debt. And so we've also taken off the table defense spending and other items. And so when you start with so many sacred cows, it's impossible to actually get anywhere over the long term. So the most we can hope for, Tom, from these negotiations is just not shooting ourselves in the foot with a technical default and having to go through the mess of prioritization and whatever else may come from not doing the basic job of lifting the debt ceiling.
Isaac, I'd love you to build on what Wendy Schiller was talking about at Brown University earlier this morning when she said that in our ultra-polarized world, she expects things to sort of be a repeat of 2011 in a bit, but with a less satisfying legislative solution, basically saying that Republicans tend to want the government to go into some sort of default or at least some sort of non-payment because it plays well in terms of them taking a hard line on spending. Is that true, or is that not really borne out in your experience?
I don't think that we're there yet. And I'm still operating under the old maxim that things in D.C. are impossible right up until the point that they're inevitable. And I do hope that we're able to get some progress today where we're able to move forward on that list of menu items that we've all seen reported about over the past few days, to the point where perhaps President Biden leaves his G7 meeting early or skips Australia and some of the other stops, comes back, has a one-on-one with Kevin McCarthy as early as next week. And then at least, and my base case here is, we just have a deal that pushes the debt ceiling deadline to the end of September, which then aligns it with the federal spending deadline and gives negotiators a little bit more time because, look, they're trying to solve some pretty thorny issues, when in reality, you got to have something starting to move its way through the legislative process by the beginning of next week.
As we wait for paint to dry and get a sense of when things get to be a little bit more urgent, we're going to have the hearings with respect to what happened with Silicon Valley Bank and all of the regulatory oversight. We already got a look at some of the pre-released questions from the former CEO of SVB, blaming the Fed, blaming regulators, blaming social media. What do you expect the response to be?
Look, the reality is hearings very rarely change the policy trajectory, and we need investors to know that the regulatory framework is going to be tightened for banks. They're going to start with super regionals for their total long-term debt requirements and resolution requirements, and then they're going to go down to the 100 billion plus bucket and start to deal with things like AOCI. But my issue here is I don't think this banking crisis is over. I think it's going to flare up again. And what we're going to have to deal with when we look at the post-mortem for this crisis is what was the logic behind us tying the hands of the regulators on the front line to address these crises? The FDIC has nothing else it can do administratively to address this deposit insurance issue. So once again, we're waiting on a Congress that's either unwilling or unable to act on the matter. And frankly, that scares me because we're not through the woods yet on the banking issue.
Well, Isaac, let's tease out a little bit more of that. What about the tension in the last couple of months do you think has the potential to flare up again?
Look, I think that we have not addressed the mismatch of assets and liabilities across the banking system. I think that we have not dealt with some of what I think we can all agree were supervisory failures. And we spoke earlier about the Federal Reserve's mandate, and the Federal Reserve is also going to take some flack here. There's a hearing about Federal Reserve reform later this week, worrying that perhaps their guiding star is just monetary policy, and that leads them to fall down on their job as a bank supervisor sometimes. So I think that's still out there. And look, I listened to Jamie Dimon when he also says that he's concerned that it's not over. So I put all of that together. I put into that mix the fact that you still have some policymakers talking about the need for short selling ban on banks. And I look and say that our option set for addressing another flare up, especially if it's in a bigger, more systemically important bank, is pretty limited to just Congress passing legislation quickly. And they're not good at that.
Isaac, thanks for the perspective. Isaac Botansky, the brutal honesty there at the end from BTIG. Just on the debt ceiling, this is the closest the US government comes to behaving like European governments. And that's not a compliment. Just this idea that you need a crisis to get a solution. Seems to be the European way for a long, long time, specifically for the EU, that you have to get closer and closer to this crisis moment to get the solution you're waiting for. And by crisis, we're talking about market tension that just isn't there yet in a major way.
And new to America, and the Pew Research has this out in the last number of days. They had a wonderful tweet on it, and I don't have it in front of me to do it. But the bottom line is the new polarity of America between right and left is something unique, even compared to the European nations. I noticed the polarity versus France was much greater.
Well, we've gotten to the point where Isaac Botansky comes out and says that requires legislation, which they'd have to pass quickly, which is something they're terrible at, which is basically a sense of the dysfunction that everyone keeps talking about in Washington and what ends up getting legislated by some of the rank and file who work at the Fed, who work at the Treasury, who work at these departments because of an absence of legislation and action in the Congressional
I take
front.
real issue with the people that say this is new. There was a period where I woke up in my 20s and realized how dumb I was about American history, like 1880, 1890. And pre-Teddy Roosevelt, I mean, it was like this, John. It was tight battles day to day, week to week in Washington.
But Lisa's point, look, they sit there in their rooms, I imagine. I'm not saying this happens, just my thoughts. You get 2 points for passing legislation, you get 3 for fighting, and fighting's easier. The life of a politician in Washington, D.C., right?
Pretty good equation. I think that that's fair, and I think that that's what keeps on happening. I think that there is a slight shift.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Let's work through the market action this Tuesday morning. Good morning and welcome to the programme on TV and radio. This is Bloomberg Surveillance. Your equity market looks like this on the S&P. Negative by 0.1% on the Nasdaq, down by not even that much. We're down by 0.05% on the Nasdaq 100. Snapping a two-day losing streak on the S&P yesterday with some marginal gains. Into the bond market, 2-year, 10-year, 30-year. Yields come in 3 basis points on a 2-year, 397.90. Basically the average of the last 30 days is a little north of 4%, not too far off that. The average of the 10-year in and around 350. That's where we are now, 347.75. It's the bumpy road to nowhere in both the bond market and the equity market over the last month or so. Note to the morning goes to Tony Dwyer of Canaccord Genuity. Catch up with Tony in about 2 hours from now on Bloomberg TV. Here's the quote, Tom, and I know you've read the note as well. He's been speaking to clients, and he says the following: they are hesitant to get optimistic given the macro backdrop and increasing likelihood of recession, nervous to become overly negative given the damage that has already been done underneath the surface on the S&P 500.
It's a really good note because it talks about the behavior in a collared market. We have the conflation of moving averages now down to a single point. And Dwyer says the market is fine, F-I-N-E, frustrated, insecure, neurotic, and emotional. Sounds like this, it sounds like our staff.
Newsletter, isn't it?
Yeah, the newsletter's called Fine. The Fine newsletter.
Everything's fine.
Insecure, neurotic,
it's a toxic
and emotional.
brew.
There you are.
But within this,
boy.
Mr. Dwyer really hits on a point, which is the behavioral characteristics. It's not
Certainly declaring they are done for. The damage done. Was it last year? The price we've got to pay for it. Was it 30% on the Nasdaq? Is it more than that? Do we have to see unemployment go up 100 basis points? What's the time horizon for them to get back to inflation numbers of 2%, say? And this is the issue. You're nervous at the moment to go long. At the same time, you're a little bit hesitant to get short.
It's a really annoying market. I mean, I think that that's correct. And Stuart Kaiser put it well, which is basically, it is annoying because basically people aren't that bearish. They're looking at the market. They're seeing some positive signs, yet they don't believe that they're going to get rewarded as much as just simply going into cash and getting 5%.
I know we got to move the show forward, but I think this is incredibly important. The percentage of people that participate in the recovery out of October, as Ed Yardeni mentioned, and the huge number of people that aren't in the game right now and missed that recovery out of October. Two different annoying behaviors.
Look, everyone sounds like that classic two-handed economist, right? On one hand this, on the other hand that. Look at the Bank of America Fund Manager Survey this morning. You can see the gloom and you can see the optimism too. In the gloom, global growth expectations, worst levels of the year. In the rotation, out of commodities into tech stocks, defensive. You can see this across the board. The most crowded trade right now, long big tech, short banks. That's pessimism right there. Here's the hope. The majority of investors still hoping for a soft landing rather than a hard one. The vast majority of investors expecting the debt ceiling resolution before the ex-date. And a survey of participants in this survey, here we go, forecasting just a 1% drop, Lisa, in global EPS in the next 12 months.
This is what's really keeping things supported and why people are getting burned out of every bearish trade that they possibly can. And this really raises a question about the consumer and how long that can keep upholding it, which is what we saw in earnings. If you take a look at Home Depot, we've been talking about that all morning when they came out, cutting the outlook, and it really is about outlooks going forward, saying that sales were going to be a lot lower. Those shares have clawed back losses that at one point were almost 5%, now down just 2% as people parse through those earnings lows. It's a comparable competitor, I should say, is down 2.3% in sympathy. And this really raises this issue. Is this just simply a housing specific kind of area, or is this broader retail weakness? If you take a look at the other companies that are going to be reporting, TJ Maxx as well as Target, both tomorrow, as well as Walmart coming out on Thursday, all of those shares are down in sympathy, but not that much. Target seeing the biggest declines given the fact that they've had a bit of, I don't know, should I just say volatility in their results over the past few years.
Yeah, particularly Target.
Yeah.
Was it last May? That was just ugly. Was it last May? I think it was.
Yeah, but it was like a couple.
Yeah, we had a few
couple
of them.
revisions that were pretty problematic.
Lisa went through the earnings from retail this week. Of course, Target tomorrow, Walmart coming up on Thursday. 8:30 Eastern time, we get retail sales for the United States, that data point for the previous month. Later on this afternoon, 3 p.m. Eastern time, Biden and House Speaker McCarthy set to meet today on the debt limit. Lindsay Rosener of PGIM Fixed Income weighing in on the market reaction, writing the following. There's a kink in the T-bill curve around the ex-date with 100 basis points of extra yield. If we don't get a resolution, we're just kicking the can down the road and not eliminating the problem. This makes the T-bill market, Tom, a challenging place to be.
Really good note from someone really qualified to talk about this, and of course with all the hierarchy of PGIM and the excellence they've done over the years. Ms. Rosner joins us right now. Lindsay, the note really goes to the opportunity that's out there. What is the opportunity given a discontinuous function in the 3-month T-bill? How do you play it?
Right. I think the answer is you don't play it. There's so much talk right now about getting this extra 100 basis points. But if you think about it, the downside, if we actually do have a default, which we think happens with a 5% probability, 100 basis points is just not good enough upside downside analysis. So for us, it's skip the games in the front end of the curve and get more into the intermediate duration space where you can take advantage of doing the right kind of things.
I mean, what's so important here, Lindsay, and this is to the elasticity or responsiveness of the belly of the curve, 5 to 7 years, I'll call it as well. Then what's the opportunity there? How do you play that?
I think there are a lot of opportunities, and you can go kind of any which way you want. So if you want to be more conservative, you want to stay more investment grade, great opportunities in agency mortgage-backed securities, even commercial mortgage-backed securities if you stay high quality. Top of the cap structure, AAAs with a lot of credit enhancement. There's good stuff to do in an investment grade space, a lot of opportunity there. But if you want to seek more risk, go for more yield, there are idiosyncratic opportunities in high yield. So you've got kind of a diner menu of options in the middle of the curve, and you don't have to get stuck in this noise or the anxiety that you all were speaking of in the very front end of the curve. That is really hard to play. And the big problem is that if the debt ceiling, if the quick solution is prioritization, that's just kicking the problem a month, 2 months down the road. You're going to be right back in it. And so if you thought you did something cute and you bought T-bills 2 months out, well, you may now be back at the X date before you know it. And it's just not a game worth playing.
Okay. That said, if this, let's say, gets resolved, do you then get more risk on? Do you start to get more aggressive in other areas that go beyond just simply the idiosyncratic trades?
So we go back to, with your prior catch, you're asking, okay, this gets resolved, what's next? And the what's next is we go back to what we were concerned about, which is we still have the central banks across the globe that are trying to fight inflation. And there are parts of the globe where we still have double-digit inflation. So this battle isn't over. And we need to think about how does the curve respond. Right now, we all know that there's a significant amount of cuts priced in the US, for example, at the end of the year. How does that work out moving forward? And so we go back to inflation watch. We get out of debt ceiling watch and we move back to inflation watch and figuring out, is a recession happening? Will it be a soft landing? And in that scenario, it still isn't yet green light risk on.
We've been talking about that Bank of America Fund Manager survey, and one aspect of it was that allocations to bonds are the biggest going back to 2009. This is the latest one from May. How much does that give you a sense that things are crowded in the duration trade? Basically, this idea that longer term there is a confidence that we're going to be low inflation, low rate kind of, trading the same way that we were over the past few decades.
I think what we've got here are some big shifts in asset allocation or portfolio allocation. Forever, there was the discussion of the 60-40. 60-40 is not really working. If you have a move to this 50-50 or even more fixed income, that then tells you that these flows make sense and they are stickier than one may think. Also, as we've been saying all year, you've got income and fixed income. This isn't a place that you just park it because you're scared. There's a lot to earn here. And so I think that movement into fixed income is well-founded. I'm obviously biased as a fixed income manager, but I think it makes a lot of sense now, and it didn't make much sense for a very long time.
Do you think the allocations are just generally increasing in a structural manner to fixed income and decreasing to equities so that it might be more of a 50-50 kind of new portfolio?
I think time will tell. I do think it's moving in that direction, and I think that direction makes a lot of sense.
Lindsay, got to wrap it up there. Always enjoy your insight, particularly on the debt ceiling. You know, for once, we're actually having some intelligent conversations, Tom, on the debt ceiling this morning. Wendy Schiller offering her view, her opinion. Lindsay Rosner there on the bond market.
Yeah, no, I think everybody in the media is struggling with this, and some go from the emotion of, he put his elbow down on the edge of the Oval Couch. What's it mean? No, we're going to try to talk to real people about this, including CBO.
Just kidding.
We're going to fold in the work of CBO and the industry in Washington that's got a real long-term concern about this. It's like we've been crying wolf on this for how many years? Someday the wolf's going to show up.
I'm with you.
Period.
But right now, that's not the view, is it? The consensus view is
that
that
is not the view.
Gets dealt with, and I know that you share that view deep down.
And the R-star is lower, and things are wonderful, and it's morning in America.
Talks again, 3 p.m. Eastern time, a little bit later on this afternoon. Home Depot recovering a bit here, Tom. We're down 2.4% in the pre-market.
And this is unusual. I want to sell this, and I want to be sure it's more important at 9 o'clock to listen to John Farrell on Bloomberg Television than to be on the HD call. But the sell side is saying this call really matters, not only for Home Depot, but the tune of it. And Steve Zaccone over at Citigroup just says, the language that these guys use in pressure when they're writing, I love this, updated quarterly margin cadence.
What does that mean?
I have no idea what that means. We got to get Zaccone on to talk about it. But that's the kind of language you're seeing here at 7:40 a.m. into an important 9 a.m. Conference call. Lisa mentions TJ Maxx. I'm looking at the Buffon and Broken Heart Glam Cheetah outdoor water resistant picnic beach blanket.
Well, we were talking earlier today, though, about margins and how long can margins continue to actually expand. We saw the first margin expansion on net from S&P 500 companies that have reported going back a year and a half. How long can that continue if consumers really are pushing back? So then all of a sudden you have to think from a corporate perspective, things perhaps look less good, and some of the celebratory shifts that we've seen in the stock prices might not be as warranted. This is sort of one of the bearish.
Next up for this conversation, 8:30 Eastern time for US retail sales. Now imagine you run a bank, and you're running that bank, and you rely on one thing, not your team around you, but Fed speak. Fed speak is literally the thing that you rely on. The whole model. It's just like, whatever they say, whatever Powell said, he says it's transitory. That means I'm going to build my business around it being transitory and low rates forever.
And they're not going to ever raise rates, and so they don't have to hedge duration. And that's going to be the CEO's argument from SVB.
Did that work out? David George of Bed on the banking sector. Great voice over the last month or so on this topic. The stress of the last couple of months in regional banks. He's coming up shortly. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and congressional leaders head into another session of debt limit talks today to try and avoid a default. President Biden has said he was optimistic a deal could be reached, while House Speaker Kevin McCarthy expressed that ongoing discussions were not productive at all, and leaders are nowhere near reaching an agreement. The former CEO of Silicon Valley Bank says the Fed and social media contributed to the lender's collapse. Greg Becker testifies before the Senate Banking Committee today. He's expected to blame the fastest pace of hikes by the Fed in decades. According to his prepared remarks, Becker also will point a finger at negative social media sentiment. A special counsel faulted the FBI and Justice Department's probe into whether Donald Trump's campaign conspired with Russia in the 2016 election. Still, John Durham failed to issue any new charges or recommend significant changes to investigative procedures. The former president had claimed that Durham would reveal a conspiracy to undercut his presidency. Global oil demand will rise more than expected this year because of China's post-pandemic rebound. That's according to the International Energy Agency. The IEA says world fuel consumption will rise by 2.2 million barrels a day to a record 102 million. The agency expects demand in China to hit an all-time high. And a group of senior officials from Tesla are visiting India this week, looking to expand its supply chain beyond China. The visit would represent a thaw in the relationship. Tesla CEO Elon Musk has criticized India's high import taxes and its electric vehicle policies. India has advised Tesla not to sell cars in the country that have been made in China, its political adversary. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
We at the Federal Reserve probably have more work to do on our end to try to bring inflation back down. And most importantly, we should not be fooled by a few months of positive data. We still are well in excess of our 2% inflation target, and we need to finish the job.
Neil Kashkari pretty consistent on the issue around inflation over the last few months. The Minneapolis Fed president weighing in, tons of Fed speak this week. I've gone through the names already. I won't do that again to you, but it concludes with Chairman Powell at the end of this week. For the broader market, we are negative 0.16% on the S&P 500, just a little bit softer to start your morning, a bit defensive, captured by that move in yields lower on a 10-year, 347.75. Home Depot recovering just a little bit. It was down 5%. We've cut those losses in half. We're down 2.4% right now on Home Depot. Retail sales in America, Tom, just around the corner. Let's say 43 minutes away.
Retail sales will be important. I'll be looking at Control Group, which really breaks it down. Jen, I really want to emphasize there's like 7 retail sales reports that come out at once. And I do take the distillate out building products, out gas, out this, out that. And it's the Control Group. It'll be interesting to see what that metric is.
And that read gets plugged into GDP, Tom, when we get a few more reads of that.
If McKee says it does, it does. I can't get there, but McKee says it does that, right? And there's productivity. As well. Futures, can we say that the tape is recovered from the Home Depot shock? I think, it's a little bit recovered.
Yeah, we've bounced off the lows, Tom, and we'll see what we get on the call, and then we'll see what we get from Target, from Walmart, and the overall figure a little bit later at 8:30 Eastern.
We'll see what we see. In banking, we will see what we see forward with not only the financial statistics and all the studies Lisa's reading in the afternoon when they slip out, but also what the executives of the failed banks say. David George joins us now, senior research analyst at Baird. David, I'm going to break a rule. I'm not going to go to 4 accounting statements. I want to go not so much to the behavior, but the verbiage that we're getting from failed bankers. To me, I've made this very clear on air. They were basically marketing experiments wrapped around the gauze and protection of your banking system. Are you put back by the comments we're hearing? It's the Fed's fault. It's the San Francisco Fed's fault, etc.
Yeah, it's hard to, Tom, and good morning. Thanks for having me. It's hard to buy into that commentary with a lot of weight, at least from my perspective. And it's easy for me to say from the cheap seats on the sell side here. But clearly, bank management teams, CEOs, CFOs, treasury departments are paid millions of dollars to manage risk for shareholders, for their customers,
Right.
for their various constituents, et cetera. So I think that's a kind of a soft excuse from my perspective.
I'm going to go to Nassim Taleb, where he says all that matters is skin in the game. Once again, and this goes back to Frank Quattrone 101 from a million years ago. David George, these guys were compensated off growthiness up the income statement at the revenue line, for example, rather than growthiness of profit. Is that correct?
Yeah, that's right. And we don't cover Silicon Valley, to be clear, but one common denominator, Tom, of all of these banks that have failed is that they have grown very quickly. Banking is not a growth business. It just isn't. So it is going to grow typically at a GDP rate, maybe plus 100 to 200 basis points. And one common denominator of these failed banks is they grew very quickly. And there's some regulatory oversight issues that I think probably need to be addressed. But in particular, the deposit funding mechanisms for these companies, a very chunky deposit base, which poses a lot of risk when there's fear in the system. And I think that was also another common theme of the banks that have failed.
Is it over?
I think we're pretty close, Lisa. Again, from my vantage point, we don't cover PacWest or Wall. Those are obviously ones that if we turn on your station and others, that gets a lot of publicity. It appears that the liquidity situation in the system is pretty good. And from my perspective, if you haven't changed banks by now, you're probably not going to. And so we're of the view that the vast majority of the deposit movement is behind us. The results and updates that we've gotten, Lisa, so far here in the second quarter from many of the kind of more established regional banks has actually been pretty good. So as cooler heads prevail through the balance of 2023, we actually feel pretty good about where we are, and we think we're in the later stages of this episode of whatever you want to call it.
Which gets to the sort of existential question of what this crisis, or whatever you want to call it, has been. Is this really an issue of deposits leaving the system, or is this an issue of profitability when you have to pay up for those deposits? Now, I was reading this Georgetown professor's comments, who is saying the biggest problem is confidence, and I'm not sure how you build that back. It is not going to just be deposit insurance. So how far away are we from building that confidence that not only can you put your money there, but you can get your money, you can get good interest, and oh yeah, this company is actually going to deliver returns?
Yeah, I think what's happened in the last 6 to 8 weeks is what we would have expected, Lisa, to occur over the next 6 to 8 quarters. I think it's very important to have an intermediate to longer term context about bank deposits and liquidity. If you were to take a look at bank deposits or demand deposits or checking accounts as a percentage of total funding over the last 50 years, it's around 25 to 30%. And the response from COVID, both fiscal and monetary, resulted in significant overages of deposits, and that number got up to 40%. So and we view this sector through a normalized lens. I think you have to do that as it relates to credit, liquidity, margins, et cetera. And all we're seeing is just a normalization of liquidity. And bank deposits are not going to zero. They're over $17 trillion. And companies have significant operating accounts that are going to stay in the banking system. So that's something that just happened a little quicker. And profitability, we think, is going to get much better over the next 6 to 8 quarters as banks can reprice those assets upward.
David, Robert W. Baird is Milwaukee, First Wisconsin, and all the rest of the heritage of Milwaukee finance and investment. I'm absolutely fascinated by, within all your connections within Baird and across Wisconsin, is there an urge to merge among bankers, or are they just too comfortable with the status quo?
Well, it's going to be interesting to see what happens. We're of the view over time that you're going to get more deals. And I think a lot of bank management teams are sitting here today thinking about the future, thinking about this episode and the risks that emanate from what we've lived through over the last couple of months. So we're of the view, and I think Janet Yellen has expressed a more of an openness to deals. So it wouldn't surprise us to see some MOEs or some larger bank deals over the next couple of years. I think we need to get some clarity, Tom, as it relates to credit. But clearly, I think the secular trend for more M&A is clearly in front of us for sure.
David, I just want to put a bow on something. It's how you started this conversation. Do you think people are continuing to overstate just how flighty deposits are? Do you still think the deposit base at most banks is still really, really sticky? Has it changed so much with the proliferation of internet banking over the last 10 years or so?
Yeah, I think it is pretty sticky, and it is not as sticky as it was maybe 30 years ago. But at the end of the day, it's important, particularly for small and medium-sized companies. Commercial banks and regional banks in particular are the lifeblood, John, of basically the capital system, and provide significant liquidity, payroll, cash management, treasury management services to all of these companies. And they provide a meaningful and valuable service that I believe they should be paid for, and they will be paid for over time. So it is a relationship business, particularly on the corporate side. And I think that's something to remember. Whereas I think Silicon Valley, Signature, some of the others are maybe a little bit more transactional, and that's where you have a little bit more risk.
David, thank you, sir, for your perspective. David George of Baird, just a sensible voice on a difficult conversation. Just on the deposit base, I get that some things have changed. I think we all understand that in the last 10 years. Internet banking is a much bigger thing, the ease of opening an account, understand all of that. SVB is a really bad example of it. If you have more than 90% of your deposits uninsured, by definition, they are massive in size.
Not a real bank.
If you see loads of money go out the door really quickly, how many hands full of money are you seeing run out of the door really quickly? You're just seeing a few big customers go out of the door.
It's not a bank.
I
get
can
in
have
trouble
that
with
debate.
this. I'm going to get.
We can have that debate another time. It's a very different bank, TK. It's a very
Yeah.
different financial institution.
I have a tattoo here. I like to put over here. I got Lula from Brazil because I was so wrong on Lula. Right under here, it says, and a banker told me this years ago, and I was incredibly wrong on the fold up of the small banks. Tom, I like to go to lunch, and that's what the guy said. And so much of the lack of mergers in Gerard Cassidy and David George's world is literally people like to get up in the morning with their board, their golf buddies, their Rotary members and that, and they like to go to lunch or maybe a breakfast before it. It's a hugely behavioral thing across America.
I'm not sure how many lunches have been had.
I don't think it's the same in England. Is this the same in England? Is it the same in England where there's lots and lots of little banks?
It used to be that way, Tom.
And it's gone.
They're going to lunch, they're playing golf.
Small banks dotted all over England.
The branches have all been shut down. All the branches have been closed down.
We're still living it.
I know. About 20 years behind, I've said that repeatedly.
Yeah, or
US
more.
banking, behind Europe, particularly the Scandinavian countries. I mean, they're basically cashless societies. Some of those countries are now. Anyway, that's a different topic. On the S&P 500, negative 0.1%. Retail sales, 34 minutes away.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That
it.
really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case. And
and it's now more than well alive.
That's for sure. With 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We're investing a lot in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
I'm leaning towards the bond market view that we're in for some volatility.
We're kind of bouncing into a ceiling and a floor, effectively.
We think the market's a little bit generous in terms of Fed cuts coming.
The Fed has done a very good job of continuing to support the economy while raising rates and trying to tame inflation.
I'm in the camp that it's not going to go neatly back to 2%. I think there's another upside surprise waiting out there in the inflation data.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. A Tuesday of retail sales in this hour and the productivity of America. John, retail sales front and center after Home Depot.
Oh, without a doubt. Home Depot a little bit lighter, soft and negative in the pre-market, but phrase of the morning so far from Chuck Grom of Gordon Haskett. Discretionary recession is his call, Tom, going into retail sales later this morning, onto Target tomorrow, Walmart after that.
And the mystery and the character of recession, we're still modeling numbers. I think of Lindsay Piegza the other day, the idea of 2% real GDP. That's not what we see here. January booming, February, I don't know. But into March and April, there seems to be a real mystery about the state of the consumer.
Captured by the rotation in the equity market and the outperformance of tech so far year to date. The Bank of America Fund Manager survey out earlier this morning. Tom, we've talked about it a few times. Top 2 crowded trades right now, long tech, short backs.
Yep.
That's been the rotation away from the commodity cyclical stories towards, say, the big tech names. That growth story again.
Tony Dwyer with John Farrow in the 9 o'clock hour. That's important as well. Lisa, I want to get to this quickly because we've got a fabulous guest for Global Wall Street to get us started in this 8 o'clock hour. But Lisa, I look at all of this and it's almost a joy in that the debt ceiling debate drifts aside. We had slower data in China, slower data from Home Depot, and there's sort of a stew within the collared trade we're in right now.
And a slower sense in Germany, too. That idea that we saw the ZEW survey that came out earlier that shows suddenly people are much more concerned with an actual negative read on this key gauge. How much are we looking at that really being a China story, a recovery that wasn't as strong as people thought, filtering into the strength that everybody thought was just shockingly surprising that now seems to be fading on the margins.
It's not just that, is it? It's factory orders in the last few weeks. Go back to the numbers we had from Maersk, big shipping company, saying things weren't great. Mislav Matejka at JP Morgan over the last few weeks has been asking the question, when is it time to drop that overweight Europe story? The time is now, according to them, in the past week or so. The activity upswing seen around the turn of the year, which was helped by the falling gas prices in Europe, by China reopening. Tom, unlikely to transition into an acceleration into the second half. Now, the problem a lot of people are going to have with this tape, if we've been talking about this now for 6 to 9 months, the weakness is here, and we keep pushing out.
Yeah,
these
but
calls on
push
the
it out, but
weakness.
then there's a Home Depot just as one proxy.
Sure, I'm with you.
Now it's finally here. And again, I really want to emphasize sell side saying this call at 9 a.m. hour in Home Depot will be important for the street. I don't know. I'm going to begin with the VIX because Dean Kerner told me to, John. The VIX 17.49. He could care less until we get the gloom of a 20 VIX.
We'll get to Dean in just a moment. Your equity market calm as well, down by 0.13% on the S&P. Tom, yields down just a basis point on a 10-year, 348.69.
Dean Kerner joins us now, Macro Risk Advisors. His first appearance since the pandemic began 10 years ago. We're thrilled he could join us right now. And Dean, with all sorts of accolades and derivatives work, particularly out of University of Chicago, ages ago. You go right to the dynamics of variance where there's a microeconomics to it, a supply and demand, and you say, you equate it to after Brexit, where there was a supply strike on volatility. Take that complexity and translate it into where we are right now.
Yeah, Tom, you mentioned the word variance, and right now in markets, there's actually very little variance, at least on a day-to-day basis. If you look at 1 month realized volatility in the S&P, it's in the 25th percentile. So we're in this range bound. You mentioned the word collar. We're just chopping within a range, and without large enough swings, it's very difficult to justify a VIX much higher than it is now. The realized volatility is on the order of 12. I like to call that the earnings engine of long volatility. And that engine right now is sputtering, even as on a forward-looking basis, there's so much uncertainty with respect to the debt ceiling. And you mentioned Brexit. As I think back to that period, in the months preceding June 24th of 2016, options on the British pound got incredibly expensive. And the reason they got so expensive was not because British pound volatility was extremely high, it's because there was a dearth of supply. The folks that would typically sell these options, I think, were being tapped on the shoulder by their internal risk police, saying, listen, do not be short volatility on the British pound at any price. And as I think about that as an analog for what might be to come with respect to the debt ceiling, you see a similar setup, at least potentially, where the sell-side trader who's asked to sell downside puts in the S&P is told by his internal risk monitors, don't sell it. And so without that supply, you could see a jump higher in implied volatility in a hurry.
So 2 things. I can't believe it's almost 7 years since Brexit. I can't believe that. Time has gone so quickly. And I can't believe how much people ignored it after about 12 months.
Right.
On the morning, it felt so big. Do you remember it felt like such a big issue?
Stunning.
Then really quickly it became a European story and then just a local one for the next 5, 6,
I
7
have the
years.
clearest memory of you working an 18-hour day, and I was trying to find a restaurant in Mayfair, and the streets were in shock.
I have a clearest memory of you doing just that too. Dean, the second point, the memories of 2011. Let's go there.
Yep.
What are the lessons, and what are you advocating for them with clients right now going into what could be a mess and what might not be a mess?
Yeah, there's the old saying, those who don't remember history are doomed to repeat it. So we try to look to the past to learn. We always do that with some sense of, there's always some contamination in terms of what we're trying to isolate. And so if you remember back in 2011, there was the Eurozone crisis that was really beginning to flare up at the same time, August, September of 2011. So we have to realize we can't fully disentangle the massive moves in the S&P 500, the spike in the VIX to 45, because there was the Eurozone flare-up at the same time. There was a big growth shortfall in the U.S. at the same time. However, we should look at it anyway. And, you know, I was coming here this morning and I just decided to go on YouTube and I said, Tim Geithner, 2011 debt ceiling. And so I watched Tim Geithner come on camera and talk about the impending disaster, the U.S. doesn't default. And I just said to myself, this is the exact same phrasing that we are seeing now. It's just a different person. Chuck Schumer was actually standing behind Tim Geithner. He's still there, right? So we've got a different cast of characters.
Chuck Schumer was standing behind Eisenhower in
exactly,
1953.
right? It's just the same message. And I think what's dangerous, and it's been said before, is that it's going to take some flare up in market prices to motivate this negotiation. And with the VIX of 17.5, you're just not seeing that flare up. We haven't gotten to the point where people are getting actually nervous, and each side is sort of motivated to be the aggressor in terms of trying to get a better deal on this thing.
So we've got the obvious places to spot tension, the at-risk, so-called at-risk maturities. Where would you expect to see it beyond that and perhaps imminently?
Yeah, I love gold. I think gold is a really interesting asset. Again, going back to 2011, you saw gold absolutely spike on both a spot basis. There's a gold VIX. There's kind of a VIX for everything. And so the gold VIX went from 17 to 40 during that period. I think there's a real good case to be made for gold because it's got this concept of limited supply. I think from a Pavlovian standpoint, people are going to look to that to position in terms of just expressing a view that this is pretty dysfunctional stuff from the U.S.
Is there a sense that the CBOE benchmark VIX index is pretty much dead as an indicator of true volatility implied?
I don't think so. I think it's a calculation engine. It became very muted last year. So S&P goes up, VIX only goes down a little bit. S&P goes down a lot, VIX only goes up a little bit. So I think that's why people would characterize it that way. It's just taking in market prices. It's actually started to normalize in terms of its relationship to the S&P or its inverse relationship. It's been more reactive. Actually, right at the failure of SVB on March 9th, the VIX beta to the S&P, or its negative beta, started to rise to a level that's consistent with history. 2022 was a bit of an anomaly for a number of reasons, but it is actually starting to be more reactive. And if you look at June open interest in VIX options, it's extraordinarily high. So people are very positioned via VIX options for some, flare up through the debt ceiling.
Just real quick here, we were talking about positioning with people hiding in cash, hiding in gold, being conservative. Even though there kind of is this bifurcated risk. Is this supportive of valuations? Is this actually showing the risk to an upside, to a lack of some sort of catastrophic outcome as being more potentially painful for markets?
I mean, I think my own career in markets has just led me to the conclusion that markets are never say never. You just really can't know what's going to happen. I think about how do you stay long through this, because they probably will figure it out, right? That there hasn't been a default yet. And so maybe markets get a big upswing. And so what do you try to do? You try to stay long in an efficient way. There's opportunities to use instruments like upside calls. Out of the money calls in the S&P have cheapened remarkably since the beginning of the year. On a premium basis, they're down 70% from the end of last year to now. I think that's a great placeholder to stay long risk and to be able to walk away. I like to say the renter, which is what you do through options. You're renting the market. You don't pay for the plumbing problem. And so there's a potential plumbing problem for the United States of America, at least fiscally. And so the option allows you to pay the premium. And if things do go awry, you walk away. I think that premium is actually quite cheap right now.
I will never forget, Dean, what you said in the middle of 2021 when you said that transitory was the new subprime is contained. And I remember hearing that at the time and thinking, wow, that's pretty powerful. And
it was right.
It was dead on. Hey, Dean, thank you, sir. Thank you very much. Dean Kerner there at Macro Risk Advisors. Just distracted by this message I just received from someone listening. Best thing I ever did was ignore the Brexit debate back then. What a waste of time.
Well, yeah. I think
thank you for your coverage.
Just for the record, that's a US-based listener, TK, on the Brexit debate of the last 7 years.
I think we'll know in 5-10 years or whatever, but people that I listen to of all persuasions in the United Kingdom say there's some export-import dynamics here that have changed. I mean, that's all there is to it.
And perhaps some labour supply dynamics as well that we need to discuss in our future too. 8:30 a.m. Eastern Time, 20 minutes away. Tiffany Wilding at PIMCO on US retail sales. Looking forward to that conversation. Going into it, equities just a bit softer, negative 0.2% on the S&P. Home Depot trying to recover, down almost 3% in early trading following a cut to its outlook. More retail earnings still to come through the week.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden meets with House Speaker Kevin McCarthy and other congressional leaders again today to try to avert a default. McCarthy says the two sides are nowhere near a deal to raise the debt limit. The standoff has been roiling markets as investors bet whether an agreement can be reached. There's a sign that economic uncertainty is now leading to a pullback in home improvement spending. Home Depot cut its outlook for the first year after first quarter sales dropped more than expected. Comparable sales were down 4.5% the first 3 months. The company says earnings could fall as much as 13% this year. Airline reservations are pointing to strong demand this summer. According to the International Airport Transportation Association, bookings for the May to September period are 35% higher than a year ago. Asia Pacific experienced the largest jump with a 135% increase. Ukraine says its air defense system defeated what it called an exceptional Russian missile blitz overnight. The attacks included 6 hypersonic missiles that were aimed at the capital city, Kyiv. Ukraine says it destroyed 18 Russian missiles. It's another sign that former Vice President Mike Pence is preparing to run for the Republican nomination for president. Pence's allies have formed a political action committee to support him. Pence said he'll announce before late June whether he will challenge his former boss, Donald Trump. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg has the Fed coverage you're looking for. Today, an exclusive interview with Richmond Fed President Thomas Parkin.
Everybody's got a recession playbook, and the reason they haven't turned the pages is that their business actually remains pretty sound.
Then Bloomberg's Michael McKee speaks with Chicago Fed President Austin Goolsbee.
We should gather further data, and we should be extra careful about raising rates too aggressively.
The most in-depth coverage and analysis of the Fed, right here on Bloomberg, your global business authority.
Chinese recovery has been faster and stronger than expected. Indian demand is also very robust, and we're seeing very strong growth also in the Middle East. And this is contrasting with the sort of the economic gloom and the concerns that we're seeing for the world economy from industrial activity, and especially in the OECD, where demand has been relatively weak
It's really difficult to reconcile those comments from Toro Bosoni there, the IEA head of oil, with what we saw in the data overnight from China, which looked much weaker than expected. And they're talking about oil demand specifically being better than expected. We'll come back to that in a moment. Crude at the moment, looking at crude this morning on both WTI and on Brent, on the international contract on Brent crude, we had back to 75.35 on the day, just about positive. Likewise on WTI, $71 a barrel. The latest on the SPR, Tom. You seen this? Jen Jacobs, Bloomberg, leading the reporting.
This is like the debt ceiling.
Here's the quote. The US is preparing to buy up to 3 million barrels of sour crude oil to begin refilling its depleted strategic petroleum reserve, according to people familiar with the matter. Of course, they sold 200 million barrels from the emergency stockpile last year. So like 3 million as a start, but it's kind of,
I ask a dumb question. Does, like, to pick on the United Kingdom, but does Germany have a strategic petroleum reserve?
That's picking on Germany, but I don't know.
I don't know.
I don't know the answer to that.
I'm just baffled by
I'm sure our next guest does.
Yeah, well, I'm going to give the guest, but I want to mention on China's slowdown, what really intrigued me was one line item was the property. In China, property really matters, and it really came in light. It was minus 5.8% down to minus 6.2%. And it's just one statistic. It's one little, tea leaf there, but there it is.
Youth unemployment, too, I think got people's attention. I'm not sure how much of an accurate read you can get on that in the world's second largest economy, but
I agree.
But it got people's attention overnight.
He has been with us not nearly enough recently. Will Kennedy drives all of our hydrocarbon work. He's senior executive editor for Energy and Commodities, and it is wonderful to catch up with Mr. Kennedy at Queen Victoria Street. Will, I'm going to cut to the chase. The Bloomberg Commodity Index is not pretty. We had a pandemic boom, up we went, and we have rolled over. Can we establish a bear market in commodities in general?
Well, it seems like we're pretty close, Tom, and I think the reason is the one that you've alluded to, is that a lot of the data from China is very weak, and what we're seeing is clearly a Chinese industrial economy which is not demanding commodities like people expected it to. When you look at things like the price of base metals, when you look at things like the price of iron ore in particular, that demand isn't there, and the industrial recovery seems pretty weak, and that's partly because they're not building property, like you mentioned a moment ago. But it does seem to be a slightly different picture in oil demand, and that does appear to be a slightly hard thing to reconcile.
Folks, on radio and television, Will Kennedy has the most romantic job at Bloomberg, jetting around the world, running our hydrocarbon team. The romance of it is you're in Singapore, Will, exhausted. Tell us about the Singapore dynamic right now. Obviously, oil through the Strait there and up the Pacific Rim, but far more, all of the back and forth between Australia and China. What's happening in Southeast Asia?
Well, I mean, there is a lot of oil heading through the Straits of Singapore, the Straits of Malacca, that trade in oil all the way from Russia, round Africa, across the Indian Ocean, up into Asia. It's happening, and China and India are buying a huge amount of oil, as the IEA said, and they're upping their forecast for oil demand. And I think what that tells you is another story about the two-speed Chinese economy, that the industrial economy is really struggling, but clearly you've got hundreds of millions of people who are flying again, driving again, and that has clearly boosted demand. There's been some weakness in diesel, again, the industrial aspect, but when you look at gasoline and jet fuel, that demand has been there, and there does seem a little bit of a mismatch between the demand figures that the IEA is saying that they expect oil demand to reach a record all-time high of 102 million barrels this year, and what people are pricing. We've had this very weak market for the rest of the year, so what you're seeing on the ground in Asia isn't quite at the moment gelling with what we're seeing in financially traded oil contracts.
How do you explain this, Will? Because we've heard this consistently for a couple months now, that basically oil markets are not trading in tandem with fundamentals that really suggest a much tighter market.
I mean, I think it must come down to a couple of things. One, people are trading the future here. It reflects people's anxiety about how the global economy develops from here in the second half of the year. It also reflects supply. I mean, we're all very focused on demand all the time, but I think it's well worth telling people, saying that supply is running ahead of what people expected, and particularly out of Russia. Our weekly tracking of Russian exports saw it as high as it's been in some time, 10% higher than a couple of months ago, and that's not what people expected to see, because Russia had pledged to cut back production. It claims it's doing it, but we're not seeing that in export numbers. There's oil coming out of Iran, There's oil coming out of Venezuela, and I think that there's plenty of oil around meeting an uncertain demand picture. So for all the focus on demand, let's talk about supply. So if you put those two things together, that's one reason why the things have been displayed. And then there's the sort of, I think the way that people have traded oil, which is to use it as an inflation hedge up, and now that people are less worried about inflation, they may be getting out of that trade.
Well, I do wonder, to the point that John and Tom were talking about, the fact that the U.S. may be refilling the Strategic Petroleum Reserve as soon as August, not refilling it exactly, perhaps putting a drop in the bucket with respect to how much they plan to buy. But how much is that potentially going to influence the market, given how much people thought that it did on the other way when they were buying, suppressing prices?
Look, I think it's important that the US has taken that step. I think people are waiting to see that it happened. And yes, it's only 3 million barrels. It's not a huge amount, but it's definitely something people have been looking to happen. And there's been talk about them from administration's officials doing more later this year, early next year. It's going to take a long time, and I don't think they're going to rush or feel the need to refill everything they've sold. I think they're going to take a view on how big it is. But I think it's important, and it's definitely something that traders are going to factor into their thinking when they think about the downside for oil and how low it could go, because clearly you've got a buyer willing to come into the market when oil gets cheap.
Well, very quickly here, is it beneficial for you and the team to watch the dynamics of iron ore right now? Do you glean a lot of information from that?
I think the iron ore market is probably telling us something important about the state of the Chinese economy. And as the Chinese data on the industrial side comes in pretty weak, and it does seem to be coming in weak, I think you would say that the iron ore market has been telling you that for some time, because it's been on a downward move for a number of months, and clearly it is sending a signal about how busy steel mills are in China and the demand for steel from sectors like construction.
Brent crude, 75, WTI, 71. Will Kennedy, thank you, sir, of Bloomberg on the latest effort around crude, what's happening with Chinese data, and what we're hearing from the IEA as well. What you hear on Bloomberg TV in about 35 minutes from now, coming up on the Open on Bloomberg. Mohammed Al-Erin in studio of Bloomberg Opinion.
With us.
Looking forward to that. Cassie Barrow of JP Morgan, Gershon Diston fan of Alliance Bernstein, Tony Dwyer of Canaccord Genuity. It's quite a lineup this morning, isn't it? It's great.
Yeah, it's good.
Some all-stars.
Tony's fired up.
Tony is fired up.
Al-Erin, you know, and I got to give you credit, John. I wish we had relegation in American sports. Right now is a prime season where these three teams down at the bottom of English football are going, oops. And I love this story. Folks, this is what it's about. He's 21 years old. He's from Nigeria and Ireland. And Mr. Bazunu, a cup of coffee ago, somebody paid $420,000 whatever for him. And 3 years later, it was $12 million. I mean, the kid was like 16 at $400,000, and then he was $12 million to, I think, Southampton at some time, and now the Tots are looking at him.
So Spurs want this keeper.
Yeah, I guess so, but this is only happening because of relegation, right?
Because Southampton have been relegated to
the league below.
The league below, and what happens is you have to sell some of your crown jewels because you can't afford them anymore, and you've got to try and retain a core of a team to try and get promoted again, and it's very difficult to get promoted. It's really, really difficult.
I just love this, and I think it's, you know, it's like the changes in the rules in baseball. These are revolutionary things, and this kid Bazunu, I just think it's just a perfect example of what could happen.
You know what? I thought
sports.
what Ryan Reynolds did with Wrexham, it was just awesome, just fantastic. If you haven't watched that,
they went up a league this year.
Yeah, they have. They got promoted, and we'll see if they can do the same again. Just awesome.
Did I do okay there in my
that
soccer
was great.
talk?
Well done, TK.
Yeah.
Wonderful.
Yeah,
Future's a bit
took an hour
softer.
of study.
Retail sales coming up next.
top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Signposts on the way to retail sales. Bloomberg surveillance. Lisa Brownson, Tom Keene, John Farrell preparing for the next hour. Futures at -7. The 2-year yield 4.01% as well. The 10-year yield 3.49%. That ought to about do it for the pulse of America as we look at productivity and critically the many series of retail sales. That can mean only one thing. Michael.
The control group, which is what feeds into GDP, up 0.7%. The forecast was for a rise of 0.4, and it had contracted 0.3 the month before. Same story with auto, with the overall headline number up 0.4, 1% last time, so not quite as strong there. But the ex-transportation is up 0.4. That was a negative 0.8 last time. So it does look like the consumer is hanging in there, which is what the Fed was kind of hoping to see. If you're going to do the soft landing scenario, you need the consumer to hang in there, and so far they are. I'll let you give us the market reaction. I'll see what I can find out here about what went up and what went down.
And Lisa, the market reaction is higher yields, and I would suggest it's pretty dramatic over the last 2, 3, 4 days. The set of data has got us out on the 2-year thermometer to 4.04%. So there's a tangible lift here in yields, higher yields. Bill note bond prices lower as well. And again, equities, like Dean Kern said, somnolent. That would be the fancy word for it.
Well, I'm looking right now a little bit better than expected, but still on a real basis negative. And I think this is really the key question.
Key. Thank you.
That the general trend is lower. So even though better than expected, still on a non-inflation adjusted level, an actual headline retail sales advance month over month is 0.4% versus the expectation of 0.8%. The control group better than that, 0.7%, but still, again, on a real basis, still negative.
And this needs some adjustment. As Michael McKee looks at 85 lines that come out within this report, he'll have that all broken down. Michael McKee, inflation is really a significant dynamic here, isn't it?
Yes, it has been, Tom, and that's one of the reasons we're looking also at the control group, aside from the fact that some of these things are accounted for differently in GDP, but it also takes out gasoline, and gasoline's been a big mover for the retail sales number over the past couple of months because it's been going up and down. It's one reason that we saw a decline last month, and it's a reason that we saw a rise this month in retail sales because gasoline station sales fell on the month by 4%, it looks like. That makes a big difference out there. The other categories that moved significantly, though, were general merchandise stores. And I think what you have here is between the April and May numbers, or April and March numbers, rather, is Easter effect. Easter was early in April this year. So some of the spending that would have taken place in March moves over to April, and you want to average that out. But overall, I think the bottom line that Lisa brought up about inflation still playing a role is there, but you also have to look at the fact that consumers are still spending, and we aren't seeing necessarily any signs of recession in the retail sales figures.
Mike, you're going to get in your 36 holes on Amelia Island here, helping out the Atlanta Fed, and you're also going to be in conversation with the McKinseyite Barkin, and also the academic from Chicago, Goolsby. These are two important, different conversations. Let's focus on Austin Goolsby, who's someone reticent to raise rates higher. Do I have that right?
That is correct. He's more worried about the fact that the Fed has done so much that it wouldn't take much to tip the economy into recession. So he's been saying he thinks maybe a pause is a good idea. Stop and look around and see what's going on. We'll be asking him what would change his mind on that, because we do have a couple of inflation reports before the next Fed meeting.
Mike McKee, thank you so much. Really appreciate that this morning. It's really important here, I think, to look at the retail data, rip it apart. And someone that can do that, of course, is the gentlelady from PIMCO, Lisa.
And this really is the question, especially after we were talking about a discretionary recession. Are we seeing that in the data? Joining us is someone who focuses on this all day, every day. Tiffany Wilding, economist at PIMCO, 5:30 a.m. their local time. Thank you for waking up and keeping Eastern time so that you can partake. But I'm curious, Tiffany, from your vantage point, are you seeing signs of some sort of discretionary recession, or is that premature?
Yeah, well, I mean, I do think that the consumer, some of the momentum in consumption has decelerated since the beginning of the year. So, you know, the first quarter was extremely strong in terms of consumption growth, over 3%. You know, but a lot of that, as we know, if we look at the sequential monthly data, it was really boosted by warm weather in January. And then we saw a deceleration in March, and it looks like we're getting a little bit of a pop back. But as Michael suggested, there's probably some noise around Mother's Day here. So you kind of have to smooth that over. You know, so we would suggest you are seeing some decline or growth deceleration in consumption, but overall, you know, as was said, the consumers are hanging in there. You know, and of course, that's also going to be a function of the labor market. You know, and it is still reasonably strong.
Hanging in there and willing to pay the prices that are being demanded are two different things. Is there a sense that there really is starting to be some pushback to the inflation that's being borne out in consumers' pocketbooks and in the fattening margins of profits at companies?
Yeah, well, so, I mean, we're definitely starting to hear more of that coming from, you know, the various earnings releases from some of the consumer companies. You know, they're saying, obviously, that consumers are a little bit more price sensitive in various categories. I would say when I look at the macro data, you know, I don't see it as much. And of course, we need more macro data. You know, if we're starting to see these trends at the company level, they're noticing it, you know, then it'll come out with the macro data with a lag. You know, but overall, I would say inflation is actually still, you know, still reasonably robust. I mean, obviously at 5% or more, it's over the Fed's target. You know, we do expect it to come down, but I think continues to be stickier than expected.
Tiffany, I need to ask you this because in the equity market, I've been looking at the slow motion convergence of moving averages down to what Lisa and I call a snooze fest. I got the same thing in the bond market. If I look at the 2-year yield, there's a teensy-weensy 2 basis point differential in the 3 moving averages I use. Does Jerome Powell call that a success? To see the lethargy, the boredom within the bond market described by the 2-year yield?
Well, you know, I do think that the bond market does listen to the Fed. You know, I think sometimes commentators like to look at, you know, just the forward curve, which does suggest, you know, a significant probability that rates will be lower by the end of the year, to suggest that, you know, the markets aren't listening to the Fed. I do think the markets are listening to the Fed, but I just think the markets probably have, you know, in terms of their distribution of risks, they assign more downside risk to the economic outlook. than the Federal Reserve does. If you take a historical look at banking sector crises and stresses defined by 30% drops on average in banking shares, you do tend to see the economy decelerating after that. That'll of course come with tighter credit conditions for consumers and households.
What do you hear from then your PIMCO portfolio managers without giving away the crown jewels? What does PIMCO say about the dynamics in this banking crisis in agency paper?
Yeah, well, of course, there's some, banks that failed, obviously held, they held a lot of treasuries as well as agencies. Obviously that will need to be sold. We think that's probably priced into the market, though. There's a pretty good understanding of exactly what that is, in terms of how much it is. And obviously the Federal Reserve is also shrinking its portfolio, but on the other side of that, you don't have a refinancing wave because interest rates are so high. So overall, we think it's priced in. We actually like agency MBS. We think that they actually provide pretty good value right now, just because volatility has been high and the level of interest rates are high, and those things can mean revert back down.
As we prepare for a slew of retail earnings, particularly tomorrow with respect to Target and then Walmart, do we get a sense that perhaps people are too bearish, that Home Depot was an outlier, and that otherwise, to your point, the consumers are still spending and they can keep borrowing to do so?
Well, so the data that we got, some credit data from the Federal Reserve, which did look like there was some reduction in credit card, or there was a deterioration in credit card loans and things like that. In the first quarter. So I do think there are consumers out there that are feeling pain, and I do think banks are tightening credit conditions. The other piece of this obviously is just demand for credit, and demand for credit is also falling just because rates are so high. You obviously, it's more expensive to take out loans, et cetera. So, all of this to me is suggestive that, monetary policy is working. The consumer, ultimately they are getting squeezed, some of the lower income consumers more so than others, and you are seeing some deceleration in credit growth as a result of the current environment.
So as you put this all together, is inflation decelerating enough to really get the Fed where they want? Or are we looking at a sort of higher inflation, but also higher growth kind of area for a longer period of time?
Yeah, I think that's yet to be seen. As I mentioned, we do think this banking sector stress is going to impact the economy. It's going to slow things down. Higher interest rates take time to work their way through the economy with a lag. And I would even say inflation even lags, activity momentum. So growth. So I think we're seeing these lags start to play out. You have seen inflation decelerate. It's probably going to continue to decelerate given the monetary policy restriction that's in place. And the Federal Reserve, just needs to be patient, as does markets, just needs to be patient to see that. So we think inflation does decelerate to 3% core CPI, for example, by year end, 3 to 3.5. But obviously that's still above target. There's still some sticky trends in inflation. But ultimately the Fed probably will be successful in getting it back. The question is, how big of a recession do they need to do that, I think.
Thank you. Tiffany, well, I greatly appreciate it with PIMCO. Right now we're going to drop into the Bramo world. We can do that right now. And I just did this really quickly, Lisa. I'm an amateur compared to you. I brought up Apple Computer, and I went out 10 years, like a 10-year benchmark, the 4.3% coupon. And I'm picking up 76 basis points, 75.9 basis points over the Treasury. That's the real world of all of our guests, is they're trying to make that teens-weens amount over Treasuries. You do that with Apple.
And a lot of those big-name blue-chip companies are selling debt right now because they're not having to pay that much of an extra margin over Treasuries because people are saying, oh, you guys are going to be just fine.
I can't emphasize enough, folks, how the world has changed. There's a coupon out there. All of a sudden, total return and coupons matter. Very different. Futures at -11. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The White House and congressional leaders head into another session of debt limit talks today to try and avoid a default. President Biden has said he was optimistic a deal could be reached, while White House Speaker Kevin McCarthy expressed that ongoing discussions were not productive at all, and leaders are nowhere near reaching an agreement. Bloomberg's learned that Saudi Arabia is moving closer to another stock offering in Aramco, the oil giant. Any deal would be one of the world's largest share sales in years. Proceeds from the sale would be transferred to the Saudi Sovereign Wealth Fund. The former CEO of Silicon Valley Bank says the Fed and social media contributed to the lender's collapse. Greg Becker testifies before the Senate Banking Committee today. He's expected to blame the fastest pace of hikes by the Fed in decades. According to prepared remarks, Becker also will point a finger at negative social media sentiment. A special counsel faulted the FBI and Justice Department's probe into whether Donald Trump's campaign conspired with Russia in the 2016 election. Still, John Durham failed to issue any new charges or recommend significant changes to investigative procedures. The former president had claimed that Durham would reveal a conspiracy to undercut his presidency. A group of senior officials from Tesla are visiting India this week, looking to expand its supply chain beyond China. The visit could represent a thaw in the relationship. Tesla CEO Elon Musk has criticized India's high import taxes and its electric vehicle policies. India has advised Tesla not to sell cars in the country that have been made in China, its political adversary. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges.
Britain's next.
Was going to keep Green World Cup.
This is a three.
As the economic picture does.
Is it the okay is getting ready to make a decision?
It's very clear that the consumer is on fragile footing, but they're proving resilient, at least temporarily. Consumers are increasingly willing and accepting of that level of inflation, but going forward, it's all going to come down to that stockpile of wealth and the ability for the consumer to make purchases in the marketplace. At some point, those savings, that wealth runs out, and businesses won't be able to pass on that cost increase without a significant loss of market share.
Very valuable yesterday. Lindsay Piegza with us, the Stifel chief economist there on the state of the American economy. Lisa, she was talking about Atlanta GDP now with a run rate of 2-ish%, and you wonder off retail sales today where that will end up, where that will settle.
Again, resilience, which has been sort of the conundrum that a lot of people have been dealing with. If you've got resilience and growth, does that also mean resilience of inflation, which creates a real conundrum for the Federal Reserve?
Off retail sales productivity yields higher, 4.02% on the 5-year, 10-year yield 3.52%. Equities have vacillated today. I'm going to call it on an SPX of -9. maybe not as gloomy as the shock of Home Depot and the same-store sales miss there, Lisa, but there's a little weight to the tape today. Is how
There's
I'd
a
put it.
nudginess, as you would say.
I
You
like
know,
that,
How
yeah.
much is this really Kevin McCarthy coming out and saying that there's no deal?
No,
So
I
that
don't-
tail risk isn't off. You then have China in the situation where you get data overnight that shows that growth really isn't so even.
Right.
It's kind of sputtering, and it's not going to persist without some sort of government support.
I think you're dead on China. I do think it moved the markets today, and we're going to get a brief on that right now. I've been remiss not to do that through a busy morning. And Curran joins us in Washington, of course, with these years of in Hong Kong and living the Chinese escape from COVID. He is our global economics correspondent. And I looked at the nuance of a property market worser. What was worser for you in the report of China?
Disappointment across the board, Tom. Look at youth unemployment up towards 20.4%, another record level. 12 odd million graduates coming onto the marketplace in China this year. That's going to be a real concern for China's recovery. Of course, then you had retail sales missing forecasts, industrial production missing forecasts. And by the way, they're being compared against a weak base from a year ago as well. So really soft numbers for China across the board. And you'd have to say probably disappointing. Remember a few months ago, we were all talking about, wow, China's reopening now. Let's see where these rocket boosters go in terms of consumption and industrial production. How does it spill over? How will it impact global inflation and everything else? All legitimate questions at the time. But here we are now in May, and it's looking like it's looking like something of a fizzer, so to speak.
Well, unless there is some sort of investment by the government, unless there is some sort of support or stimulus, how much discussion is there about the PBOC, about the Chinese Communist Party coming out and injecting more cash into the economy?
There is always discussion around more public support for the economy, Lisa, for sure. I think one of the critical takeaways, though, will be what's happening with youth unemployment in particular. We know, of course, how job creation is the modus operandi of the government there. We've had some comments from the official sector. Our colleagues in Beijing were reporting on, making the point that they will be taking steps to ensure jobs are created. Some economists are making the point that the recovery kind of favoured low-end services workers rather than, say, more educated workers up the value chain. Those are the ones that are losing out this time around. That certainly won't be an easy story to fix given the broader difficulties that China's technology sector is facing given the US tensions. So I think there might be more support coming, but an interest rate cut isn't going to turn this around. Clearly, youth unemployment needs to be addressed, and obviously broader government spending will be needed to pick up the investment side of things.
So if anyone was waking up today and hoping that we'd get some clarity on the soup of data and storylines that we've been getting over the wrong, you're not going to get it, because we've not only got this data out of China that shows some sort of, I don't want to say slowdown, but a choppy recovery. You get the IEA coming out and saying, actually, Chinese oil demand is increasing dramatically and is going to really support oil pricing. So how do you square this circle?
Well, this was meant to be this was the talking point of the year. China comes back online. They are the world's biggest purchaser of oil. Chinese travel, both consumer and business level, would have an impact on global oil prices. But obviously, it's there. It's offering some support in that market. Analysts talk about it every day of the week. But we can't say, I think, China's offering a major fresh impulse to the global inflation story. At least not yet, Lisa.
And I want to go to your wheelhouse coverage in Hong Kong of the fears that the West has through Hong Kong over all of China. This president begins a three-nation Indo-Pacific tour. It is Japan. Amory Horton will be there, folks. Papua New Guinea, and then I believe down to Australia. An exhausting trip. There's no ifs or buts about it. And one of the major goals here is to contain technology placement in and out of China with our allies. Can we do that? Can we actually control the technology movement of our allies into a nation that we fear?
Well, there's no doubt that the US export controls and restrictions on investment have certainly been hampering parts of China's economy, in particular the semiconductor sector. Some companies especially caught in those crosshairs, for example, like Huawei was one example, and some US allies have been on board for that story as well. But you'd have to say at the same time, we've been reporting, and others are reporting, that there's also signs of resilience in China's high-tech sector, in the semiconductor sector, among some of those individual companies that have been impacted, like Huawei. So the question of about whether or not the US can kneecap China's high-tech development, I think, remains an open one, but clearly more measures are expected still to come from the White House.
The distinction and this morning seems to be a recovering China versus an industrial China. Do you buy that? Is that the dichotomy we should be looking at?
Well, I think, the biggest surprise has been the sort of slow rebound of consumers. The Western story was pent-up demand after they moved past the brunt of the COVID restrictions. That hasn't really played out in China. Maybe it's because it was a different dynamic. The COVID zero meant there was no COVID there for a couple of years and people were out and about as they normally would. So perhaps we should never have expected that kind of V-shaped rebound to begin with. But nonetheless, I think the slow recovery and the fragile confidence of the Chinese consumer doesn't bode well for China's economic recovery, and certainly doesn't bode well as spilling over for the rest of the world in terms of global demand either. I think China's slowdown, coupled with the noise coming out of Germany's industrial production side of things, it all points to, I think, slowing momentum as we head into the second half of this year.
As you're speaking, we're getting some headlines from Cleveland Fed President Loretta Mester in some prepared remarks as she speaks at an event in Dublin, Ireland. She's talking about how data shows us that rates are not at a sufficiently restrictive level. She talks about how monetary policy must consider long-run economic trends and that they are committed to returning inflation to 2%, but not yet at a level to hold given the stubborn inflation. Given the fact that we have heard something of a break in views on the Federal Reserve, and from an economics perspective, is that the case, that it's not necessarily clear whether monetary policy is at a sufficiently restrictive level?
Well, again, this is the big question. I mean, the US has certainly got a lot of balls in the air right now, Lisa, when you consider what's going on with the banking shock and how that may or may not impact lending as we go forward in the months ahead, especially for the smaller business community. We've had 5 odd percentage points of interest rate increases here in just over a year. There are plenty of economists who say, look, textbooks say that's going to come down the tracks at some point sooner or later and hit consumers and households and businesses. And then, of course, we have the debt ceiling debate. There is a sanguine view that will all be navigated. Markets aren't really panicking yet, but nonetheless, it's certainly a pretty serious debate to be having for any government. And now to your point, some Fed officials are saying interest rates still aren't where they need to be. They need to go higher. Well, of course, there are plenty of people warning that the Fed has already gone far enough, that they're only storing up trouble for down the road. It's a very academic question as to where you do actually hit restrictive territory, where the new neutral rate is, so to speak, as well, Lisa. But either way, I think it's a big call for the Fed now in terms of how they balance this going forward.
And Curran, thank you so much. In Washington this morning, futures negative 11, a little weight to the tape here is well, there's Fed speakers and then there's Loretta Mester. I'm sorry, I'm going to treat her differently. They're all different. Barkin with Mike McKee, Goolsbee with Mike McKee, two very different individuals. And then there's the mathematician Mester, who has a concision the other two don't.
It really flies in the face of market expectations that the Fed is done, the pause is about to happen, and then they're going to keep on going. It also shows she's not ready to pause. We heard something different from Raphael Bostic, who is saying, all things being equal right now, to Michael McKee in his conversation yesterday, he is ready to pause. So again, this real difference, do we see that in dissents coming out in the Fed?
I think we'll see it in the data. They're all, the common ground of Austin Goolsbee and Jim Bullard is they're data dependent.
Which data? They're all looking at different data.
They're looking at different data, but far more importantly, on an ex post basis, they got to get out and after the fact, get in the data and by definition be after the fact. And to get out here, he's going to close the show. I can go to FOMC Go, so can Lisa. June 14th, July 26th. Where are we going to be November 1? I got a clue.
Where are we going to be
I have
June
no
14th?
Clue. Yeah. June 14th. Maybe we'll get to Memorial Day weekend. Michael McKee with Barkin and Goolsbee from Amelia Island. Stay with us. This is Bloomberg.
get a degree in finance. Go for a career in tech instead. That's the advice from the latest Bloomberg survey of professional and retail investors. Only 1 in 5 Wall Street professionals say high school seniors graduating this year should follow their footsteps and go into finance. About half say that Gen Z's best bet actually lies in the tech sector, and that's despite all those recent layoffs at companies like Meta, Amazon, and Google. Still, hiring trends paint a rosy picture for those with a background in tech. Industries ranging from auto to the federal government have jumped at the chance to recruit any laid-off tech workers. A degree in tech could set you up for a lot of potential jobs and a safety net if any of those jobs don't quite pan out the way that you'd hoped. Survey respondents also expressed concern about the long-term threat of AI. Think ChatGPT taking all of our jobs. For kids graduating from kindergarten this year, about 40% of investors said to go into healthcare. That way, when they come of age, they may be able to hedge against any potential AI-related job takeovers. Roughly 12% said Wall Street would be the right career given that pending AI threat. The AI concerns come despite traders themselves finding that current iterations of ChatGPT struggle with things like math and corporate earnings. But the idea here is that there's still plenty of time for AI to improve and to potentially threaten our jobs along the way.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Time to Fed speak and a little bit of economic data. What more do you want? Live from New York City this morning. Good morning, good morning. Just a little bit softer on the S&P 500. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, coming up, views beginning to splinter at the Federal Reserve, some cracks beginning to show at retailers, and Yellen doubling down on an early June ex-date. We begin with the big issue, challenging the resilience of the U.S. consumer.
Consumers are proving resilient.
The consumer looks strong.
Still strong.
Consumers are still spending. They are able to tap into some stored wealth.
Consumers okay, but it's the consumer's behavior that we're worried about. You've got growth problems that are starting to emerge.
A lot of cracks surfacing.
Signs of worry.
The rise in credit card rates and the rise in revolving lines of credit.
The consumer is on fragile footing.
They are waiting for the other shoe to drop.
In the second half of this year is when things start to unfold.
Maybe later this year rather than earlier.
We will be watching the earnings closely.
This week could be very important.
I'm pleased to say that joining us now to discuss is Mohammed Al-Aaron of Queen's College, Cambridge. Mohammed, good morning to you.
Good morning. Thanks for having me, John.
We have found the pain point for regional banks. Have we found the pain point for rates for this economy?
Not yet. There is so much confusion out there that people are not even sure where the rate point is. What we do know is that the consumer is holding on better than most people expect, and the global economy around us is weakening. That's what we know. What we don't know is what is the right level for interest rates, and I would go one step further. What is the right inflation rate for this economy?
We're going to pick up on that point a little bit later on this morning, because I know you've got a lot of thoughts on that. The Fed speak of the week so far, there's tons of it. Concludes with Chairman Powell later on this week on Friday. Goolsbee suggests maybe we're done here. He was close to being done at the May meeting.
Kashkari is talking about perhaps being open to more. Where are you right now?
So it is fascinating to me that to see the range of views. As you say, there's one view we should have not increased last time. There's another view we should increase next time. Then there's the collective view of the Fed, which is we will not cut rates, versus the market view that we will cut rates. John, that tells you three things. One is the economic situation is fluid. Two, compositional issues matter. If you look at the service side, you get a completely different set of answers than on the good side. And three, the Fed hasn't anchored expectations. We have no view of what the strategic and secular view of the Fed is. And until we get that, you're going to get more splintering, not less.
Do you believe that the effort to get inflation back towards target is time sensitive? Or do you think you can push out the time horizon to ultimately achieve that goal?
I think ultimately you will push it out because achieving it in a short span of time has too much cost for the well-being of Americans and for the well-being of the global economy. You cannot crush the economy to get to 2% because we are living in a world of deficient aggregate supply. And if you try, it will be counterproductive.
Just to be clear here, this is still your opinion, that to achieve a 2% inflation goal, you would have to hammer the economy. Now, when you say crush the economy, you're talking about unemployment of 5, 6, 7, 8%. What are you talking about here?
I'm also talking about the inability to bounce back quickly. So there's a dynamic here. If you try to run an economy at an inflation rate that is too low, given the amount of resource reallocation that's going on, then you will crush it. Look, we have three issues standing there. We have a major energy transition that we have to navigate. We have the rewiring of the global economy that's happening not just for geopolitical reasons, but also for companies looking for more resilience. And then we have the functioning of the labor market. You put these three things together, if you try to get to 2% quickly, the cost far exceeds the benefits.
Well, you know what the Fed implies right now in its projections? Median forecasts right now. Unemployment goes to 4.5%. Rates stay here, implied by the median dot, and inflation's on a glide path back towards 2. How would you characterize those forecasts from the Fed? They get updated in June, by the way, as you know.
I would characterize them the same way I've characterized almost every single forecast we've had for the last few years as hopeful but not realistic. We haven't talked about the third part of the trilemma, financial stability. Right? So there's three elements, and that's what you get when you're late, is your dilemma turns into trilemma. And we have to talk about financial stability as well. So look, unless the Fed comes out and anchors quickly the markets, where in terms of what is its characterization of the medium term, we're going to get more and more differences, not fewer.
We've gone back and forth on the regional banking stress. I've called it a crisis, you've called it something else. We won't debate that here and now, but you've talked about the several phases of it. What phase of that are we in at the moment?
So we are out of the ICU. That was the acute phase. We are still in the hospital because there are problems with the banking model of certain banks. And the key issue now is to allow the patients that are in the hospital to come out. And if there's another policy mistake, the patient goes back into the ICU.
What would a policy mistake look like?
If, for example, we ignore the fact that we can't get to 2% inflation easily and we go after it too quickly, that would put the patient back into the ICU and would bring back a second set of patients that we don't talk about, the non-banks, what's happening in the non-bank financial sector.
What do you think is happening there right now?
So the good news there is it's slow moving. So think of commercial real estate, think of the 1.5 trillion that has to be refunded. That doesn't happen immediately. That's the good news. You don't have the dynamic of deposits. The bad news is that's going to happen over time. So we've got to be really careful to navigate what's coming.
All roads here seem to lead towards this idea, Mohammed, that you think this Fed should be done and should come out and explicitly say it, and that they're done because they think an inflation target of 2% is unachievable. How on earth do you go around communicating that?
That is a problem. And this Fed hasn't been known for good communication. It's been known to more confuse markets. We have the study that shows that volatility is 3 times as high during the current press conferences than they were before, that the market ends up feeling one way after it felt the other way after the statement. So communication is an issue, and we need to get that clarified. Having said that, John, it is really important for everybody to know where we're going to. Everybody's data dependent. So it's as if you're driving on a freeway and you just care about the cars around you. There's two other things you need to know. What is my destination and is it feasible? You need to know these two things. It's not enough to be data dependent.
What does that phrase even mean anymore? That phrase drives me nuts.
It does drive you.
What does it mean anymore?
It means that I don't want to take a strategic view. I don't want to put my views out there, so I am going to be completely tactical. However, there's a problem, which is you are tactical with a tool that operates with lags.
The long and variable lags. Governor Jefferson talked about them. How long and how variable are they?
They are not as long as they used to, but they're long enough for you to have a forward view and not just a backward view. And we got to get out of this excessive data dependency. You should be data dependent, but in the context. The great discovery of Bill Gross at PIMCO was that you should always have a secular and structural underpinning to what you're doing today. Don't just get whipsawed by the markets. Have a view as to where you're going. And the Fed needs to share with us what is that view, what is the characterization of the economy we're functioning in.
Which is why you used to have both a cyclical and a secular outlook, and PIMCO, by the way, still does. Are you suggesting that's what the Fed needs to provide now?
Absolutely. I mean, the only secular view we have comes from the new monetary framework, which is a world of deficient demand. But we live in a world of deficient supply. So we have a framework that is built for the world of yesterday and not built for the world of today or tomorrow.
Mike McKee's been looking at some of these things down in Florida, catching up with Fed speakers and, of course, responding, reacting to the latest economic data as well. Mike McKee, let's start with the data first and then shift to the Fed speak. What did you make of that retail sales print from 36 minutes ago?
Well, it does suggest that the consumer is hanging in there. There's a lot of things you want to do with the data, massaging it in terms of the fact that Easter moved from March to April this year, and so it affects the skew of the data. Also, energy prices coming down. But as you can see, the trend is up. And it does show that consumers are hanging in there, which just makes it a bigger question for the Fed about what that's going to mean. It helps them with the idea of a soft landing, but what we don't know is whether or not it's going to be inflationary. Some of the inflationary categories like gasoline dropped in retail sales this month, but there are still wage pressures out there that Fed officials are worried about. We had Loretta Mester this morning speaking over in Dublin, Ireland, saying that she doesn't think that the conditions yet for a pause have been met.
Mike McKee, thank you, sir. Thought Mike might have some sound there, but he doesn't. Mike McKee, thank you very much. I want to turn to Home Depot numbers just quickly. They came out in the last couple of hours, and the stock is down by about 2.9% in the pre-market. The company coming out in the last couple of hours, Mohammed, and basically communicating to us that they've had to cut the outlook for 2023. Clearly there was some pull through, some pull forward of demand here for this company. The goods sector, we had a guest earlier on this morning on Bloomberg Surveillance, I'm sure you may have heard it, who said that we face a discretionary recession. And the question I was asking is, does that go from goods to services? You've seen that in goods. Do you see the potential for that to bleed to services?
It may bleed, but we are really far away from this. And that's one of the challenges of the Fed, is if it looks at the goods sector, it is relaxed. If it looks at the service sector, it is worried. And we need to spend a lot more time understanding the dynamic of the service sector. Look, John, you have two sets of companies now. The extremes are Home Depot and the airlines on the other side. Home Depot has inflation biting into declining sales. The airlines have pricing power and have massive demand. And what we're going to see increasingly is this dispersion in companies depending on which sector you are serving.
We'll catch up on the retailers through the week, of course. It's not just Home Depot earlier this morning, it's Target tomorrow, Walmart the day after that. Looking at S&P 500 futures right now, around about 20 minutes out from the opening bell, equity futures on the S&P, negative 0.3%. Mohammed's going to be sticking with us. Let's get you some movers. Here's Abby.
Let's stick with Home Depot, John, because it really does stand out with the stock down. Cutting the outlook, the quarter that just was weak. Also, demand weak for sales, which missed. They're now talking about sales comps for the year of down as much as 5%. Previously, they had been looking at flat. They're talking about the discretionary spend not there. Some of the other categories, such as plumbing, that are more necessary, that's strong, but patios and grills, not so much. Turning to one space that's up today, Capital One, we have those shares popping sharply higher as Berkshire Hathaway takes a stake. We also have Nubank higher. They put up a strong quarter. That's another Buffett-backed bank. Horizon Pharma, on the other hand, plunging down 18%. We have the FTC challenging Amgen's $28 billion deal. This would be the biotech giant's largest deal in history. They are basically saying it could hamper innovation and slow the pace of drug development. Not surprisingly, Amgen's higher, but not so much. So it's going to be interesting to see how this story evolves with time, John.
Abby, thank you. We'll touch base with you again in about 20 minutes around the opening bell. Coming up, Speaker McCarthy sounding pessimistic ahead of a second round of debt ceiling talks.
We're only a couple weeks away. You've got to have something done by this weekend. We are nowhere near any of that.
That conversation with Mohammed Al-Erin, JP Morgan's Kelsey Barrow, and AB's Gershon Distenfeld up next.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where has it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, COVID's enough of a change that I ought to be able to do something new.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles.
One of the most important things is looking around the corner.
Look for Chief Future Officer on Bloomberg.
The staff is very engaged. I would characterize the engagement as serious, as constructive. The most important thing is making sure that Congress fulfills its basic responsibility to avert default.
National Economic Council Director Lel Brainerd calling staff-level talks both serious and constructive. Here's House Speaker Kevin McCarthy's take on the same thing.
We're only a couple weeks away. But because of the timeline to pass something in the House and pass something in the Senate, you've got to have something done by this weekend. We are nowhere near any of that. I appreciate the president signing into talk after 97 days, but there is no move.
According to him, staff-level meetings are not productive at all, and we are nowhere near reaching a conclusion. Meanwhile, Secretary Yellen is doubling down on her warning in a letter to congressional leadership, writing the following: "We still estimate the Treasury will likely no longer be able to satisfy all of the government's obligations if Congress has not acted to raise or suspend the debt limit by early June, and potentially as early as June 1st. Yellen indicating the US is already paying the price. Joining us now from Capitol Hill is Kayleigh Lyons. Hey, Kayleigh.
Hey, John. Well, there seems to be diverging views clearly on how much progress staff-level talks have made in recent days, but it is going to be the principals in the room today at the White House. President Biden, along with Vice President Kamala Harris, will be meeting with House Speaker McCarthy as well as the other big congressional leaders. So there is a question of whether or not we will emerge from that meeting in the Oval Office today, what we will hear when they all go to the sticks and speak about the progress that they made in the room. What we understand is on the table are ideas like spending caps, though the Biden administration would like that to be in shorter duration than Republicans would like. Permitting reform also on the table, as well as work requirements for entitlements. The thing is, John, that even if these five really can reach a deal today, that is just part one. This still needs to be sold to the rest of Congress and ultimately passed. That is where the timetable gets incredibly difficult because remember, the president is scheduled to depart for Japan tomorrow, and of course the Senate is scheduled to go on recess starting Thursday through the Memorial Day holiday. So the clock is ticking as Treasury Secretary Janet Yellen reminded Congress yesterday. Not only did she reiterate it that it could be as early as June 1st that the Treasury is unable to meet all of its obligations, she also warned about cutting it too close to the X date, really hearkening back to the 2011 episode, saying we have seen that pushing it too far near the brink can raise taxpayer borrowing costs, impact confidence, and of course ultimately affect the credit rating of the United States. And she of course pointed to the market action we have already seen and how the Treasury's borrowing costs on maturities, securities maturing in June have moved higher. It's a warning from Yellen, John. The question is whether the negotiators today will be heeding it.
Here we go again. Kaylee, thank you. Joining us now to discuss JP Morgan's Kelsey Barra, AB's Gershon Distenfeld, alongside us Mohammed Al-Arian. Kelsey, first of all to you, and fold in this debt ceiling drama down in Washington as well. You and the team seem to believe that the road to recession is already paved. Why?
Well, we see the cumulative and lagged impacts of 500 basis points of rate hiking, the fastest monetary policy tightening since the 1980s. You add on a quantitative tightening, a highly uncertain situation with the debt ceiling, and we see the leading indicators, whether it be NFIB, Conference Board, they all suggest that growth and inflation should be continuing to slow. Now, I know we're hearing a divergence of Fed views right now, and I'm not surprised that they are not admitting victory at this point. They are going to be very hesitant to admit victory, and here's why. They have 500 basis points of policy space. That's way more than they've had in the last multiple decades. So for now, they're going to maintain a hawkish bias, or at least one where they are on pause. But in the background, we do feel that the leading indicators are already pointing towards slower growth and ultimately a recession.
Gershon, let's build on that. Is it time to put on end-of-cycle trades? And what are end-of-cycle trades in the cycle like this one?
That's a very hard thing to gauge, John. The reality is that, we're all obsessing over, did the Fed make the right move, earlier this month by hiking rates? What are they going to do next time? And the real issue is, how long do they stay here? And, we continue to think what they've said, and this is where I disagree a little bit with what something Mohammed opened with, that there's no strategic plan. I think there is a strategic plan. I think they've been clear that they're willing to wait it out. They don't want to repeat the mistake of the 1970s. So they're going to keep rates high for quite a bit of time. Now, why does it appear like they're not clear? It's because, the market mostly cares about what they're going to do next time. Where is the terminal rate going to be? Which is just not as important. So they don't communicate very well on that, but I think they have communicated pretty well that they're going to be higher for longer. They disagree with where the market is. And yes, that probably leads to a higher chance of recession, and portfolios should be positioned that way.
Gershon, in the old days, you never took on the Fed. If it is true that they have been so clear, why is it that the market is not listening? What is the market seeing that the Fed is not seeing?
Well, I think the market may be saying that there's just a much higher probability of something bad happening. If I look at the last 4 times that the 2-year note traded over 100 basis points below Fed funds, we're thinking about 1989, we know what happened there. 1998, we know what happened there, 2000, and 2007. All times where, for different reasons, the markets were about to fall apart. So I think it's a very, very bearish sign. Haven't been a huge believer in just looking at the yield curve, but the fact that it is so inverted is saying that it's likely something bad's going to happen. Now, what is that bad thing? Could it be the debt ceiling debacle? Could it be reignition of bank fears? It could be a severe softening in the labor market. Who knows? But I think that's what the market is pricing in. Maybe consciously, maybe not consciously.
So Kelsey, you said earlier that you feel that there's something bad will be the high likelihood of a recession. Can you speak to the nature of that recession and whether it triggers the credit risk concerns that then undermine the marketplace and undermine the recovery from that recession?
So what I heard from your question on credit risk specifically, the default rate has been very low so far in this cycle, but we are expecting that it's going to start rising. And so, yes, in a recession, you are going to have higher defaults. You're going to have a higher default rate, and spreads are going to need to widen to compensate for that risk. So as we adjust portfolios, the way that we're positioned is long duration, but also up in quality. So investment grade over high yield, looking at things like agency mortgage-backed securities, where spreads are 150 basis points over the treasury, and that's for something that's government guaranteed. So, exactly how deep the recession, we're not sure, but when we look at where spreads are currently priced, they're not really priced for any type of recession, whether it be a garden variety recession or a more severe one.
Gershon, let's speak to that and build on it a little bit more. Can you tell me how you're thinking about the performance of credit, high yield versus, say, equity right now, and within high yield, loans versus, say, bonds?
Sure. I mean, to start with, just I think I differ a little bit with Kelsey in that, spreads are incorporating quite a bit of stress. You can't go apples for apples. You look at spreads, they look kind of average, median, but the quality of the market is so much better. We went through a cleansing period over the past 3 years where you did have a lot of defaults 2 and 3 years ago. So I think the starting point is much better. So I wouldn't go crazy. I certainly have an upper in quality bias, but I don't think that we could say that spreads definitively are not compensating you. As you're alluding to, John, I continue to think that the equity market is telling a very, very different story. And in fact, if you believe the equity market is saying that things are going to be pretty sanguine here, I think high yield's pretty cheap. Now, it might go the other way as well. High yield versus loans, I don't really have a strong opinion at this point. I would just point out, and this applies both in the public and private markets, when you're looking at floating rate debt, that's obviously performed very well for investors in this rising rate environment of the past 18 months. But now those companies have increased interest obligations. And one has to look at that very, very carefully. Companies had a choice years ago. A solid double B could have issued at 4.5%, 5% 2 or 3 years ago. And if they did, they have that rate for the next 5, 6, 7 years.
Yeah.
If instead they chose to take, at the time, the cheaper path, issued it in the loan market at LIBOR plus 325, they had a lower cost of financing for a while. But now their cost is 8% and maybe even going higher. So one has to be very careful looking at an entire capital structure, how much exposure there is, and whether a company really can repay their debts.
Hey, Gershon, great to catch up alongside Kelsey Barron. Mohammed, I'm pleased to say, is going to stick with us. Up next, the morning calls, and later, Tony Dwyer of Canaccord Genuity.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
you some morning calls. Argos upgrading Royal Caribbean, seeing signs of improving demand and strengthening margins. BMO upgrading Gilead, highlighting the company's strong manufacturing capabilities. And finally, Gordon Haskett upgrading Expedia, saying investors are overlooking solid fundamentals. Up next on this programme, Tony Dwyer of Canaccord Genuity.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
Seconds away from the opening bell in New York. Good morning to you. Equity futures going into that open just a little softer, negative by 0.24% on the S&P 500. On the Nasdaq, we're negative here by about 0.25% also. Weaker after retail sales of the control group still look pretty resilient and strong. Home Depot, though, flagging some cracks for the US consumer. There's the opening bell. Switch to the board and get to the bond market. Yields look a little something like this on a 10-year, higher by 4 basis points following that retail sales print, 354.52. Look at Europe. Really interesting story emerging here for the euro. The data's starting to weaken. 108.76. Last week was the worst week for the euro, going back to September 2022. The data this morning, the ZEW, investor confidence in Germany, not that important, but starting to crack just a bit. Worth taking a little bit more attention and placing it on what's happening in Europe at the moment. Crude right now, $71 and about 13 cents. We're virtually unchanged there on crude in the commodity market. Let's get you one stock to watch at the open. Home Depot, been talking about it all morning. The retailer cutting its outlook for the year after first quarter sales dropped more than expected. Abby has more. Hey, Abby.
Hey, John. Well, I would categorize this one as worse than expected because the expectations going into this quarter were not great. Analysts, investor strategists talking about the idea that slowing consumer demand could weigh. That did, in fact, happen. Sales missed in a big way. They missed by about down, a miss by about 3%, down by about 4%. There were earnings of $3.82. That was a drop of 7%. The last time we've seen a decline in the numbers, the financials for Home Depot, goes back to February of 2020, right as the pandemic was starting. So they're talking about lumber and weather, but when we break down what was doing well and not well, millwork, building materials, hardware, and plumbing, that was strong. On the other hand, discretionary items, big ticket discretionary items, such as grills and patios, not really great. Now, relative to the outlook, that's also a big piece of it, maybe the bigger piece of it, that they have brought down the full year outlook. Sales comps were expected to be flat for the year. The CFO talking about after 43% growth over the last couple of years, of course it would be slowing, but now they're looking at sales comps for the year of down 2 to 5%. So again, worse than feared. This stock, John, down more than 10% on the year, down 24% last year. That equates a decline of 30% from the top. The question is, when will they see some sort of bottom? I think that folks might have wanted to see that out of the quarter. We simply did not get that.
The stock is trying to recover. It's down about 2.7%. Abby, thank you. Let's turn to financials. Capital One moving higher after 13 F filings revealed that Warren Buffett's Berkshire Hathaway added the stock to its portfolio in the first quarter. This coming ahead of the Senate hearing on the collapse of SVB and Signature Bank at 10 a.m. Eastern Time. Shanali Basak has more. Hey, Shanali.
Hey, John, if you take a look at it, it is a really remarkable tale of two cities when you look at the financial system. You have Capital One just soaring pre-market, now down over 1 year, over 17% on the year. If you look at it, it's only really down 4% on the year. Why is that so remarkable? You have Capital One in the first quarter of this year and Berkshire buying it anyways, by the way, John, in the first quarter of the year saying loan loss provisions have quadrupled. And with that said, the CEO has previously said they expect labor markets to significantly worsen over the course of the year. With that said, maybe Buffett is saying the worst is over and the market following them in. Remember, this is a management story as well. You have Richard Fairbank over at Capital One, really running the company since the 90s here. And if you look over at the likes of Silicon Valley Bank, we are talking about management once again and in a different way. We already have prepared remarks to kind of tease ahead to what we're going to see later today over at SVB and Signature as they testify in front of lawmakers in the Senate. And by the way, tomorrow gets even more interesting when you see First Republic's former executives testifying in front of the House as well. But interestingly, you have an SVB executive currently blaming the Fed, saying that for so long they said inflation is transitory and then hiking interest rates as fast as they had done. Remember, we know the Fed has blamed management of both Signature and Silicon Valley Bank as well. Let's see how much lawmakers do the same. And one thing we expect to see them do is address executive pay and stock sales of these firms as we look to how we turn the page from some significant bank failures in the United States and how banks should maybe be managed differently in the future.
With great difficulty. Shanali, thank you. The blame game down on Capitol Hill. What's new? That stock is up by more than 5%. I want to turn to tech, to Tesla, gearing up for its annual shareholder meeting later this afternoon after George Soros cut his holdings in EV makers, including Musk's company. Joining us now is Ed Ludlow. Morning, Ed.
Yeah, good morning, Jonathan. We got that from the 13F on May 12th as it relates to George Soros, a $16 million stake that he'd come into in the second quarter of 2022. But remember, at that time, Soros was looking quite broadly at tech. That stake now gone. I would also note on the Bloomberg this morning that JP Morgan, John Hancock, other names have cut their exposure to Tesla in the most recent quarter. There's actually a lot going on ahead of the AGM. I think we're up by about 0.2% or so, treading water. Bloomberg reporting overnight, according to sources, that in Shanghai, Tesla is getting near to trial production of an updated and revamped version of the Model 3. Slightly longer wheelbase, sleeker interior design, but that process of developing that product moving forward in Shanghai, according to sources. And then we have the AGM. We will get votes on board composition. Most interestingly, whether J.B. Strawball, co-founder of Tesla, and of course the CEO of Redwood Materials, should be added to the board. Most investors looking at a shareholder proposal for Tesla to issue a key person risk report, a report which basically looks at individuals with the company and their core importance to Tesla, of course, with Elon Musk recently announcing that Linda Yaccarino will become the new Twitter CEO. There's been some thinking that Elon may now be more focused on Tesla, having been spending a lot of time at Twitter since April of last year.
Ed, thank you, mate. Appreciate it. That stock is positive by 0.1%. Mohammed, I wanted to come to you. Just looking at the equity market about 5 or 6 minutes into the session, we are negative by 0.2% on the S&P and the Nasdaq by 0.1. Can we go back to 2011? You're at PIMCO. You're going through this debt ceiling drama. What were the lessons from that for this right now? Lots of similarities for you?
Yes, except that this time around, the front end of the Treasury curve is behaving differently from back then. But I think the view then is the market view now for most market segments, not all, most, which is you should look through this, is going to be resolved because ultimately the consequences of a debt default are that both parties get blamed. So at the end of the day, you will get a solution. The question is, what are the compromises that need to be made? It's interesting that the principals are meeting today. Normally, you don't put the principals in the room unless the staff got to some sort of agreement.
And yet we're told that the staff haven't got to an agreement and have barely made progress, depending on who you listen to in Washington.
Yeah, depending on who you listen to in Washington. That's the issue, right?
Going forward from here, Mohammed, is it the European-type playbook that you need to get close to crisis before you provide a solution? Is it that down in Washington?
It is that for the debt ceiling, yes.
Do you see it spilling out from the at-risk maturities at the moment to somewhere else in the market, or does it remain contained there? Is there broader market risk here for you?
So I think the broader market risk is low, but that is what the market thinks as a whole. So if it turns out that we're wrong, there's going to be a lot of damage.
Plenty of reason right now, apparently, for some optimism and to be gloomy too. Bank of America's latest fund manager survey picking up on both the gloom and some of the optimism as well. Global growth expectations coming in at the worst levels of the year, pushing investors out of commodities and into tech stocks, reflecting the pessimism. The most crowded trade right now, long big tech, short banks, but the majority of investors still hoping for a soft landing rather than a hard one. The vast majority expecting a debt ceiling resolution before the X date, and survey participants, wait for this, forecasting just a 1% drop in global EPS in the next 12 months. I'm pleased to say that joining Mohammed and I to discuss this is Tony Dwyer of Canaccord Genuity. Tony, wonderful to catch up with you, sir. I picked out a quote from your note this morning. Everything is fine. You can tell us what FINE actually stands for in just a moment. You caught up with clients recently, and just based on those conversations, this is what you concluded. They are hesitant to get optimistic given the macro backdrop and increasing likelihood of recession, yet nervous to become overly negative given the damage that has already been done underneath the surface of the S&P 500. Tony, where on earth does that leave us?
Fine is where it leaves us, which is frustrated, insecure, neurotic, and emotional. And I don't see any reason that that's going to change. And going back to the whole debt ceiling debate, let's say it gets resolved in the next 15 minutes. Market's going to bounce. Right now, there's probably some investors that are not going into money market funds because the only thing they own is really short-term government paper. So there may be, if you do have more money flood into money market funds because of the debt ceiling debate resolution, you're going to have it come out of the deposit base, which is all in. It's going to increase the lack of availability of money and tighten lending standards.
What are you advocating for at the moment then, Tony?
John, I am annoyingly boring and consistent, which means we're light and tight. We're holding a bit more cash than would normally be the case, and we're slightly defensive. Again, with the Russell 2000 back to literally the pandemic low relative to the S&P 500, now's not the time to say, okay, things are really at risk. That said, you could get one more whoosh lower because there's 3 stages of a decline that's economic based. You get the good news is bad news, means Fed's going to tighten. We got that last year. You get the bad news is good news. Okay, they're going to take the foot off the throat of the market. That's been recent. And then you get bad news is bad news when you really actually have to price in a recession. And I think that's the final move when everybody's kind of panicking that I want to go on attack mode. So I don't want to get too negative, but I do want to own a little bit more cash and have a little bit more defensive posture.
Tony, a lot of people have picked up on valuation issues between the Russell and Apple. The fact that Apple is now worth more than all of the Russell. What would make you go long Russell, short Apple?
Well, Mohammed, I can't talk to Apple, but let's talk about the NASDAQ or the S&P 500 market cap indices. I don't think that's a bad, I've said it publicly, I don't think that's a bad idea right now. You're at a level that has already generated such a significant underperformance of the Russell 2000. And earlier, John, you talked about the Bank of America survey, right? And it said the biggest long is big cap tech, the biggest short is banks. That's the same trade, right? You're long, if you're long the S&P because it's index based, and you're short the banks, you're probably short the Russell. So that's really the derivative of that. And I'd like to point out, going into yesterday's close, guys, 99.47% of the market gain for the year-to-date gain in the S&P 500 was the top 8 stocks. It's a market cap index. Typically, the biggest stocks do have the biggest impact, but that's outside.
Well, Tony, just to clear something up, when you say you stand ready to buy into weakness, what does weakness actually look like there? Where are you looking for that weakness to buy into?
And there's the rub. So this could have come across as, really bearish, but it's below the October low. So here, let me throw some where it would be unique to have October be the low. When you look at it, we wrote a note that everything is fine. In that note, it has the New York Stock Exchange advanced decline volume line has made a new low. That's not happened before. Typically, that surges. So if October was the low, this one's going to be historically unique on that. The S&P 500 has never made the low prior to a peak in the 2-year. So if October is the low, it would be historically unique because we made a peak in the 2-year on March 8th of 2023. And in addition, you've never made the low before you've had a recession, and you've never not had a recession with all the macro indicators that we talk about all the time.
It makes a lot of sense. Tony, thank you, sir. Tony Dwyer, great note this morning. Enjoyed the read. Simultaneously anchoring Bloomberg Surveillance and reading that note at the same time. Mohammed, how perfect is this? You go through the Bank of America Fund Manager Survey, and I think it sums things up pretty well. Global growth expectations, worst levels of the year, reflected in some of the pessimism out there that you hear. Investors going into tech stocks, out of the commodity story, the pessimism, the crowded trades right now, short banks, long tech, all of that. And then you get this idea of a soft landing, rate cuts from the Federal Reserve, get a resolution to the debt ceiling, survey participants only forecasting a 1% drop in global EPS. Does that all sound a little bit too perfect for you?
The hopeful part of it sounds a little bit too optimistic for me, but that is completely consistent with the behavioral side of investing. It's completely consistent.
What's going to change that? Data and time?
I think data, time, or an accident. And I hope it's not the accident part, but I hope it is data and time.
I think we all hope it's not the latter. About 13 minutes into the session on the S&P 500, we're just about negative by 0.1%. Coming up on the latest data, China data, disappointing.
Momentum for the growth is still not broad-based. It's still not solid yet. So the question is here, which policy stimulus is most important?
That conversation up next.
The difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going.
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Momentum for the growth is still not broad-based, it's still not solid yet. So the question is here, which policy stimulus is most important? I think that industry policy probably will play a more important role than fiscal stimulus, particularly on the consumption stimulus. Much policy can play a supplementary role, but I think that the rate cut is not the most urgent policy response at this moment.
Whatever happened to the boom in China? Signs emerging already that the recovery is losing momentum. Official data showing industrial output and retail sales growing at a much slower pace than expected in April. The calls for stimulus already picking up. Michelle Lam of SocGen saying this. Today's data opens the door for further cuts in the reserve requirement rate and interest rates possibly in June. Damien Sassad joins us now for more. Morning, Damien. Your thoughts on that data overnight?
Yeah, no, I mean, the recovery is, it's lacking some substance here, Jonathan. I mean, for me, it's really about, retail sales, obviously. The decline there month over month sequentially is pretty significant, and what we're seeing here is sort of a transition. It's going to be services-led, at least whatever recovery we do see in China. You're seeing demand for durables go down, and you're seeing youth unemployment rise to a record high. So that can't be good on a sort of structural medium to long-term basis.
Are we really at that point, Damien, where we're talking about stimulus, rate cuts, fiscal easing?
I mean, when are we now talking about stimulus in China, Jonathan? Of course we are. I think now we're looking for something on the order of a 10 bip cut in the one-year MLF. I think May 21st next week is going to be the next meeting there. We could see it then, certainly. But I think, look, investment in China is lackluster, has to do with the housing market. There's no signs of a recovery on that front. So look, the verdict is still out, but definitely the recovery in China is lacking in substance.
Damien, some people might be saying what happened to the boom, the big reopening trade that we're all talking about at the end of the year coming into 2023. Is there a sign of a boom somewhere in the services sector reflecting that reopening enthusiasm?
Yes, jet fuel demand, airlines. So you are seeing international flights come back online. You are seeing that kind of pick up. I think JP Morgan projects that jet fuel demand out of China is going to be responsible for 25% of all growth this year in energy demand. So, we're seeing a little bit of that now. Domestic flights have certainly recovered. But yeah, we need to see international flights pick up, and there's been a lot of cancellations from the big carriers in China, Jonathan, so I'm watching that pretty
Interesting.
closely.
Damien, thank you, mate, for the update. Damien Sassad there. Mohammed, back with us. Mohammed, I wanted to share this quote with you from Mislav Matejka at JP Morgan. Sums it up quite nicely to start the week. Just this consensus is starting to break just a little bit around China, around Europe. Mislav Matejka said the following: the activity upswing seen around the turn of the year, helped by the falling gas prices in Europe and by China reopening, unlikely to transition into an acceleration in a second half. Where are you now, Mohammed, on both China and Europe?
So I would agree with that. And I would agree with that because I listened to one person on growth issues, and that's the Nobel Prize winner, Michael Spence. And he's made the point over and over again that neither China nor Europe have potent growth models anymore. That the growth models that they had are no longer able to leverage the global economy like they used to. And therefore, they have to accelerate their structural reforms at home. So once you get the bounce out of the way, the bounce in Europe from the energy shock, the bounce in China from the zero COVID policy, sustaining high growth is going to be much more difficult than what most people expect. And that's what we're seeing starting to happen.
So what does that mean for monetary policy at the ECB, given they've taken rates towards 4% and through 3%?
They only have one objective: inflation.
So lower growth and ultimately, hopefully, lower inflation. Is that the future of Europe?
That is the way Europe is heading.
Or do you end up in the worst case situation where you get the lower growth and the sticky inflation?
Inflation in Europe is not as sticky as inflation in the US.
Why not?
Because the underlying economy wasn't as strong to begin with. So you didn't get the massive acceleration of inflationary pressures and the move in survey. You know, we haven't talked today, but the 5 to 10 year inflation expectation in the US have moved up substantially.
You mentioned on Friday. What do you think that tells us?
That tells us that inflation is not proving to be sticky, yes, but in addition, inflation expectations are starting to react. And remember, inflation expectation, they move very slowly up and they take a long time to come down. So we have to pay attention to that.
So this goes back to how we started the conversation this morning. Is the effort to get inflation back towards 2 time sensitive? Is there a window here that if you don't achieve ultimately your goal, you end up with something nastier further down the road and something you've got to live with?
That window was in 2021.
You think it's closed?
I think it is very narrow right now. Very narrow right now. That window was wide open in 2021. Unfortunately, we got stuck with the transitory mischaracterization, and even when that was amended, the Fed didn't move quickly enough. But that window was wide open in 2021 and in the beginning of 2022. Now it has closed to a very large extent. Now we need some good luck to open it again, but I don't like relying on good luck, honestly, when it comes to such an important policy.
Are we going to be talking about the S word at the end of this year?
We're already talking about the S word.
Is that your base case now?
It's not my base case. I think this economy is more resilient than everybody that has called for a recession. You've heard me say that over and over again. When even Bloomberg Economics came up with this 100% probability of a recession in the first half of this year, I said, no, there isn't. Absolutely not. This economy is more resilient than most people realize. However, it is not resilient to lots and lots of mistakes, nor is it resilient to financial accidents.
Let's talk about this market right now. 22 minutes into the session, we are down by 0.3%. Let's get you some sector price action. Here's Abby.
We are looking at a small decline for the S&P 500, John. Not a lot of drama beneath the lid, though. If we lift the lid, energy down 1.2%, materials down about 1%, staples down 0.7%. Interestingly, consumer discretionary outperforming, even though it's down, being weighed on by Home Depot. On the year, or over the last year, it's interesting to see the outperformance for consumer discretionary and against consumer staples. On the year, it's even more pronounced on discretionary, up about 14%, staples up just slightly. Interestingly, Home Depot is consumer discretionary, but it has to do with Tesla and Amazon, Booking, McDonald's, Starbucks, a lot of strength there.
Coming up, the market moving events you need to be watching. That's next in our trading diary.
That was beautiful. You've got to thank the reporter, though, Mohammed. You've got to say thank you to Abby.
Oh, thank you, Abby.
And then do the tease. Your trading diary up next.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
equities just a little bit softer here this Tuesday morning. Good morning to you. Here's the trading tower at the top of the hour. The Senate Banking Committee holding its hearing on SVB. Fed speak continues with Richmond Fed President Tom Barkin catching up with Mike McKee at 10:30 Eastern Time, followed by an interview with Chicago Fed President Austin Goolsbee at 2:30. Debt ceiling negotiations resume at 3 p.m. Look out for that this afternoon. We round out the week with another round of jobless claims on Thursday morning, and President Biden attended the G7 Leaders Summit in Japan, and Chairman Powell speaking on Friday. From New York, that does it for me. Thank you very much for choosing Bloomberg TV, and thank you to you, Mohammed.
Thank you,
catch up with you. Thank you, sir. Just about holding on to this job here in New York City. This is Bloomberg.
So many people recognize you because you have a very famous hairdo that I've asked you about before. But to some people, they may say, well, Ken, what happened? Where did that hairdo come from and where has it gone? Because right now it seems a little different than what I've seen before.
Yeah, it's growing out a little bit, David, but COVID, you know, I ended up with hair going back down to my shoulder, and I finally realized that one of the things I had to do, I'm a very loyal person, and I used to have hair down to my waist in my college and my hippie days before that in Ann Arbor, Michigan, and I had it cut off in the summer of '75, and I've gone to the same person, now a grandmother many times over, who was a young gal cutting hair in Amherst, Massachusetts, and I still seek her out, and I finally just said to her, you know, COVID's enough of a change that I ought to be able to do something new.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks. Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
898, I won! Look for the winning number in size stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the street, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumours that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking, and of course Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the US.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 139, also 3 times a month. Also, there was a time my father was hospitalized due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010, after staying for almost 1 year in a hospital. He died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19 they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
the price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus, and I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number 1, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venegold as an opportunity to leave that troubled home. Venegold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venegold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venegold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venegold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And then they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then it's where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000!
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers. One of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building this social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
The Fidelities and the Schwabs and the E-Trades of the world, they look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation was exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money, I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and
Allah, det tok tid, ass.
And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Ja, da ligger jeg nå. Da vet vi hva som skjer. Null kontroll. Jeg traff på Daxen til slutt, da.
Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about that we're going to progress as a society, I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet is about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word.
Nei, det er ikke sånn
Because
dette.
TikTok listens to us.
Det er ikke noe krise i det hele tatt.
The algorithm does impact
Sist
how
gang
you
fikk jeg en
feel.
sånn, du får
You know,
alltid 2 sånne.
you do notice which
Ris
videos do
koster
better
5
versus
spenn
which
eller sånn.
videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossiple to do that in 60 seconds. But the
Tipp
people
topp,
who
tommel opp.
collect it
Kom snart
are the
til
people
shorten
that
på
you're
dagsen
gonna
fra
watch
stad
and
lange
follow
nesen nå. Så bra.
And where people are sticking
Jeg tjente
around, and it's now
1700 på
countless
NAS-shorten.
subreddits about finance. And by far the biggest one of those
Nei,
is
dagsshorten.
Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets
Nasdaq,
adopted 4chan-like etiquette.
Nasdaq ender jo opp hver dag.
Found a Bloomberg terminal.
We had all these unexplained
Hver dag.
stories, and we would be grasping for why stock
Henter seg på close hver eneste dag.
And you would look at Wall Street Bets and you would see people there talking about buying options in that stock, and it sort of, you know, squared the circle, so to speak.
Har du for lange posisjoner, eller?
It was at that point
Jeg
that it was like,
tapte
wow, we have to start
13K.
paying attention to this.
Some
Og du er ikke
people on
brudd
the
sikkert da, eller?
platform really spend tons of time, and others are just looking for entertainment and to have a little bit of
Eller tok du
fun,
stopplås?
effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now clearly this money is going to
Og så på morgenen når du også så til
eat
toppen.
to live, but there's a lot of people who use this money to invest in the stock market.
Han falt jo til helvete da.
People quote unquote YOLO their entire life savings or stimulus checks on a single stock.
Dagsnytt i dag.
They use what is called gain and loss porn. Screen
Det ramla jo
grabs,
til
aggregates,
helvete.
and misses on stocks for the
Hæ?
entire community to see.
I am about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking
Men vi
to
var
other
short lenger
ignorant
ned.
people.
And this is where
Jeg shortet flere nivåer, jeg. Jeg skrev det, men dere så kanskje ikke noe skjermen gikk svart.
in early 2021.
Jeg tok tap på starten og så shorta det inn igjen.
The combination of more people having retail brokerage accounts and trading apps, and more people being stuck at home looking for some kind of entertainment and some kind of community online came together.
Mange var som har short i dag. 76% var short i dag.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. Boards like Reddit,
Peanut Pecker. Det er de fleste tror jeg taper nå.
as being attractive value.
Han dansken, han derre Trader Tom. Han blåste bort så inn i helvete så mye penger for 3 uker siden, så han bare tok en pause. Og han der Gary, eller hva faen han der USA-går, tapte masse penger i går også. Det var nok en short squeeze, for det var ikke noen grunn til å slå opp. Det er derfor jeg shorta på nytt i stad. Det var liksom ikke noe grunn.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would
Ja,
tell
noe
you
fint, det.
is that they
Jeg gjør ikke noe med å sitte og
act as a policeman in the financial markets, or they're at least looking for companies
Møte
that
med dem.
aren't what they say they are. And that can range anywhere
Hallo.
from an outright
Jeg
fraud
orker ikke,
that
ass.
some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more
Hallo.
it costs. And that's what's called
Nå
a
gjør jeg.
short
Men hver gang
squeeze.
platen her, så ramler det
Hedge
ut.
fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money
Det er godt å gjøre med Wilder fra.
alone just from being caught in the short squeeze of the stock.
Si det fort da, for jeg sitter og ser på skjerm.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Okay.
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually
Ja,
piling
man kan gjøre det.
on.
Jeg vet ikke ha bare masse her når møter sånne ubrukere som at man har andre kamerater. Så får jeg ikke minutter.
Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and quote hold the line and not sell GameStop.
People are getting
Ja, jeg bare ikke ha møter bare for å
buying at the highs. They're saying keep going.
And it was working too, until...
Greit. Ok, ha det.
Thursday morning, the trading app Robinhood.
Nå skjer det samme som har skjedd hver dag. Opp mot close, og så kommer det en sånn liten fitting. Nei, jeg gjør ikke noe nå. Sitter rolig.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution
Oh,
aren't as powerful as maybe the institutions want them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
Jeg husker ikke fattor. Jeg ligger aldri over natta.
People are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going where the winners are and they're willing to jump on and, ride it.
Mid-dritt. Faen hva slags.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe
Hva er sjansen for at
15
Bitcoin går
years,
dobbelt opp
you're
på
going to
60 kroner?
continue to see whether by
I
choice
det
or
markedet vi
by
har nå,
force, that baton
en liten
goes
sannsynlighet.
from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media.
Men på sikt, ja. Langt over 60 sikkert.
Companies govern more and more of our lives. The fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology.
Jævlig rart den bevegelsen vi ser nå. Du har S&P og Dow Jones, alt går ned, og så er det Nasdaq som går opp.
To brick and mortar, they come in and they're in the same business, but they just do it in such a gigantic cost savings.
Nasdaq er gira til helvete.
Well, that's the risk that happens here, is that it's so much cheaper
Og så går den opp, mens alt annet går ned.
We're not there yet.
Det er jævla spesielt.
But costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been...
Ja, den bevegelsen vi ser på Nasdaq nå, den er ikke vanlig. Jeg kan si det her med en gang. Jeg tror det er en kombinasjon at det er lite volum, sommer, og så har du de store big techene som har kommet da, men alt går ned og den går opp. Det er noe spesielt. Nasdaq burde gå til helvete. Sånn skikkelig til helvete. Er vi i bullmarked nå? Ja, ser sånn ut. Ikke bullmarked, men det er mange som ikke tror tallene blir dårligere. Men realiteten er at du har nesten alle de store ikke alle, men veldig mange store hedgefond nå, og store forvaltere tror det skal langt ned. Men det skjer jo ikke. Så plutselig så skjer det. Og makrotallene er dårlige. Men det har vi visst lenge.
His internet is workable. My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
Makes sense.
Usually under 2 down and under 0.2 up, so it's often unusable.
Ofte så er det sånn med, det er derfor ikke jeg gjør så mye nå. For jeg ser at den er jævla sterk, selv om jeg tror markedet skal ned, så er den dritsterk. S&P er ned, Dow Jones er ned. Hver dag siste uka så har Nasdaq gått opp på midten av dagen. Hver dag. Hvis du går på grafen så ser du det. Hver dag. Åpner ned, rett opp. Hver eneste dag. Dagsen rød i dag. S&P rød i dag. Nasdaq rød i dag. Sverige er rød i dag. Alt er rødt.
For a lot less service.
So the
Nasdaq,
pricing for a fixed wireless
Nasdaq
provider
can
be something between $80 and $150 for about 25 megabits per second. However, 1,000 megabits per second and symmetrical is
det forundrer meg ikke om Nasdaq i dag går til det low, men det er ikke sikkert den er grisesterk. Hvis jeg skulle bette her nå, da hadde jeg shorta, ikke longa. Men derfor er det fundamentalt som sier det. Teknisk så kan det gå long. Tar imot på alle støttene hele veien her.
Across the country, civic boosters have been going to extremes, chanting.
Så fundamentalt tror jeg det skal ned, teknisk så kan det gå opp.
And marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
one of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home. And everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The US connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we have a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up, and large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement, encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are
Godt poeng. Kan vi høre Chandler S&P snart på?
remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Well, yeah, once tobacco, and all that, and then you don't have to see it.
I saw you hitting the vape on the plane.
What?
You hit the vape a couple times on the plane, sir.
Me?
You did.
Did you really?
You did.
Your cap. I swear to God, it gets clean. I'm not trying to be like a stage pro. We sometimes tendencies tend to be classic snitch on snitch. I'm curious if you train also figured out this system.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. Education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be
Jeg synes Nass er sterke, det er ikke noe...
a source of hope for all the marginalized in this country.
Greatest flight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions
Tusen hjertelig,
to educational and
Donna.
economic opportunities.
I morgen så skal jeg være alene på 17. mai, tror jeg.
Dalits, people who are on the lowest rung of
Ja,
the
jeg skal
caste
ikke gjøre en
system,
dritt, ass.
constitute almost 1/5 of India's population of 1.3 billion.
Ja, kanskje hvis det ikke har stengt, så er det kanskje det eneste jeg skal gjøre.
Private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor. Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation. And language that connects you to
Jeg vil sagt nøytrale farger også. For da kan du pynte med alt mulig annet, bilder og sofaer og alt passer til nøytrale farger.
Identity is extremely important. There is a scientific evidence to prove that,
Jeg har sånn sandfarge på stua mi. Sand. Ikke sand heter det? Jo, sand.
If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity...
Jeg må sette en TRT. Jeg glemte å sette TRT. Jeg hater det.
I'm not saying that you should forget your past. I'm not saying that. But
Det gjør så vondt.
that should not be the bubble in which you must live always.
Går tilbake. Så kjører ræva mi full av varer.
Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidodi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, that the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower.
Huh?
That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health, as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park, and inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the Garden City feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park, and a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of wanting to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle and the medium to long-term range. So ideally the electricity production is outside of the city and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy, Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel?
1, you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on in order to enter into the marketplace. You either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the
And I think that's
Åssen i helvete fikk du til det, aksjeplukker?
It's very similar to Google Analytics.
Faen, altså, jeg leter etter den en
You
evighet.
have a little bit of a head start. But if you're not doing it faster, if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to three different ways. One, which is the bulk of it, which is ad revenue. Whenever
so
you
that's
go and you
what's
watch a
at
video
play here. And the
and
other thing is that
there's
not
an ad
only
and you wait
are
5
we
seconds
seeing
and you
it
hit the
impact
bottom
the
right
price
corner,
hikes and paid
and then you
sharing,
go
but
on to the next
advertising. This is
video
the week
or
of the upfronts.
non-skippable ad
Netflix was supposed to do a big in-person presentation. Now they are streaming their presentation because they didn't want to have picketers out in front, which would not exactly be a good look when you're trying to get
Jeg skal
advertising
tredje
on board.
etterpå, skal vi
This
se
is
han
gonna
litt.
be the
Jeg
first
synes
year
Arsenal
that
er så
Netflix
sterk,
did
og jeg har lyst til å gå short.
upfront.
Jeg har ikke så mye penger å kødde med.
From some of the actors and the writers around the lack of transparency in Netflix now.
Yeah.
It used to be sort of their secret sauce, but now they're getting called out for not sharing metrics because it makes it impossible to determine these issues.
Yeah, if the writers are saying we want to get paid if our shows are more successful, then Netflix is going to have to disclose which shows are watched or which movies are watched more and which are watched less. So it's interesting to Netflix see you sort of be at the center of this.
Finally, last week, Netflix did say they were trimming some content spending, right? Is that because paid is taking longer to roll out?
Well, it's paid and it's also advertising. And we're seeing everyone try to trim their content costs here, right? It's all about this new focus on profitability rather than growth at all costs. So I think that these things are all coming into play. And then part of it is also just the timing of when you're producing these big shows. And it takes a while for the revenue to flow in because you have a big show like Emily in Paris, which, by the way, is being delayed. The new season of Emily in Paris or Stranger Things, those new seasons are being delayed because of the writers' strike.
But not Bridgerton. I read that was done filming in season 3. We're waiting
Jeg
for
lærte
release
nå.
Yeah, once things are done filming, they're just in the post-production, and that's safe.
All right, good. Although I like Emily in Paris too. Julia, thank
Me
you.
too.
It's nice to have you here. Hedge fund manager Bruce Richards was one of the few winners from the collapse of Credit Suisse with some well-timed bond bets. Now he's calling for a, quote, generational opportunity in fixed income and another Fed rate hike. He's going to join us next.
And later tonight, Elon Musk joins us here on CNBC following the Tesla annual shareholder meeting. Our David Faber in Austin, Texas for that. Squawk on the Street is back in a moment.
My first options trade? Well, let's just say I did my homework. I loved the courses, enjoyed the videos, studied all the strategies, but I still wanted someone to walk me through it. So I called up TD Ameritrade.
Hi.
That's when I met Eva. She's an options specialist who talked me through the process and helped me learn all the tools as I made my very first options trade. Eva, thank you.
Feel confident making your first options trade with a passionate trader community, personalized education, and devoted
Jeg har aldri
trade
gått short her, da.
support. TD Ameritrade, where smart investors get smarter.
My plane has mechanical problems. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
If you have this, and you get this, you could end up with this. Unexpected out-of-pocket costs. So if you're on Medicare or soon to be, consider this, an AARP Medicare Supplement Insurance Plan from United Healthcare. Medicare alone doesn't pay for everything. And what it doesn't pay for, like deductibles and copays, could add up to thousands of dollars. Medicare supplement plans help by paying some of what Medicare doesn't and making your out-of-pocket costs a lot more predictable. Call United Healthcare now and ask for your free decision guide. Medicare supplement plans also let you see any doctor, any specialist, anywhere in the U.S. who accepts Medicare patients. Take charge of your health care today. Consider adding this. Call United Healthcare about an AARP Medicare supplement plan.
This thing, it's making me get an ice bath again.
What do you mean? These straps are mind-blowing. They collect hundreds of data points like HRV and REM sleep, so you know all you need for recovery.
And you are?
I'm an investor in Invesco QQQ, a fund that gives me access to NASDAQ 100 innovations like wearable training optimization tech.
How long
I'm done.
Become an agent of innovation with Invesco QQQ.
I'm okay.
Before investing, carefully read and consider fund objectives, risk, charges, expenses, and more in prospectus at Invesco.com.
Welcome back. Well, when it comes to finding value right now, our next guest says we are seeing generational returns in the fixed income and credit markets, calling this an amazing time to be a lender with an eye on opportunities in commercial real estate. Joining us here at Post 9 is Marathon Asset Management CEO Bruce Richards. Always a pleasure, Bruce.
Jævla bra aksjeblokker. Den squaten her er savnet, altså. Jeg har ikke fått punnet den, for det står at det må være i en annen region.
This weekend, but it was time for all the bankruptcy lawyers and companies to get together, and we saw 7 bankruptcies in corporate America on Monday, which is the greatest number of bankruptcies seen on a Monday in a dozen years. And so the credit crunch has arrived. You start with like Envision, which is a $10 billion company, where the private equity sponsor put $3.5 billion equity into it, which is now toast. And, you know, creditors will come out, the senior creditors will come out okay owning the company. But there are a lot of these bankruptcies that have happened. And when we look forward, I've been projecting when default rates were less than 1%, that we'd have a cumulative default rate of 10% before this is over. I'm now revising it higher to 12%. So the credit crunch has arrived, and I'm calling it as of today that it's officially here based upon this Manic Monday.
Based on the fact that we've seen the turmoil in regional banks?
Well, regional banks, you know, are adding to that. So it starts with the Fed 500 base point tightening and the cost of funding being inverted. So anyone that borrowed a floating rate, which is a lot of corporate borrowers, when rates were zero and they were attracted to that cheap cost of money, loaded up on debt, and there's just too much debt. There's a lot of restructurings that's going to come as a result. And the back end of this also is a great time to be a lender. But the credit crunch is here. You look at the banks.
Vanskelig å si, Marius. Alt tyder på at vi skal ned, men Nasdaq er grisesterk.
Maybe the strongest of the super regionals, but I'm talking about the cohort, the KBW, that
Jeg la til favoritter nå.
Trades below 80, and that's really the tell. Watch the equity, watch deposits, but don't forget to watch the credit. When the credit trades at 50, 60 cents on a dollar or lower, it means the banks themselves are having trouble getting financing. So how can they lend when people aren't actually lending to them?
So whose opportunity is that?
So that's an opportunity, I think, for the lending community to step in.
Direct lending.
Because the banks are not going to be in position. Exactly, because the banks are not going to be able to be in position to lend. Think about commercial real estate, for instance. There's $1 trillion of commercial real estate debt coming due in the next 2 years. Banks are 50% of that lending market. Well, the private credit lending market is only $100 billion of real estate debt. So there's a big gap between where banks can lend and where the private debt community has enough debt to lend and what the capital need is needed by the real estate operators. And so this is all coming to roost as debt maturities come up and as delinquencies start to rise, and we're starting to see that.
So I'm going to guess the loan officer survey did not fully reflect what's happening last week or the week before. And the Fed, this allows them to declare victory for now?
Well, I think, you know, the Fed has raised rates 10 straight times since March 17th of last year. And I'm on the fence here, but I think they're probably done. Are they going to move come June 15th and 16th? Probably no, unless on June 3rd you get a big CPI print. If you do, then they go right back at the next one. But right now, based upon what we're hearing from the Fed governors, I think, and based upon the credit tightness that we're now seeing, I think it's not only prudent to pause, but probably what they're going to do.
It's interesting that you're so worried about the credit crunch. I mean, I think a lot of people are worried about it, but not seeing a ton of evidence that it's having a major...
Ja, da må handle med veldig små kontrakter, Jakob.
I think all the markets and the headlines are really focused on the S&P being up and the big 8 tech stocks doing so well. But underneath the surface is what the issue is. And underneath the surface, you have Apple today valued at $2.7 trillion. Well, do you know it's the first time in history the whole Russell 2000 is now that same number, $2.7 trillion? And the Russell 2000 is unchanged on the year. So number one, what is below the market in terms of the credit crunch is starting to happen now. the recession we're moving towards in the future is very, very different from how the top 8 stocks are performing. And so with the retail sales being strong and consumer being strong, and some of the leading companies also doing well, everyone thinks it's hunky-dory. Meanwhile, there's a lot of noise below the surface and actually problems. So we're really concerned with that.
So if these companies have a shorter runway than they thought, what happens to labor? Does the job market really crack here?
I don't think the job market cracks, but it's going to be one of those recessions where the job market will weaken going forward into next year, yes. But it's going to be one of those recessions where nominal GDP is growing at 2%, inflation is running at 4%, so real GDP says recession -2%. Maybe growth slows to 1% nominally, which I think is in the cards by the time this is over for a quarter. That means a -3% GDP print because of a 4% inflation rate. And so nominally it's going to feel okay, and it's going to feel okay in the jobs market to a degree, but we're going to have a recession. That's our base case. I think the train's already left the station for that, and it's inevitable it happens, and I'm calling for Q1 of next year when that recession starts.
So I guess my follow-up is how you're positioning. You said you're already doing a ton of lending to fill in the gaps, but you always like to buy things that everybody else hates. So are there opportunities, for instance, in the regional bank debt?
So we bought some of the regional banks on the dips, but you got to be very...
The stocks or the bonds?
The stocks,
yeah.
and the bonds. But you have to be very, very careful, I think, with the regional banks, because I think it gets cheaper as the year goes on. So have we seen a low in KBW? No, we haven't. Are we going to see a low sometime in the fourth quarter? I believe we will. And that might also be the case of REITs. So if you're a contrarian buyer, wait for it. It's coming, and it'll be a good time to buy, but later, and there's going to be a lot of pain between now and then.
Why? What happens between now and then to trigger that? Just more fallout on the economy?
Fall on the economy, but talk about like the loan losses in the banks. That's not really happened yet. You've seen deposit outflow to the tune of $1 trillion, but you haven't really seen the insolvency that comes as a result of losses in the bank balance sheet. Number one. Number two, as it relates to the REITs, we're talking about the REITs. You've seen a commercial real estate devaluation because the simple truth is when you were in COVID and rates were 0, everything was in the moon, 17 trillion treasuries were trading negative. Remember that, Carl?
Oh, yeah.
Yep. And during that period of time, real estate got bid to the moon, as did some growth technology stocks. And now all that air is leaving the bubble, and real estate's devalued by about 25% across the board since the peak in 2020 to 2022. And so there's just too much debt, because remember, commercial real estate's a highly levered asset.
Jævla spesielt marked, ass.
A lot of leverage
Jeg tør ikke
on
unna
those
det.
properties.
Isn't really quick? Isn't the scary part that the back end of the cycle will be different because there won't be a return to office?
No,
Og jeg skjønner ikke hvorfor det kommer opp, så gikk jeg trene.
Just like the aircraft, TSA numbers swung from 2.5 million positive to a measly 250,000. It took them forever to get back to a million.
Jeg skjønner ikke hvorfor det går opp, og da gidder ikke jeg trene.
People are going to come back to office. No one can see it. It's 2 years out. Is San Francisco like a real problem? That's a generational problem? Absolutely in their office market, 40% vacancies. But the major other office properties will come back if it's a Class A. So what are we buying? One thing that's really intriguing that's out of favor right now, but you have to really have a keen eye into this. And we have every deal reverse engineered. We know every loan and every single securitization is some of the CMBS pivot bonds. The pivot bonds that are above the fulcrum, the bonds that aren't going to take the losses, they're going to start getting crushed, and some of them already have gotten crushed. We're selective buyers in the CMBS market.
I was expecting something sexier than CMBS pivot bonds. Bruce, and what's the credit market going to look like as we get closer to the X date on debt ceiling?
Well, I think away from credit, look at the Treasury market, Treasury bills.
It's the only place we've really seen any panic.
Rally, Treasury bills trade off. That X date, let's talk about that. Is it June 1, like Janet Yellen is saying? No, it's probably closer to June 15th because she's got a little wiggle room there, and she'll wiggle to get that room. And June 15th is quarterly tax date, and so they'll get some proceeds in then. They'll probably take them closer to July 1, July 4th. But it will be an issue because the House is divided. And this is a very big sticking point that doesn't get resolved easily. and will take us much closer to the next date, which means you're going to have some short-term treasuries come due in late June. They're going to be under a lot of pressure, may trade up to 6% yield as 10-year notes rally.
And then you buy?
Well, then you buy anything cheap there because they're not going to default on their debt.
Gjør det
We're going
nå,
to buy the Treasury 10-year notes then? No, because they'll trade off because the scare will be over. Because at the end of the day,
Jeg tenker noen ting.
Thank you. Bruce, we got
Thank
a lot
you.
done there. Bruce Richards from Marathon.
Meantime, ChatGPT creator Sam Altman testifying on the Hill this morning. Is more regulation coming for AI companies? We're going to discuss it after this.
Hyggelig det som skjer.
Constant Contact's advanced automation lets you send the right message at the right time, every time. Constant Contact, helping the small stand tall.
You're looking pleased with yourself.
Well, not to brag, but I just switched my whole family to Verizon.
Well, it is America's most reliable 5G network.
And it's only $35 a line.
I got that deal too.
Oh, hey, bragging buddies.
My man.
This I don't need.
You should give me a call.
Visit your Verizon store and save big during our spring savings event. Get the Disney bundle with Disney Plus, Hulu, and ESPN Plus included. All for just $35 a line. The savings you want on the network worth bragging about. Verizon.
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today.
Altså, jeg skjønner ikke noe av det her. Så da gidder ikke jeg trade det. Jeg forstår ingenting av den bevegelsen jeg har nå. Jeg forstår den virkelig ikke. Jeg skjønner ikke hvorfor vi skal gå opp hver eneste dag på Nasdaq på dritt. Jeg skjønner ikke. Da gidder ikke jeg trade. Da ligger jeg heller rolig og følger med. Jeg skjønner ikke noe av bevegelsen her. Rett opp, og det er det samme som skjer hver eneste dag. Aner ikke hvorfor det skjer. Da gidder ikke jeg trede. Da ligger jeg rolig. Jeg driter om det går opp eller går ned, jeg må vite hvorfor. Nå her bare går det oppover. Det er ingen som har noen formening om noen ting. Det er litt spesielt at det ikke går ned i det hele tatt, mens S&P går ned, Dow Jones går ned, Nasdaq går opp. Det er litt merkelig. Det er jævla merkelig faktisk. Favoritter, bokmerker. Trykket på feil måte på pakken. Hvor faen er den radioen da? Der.
Regulation by the government, and public education. He made a comparison to Photoshop, saying that when it came on the scene, people were fooled, but over time they figured out what was fake and what was real. He says that generative AI will be like that, but on steroids. There's also been a lot of discussion on AI's impact on jobs. Senator Blumenthal, he called the elimination of jobs by AI his, quote, biggest nightmare, while Altman said that he's more optimistic. He thinks that there will be far greater jobs on the other side of this, and he said that ChatGPT 4 is a tool, it's not a creature, good at doing tasks, not jobs, guys.
Is there anything, Deirdre, any contours of what legislation would look like that are coming out of this from either side?
Great question. You know, not really, and I guess this is sort of the challenge. There seems to be an understanding that the ramifications can be very, very serious, and they kind of know where the guardrails need to be, and that companies need to be clear, platforms need to be clear in what is being run by this generative AI or chat GPT and what isn't, but it's hard to see how actual legislation comes out of this, and maybe this is early. I mean, it is a difference from what we've seen over the last 10 years, which has been very reactive to the unintended consequences of big tech and social media. This is at the early stages, so it's going to be hard to figure out what that is, but right now what they're talking about are really general, like what is generative AI? How could that affect jobs? Is it in relation to other platform shifts that we've seen? So
har ikke tredje dag, jeg har vært ute og hentet møbler og alt mulig.
Talk about this. We rarely see action, but they're early, so perhaps this time will be different.
Yeah, it makes social media content moderation look simple by comparison, right?
The early point, though, that's a good one. They weren't this early on the social media thing. Deirdre, thank you. Deirdre Bosa. Wall Street is buzzing about return to work to the office, with BlackRock updating its policy. That story right after the break.
Men jeg hadde ikke gjort det noe bra i USA, for jeg skjønner ikke hvorfor det kommer opp. Jeg forstår ikke hvorfor Nasdaq går opp.
Nothing feels better than having support, and the same goes for your footwear. So you've got to try Skechers Arch Fit. Skechers teamed up with podiatrists and designed footwear with podiatrist-certified arch support. Plus, they're machine washable. Get the arch support you're looking for with Skechers Arch Fit.
Vet du hva? Nei, jeg tror jeg er alene i morgen. Vi har ikke snakket med en som har siden fredag. Jeg vet ikke hva planen hennes er.
Well, first, Brian, you don't have to do them all. You could just replace your worst windows first. Or another way to make them affordable is to change the style of window. For example, you could do a gliding window instead of a casement. We have a lot of ways to make window projects really affordable.
Compared to other window companies, you have a completely different business model.
Yeah, with other companies, there's just too many people.
Jeg er ikke singel, jeg gidder ikke masse. Jeg vet ikke hva han har lyst til.
And if you call with a problem, that's when they say, oh, well, we're the manufacturer. You have to call the installer for that problem, or vice versa. We're the full-service replacement window division of Andersen. With us, there's no passing the buck. At Renewal by Andersen, we sell, build, install, and warrant our windows and patio doors. So if there's ever an issue, we take full responsibility for it.
Why don't you sell vinyl windows?
Well, a lot of vinyl products just don't hold up well in the elements. You know, like a vinyl fence. When it's first installed, it looks great, but with expansion and contraction, it discolors and cracks. For that same reason, a lot of vinyl windows just won't last. Our window material is a composite that combines the best of vinyl and wood. Well, Fibrex is low maintenance like vinyl, but stronger than vinyl. And it's beautiful.
Det her er jo helt spinnvilt at det ikke går ned. Jeg vurderer å gå long her, for jeg skjønner ikke noe av det her.
That's 40% off with a minimum
Hvorfor går det opp?
Plus, save an extra $150 on your entire project with no money down, no monthly payments, and no interest for 1 year. This offer ends May 31st. For a free appointment by Andersen, call 1-800-918-0808.
The first time you connected your GoDaddy website and your store was also the first time you
Jeg har ikke gjort noen ting, Horny.
Cheesecake cookies?
Nei, men aksjeplukker, jeg vet ikke hvor den er en gang.
Start today at GoDaddy.com.
Elon Musk with David Paper, a CNBC.
Jeg er verdens dårligste kjæreste nå. Jeg bare jobber. Jeg er jo en drittsekk.
On what's ahead for Twitter, SpaceX and AI. Live 6 p.m. Eastern today, CNBC.
People are going to come back to office. No one can see it. It's 2 years out.
People going to come back to office? That was Marathon's Bruce Richards with us just a moment ago.
Men jeg har liksom en visjon nå på hva som skal skje med tingene jeg driver med. Og da kommer alt som heter familie, og alt kommer på andre plass, og det er litt sånn stygt, men det er den eneste måten jeg kan fungere på. For jeg har vært så langt nede nå i 8 år etter jeg tappte alle pengene mine, og nå begynner jeg endelig også å kunne liksom se litt lyset da. Og det er ikke så vanskelig for folk å forstå det. I hvert fall ikke være sammen med meg, liksom. Ikke feirer jeg bursdager, ikke feirer jeg jul, jeg gjør jo ingenting. Eller jeg feirer jul, jeg er liksom... Og så har jeg verdens fineste, deiligste, peneste jente, liksom, og alle står og sikler etter deg, men jeg liksom har min visjon. Jeg vet hva jeg er god for, jeg har gjort det før. Og jeg skal gjøre det igjen, og da er jeg veldig sånn... Nei, jeg tror jeg er et dårlig kjærestemateriale, ass. Jeg er trofast, jeg er veldig snill, jeg er grei og sånn, men jeg har en visjon, og den visjonen er vanskelig for vanlige mennesker å skjønne. Når jeg sier til folk at jeg skal tjene millioner om måneden, folk tror jeg er et spinn gæren, ikke sant? Jeg har gjort det før, i mange fuckings år. Så tenker jeg ikke jeg skal gjøre igjen. Jeg skal gjøre mer den gangen, og da må jeg bare jobbe steinhardt, feile, gjøre alt på nytt. Husk på, jeg har vært ute av markedet mange år, ikke sant? Så tror jeg ikke det er så bra sånn kjærestemateriale, ass.
And the alleged smartest money in the market thinks that there's a long runway to go.
I told you in February, I wrote a blog post about it, we did a segment on it. I told you we are going to have a bubble in AI. And I told you that bubble would include not
Jeg vil liksom heller sitte og se på grafer og lage strategi enn å stikke ut på byen. Jeg er der da.
And that is exactly what's playing out. I told you they would rip Nvidia. I told you they would rip
Må du ta noe vasken.
and anything even close to being related to AI.
Advarer alle om å bli som meg. Det er helt sikkert og visst. Hvis dere vil fucke opp livet deres, hermed til meg.
Is absolutely real. It doesn't mean all of the prices being paid for these stocks will look smart in hindsight, but there are people that just cannot not be there. They get questions about it every day, every charity and foundation they manage money for. So what are you guys doing about AI? Every private client, every family office, AI. They have to do something, and they don't want to scrape the bottom of the barrel.
Why are you so convinced that it's a bubble?
It's because it's going to get so much bigger. It will not stop until Jensen Huang is on the cover of Time magazine, the same way that John Chambers from Cisco was at the top of the dot-com bubble.
Okay, so I wanted to stop you there because
Nothing could stop me.
No, in looking at all of this, we were thinking along the same lines as you. In taking a look back at the, let's say, the height of the dot-com bubble, the peak. Steph, we made a wall, and I want to show you where forward PEs were then versus where they are now for what we would call hot tech, right? The Qualcomms, the Yahoos, the Ciscos. Look at those forward PEs in very early, we're talking January of 2000. 192 times forward for Qualcomm, 739 times for Yahoo, 134 times forward for Cisco. Pull out a little bit and you will see where the AI, quote-unquote, stocks are today. Alphabet's 22 times. Microsoft is 31. Okay, Nvidia's 63. Amazon's 76, and Meta's almost 20. I'm not suggesting by saying this or showing any of our viewers this that today's evaluations for these stocks are justified. But what I am saying is that there's a big difference to where we were then and where we were now as we are thinking of the hottest trends and we're talking of them in the same way and making comparisons from today to the early 2000s.
Well, I think you have to step back and look at what I always call the total addressable market, and you're at $183 billion in AI today, and it's expected to grow to $2 trillion by 2030. It's going to grow 37.3% per year between now and 2030. It's going to contribute 21% to GDP in that time frame, and only 25% of the companies out there are actually using AI. So my point being is they can grow into even these multiples really cheap, other than maybe Meta 18 times. But they can grow into these multiples, and because the growth is so massive.
What if they're okay, I hear you. They're not cheap relative to where the S&P is.
Right.
But what if they are cheap relative to what their real growth prospects are as it relates to AI?
Yeah. Well, that's why I
Maybe that's the way you have to look at these now, not relative to.
Så jeg har ikke giddet å ringe til da. Gidder liksom ikke mase, liksom. Og så vet jeg ikke hva jeg skal gjøre for noe. Jeg vet faen aldri hva man skal gjøre for på sånn helligdag, liksom. Jeg bare jobber hele livet. Jeg har aldri faen meg gjort en dritt. Jeg er litt rar da, det er veldig klar over.
I mean, that's very telling. I mean, there's a lot that they can do to grow and then expand the total addressable market. So you definitely want to have exposure. You just have to be comfortable with which name you're going to play, which horse you're going to ride, right? So for me, Meta, I'm comfortable because 18 times is very cheap. I'm tempted with Alphabet. I'm tempted with Microsoft even because that stock trades at 28 times, but yet historically it's trading at 35 times. So it's still
Jeg husker hun der, jeg var sammen med en annen dame en gang også, som var sånn samme type jente, da, som så sånn ut, liksom. Og jeg vet jeg har alltid blitt anklaget for å være så kald. Jeg har ikke noe med kald å gjøre, jeg har noe med at ha fokus på ting, da. Mitt mareritt er å ende opp som en sånn der A-4-person. Det er mitt mareritt. Det er marerittet mitt, da. Det er mitt mareritt. Det er sånn, det sitter så langt inne med at, ja, fy faen, ass. Jeg har aldri klart. Da var hele jobbet til at jeg dauer, liksom. Og har forsøkt. Og har forsøkt. Og hele dauer på veien. Sånn er det bare.
You're in the middle stages of it. But if you look at Microsoft and whatever that forward price to earnings multiple was, 29, 30, whatever it is.
It was 31.
Okay, 31, fine. I'm looking at FactSet right now, and it's got the long-term earnings growth rate of 12.5%. So to a guy like me who focuses on valuation, I do...
Romeo skal heldigvis dra til mora si, da. Så han kommer til å ha det kult i morgen.
I mean, that's just what the math is. Now, 2.5 on a PEG ratio, it ain't cheap. It's not bubble. It isn't bubble. Now, it's not cheap, and it doesn't make me want to go in there and buy the stock hand over fist. Google's a little more attractive.
Jeg vurderer å gå long, altså. Jeg synes dette her er så sterkt.
And that's where you actually should be excited about it. So where I come out on this, Scott, is yeah, it's going to be a bubble, as Josh was saying, early stages, early to mid stages.
Egentlig blir vi legge unna Nasdaq sånn totalt sett, for den følger ikke noe som heter nyheter. Burde egentlig bare handle på S&P eller Dow Jones frem til Nasdaq stabiliserer seg. Det er så store tech-selskaper som kommer tall, så du får så mye rare drag. Det er det som skjer nå. Merkelig bevegelse, altså. Jeg har tjent 3 lange. Jævlig bra. Konge. Jeg har ikke gjort noen ting. Jeg tjente litt på åpningen i dag, og så tok jeg et tap, og så treda det inn igjen, og så har jeg ikke gjort en dritt. I dag er jeg 0. Men jeg har veldig lyst til å gå long her, for jeg kan ikke... Det er den liksom... Den har motstand her, men liksom den er grisesterk. Nasdaq er så sterk.
But the situation with NVIDIA that you had to believe in was that they have
Merkelig
such
greier.
a substantial lead in the types of GPUs that allow you to carry out
Og de snakker 1815, ja. Ok.
That ultimately, when this AI wave crashed upon us, this would be the stock that everyone had to own. And that's exactly how it's played out. Took a while, but now we're here. And you could cite AMD to me, and I will tell you, AMD's 250 chip that they're now trying to sell for some AI applications is not even in the same ballpark. Intel is repositioning some of their CPU products and trying to tell people their AI chip. Forget it. It's literally the only game in town. The only real competition is going to be at the hyperscalers themselves. Google is an example. The Tensor chips, which operate in Google's own TensorFlow environment. Yes, that's also happening on a parallel track. But there's a reason why NVIDIA is becoming as over-owned and as overhyped as it is. As a long-term shareholder, I don't want to get rid of...
Jeg driver trader live, skjønner du, så jeg kan bare slå av mikken, så går det fint, da.
Monsters just because all of a sudden they had a top 10 hit song in the 1990s. I was willing to like kind of, okay, other people discovered them. I still think it's cool. Maybe I'll pull back, let them surge forward. This is what it means to be a long-term investor in a stock that gets discovered by the masses. It's probably a harder time right now than when nobody wants NVIDIA, which was the case 18 months ago. Now everyone wants it. It's hard to know. Do you trim a little? Do you use options to reduce, some of your potential risk? I'm in the process of making that decision right now.
I got 2 questions then.
Is it time for both of you at the end of our table to, value investing bottoms-up traditionalists to say, like Steph was kind of alluding to, I need to maybe expand my horizons and also throw out some of the rules I've lived by because I don't have enough exposure into what is this trend. I've only got a couple stocks for Jim. I've only got Meta for Steph.
Broadcom, too.
Sure, and by the way, my second question is, if you look at the way, like the positioning of a Tepper, for example, it's not just here, it's there. And by there, I mean China. It's Baidu, Baba, Tencent, ByteDance, private, but nonetheless, even a Taiwan Semi. All of these people are thinking about AI in not the most likely places that we talk about every day. The Alphabet, the Microsoft, NVIDIA, et cetera. Jim.
Well, it's a good question. I think about this every day, and I talk to clients about this every day. Should we be more invested in tech? And it's, when you look outside of tech, which is where a lot of my portfolio is, I actually, for the next couple of years, I see higher growth rates and earnings. Now, that's for the next couple of years. What we're talking about with AI is going to be for 5 years plus. But it leaves me sort of in the middle as far as adding to Microsoft or Google or initiating a new position. I just mentioned NVIDIA. It's a little hard for me to get over that multiple, but that's me. Just where we are right now for the next couple of years, for reasons that I've expressed, Scott, to you many times, there are better earnings growth rates for the next 2 years in some of these hard asset sectors like industrials, like energy.
I think that's highly debatable at this moment. Like, do you think there are better earnings growth rates in industrial stocks than there are in these top quality, alleged top quality
for the next
AI
couple
names?
of years? For the next couple of years, yeah.
Some. I mean, look at what they produced this past quarter. Look what Caterpillar produced in this past quarter, up 34% in North America revenues, up 17% overall. Look at Nucor, 42% profitable growth in the quarter, right? Look at Cummins and look at Packard. They actually raised guidance, mid-teens to 20%. What am I getting out of Meta? And I own a lot of Meta. I just got 6% growth last quarter. I might get 10% growth in the second half of the year. And I think I probably will get about 12 to 15% next year. But I think the valuation is attractive, so I'll stick with it. But I think there are other places. There are alternatives. And wait a second. And there are other places within technology, too. It's not just AI, right? And that's why I own Broadcom, because it's AI, and it's data center, and it's cloud. And I get all that exposure for 15 times forward estimates. I bought and added to Fortinet 2 weeks ago because I think cybersecurity is also a huge untapped market. And so I want to have exposure. So I'm just kind of playing around in a lot of different parts in technology. Certainly have increased my exposure throughout the year in technology, because last year I was underweight the whole year. So I am slowly, kind of increasing my exposure, but I want to be very selective. I think you can be valuation disciplined.
Three things are going to happen, and you could set your watch by it, because it'll be the fifth or sixth time this exact thing has played out over the last 25 years, really since the internet became an investor darling. The first thing is you're going to see a lot of existing, mostly failing companies that are already publicly traded change their entire strategy, and some will actually change their names and their ticker symbols to be AI-centric companies. We saw this with blockchain stuff in 2017. You will see it again, I promise you. There will be promoters. A lot of this will be pre-orchestrated.
Sure, but that's the bubblicious type activity which you're describing.
Let me finish the thought. 100%, you're right. Let me finish the thought, though. It's important. What you're going to see is the activist short sellers be all over those situations and take them apart relatively quickly. We saw them do it with a lot of the EV upstarts that didn't really have anything. So that's one compartment of this, and that'll be part of the bubble. It's small market cap stocks. Most people will steer clear. The second thing that will happen, the IPO machine is going to ramp up to levels that we have not seen in 25 years. It will be late 90s levels of frantic activity. Behind us at what is that, post 9 or whatever?
We're post 9.
We're going to get to a point. As long as interest rates don't go to 9% this year, we will see a market environment where there are 2-3 deals a day. Some at NASDAQ, some down here. We will be breathlessly reporting 100% pops on those IPOs. And that's what you see the big money right now getting positioned for. They can't buy those things yet. They're in the private market. They're on the runway. They're buying the proxies that will work during that type of activity. And then the last thing, and I think this is really important, a very, very big, important company will make a very stupid acquisition, and that will seal like the end of this AI bubble that I know is coming.
Are you referring to AOL and Time Warner?
I could give you like 10 examples. Scott's going to lose his mind. So let me just wrap up. This is coming. You know it's coming. If you've been around, you've seen it, you've played in it, you've made money, you've lost money. You know it's coming.
I just think
that's what the big guys are getting ready
for.
Sure.
I think we try and bring perspective, at least somewhat, to it by showing you the wall in which we did with the comparisons between the then and now.
That's right.
Which the then got obviously absurd. You look at the PEs, and we'll show them to you again, and where they got to for three of the poster stocks of the dot-com boom and bust, and then versus today. Which some of these stocks today were caught up in that back then too, with elevated valuations, and they all came back down hard.
Great point.
Let me also point out too, since we mentioned Tepper's name, I just want to make sure everybody's clear, since we're talking about this, that in the 13F it was like, well, there was a position in ARKK, and Tesla. He's not in those stocks anymore. Those were trades. There were opportunities to be made, and maybe they were made, but they're not still in the making.
Scott, you made a good point about China, right? And how some investors are actually investing in Chinese companies. I think that's hard. I really do. I would rather own U.S. companies that have exposure in China, because at least I get better transparency. I could do all the fundamental analysis that I want on Chinese companies. You wake up one day and all of a sudden your CEO is gone, right? What happened with Baba and Jack Ma. So to me, the way to play the China recovery or the China growth or whatever you want to call it, I think you want to own U.S. companies that have exposure there.
But what if that was just a moment in time thing? Like, are we saying, are you suggesting that now, China is uninvestable for the
I feel like I've always
foreseeable future? I mean, why not the Baidus, the Babas, the Tencents?
Or the
I'm not going to
ETF.
say ByteDance because it's private. Taiwan Semi. You guys, people on the show have invested before in Taiwan Semi.
I just don't like the lack of transparency.
Now, obviously, it's different. Taiwan Semi related to mainland China and some of the issues there, clearly. But nonetheless, there are other AI plays that these smart investors are talking about that don't get enough focus here.
Probably.
We tend to focus on 3 or 4, if not 4+1 stocks here.
What's really funny is we're saying like China as an asset class has this existential problem that makes these stocks uninvestable, but they're definitely tradable. And the other thing is we're citing all these tech giants. Have you looked at the governance of these companies? They don't even have staggered boards. They literally have A shares, B shares. So we're talking about a lack of transparency. We're actually investing in shadow equity with some of these companies where I don't care how much stock you own, you have absolutely no say over anything that you do.
You used to have the K-Web. You used to have it.
I'm making that point. You could trade it. I think you could. I think anything is tradable within reason. I understand the point of like I don't want to directly own. An SIE that's a Chinese company, but the Caymans are involved, and I don't really have the equity. I have like a piece of paper that's a claim to the. I don't argue with anybody with that. I totally get it.
All right, let's. We have a market flash actually right now. Let's get to Frank Holland. Frank.
Hey there, Scott. Looking at shares of SAP right now, up 1.25%, outperforming the Nasdaq after the company released updated guidance for fiscal year 2025. That guidance shows overall revenues they're forecasting at $37.5 billion. The prior guidance was $36 billion. A change in its cloud revenue as well. That cloud revenue guidance now $21.5 billion. It was previously $22 billion. Part of that is due to its divestiture of Qualtrics. Operating profit, the new forecast, $11.5 billion. That's actually the same as the previous forecast of $11.5 billion. Also showing free cash flow at $7.5 billion. Previous guidance was $8 billion, but as you can see, the stock is still outperforming the Nasdaq. This week, the company's made several announcements related to AI as part of the conversation you're having, partnering with Microsoft, Google, and IBM on its AI ambitions. And the SAP CEO, he's going to be on overtime later tonight. I'll be interviewing him along with Morgan Brennan. It should be an interesting conversation, not only about their guidance, but also about their AI ambition and their partnerships with Microsoft, Google, and IBM. Again, shares of SAP now almost 1.5% higher after releasing updated guidance for fiscal year 2025 at their annual Sapphire conference. Back over to you.
Frank, thank you. That's Frank Holland with the update for us there. Let's use that as an opportunity to pivot to a move of yours before we take our break.
Sure.
Not related to AI in any way.
Like the opposite.
Not related to tech
like the
in
opposite.
any way.
Yeah.
Johnson & Johnson.
Yeah. I've been talking about it for a while. They'd finally spun out the consumer business, right? So they're a simpler company, and we can focus on pharmaceuticals, which is going to be about 80% of the overall company. With a huge pipeline, and they have a goal to grow total revenues of $57 billion by 2025. They also have a med tech business, and they're starting to see volumes increase in procedures. And so I just think that it's underappreciated. It's down 10% on the year. It trades at 14.5 times forward estimates. I get a little bit of a dividend yield. We still have the talc resolution ahead of us, so it's a small position, Scott. If they don't have a favorable ruling on that and the stock is weak, that will be my opportunity to buy more. But this is one I think for the long term, they're set up pretty well.
Do you own Kenvue?
I do not.
The spin?
I do not.
Why?
I think they have to heavily invest. They've underinvested for years being in the conglomerate, right? And so now they're going to have to. And that's fine, but it's going to take a long time for them to see margin improvement as a result.
Okay. All right. Coming up, we're going to do our chart of the day. It is one of the stories of the day. Home Depot lower, the company posting its worst revenue miss in 20 years. Jim owns it. We debate it next.
Hi, I'm Katie. I live in Flagstaff, Arizona. I'm an older student. I'm getting my doctorate in clinical psychology. I do a lot of hiking and kayaking. I needed something to help me gain clarity. So I was in the pharmacy and I saw a display of Prevagen and I asked the pharmacist about it. I started taking Prevagen and I noticed that I had more cognitive clarity. Memory is better. It's been about 2 years now and it's working for me.
Prevagen at stores everywhere without a prescription.
You know that tech stock we talked about? I picked up 500 shares.
You getting at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today, CNBC.
Someone made a courageous decision.
I always love it when somebody tells me I can't do something.
Make a decision. We'll take that deal.
I'll take your deal. In a second.
We'd love to take your deal.
Shark Tank, tonight starting 8 Eastern, CNBC.
Are you a small business owner who could use a few $100,000? Employee retention tax credits are an incredible opportunity for you. If you kept W-2 employees during COVID, you may be eligible. Turn to the team you can trust. Get My Funds. They've helped thousands of small business owners receive $300 million in pandemic funding. Their expert team of CPAs files your ERC accurately and will give you an audit safeguard. They only get paid if you get paid. Call Get My Funds today.
Sure, you should teach him to ride a bike. Then use Greenlight and teach him how to invest in bikes. Teach him to be smart about money and he'll go far.
Super far! Oh, hey, Mom!
Navigate the world of money together. Invest in your best investment. Greenlight.
Create an amazing website with Fiverr. You'll need your web developer, UX writer, and Amy, a Fiverr freelance graphic designer with dozens of 5-star reviews who will join your team from her favorite coffee shop. Don't forget to tip. Expand your team with a Fiverr freelancer.
All right, Home Depot. It's our chart of the day. As I said, it's one of the stories of the day. Under pressure after reporting its worst revenue miss in about 2 decades. Stock's down 1 1/3%. It's off the lows. Jim, you own it. What's your takeaway here?
Let me do a thought experiment with you and our viewers. Okay. If I told you a year ago that mortgage rates were going to triple, and that Home Depot was going to be down 1% total return over the 12-month period, would you have believed me ahead of time? You would have said, no, this stock's going to be down 25% or more. The price action today.
I would have said maybe, well, people aren't going to be able to buy homes because of mortgage rates going up. They'll spend more to just fix up their places, so maybe it's going to do better than you would otherwise think.
I said it's a thought experiment, and this is a good repartee here. If I told you that credit card rates were going to go, from whatever to whatever, if I told you that the 10-year was going to go from basically below 1% to almost 4%, 3.5% right now, I think we would have come to a conclusion that Home Depot is not the place to be. And yet it's hung in there And I think today's price action is telling you something, and it's emblematic of the economy and the market overall, which is that the Fed has done its worst, and it's done a lot. And yet the markets, Home Depot overall, is hanging in there.
Is it hanging in there? It's down 10% year to date.
Okay. I mean, as I just said, a year of nothing but interest rate hikes, right? 500 basis points.
Yeah, so what? Let's look forward.
Exactly.
What happens now?
Exactly. Thank you very much. You're looking for, and I'm expecting interest rate stability, whether it's the Fed funds rate, the 10-year, or mortgage rates. That's what most of us are expecting now, if the Fed is done. I do believe the Fed is done. And yet at the same time, you've got employment strong, and you've got a strong need for housing. You put all this together, and this is probably why the stock is only down 1.4% right now, even after a pretty lousy quarter and not so good guidance. The market for Home Depot, as I think the market overall is starting to look past whatever the second half of this year is going to bring and saying 2024 is going to be an economically growing year.
It's the biggest year-over-year drop for quarterly Home Depot sales since 2009. And I don't know if that was the bottom for Home Depot stock, but this is a new environment for most shareholders in Home Depot. They have not really been up against anything like this in, I don't know, what is that, 15 years ago? So it's just like interesting to consider. This is something new. Is management up to it?
No, the management's totally up to it. 26% of their revenues are in California. And we know what happened weather-wise there, right? Lumber deflation. We know that was a problem too. Lowe's is going to see that, by the way, as well. It's not going to be isolated to Home Depot.
Sure, I agree.
The NAHB, the housing data today came in much better than expected, and last month was much better than expected. I think you're seeing a trough in housing, and I think for Home Depot, I think we went from being worried about 2023 earnings and the collapse to now maybe we're at the trough. And maybe they can do $14.5, $15.5 this year, and that doesn't make it that expensive at 18 times.
What if the consumer is becoming more sensitive to bigger ticket purchases, as they would elude you to believe? We also observed more broad-based pressures across the business compared to when we reported fourth quarter results a few months ago. Transactions down near 5%. Average ticket was basically flat. But, it's not just weather. And it's not just lumber deflation.
No, I mean, the economy is slowing down, right? But I don't think the consumer is getting killed by any means. I really don't. I think they're hanging in there.
I didn't say getting killed.
I said, pretty resilient.
I said, either putting off or rethinking larger priced purchases.
Maybe that's possible. But in the meantime, the company has all kinds of productivity measures, cost-cutting measures, and expanding their smaller concept stores too. So there's a lot they're doing in the face of maybe some slowdown from the consumer. But I just don't think the consumer is dying. It's been very resilient.
Here's how I see it.
Because of jobs and it's because of wages.
Home Depot is a great company, and I wouldn't be, I'm not currently long the stock, but if I were, I wouldn't be freaking out. They're talking about an earnings decline this year for -7% to -13%. That's livable. The problem is you're not getting a discount for the stock given that's the backdrop. Home Depot is trading 12 times enterprise value to EBITDA, 29 times enterprise value to free cash flow, 2 times enterprise value to sales. All of those metrics are well within the 5 to 10 year median. So it's not like you're getting a discount for the degree to which Home Depot is facing challenges this year. So I want it lower if I'm an investor. I don't want to buy it here in no man's land, in a downtrend, below the 50-day, below the 200-day. Maybe I'll buy it when they disappoint next quarter.
18 times forward versus 26 times forward for its historical average. So you are getting it at a discount.
All right, let's do this. Let's take a quick break. Coming up, we're following the big money's new bets on the banks as well. We'll do it right after this.
How do we show strength and stability? A mountain? A tree weathering a storm? Lions? Nope. We do it with our people.
I love your place.
Thanks. Could you grab some carrots?
Sure. What's this?
That's for Pepper.
You keep dog food in your fridge?
It's not dog food, it's fresh pet. Real meat, real veggies.
That you feed your dog. So it's dog food.
You were so right about her.
Fresh Pet. It's not dog food, it's food food.
What if you could make analyzing a big bank's data no big deal?
Go on.
Well, what if you partner with IBM and Red Hat, use a hybrid cloud solution to connect data across multiple systems globally, then analyze all that data with Watson?
Okay, but this needs to meet our...
Security standards? Yep.
Compliance standards?
Mm-hmm.
So they get the insights they need.
Yep.
In real time.
Check.
To make quick decisions.
Check.
And check.
That's the hybrid cloud solution IBM and a global bank created. What will you create? IBM. Let's create.
Asking the right question can greatly impact your future.
Are you qualified to do this?
What? Especially when it comes to your finances.
Are you a certified financial planner?
I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP.
Dolly Varden Silver is advancing their high-grade undeveloped asset in BC's prolific Golden Triangle. The property includes 2 past-producing mines and over 135 million ounces of silver equivalent. Dolly Varden.
Interactive Brokers pays up to 4.58% on instantly available cash in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.58% on uninvested, instantly available cash in your brokerage account. The best informed investors choose Interactive Brokers.
Weeknights from Wall Street to K Street and Main Street. Get the stories behind the numbers.
Last Call is really about spotting tomorrow's opportunities tonight.
Brian Sullivan hosts Last Call, weeknights 7 Eastern, CNBC.
Welcome back to Halftime Report. I'm Contessa Brewer. Here's our CNBC News update this hour. China's National Defense urged the United States to cut all military ties with Taiwan today. The U.S. plans to send $500 million worth of weapons to the region, and the defense spokesman says that could shake relations between the two countries and undermine stability in Taiwan. A former employee of Rudy Giuliani claims Giuliani discussed selling presidential pardons and detailed plans to overturn the 2020 elections. Those allegations against Donald Trump's personal attorney are laid out in a new 70-page lawsuit. And that lawsuit also accuses Giuliani of wage theft and sexual assault. Giuliani has denied the allegations. Stellantis has recalled nearly 220,000 Jeep Cherokees today because the SUVs could catch fire even when engines are off. The company warns the SUVs should be parked outdoors and away from other vehicles until it can figure out a fix. The recall affects the power lift gates on certain Cherokees from the 2014 through 2016 model years. We'll keep our eye on that one, Scott.
All right, Contessa, appreciate that. Contessa Brewer, a number of high-profile investors making some big moves in the banking sector during the first quarter, including David Einhorn, Michael Burry, and even Warren Buffett's Berkshire Hathaway. Let's go through some of these. Now, again, we always preface these things with, you don't know what's a trade, what's long-term, et cetera. But Einhorn, according to the most recent filing, had a new stake in First Citizens Bank shares in New York Community Bank Corp. Burry, New York Community Bank Corp as well, Capital One, which is the same as Berkshire, Western Alliance, PacWest, Huntington Bank shares in First Republic, and then Buffett also exited BNY Mellon and USA Bank Corp. Steph, what do we think here? What do we think about some of these moves in a space that is being questioned right now?
I think it's gutsy. I don't want to own a regional bank or a community bank at all. I think they're losing market share, and I think you're going to still see more closures, right? We've had 513 closures in banks since 2009. We're going to have more, right?
Even super regionals you don't want to own?
No, I really don't, because I can get some of the big names that I own, like Wells Fargo at 0.9 times book. Bank of America is actually cheaper than Wells Fargo on a book basis right now, and it's down 17%. I like that one. I was adding to that one in March. I think Schwab is certainly interesting, down 40% on the year. Expectations are really, really low, and they're growing organic growth 6%, and NA 7%. So I have opportunities in the big banks, I think, and I don't have to go digging and diving for some of the more speculative names. That doesn't mean that you won't see a huge bounces in these things, but I just think for me to sleep at at night, these are the ones I want to actually own and buy on the weakness. And Capital One, I mean, that's really gutsy. I mean, I know it's cheap at 7 times forward, but I mean, you know, their clientele is a little bit different than Buffett owning American Express. I would much rather own that one.
Farmer Jim, you own the KRE. Why?
It's a trading position. I put it on too early. It augments my long-term investments, as you know, Scott, and as viewers know, in Goldman and Citigroup and JP Morgan.
When did you put it on?
In the week after Silicon Valley Bank. So it was too early, and it's down 17% from where I bought it. But look, I'm not alone in thinking that there is value here. And really what this is, it's a tug of war between those who think that the banking system, Steph, as you just said, has more shoes to drop, that there are more players that are going to be taken out, or have the earnings expectations been lowered enough that when you look at the book value of a lot of these regional banks, you say to yourself, wait a second, if they don't get taken out feet first, then there's tremendous value here. Now, it's never an either or, but I think there's enough people who are thinking like me that the damage that's been done in this sector just simply got too great. Clearly, I was too early.
I want to ask you about the middle of the road case. Yeah. Because I don't think they're all going to zero. I also don't think the sector is a blanket buy. And the reason is the middle case, where these companies are fine, the interest rate volatility calms down, they get their portfolios and their house in order, right? But then, like, how do they ever grow earnings again? Because now we're in a situation where to attract deposits, they're going to have to offer higher rates than they arguably have ever had to offer, is one. And then two, competing against the whole world, whether it's a fintech app or it's JP Morgan Chase. So, like, what's the reason that regional banks ever do well again in a new world where there's this new polarity? It's these apps that have, like, no cost of capital, it's equity capital, and then there's the 5 or 6 gigantic banks and maybe the 5 biggest
I think
regionals.
you've made the point. Can I respond?
Yeah, like, what do you do if you're the other 3,000 banks?
Okay. I mean, it's an excellent point.
And
here,
But I have another question for you, too, but go ahead.
Okay. If that were the conversation of, geez, you know, how are we going to deal with lowered earnings? And, you know, that's not the conversation that's basically being had about the space right now. The conversation that's being had about the space is who's next to be taken out by the FDIC? And this is the discussion. I like having this discussion with you, right? Because that's a rational point that you just pointed out there. And what I'm saying is that damage is already in there. We're having existential discussions, not what the level of earnings are going to be.
Well, these could be 5 times. These stocks could be 5 times earnings, like forever. It really could turn out that way, and then maybe none of them are buys.
So you bought the KRE. You said you were too early. You said it's down 17% since you bought it. You made an impassioned case for the value that exists in this space, right? Right?
Yes.
Yeah. So why aren't you adding more? Why aren't you buying more? If you think there's so much upside, and they're 17% lower than where you bought it, why aren't you putting your money where your mouth is?
You know, I think I've got a little time, and listen, I'll be very honest. I'm down 17%. I'm feeling like my face is getting punched in. Let me have a little time here, because there is still this question, and Steph brought it up, you know, of is somebody else going to be taken out feet first? I clearly went in too early. I don't need to add to this heroic bet by jumping in more now. Let me just give it a little time.
It's that heroic? I mean...
Okay.
It is.
Okay. I mean, I was using a term of phrase.
No, but
I think you know what I mean.
No, you don't need to say yes. It is. You made your point that you think it is.
I think it is heroic. These stocks are now selling where they were selling in March of 2020. Are we saying these companies are in worse danger now?
But a lot of them are going to have to
when you look at a portfolio, there's only so much money that I can risk in this particular trade. And right now is not the time to add to it.
RSI
now, listen,
is
does
20.
that mean
that's the most oversold they've been since COVID?
Great, you're making me feel good. If it starts to go up and I buy more 10% higher from here, but I feel more confident about it, fine.
Right.
And it's not exactly that I'm lacking in confidence, but I'm well aware that there are risks here. So right now, I'm just hanging on.
We'll take another break. When we come back, we got a couple bullish calls to tell you about, including one healthcare name Steph owns, and we'll do that next.
At Morgan Stanley, old school hard work meets bold new thinking. At 87 years old, we still see the world with the wonder of new eyes, helping you discover untapped possibilities and relentlessly working with you to make them real. Old school grit, new world ideas. Morgan Stanley.
A vacation starts with how you get there. A private jet experience from One Flight's budget. You've got to see this. Plug in your itinerary, search from over 5,000 planes, pay, and you're on your way. Nothing better than a personalized meal on board.
It should be a beautiful day in the Bahamas, Mr. Hirschbach. We should be landing in about 20 minutes.
A great vacation always starts with your flight experience.
Call for a complimentary flight.
AG1 is so much more than a greens powder. In one single scoop, it delivers daily multivitamins, pre and probiotics, stress adaptogens, and yes, greens. Start your journey at athleticgreens.com.
Got the rings?
Hello? You guys don't look that bad.
Yeah, thank you.
Thanks, man.
Luxury that lets you feel infinitely you.
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today, CNBC.
We planned well for retirement, but I wish we had more cash.
You think those two have any idea
that they can sell their life insurance policy for cash, so they're basically sitting on a gold mine? I don't think they have a clue.
That's crazy.
Well, not everyone knows Coventry has helped thousands of people sell their policies for cash, even term policies.
I can't believe they're just sitting up there.
Sitting on all this cash.
If you own a life insurance policy of $100,000 or more, you can sell all or part of it to Coventry, even a term policy, for cash or a combination of cash and coverage with no future premiums.
Someone needs to tell them that they're sitting on a gold mine and you have no idea. Hey guys, you're sitting on a gold mine. Come on,
Do you hear that?
I don't hear anything anymore.
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-571-7900 or visit coventrydirect.com.
All right, welcome back. Let's get to our calls of the day now. GE Healthcare is number one. Initiated outperform Oppenheimer. Price target 97. That's a near 30% upside from here. It's up 38% since it started trading at the beginning of the year. Stephanie Link, this is you.
Yes, I like the story very much, and it's down 13% from its highs after they reported a pretty much inline quarter. I actually would look to be buying here down this much. I think that's way overdone. This company's been around for 125 years. They have a billion patients. They have a 4 million installed base. They have recurring revenue. That's 55% of total revenue. So I like everything that I'm hearing, and I think it's a buying opportunity on this weakness.
Trian disclosed stake of 1.3 million shares as of March 31st.
I like that.
So Q1. Again, grain of salt. I didn't talk to Nelson Peltz. I don't know if they're still there, but you're thinking about that, right?
I like that. Yeah.
Should they rebrand? Are they getting a benefit from being GE Health Services?
I actually think people in the industry know who they are. They've been around for 125 years, right? I mean, you don't get a billion patients overnight and that kind of thing. So
I think Josh's point is not necessarily people in the industry, it's investors.
Well, maybe over time they'll prove their worth in terms of their name.
It should be GE Health Services AI.
AI.
.ai. Do it. Do it. $10 immediately.
Another call, Citi reiterating Deere as a buy. It reports earnings on Friday. Jimmy, that's you.
Yeah, whenever we talk about this name on a quarterly basis and how the earnings are going to go, I don't lose my mind, but I do lose interest because in any quarter we're talking about weather patterns here and there and how that affected the crop for soybeans or corn. When it misses the bigger picture, which is that there needs to be a major redistribution geographically of where plantings are made across the globe. And that is going to benefit Deere. By the way, I'm leaving aside, and I see Stephanie nodding her head, I'm leaving aside the construction business because that's only 20%, but what you said about CAT earlier applies here. This is a stock, and Scott, going to our earlier conversation, again to fact set, okay? Yeah. Long-term earnings estimates here, 16%. And you get this at 12 times earnings. To me, I'm not worried about the quarter. I look at that setup and I say I can hold this for a few years to come.
And you get margin expansion from the precision ag farming.
Oh, yeah, thank you. I mean, thank you. Yeah, I didn't have... Beautiful.
story.
Mike Santoli's going to join us next for his midday word. And by the way, don't miss David Faber's exclusive interview with Elon Musk following Tesla's annual meeting. It's tonight, 6 p.m. Eastern Time. It's a CNBC special presentation. We are back on The Half after this.
It's hard to contain your excitement when you get something you've really wanted. Like the gold standard in automotive protection, WeatherTech floor liners. With deep sculpted channels and laser measured for total protection in the front, back, and even up the sides.
Dad, you're going viral.
What?
WeatherTech me.
So don't be shy, enjoy. Order your premium American-made products at WeatherTech.com.
Car designers can shape a piece of clay into a piece of art. So why don't they? At Nissan, things are different. They design cars that look like swords. Gladiators. The future. Or, wow. Nissan knows what thrill looks like. Because they design it into every car they make.
Power E-Trade's easy-to-use tools like dynamic charting and risk-reward analysis help make trading feel effortless. And its customizable scans with social sentiment help you find and unlock opportunities in the market. E-Trade from Morgan Stanley. With powerful, easy-to-use tools, Power E-Trade makes complex trading easier. React to fast-moving markets with dynamic charting and a futures ladder that lets you place, flatten, or reverse orders so you won't miss an opportunity. E-Trade from Morgan Stanley.
From big cities to small towns and on main streets across the U.S., you'll find PNC Bank, helping businesses both large and small, communities, and the people who live and work there grow and thrive. We're proud to call these places home, too. They're where we put down roots, and where together we work to help move everyone's financial goals forward. PNC Bank.
Senior markets commentator Mike Santoli with us now for his midday word. I want you to weigh in on this notion of AI bubble, then versus now, and how it's kind of obvious at this point that the biggest and alleged smartest money in the market is all sort of gravitating to those stocks.
Yes, they absolutely are. It seems right now as a little bit of a kicker or an accelerant on an existing fundamental story for these net winner companies, for the NVIDIAs and Microsofts, where they had a lot else going on, and this seems like either just another layer of why you like it or a reason to justify a higher valuation. So if you look at NVIDIA, what's happened to the numbers in the last 6 months, the earnings estimates for the fiscal year that ends in January 2025 are up 15% in the last 6 months. And you're trading for 48 times that number on the stock right now. So if you say this is an unrecognized factor, I would not believe that that's really the case. Is it justifiable? Can you get further upside from there? Maybe, because it doesn't compare to just the level of non-fundamental bubbly activity you had back then. But to me, the real question is there's a huge gap between maybe a little bit overvalued or this side of fair value and cataclysmically doomed bubble valuations, which you had back then. And those stocks all went down 90% peak to trough.
What if I'm just simply looking at it as 6 months ago, let's say the valuations of the mega cap stocks were today pretty close to what they were 6 months ago.
Yeah.
I don't remember exactly the day that, Chat GPT burst into the lexicon.
It's around 6 months, I think.
Okay.
Yeah.
November 30th. All right. So if that is our line in the sand, and you say, well, if the valuations were, maybe they were a little bit stretched in some people's minds 6 months ago, and now we have wrapped our heads around the prospects of what AI is going to mean to these companies.
Right.
Are the valuations really that stretched?
Well, the way I would
now?
view it is more that 6 months ago you were like 10 months into some pretty nasty valuation compression, and you had another reason to take a second look at an Alphabet, which traded at a market multiple. And to me, I still need to be persuaded that this is not just open source, big data, all the other Web3, all the other things that seem like, yep, there's a lot going on here. There's a bit of an investment cycle. Maybe big companies are panicking that they have to participate, but does it convert 2 and 3 years down the road to earnings that are not cannibalizing another part of the business? I have no idea.
Yeah, good points, as usual. And we'll see you on the closing bell. That's Mike Santoli. Straight ahead, we have more portfolio moves from Stephanie Link to tell you about, and we'll do it when we come back in 2 minutes.
Conventional thinking delivers conventional results. At Allspring, we break away with purpose, harnessing data-driven insights and boundless curiosity. We dissect the market from every angle, helping to build portfolios that redefine what's possible. Because investing isn't one size fits all. Allspring, purposefully divergent.
This is the all-new, all-electric Lucid Air. A car that goes as far as it does fast. As sleek as it is spacious. As smart as it is beautiful. Introducing the Lucid Air. Experience the best.
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today, CNBC.
Ready? Here we go. Punch it!
Rated PG-13. False or misleading search results can negatively impact your life. A bad online reputation can put you at significant risk of losing job opportunities or new customers. Reputation Defender helps clean up your search results, wiping away negative first impressions, allowing truthful, positive content to rise to the top. Don't you deserve to have more control over how you're represented online? Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
I wonder if Instacart can tackle this honeydew list. Need paint for the deck, gear for the kids' track meet, and the essentials. Honeydew list completed. Saturday saved. Visit instacart.com or download the app and get free delivery on your first order.
There is a lot that goes into becoming a licensed therapist.
2 years of graduate school followed by 2 years of clinical training.
You literally have to do 3,000 hours plus of interactions with clients. It is quite a journey.
Update now to a story we told you about yesterday. Shake Shack naming former Domino's Pizza CFO Jeffrey Lawrence to its board following pressure from activist investor Engaged Capital. So a settlement here. We talked about this with you. You have thoughts on just maybe putting this behind the company here? Stock's up 50%, what, year to date? Something like that?
Yeah, I mean, I don't know. Is it behind the company, or like now the activist has a voice internally and on the board, and maybe it's good? So I'm happy.
No, I mean behind it in a
Have
in
you
a positive
tried
way, right?
the truffle shroom burger?
I have not.
Oh my god.
I haven't.
Like that's the only we would lead the show off with that if you did.
Okay.
That's what we should be talking about here. This is a growth company getting its margins back. More voices from shareholders in the room. I think it's all good.
Is it a regular menu item or is it a special?
I don't think they'll keep it forever, Scott, so act now.
Okay, I will. Thank you. All right, I want to get to some more moves, Steph, that we have from you, too. You bought more Chevron, and you bought more SLB, the former Schlumberger.
Yeah, both of them are down really
Formerly
big.
known as.
That's right. So Chevron is down 18% on the year. I think now yields close to 4%. It's a diversified revenue mix, great company. They're buying back stock. They have a $10 to $20 billion guidance for their buyback. They're lowering their debt. They're doing all the right things, and the stock seems to be hated. SLB, it's down even more. It's down 25%. I don't remember the last time this stock traded at 14 times forward estimates. And you know I'm a big fan of their technology initiative, and I think international markets are just getting going. So at some point, somebody's going to care about energy again, and I just thought down so much, I wanted to nibble.
Okay. All right. We'll do final trades next.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee, a stronger bond.
Meet Stephanie and Bethany. Identical twins, both struggle with CPAP for their sleep apnea. But Stephanie got Inspire, an implanted device that works inside the body to help her sleep. Unlike her sister. There's more than one way to treat your sleep apnea. If you struggle with CPAP, look into getting Inspire.
Inspire, sleep apnea innovation. Learn more and view important safety information at inspiresleep.com.
Opportunity is using data to create a competitive advantage.
It's raising capital to help companies change the world.
Opportunity is making the dream of home ownership a reality.
And driving the world forward to a greener energy future.
Sometimes the only thing standing between you and opportunity is someone who can make the connection.
At ICE, we connect people to opportunity.
My plane has mechanical problems. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
Your record label is taking off, but so is your sound engineer. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Time to slip in. Alrighty up. Get this paper. Looking good, dog.
Hey, Snoop, how do you do all this stuff?
Skechers, baby. Shoes made for all walks of life.
I want to go to D.C. and show you Sam Altman. He's the creator, of course, of ChatGPT, leaving that hearing down in D.C. Let's watch.
Sam, look, a lot of the things that were going on in there was talking about this idea of like, look, we forgot we couldn't do social media regulation. Do you think this is going to happen? Do you think they're going to do regulation on AI? And if they don't, how do you self-regulate?
Yeah, I hope that they will. If they don't, seem sincere, and if they don't, then the industry does what we think we should do anyway. We can't control what every player does. We've said a lot about the things that we want to do, that we hope other people will do. And I think on the positive side, the industry does take the gravity of this very seriously, but I still think we'd be all better served by the government.
How fast does Congress have to move on this to keep up?
I think it's more important to get it right than to move super fast. Although, I don't want to. If it takes a decade, that would be a bad thing.
But the EU is doing it now.
How quickly could AI, you think, become self-aware if Congress does not regulate? I think a lot of folks at home are wondering.
I think there's a huge amount of speculation on that question. I think it's very important that we keep talking about this as a tool, not a creature, because it's so tempting to anthropomorphize it. I totally understand where the anxiety comes from. I think it's like the wrong frame, the wrong way to think about what's happening.
Is there a chance that you could lose control of ChatGPT?
Sorry, what did you say?
You mentioned the possibility of a global governing body
Yes.
for AI. That's really curious to me, and you mentioned that it sounded impractical. What's your vision for it?
I think it's really important to try to figure out. I didn't mean to say impractical. If I did, I misspoke. I meant to say that it's difficult and that it sounds like a sort of naive thing. We've done it for other industry. I mean, the IAEA did it, and I think this is a technology that we should treat with that level of seriousness. So although difficult, I think it's important to try to start the conversation on it.
So the G7 leaders will discuss about the rulemaking of AI this week in Japan. So what do you expect for Japan's chair of G7?
I'm not close enough to that one to have a meaningful comment on how Japan is thinking about it. I had a great time there a few weeks ago. I'm going again in a few more weeks, but I don't think I could speculate on it with any accuracy.
Yeah, what do you expect for G7 leaders discussion on AI?
That one I think I know even less about, but I'm looking forward to hearing what they talk about.
Sam, would you like to see Congress
ChatGPT going to help the creators?
I think it's really helping the creators. I think it's amazing to talk to creators about how they're using the current tools. People talk about it as like the most important creative tool they've ever gotten to use in their new career.
What's the one thing you're not seeing them do with it that they should be doing?
I mean, there's so much happening. What's the one thing? I don't know. It's really remarkable to watch what's happening already.
Can you give me an example of what you mean by scary AI?
Sure. I mean, an AI that could like help design novel biological pathogens, an AI that could hack into computer systems. I think these are all scary. But these systems can become quite powerful, which is why I was happy to be here today and why I think this is so important. I can probably do like 2 more minutes.
What do you think of the EU law?
What do I think of what?
The EU law.
All right, I'll wrap it up real quick. The EU law is it's still gonna evolve a lot, right? And I'd rather wait to comment on it until we see something.
Other languages,
control of ChatGPT.
Non-English languages.
Sorry.
All right, I'm sorry. We're really late for another thing. Nice to talk to all of you.
Sorry. Thank you. Thank you very much.
I'll do it.
That was Sam Altman, of course, the creator of ChatGPT, just out of that hearing down in Washington, D.C., addressing those concerns about AI, whether there's going to be regulation and what that might look like. So we're glad we had an opportunity to hear from him as he leaves that hearing. That does it for us. I'll see you on Closing Bell, of course. The exchange begins now.
Thank you, Scott. We'll pick it up. Hi, everybody, and welcome to The Exchange. I'm Kelly Evans. Here's what's ahead this hour. A doubleheader in Washington, as you just saw. We've got both banks and AI under congressional scrutiny. You just heard from OpenAI CEO Sam Altman. Of course, we'll get to him in a moment. But first on the banks, would better regulation or better management have prevented the bank failures? Our expert says almost no one could have survived what happened to SVB. We will debate that. Plus, there's the role of regulation in AI. We'll look at what policymakers are considering and what the CEO of Builder.ai says can't happen to that space. Plus, our market guest says there's one group of stocks in particular that's poised to benefit from the AI gold rush. She will join us with those names and a lot of bearish analyst calls on SoFi in the last few days. Our guest says the bears are wrong and the stock is a buy. What he's seeing that others maybe aren't. He's here to make his case. First, though, to the markets, and Dom Chu has the numbers.
It's consolidation, and it's been like this for probably a couple weeks now. The markets are not doing much of anything in terms of drastic movement, but they're hovering right around the levels that you see here, still around between 4,100 and 4,140 in that range there, and it's been like that for about maybe 5 or 10 trading days now, kind of going into this area where there's just a little bit of movement overall. But the Dow Industrial is down about 0.5%.
Det er fordi jeg aldri får sitte her, da.
3,152. The S&P, like I pointed out, 41.27 the last trade. They're off about 1
Hvorfor heter det bare man skal etter det? Ja, du vil gjøre... Ja, men scalping er det vanskeligste å gjøre. De vanlige driver med swing trading.
So again, generally a negative day, but tilting up towards the upper end of that trading range, if you will. And the NASDAQ composite outperforming right now, up 1/3 of 1%, 36 points to the
upside, 1,401. Og så kjøre scalping. Det er liksom ikke... Det er ikke det du skal begynne med.
Also an earnings report that's seen as a bellwether for many parts of the US economy. Home Depot shares down about 1%. That's off the session low so far. Now, Home Depot comes out with earnings that beat expectations. Revenues fall shy. It was the worst miss on a relative basis in roughly 20 years in terms of Home Depot. They also cut their full-year revenue guidance.
Jeg ser jo nesten ikke noe. Det klarer å se jævlig ut.
Slower spending on big ticket
Jeg må kanskje ta den
patio sets and outdoor grills, that sort of thing. Meanwhile, Lowe's is down in sympathy about 1%. Etsy's the
Jeg gir den der markedet, og så skjer jo ingenting.
Driven in part by a price target cut by analysts over at Morgan Stanley, citing future growth concerns. And then some of the ETFs, more broadly based, are mixed in the session. So retail still a big theme. Big week for those earnings coming up. And then the stocks to watch.
Du kan lage en strek her siden klokken 5. I 3 timer har ligget på samme kurs. Den bare ligger der, og den har vist styrke som faen.
Well, now the Federal Trade
Her
Commission
igen.
has formally come out to sue to block this transaction.
Det ligger där.
Citing competitive concerns. As a result, those Horizon shares, Kelly, down 15%. Amgen's off about 1% in that trade overall. Big deal in biotech that could be facing some severe hurdles. We'll see how that plays out. I'll send things back over to you.
We will have more on that next hour, Dom. Thank you. Our top story for the moment, dual hearings on Capitol Hill, each with major...
Om jeg driver med swingtrading? Jeg driver med alt, jeg. Men nå det siste for å bygge opp kapitalen, så driver jeg bare med scalping. Men jeg kommer til å drive med swingtrading når jeg har mer kapital. Jeg kjører jo veldig mye swingtrading på aksjer, ikke på indekser.
Joining me now, Aaron Klein is Senior Fellow in Economic Studies at the Brookings Institution. John Maxfield is President of the Substack Maxfield on Banks. CNBC
Jeg en scalper.
Here as well. Welcome to everybody. And Leslie,
Det det jeg er god på. Sånn kortsiktig.
Supposed to be 5 events in 72 hours, really drilling down into the cause of these bank collapses. One of those got postponed, but the headline here is really trying to figure out who to blame. And you know, if you kind of take a step back and look at the
støtte.
for the last 2.5 hours or so, that's how long the hearings lasted. They just ended. Basically, the executives were like, these were black swan events. No one could have seen this coming. If we had to do it over again, we wouldn't.
Jeg kommer tilbake straks.
We had at the time, we wouldn't have changed a thing. And then, of course, you have the lawmakers on the other side of the table who said, you know, where were your interest rate hedges? What about this incentive compensation you have that drove you to take riskier measures and pursue growth at all costs? And basically, they just said, you know, we are not to blame here. They blamed the Fed. They blamed their board. They blamed employees. This is all according to Senator Sherrod Brown, who kind of summed it up at the end. They blamed social media. So I don't know.
SVB blamed Goldman Sachs and the Financial Times as well. I mean, SVB did seem to imply, Goldman gave them bad advice on how they should have sold that portfolio that triggered kind of the cascade that led to its collapse.
Yeah, so there were many, many variables at play. And I don't know, as the result, at the end of the week, will we be able to take a step back and say, this was, who we should put the blame on?
Right.
But it is interesting to kind of drill down and get their perspective.
Aaron, I'll turn to you. What would your response be to kind of the explanations that we are being given about these bank failures?
Yeah, look, the blame lies on bank management. It's not a black swan event to know that interest rates were going to rise. Yeah, they rose more quickly than you thought, but you took out for your hedge in 2019 to maximize profits and boost short-term stock price. So the number one blame is clearly on the bank executives. They didn't take it. I was struck by how bipartisan the grilling of the SVB CEO was and his absolute zero interest in returning any of his bonuses that he's gotten over the years. But I think the regulators also have a fair amount to blame here, particularly the Federal Reserve, who regulated SVB from head to toe and was asleep at the switch, as several Republican senators pointed out.
Yeah, so John, I'll turn to you and kind of ask the same question. Because how unique do you think SVB's problems were? And this hearing is also taking place as we're not sure if there's going to still be more shoes to drop in the banking industry.
Yeah, so what I'd say, Kelly, first of all, it's great to be on your show, as always. I'd say that if to say that there's to blame the executives of these banks is to say that, like, if you were in that situation, you would not have made the same mistake. I think that is like a misunderstanding of kind of what happened at these two different banks. And I'm not necessarily an apologist for these banks at all, but I think you just have to be realistic that, like, if you go into 2020 with $60 billion in deposits on your books, and you get 2 years later, you have $190 billion in deposits on your books that were caused by fiscal and monetary stimulus. Like, what you would do in that situation is you just simply don't know what you do in that situation. And so, like, do you put it in the safest thing? Do you reject the deposits? Do you keep it off balance sheet? I mean, it's just so unusual what happened in this situation. In fact, like, I've kind of gone back all through history in banking and kind of identified the one other time where you had a situation like this and what happened in that situation. And then you have to go all the way back to the 1830s. And in 1834, Andrew Jackson, basically, he was trying to get rid of the second bank in the United States. And he basically said, we're going to take the deposits out of that bank, and we're going to distribute those deposits to state banks. They called them pet banks. And so they put all of these deposits into these banks. And what happened to those banks? Well, if you look at the three banks in New York City that got the deposits, it was Bank of America, Mechanics Bank, and what was the third one? And Manhattan Bank. Two out of those three basically came within a hair's breadth of failure. So they didn't totally fail, but it was the same exact situation. And so you just have a situation where it's like you have all that money dumped on these banks. They have to do something with it. What are they going to do with it? Like, it's just a very difficult, I think we have to be more realistic about assessing blame in situations like this.
I see Aaron reacting. I think you're saying you would have done something different, Aaron Klein. What is that?
I mean, you don't have to go back to 1830 to see explosive growth, huge leverage at the home loan banks, which was something that Countrywide and IndyMac and other folks did. The idea that these bank CEOs were just passive people with deposits being dumped on them kind of belies basic logic. Look, it was a fast growth strategy where he didn't consider banking 101, which was interest rate risk. He bought a bunch of safe securities on a credit risk side in terms of the 3 and 4% mortgages that people used to be getting, but they had interest rate risk. And everybody knew there was risk. That's why they had hedges. But they took the hedges off because it boosted short-term profits. They didn't have a chief risk officer for 9 months. Look, America has 9,000 banks and credit unions. Low interest rates are a common denominator across the entire industry. These banks didn't know what they were doing. They screwed up. They failed. And the regulators were often asleep at the switch in that process. It's not some implausible concept that you have to go back to 1830 to find a scenario where interest rates rose sharply and banks didn't hedge their risk.
No, but I think the point is, when's the last time you've seen a bank grow its deposit base by 3.5x in 18 months' time? John, let me have you respond to that before Leslie, I give you a quick last word.
Well, I mean, I appreciate his point, but you do actually have to go back to 1830 to find a comparable precedent in this situation. And I mean, just the fact of the matter is that if these banks were going out and growing intentionally, going gangbusters, growing, what would you see? You'd see massive new customer acquisition. Did we see that here? We didn't see that here. We saw existing customers, a ton of liquidity flooding into their accounts. That liquidity had to go somewhere. And so any bank, and I've talked about this, Kelly, like the rule in banking is failure. That's the general rule. The exception is survival. So any bank that fails, in a sense, it is the fault of the management. But the situation here was so unusual that I'm not sure that anybody in that situation could have avoided failure, given the incentives and how all that stuff works.
And Leslie, I'll give you a quick last word. One of the points that Becker made in his testimony is that he had 5 times the exposure to SVB shares than he was really required to, which obviously were zeroed out as the collapse, because he's been under a lot of criticism, and Warren's working on a bill now to claw back comp from failed banks. And his point is, that he had larger exposure to its success than he even had to, or in this case, to its failure.
Yeah, and I think the lawmakers pointed to that as almost a negative, that was driving the decision-making to grow the bank too quickly and take more risk as a result of that. And so,
but if he had taken a bigger salary, then they would have said, well, then you got paid and you didn't have any risk, in conjunction with the shareholders. So is there what do they want to happen here then?
Well, that's going to be the interesting thing that comes out of the potential legislation that results from this. And that, as we look ahead, Thursday's hearing will be much more about the regulatory side of things. Jamie Dimon actually spoke at the JP Morgan shareholder meeting. It was virtually webcast, but he talked about kind of regulation, something that he's been talking about a lot as we look to ring fence these issues, prevent potential failures of these large institutions in the future. And he said that simply satisfying regulatory requirements is not sufficient. Reserve abundance and managing those risks requires constant and vigilant scrutiny as the world revolves regarding the current disruption in the U.S. banking system.
Right.
And that most of these risks will hide in plain sight.
And Aaron, the regulators completely failed in this case. So what do you think the response needs to be, real quick?
Well, look, I think the response is going to be greater debt holding company capital for banks over $100 billion so that they could be wound down in a better way. And then ultimately, there's going to be a question of whether or not regulators will finally let banks fail without bailouts. This generation of regulators seems every time there are major problems to hit the bailout button. And that's something that, is a judgment call, but we see repeatedly, and that really does change market expectations in the future.
Depositor bailout, at least so far. All right, gentlemen, we'll leave it there for now. We appreciate it. To be continued, Aaron Klein, John Maxfield, and our Leslie Picker. I shouldn't say gentlemen, and our Leslie Picker as well. We'll get to the AI hearing in just a moment, but first, elsewhere in D.C., the debt ceiling drama also continues. Congressional leaders returning to the White House today to meet with President Biden. And while Wall Street's still bullish about a deal, their optimism is fading somewhat. B of A's latest fund manager survey shows the majority of investors still think the debt limit will be raised by the X-date, but that figure dropped from 80% last month to just 71% in the latest results. Are they right to be concerned? Let's get to Eamon Javers with the latest. Eamon?
Concern, at least in the short term. We're waiting for this meeting at the White House of the Big Four, Democratic and Republican congressional leaders. That's coming up at 3 p.m. Remember, there is a live shot position right outside the West Wing. So if any of these leaders want to say anything to the press about what happens in this meeting, they're going to have the opportunity right after the meeting breaks up. So we'll watch for that. Meanwhile, a Democratic source familiar with the process tells NBC News Democrats will decide right after that meeting whether or not to move forward with a Plan B option of sorts on the debt ceiling. That would be a legislative process to force a vote on the floor, but it would require at least some Republicans to go along. So it's not seen by Democrats as the best option just yet. They'll decide that after the meeting breaks up. Meanwhile, Speaker McCarthy, for his part, he's been sounding a pessimistic note over the past 24 hours, telling reporters that the talks are not going well at all and saying there's no progress that I see. So we'll see if any of that changes after 3 p.m., Kelly.
While we have you, you've been following the Jeffrey Epstein Virgin Islands issue closely. Now, a subpoena to Elon Musk. What do we know?
Well, what we know as of right now, Kelly, is we learned Monday that U.S. Virgin Islands have issued a subpoena to Elon Musk for information related to sexual predator Jeffrey Epstein and J.P. Morgan. A key allegation in that case from the U.S. Virgin Islands has been that the bank kept up a relationship with Epstein because he was referring powerful and wealthy men to the bank as clients. Now, the U.S. Virgin Islands say they believe that Musk may have been one of those men, but they say their private investigator has been unable to track Musk down and physically serve him with a subpoena, so they want the court to authorize alternative service methods. Musk responded in a tweet to all this, calling the subpoena idiotic and saying that cretin never advised me on anything whatsoever. Musk also says he has never forgiven J.P. Morgan for what he says was letting Tesla down 10 years ago. So what Musk's tweet didn't say, though, Kelly, is whether or not he knew Epstein or whether Epstein ever tried, at least, to sell him on the idea of moving some funds to J.P. Morgan. So there's still a lot to learn in all of this. Kelly, back over to you.
Eamon, thank you for now. We appreciate it. Eamon Javers. Quick programming note, don't miss David Faber's live interview with Elon Musk after Tesla's annual meeting. It is live tonight, 6 p.m. Eastern, right here on CNBC. Coming up, the other high-stakes hearing happening on Capitol Hill today as the race to regulate AI heats up. Plus, the opportunities in oversight. We'll look at the semi-stocks that could benefit the most from regulation and remain insulated from a potential recession. And as we head to break, here's a quick look at the markets. Dow still down almost 200 points. The S&P underwater as well, while the NASDAQ holds a small gain. As you can see there, it's still up about 0.25% today. The small cap's down 1%, and that 10-year yield back at 3.55. We're back after this.
This is The Exchange on CNBC.
Double check that. That's pretty good. Yeesh. Not crying, are you? Let's tighten that. And...
Ooh.
Wait, what was that? What? No, don't worry about that. Here we go.
Asking the right question can greatly impact your future.
Are you qualified to do this? What?
Especially when it comes to your finances.
Do you have a question?
Are you a certified financial planner?
Yes, I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
A vacation starts with how you get there. A private jet experience from One Flight's budget. You've gotta see this. Plug in your itinerary, search from over 5,000 planes, pay, and you're on your way. Nothing better than a personalized meal on board.
It should be a beautiful day in the Bahamas, Mr. Hirschbach. We should be landing in about 20 minutes.
A great vacation always starts with your flight experience.
Call for a complimentary flight.
Why is everyone talking about Navage and nasal irrigation?
I am one who suffers from chronic
sinus infection.
You need to clean that crap out of your nose.
Novage is simple. Your nose is the body's air filter, but it's not perfect. Novage is a drug-free way to help flush out allergens, mucus, and germs using powered suction. Join nearly 3 million Novage users so you can breathe better, sleep deeper, snore less, and stay healthier.
I love this thing.
It's nice to breathe.
Novage. Clean nose, healthy life.
I had a client once who was a respiratory care nurse during the COVID-19 pandemic. BetterHelp quite literally provided her what she needed at the most pivotal time in her life.
Are you a small business owner who could use a few $100,000? Employee retention tax credits are an incredible opportunity for you. If you kept W-2 employees during COVID, you may be eligible. Turn to the team you can trust. Get My Funds. They've helped thousands of small business owners receive $300 million in pandemic funding. Their expert team of CPAs files your ERC accurately and will give you an audit safeguard. They only get paid if you get paid. Call Get My Funds today.
Develop a gorgeous app with Fiverr. You'll need your product manager, QA engineer, and Omar, a Fiverr freelance product designer with an impressive number of orders who will join your team from home. Smart and cozy. Expand your team with a Fiverr freelancer.
Welcome back. OpenAI CEO Sam Altman taking questions from the Senate Judiciary Committee on the potential dangers of AI today. After the launch of his popular chatbot, ChatGPT kicked off an arms race between big tech companies. Let's discuss now, bringing in Steve Kovac, who's live on Capitol Hill with the latest for us. Julia Boorstin right here in studio. Welcome. With more on what's at stake. Also joining us is Builder.ai CEO Sachin Dev-Dugal. It's great to see Sachin. You kind of have the sweater. It's not. Do you know how many questions I got about the sweater last time?
And it was so funny, I've left the sweater back in London.
Listen, that shirt goes a long way. Let me just start with you real quickly. I mean, what did you not want to hear today?
I think what we didn't want to hear was not thoughtful conclusions, that you've just reached a blanket decision that all AI is bad. I think what we didn't want to hear is we don't want to regulate. And I think the other piece that we probably didn't want to hear is we're going to figure this out as policymakers and not really bring in experts and sort of civil society back into it.
Well, then, Steve, they probably addressed all three of those by what sounds like a pretty collaborative hearing today, would you say?
Yeah, that's exactly the message that came out of here, Kelly, was that it was more like an educational session for these senators to learn about how this technology works from basically the guy who is the figurehead of it, Sam Altman, the OpenAI CEO, and learning what they could do as they think about crafting regulation around this. There was even an admission, Kelly, from a couple of the senators on the panel saying, we got it wrong with social media and Web 2.0. We didn't move fast enough, and look what happened. They don't want that to happen again, and so what they're doing here is trying to get ahead of it and talk to people like Sam Altman to figure out how to craft legislation around this technology, which frankly is they don't know how it's going to develop. So what can we do today to make sure we have a grasp on it later?
Julia, I'm a little surprised to hear that. I mean, what do they think they should have done about social media?
Well, social media, what was so amazing in that situation is there was bipartisan support for reform of Section 230, which is the regulation which makes these social platforms immune from being responsible for the content that's shared on their platforms. Reforming Section 230 would make the likes of Facebook or WhatsApp or Twitter liable if content is shared that is manipulative or dangerous. Now they're not responsible if that content is shared in those platforms.
My understanding was there was never enough support to actually. That's a big step to take, and I think people realize, well, if we do this, we could shut down, the viability of a lot of these platforms.
There was always sort of commentary from the social platforms and even from the likes of YouTube that there should be reform, but it needs to be careful reform, that they do need those protections. But I think talking about Section 230 today and the fact that there was not reform, the fact that there has not been a comprehensive privacy legislation here in the U.S., and that legislation has come out of Europe, and you've had the EU effectively regulate the way all of these companies deal with privacy. They say this time around we want the U.S. to be on the forefront of regulation. When it comes to AI, it can't be the same thing as happened with privacy. We need to have the U.S. leading the charge. And one thing that I heard over and over today was this focus on transparency. They talked about a nutrition label for understanding the different ingredients that are going into these different AI algorithms and also what's coming out of them. And I think that was really first and foremost the main takeaway, transparency is key.
It's interesting. So, Sachin, on that note, a nutrition label, something to that effect, how would that affect your company? How would that affect the adoption and sort of development taking place on top of these language models?
It really comes down to a risk profile. And so you have to ask yourself, and I think, we touched on this last time we had the chat, which is this touching civil liberties? Is it risk to core infrastructure? Or is it, on the other hand, increasing productivity? Is it empowering people to be able to do something they weren't able to do before because they didn't have the technical or musical or artistic sort of background to be able to do whatever that activity is? I think if it's in the former two, then the label is important, but it's not critical. I think if it's in the first two, the warning or the label or what have you is quite important because it's subject to bias. It's subject to sort of elements of losing autonomy. Imagine facial detection that is rampant, or imagine the ability that you've got a system that has the risk to hallucinate, but then is able to make critical infrastructure decisions. So I really, it's very nuanced. It's got to be on the use case itself.
And Steve, I still think about what Lena Khan wrote. I think it was in the Times recently when she said, all of the existing rules we have obviously apply to AI, and how many of those existing rules, from copyright to whatever, would cover the areas we are most concerned about here?
Yeah, that was actually discussed in the hearing, Kelly, where they're asked. I got to pull Sam Altman aside when the hearing wrapped, and I said, what happens if we're in the same position again? What happens if the people you just spoke to in that room are not able to craft legislation or regulation? He didn't really have an answer. He's just saying, I hope they can. So we know what happens in Web 2.0, in social media world, when there is no regulation, there are no guardrails. At the good side of this is, at least they're thinking about it ahead of time, whereas you could argue they weren't before.
Yeah, it just, it's novel, Julie, and I wonder if they just have to wait a little bit. I mean, the
but
biggest
things are moving so quickly, so they can't really wait. And I think,
but what are they trying to do? I still don't understand. What are they trying to do?
Well, for instance, I would raise the point when it comes to the upcoming election and the fact that there is so much concern about manipulation. Think about the deep fakes that could really lead people astray during manipulation, or even the
But what would the law be? What is the policy?
So that deepfake law is not so much a law around the creation of deepfake content, right? Because if you've sort of seen the Top Gun movie, they recreated Val Kilmer's voice. So that is the same kind of technology. It's more actually the distribution risk. So in some respects, the problems that we're now trying to solve with regulations, to your point earlier, are the problems we did not solve with social media around distribution and verification of content that's going through that.
I mean, because anyone could make a deep fake now. One of the bills that's being proposed is saying that anytime you use AI in either the creation or deployment of a political ad, you're going to need to disclose that AI was part of that.
And we've already seen those ads, by the way, imagining a world with President Biden, in charge in 4 years or whatever.
But I think that this election, there's a lot of concern about how much more advanced all of these different AI tools will be by the next election, and just the potential for misleading the public.
So disclosure basically is they would have to say this was created with AI. Would there be anything beyond that, though, about
there was a conversation in the hearing today about what happens if someone goes onto ChatGPT and says, there's a long line at my polling place, where do I go? What happens if ChatGPT doesn't give it an accurate response? Is that voter suppression? So it's a very complex thing, and then the real-world implications, especially when it comes to politics and all the people in that hearing today, are very large.
Right. I guess a quick final, Steve, any comment you want to make about Microsoft before we go?
Yeah, they actually didn't come up too much other than saying, I think it was Cory Booker who brought this up, Senator Booker, saying something to the effect of, look, it was Booker actually, I'm really worried about this concentration of power. By the way, OpenAI, you are funded by Microsoft. What do you think of that? And also the idea that Web 2.0 is in the hands of some giants. Altman kind of answered that in a wishy-washy way. He does have a financial tie to Microsoft, but look, he still believes OpenAI was founded with this kind of altruistic mission to make sure AI is done responsibly. So he's really leaning on that, and also that his platform, it's not just Microsoft, anyone can kind of tap into their APIs and their programming in order to build off of ChatGPT.
Yeah.
So he thinks there's room for anyone to win.
No, I think they're eventually going to become kind of like any other consumer tech company. But before we get to that point, Sachin, you're a Microsoft partner as well. What would you say about that?
Look, I think this notion of concentration of power is a little overused, if I'm honest, because we've had this since the cloud hyperscalers, We've had this in Web3. We've had this in social media. Before the cloud, we had this in news. The only difference was you didn't have concentration at a global level because most news was sort of more sovereign based or sort of based within the country. I think this idea that now it's a sudden issue when actually it's running on or being distributed through social media, running on cloud, it's something that we should have got used to by now. I think the bigger concern around concentration is actually more of a bias issue, is to make sure that as we use this technology more and more, we're able to augment the data with the relevant regions, whether it's cities, states, countries, and sort of diversity, inclusion. And that's probably the big change between something that was inanimate, like the cloud or social media, to where we are now. And there's this question around voter suppression and asking ChatGPT away for a keep in mind, its data is 2 years old.
Right, exactly.
So one of the things we have to sort of stay honest with ourselves is there's so much hyperbole and hype that it's scaring people, and it's making the system feel like it's so much more evolved than it is.
Yeah.
We are still in the AOL days of broadband.
Yeah, well, maybe if nothing else, it needs to say on the landing page, this is up to date as of 2021 or whatever the number is. So much needs to happen, but maybe to the point about Section 230, you got to be careful when you do it so you don't do it too soon and kind of not address the issues you need to. Guys, thank you all. Really appreciate it. We'll leave it there for now. Julia Borston, Sachin Dev Dugal of Builder.ai, and our very own Steve Kovac. Still ahead, the eye in the sky. We'll follow up with one disruptor revolutionizing the weather forecasting industry. It's an out-of-this-world story changing the way corporate America does business around the globe. AI, AIO.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy, a measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
What's the alternative to riding the public market roller coaster? The alternative is alternatives. Private market alternatives help you outperform the traditional portfolio by up to 40%. Meet Yield Street, the leading private market investment platform with 9.7% realized net annual returns across 10 highly vetted asset classes. Join over 400,000 members with over $3 billion invested. Diversify with alternatives. Open an account at yieldstreet.com.
What's up, Peloton? It's your girl, Ali Love. Welcome. We're going to have a good time today.
The best Mother's Day gift? Something she'll come back to again and again. Save $400 on Peloton tread, row, and bike packages. Find the perfect gift at Peloton. Terms apply. Visit onepeloton.com.
Hi, I'm Jay Jackson. For almost 20 years, Abacus Life has been purchasing life insurance policies from seniors. And in just seconds, you can use the free calculator at abacuspays.com to learn what your policy might be worth.
For many of my clients, selling their life insurance to Abacus was right for them and their estate plan.
Don't sell or lapse your policy without going to abacuspays.com first. There are no fees and no obligations. Get the real value from your life insurance when you need it with Abacus.
We're here with Chris Cunahan of our local leaf filter. Tell us how leaf filter is different from every other gutter protection on the market.
With Leaf Filter's patented filter technology, there are no gaps, no openings, no place for debris to get in at all. We install Leaf Filter on your existing gutters. You'll never have to climb a ladder to clean out your gutters again.
You know, that's peace of mind and then some. So how do people sign up?
Call 833-LEAF-FILTER today to schedule your free inspection or visit getleaffilter.com.
Welcome back to the exchange. Keeping our familiar pattern here of late with the NASDAQ in the green by 19 points while the S&P and Dow are red. S&P's down 13 points to 41.23. Dow's down about 200 to 33.116. Speaking of which, look at this number, 33.117 today. Well, anyway, up here now, down 231 points. We are watching the break-even level 33.147. This is the level at which we will go negative year to date. You can see we're below that right now by about 30 points. By the way, the 50-day moving average right here, which we haven't closed below since March 30, we are also looking to potentially break below that. So even though it's been kind of quiet trading activity, still pretty consequential lately. Let's get to Tyler Matheson now for our CNBC News update. Ty?
Kelly, thank you very much. Russia is responding to a video posted on the CIA's YouTube page aimed at recruiting Russian spies. The video offered Russians a secure way to communicate with the CIA and promised protection if they share secrets about the Ukraine war and other information. The Kremlin said its special services were monitoring it, and it's not surprised by Western intelligence activity in their country. European Union states approved the world's first comprehensive set of rules to regulate crypto assets today. The rules that will require firms that want to issue, trade, and safeguard crypto assets in the bloc to obtain a license. Those rules are expected to roll out in 2024, putting the EU ahead of the U.S. in regulating crypto. And the Philadelphia 76ers have fired head coach Doc Rivers today after the team's disappointing loss to the Boston Celtics during the second round of the 2023 NBA playoffs on Sunday. Rivers has not gotten past the second round of the playoffs in 3 seasons with the 76ers, and he had a 3-2 lead in that series. Kelly, back to you.
Absolutely brutal. Like every coach who's won a championship in the last 15 years has basically subsequently been fired. Tyler, see you soon. Coming up, the NASDAQ handily outperforming the major indices since Jan 1. We will talk about what that rebound in tech stocks is all about. Kim Forrest weighs in next.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our communities and your portfolio. Invest in the future of America with BAM insured bonds.
Is this how you're hoping to retire? Well, hope isn't a good retirement strategy. You've worked for a comfortable retirement for years. Now you need to plan for retirement income. Learn ways to avoid common mistakes, like being too conservative or not setting retirement goals. Have someone on your side to keep you on track.
Call for Fisher's Comfortable Retirement Kit with the help you need to make your retirement a success, including the Investor's Guide to a Comfortable Retirement, 13 retirement blunders to avoid, and maximize your Social Security. Call 1-800-759-4477.
Fisher tailors a plan to keep you on track for a retirement you want. And as a fiduciary, we do better when our clients do better.
Call now for your Comfortable Retirement Kit. Call 1-800-759-4477.
If your retirement portfolio is $500,000 or more, call us today. You don't have it coming to you unless you plan for it.
Call 1-800-759-4477.
The future. The way you see it is said to depend on where you sit. At XChair, we think it also gets down to how you sit, which is why our technology is light years ahead. XChair has done it again with our groundbreaking LMX technology, providing hours of infinite comfort no matter where in the world you're sitting. By synthesizing the universe's elements, bringing hot, cold, and touch into one extraordinary seating experience, our mission is to help you discover that every workday can happen with body and mind in an out-of-this-world place of comfort and productivity. XChair is charting a new course, helping workers everywhere find comfort as their work worlds zoom back and forth. Even though your work reality may continue to shift, we've got our eye on the future of work, so you can focus on the present. At XChair, we're gazing ahead. And from where we sit, the future still feels good. Visit xchair.com to find out how you can own an XChair for only $20 a month. xchair.com.
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today, CNBC.
Welcome back. The NASDAQ avoiding losses so far today as tech leads the way yet again. The chip names are some of the best performers on the NASDAQ 100 today. AMD up 5% leading the way. NVIDIA, Lam Research also seeing decent gains, and both of those names are at 52-week highs. And my next guest has been bullish on semis for quite some time, highlighting Micron and AMD on their AI potential. Joining me now is Kim Forrest, Boca Capital's partner CIO. It's good to see you, Kim. Welcome.
Thanks.
Are we getting to a point in which the specialist goes, okay, these people are getting too crazy with these valuations yet for NVIDIA?
Well, NVIDIA is tough because it's always crazy high, in my opinion, but they tend to come through, right? At first, it was Bitcoin mining, and everybody had to have NVIDIA chips for Bitcoin mining. And now it's AI. So are they lucky or good? And I would say both.
Lucky and good, right? It helps. And obviously, they've been on a tear as a result of it. Micron is not a name that I usually hear in the same breath. Why do you think this is a horse to bet on in the AI race?
Sure. Well, they're a maker of commodity products. And the one I'm more interested in is NAND, N-A-N-D. And that is a way to store zeros and ones. And it's getting cheaper all the time as opposed to old spinning disks. So here's the thing. If we're really going to have AI take off and do its thing and make the world a better place, AI eats data, and that's what makes it smart. So you have to store it somewhere. So that's why I like storage companies and NAND in particular.
So let's hope all of these are recession-proof, right? I mean, I do think there's two reasons why people are piling in. One, because the story, especially with NVIDIA, is amazing, but also because we want growth in what could be a challenged growth environment. Have we already priced in a lot of the hope and expectation for how well these companies will do over the next 6, 12, 18 months' time?
Well, I'd say for the next 6 months, probably. I mean, we started off of a very, very low base. And I think that was caused largely by the sell-off in November and December. And that, to me, was just smacks of tax loss sales. So you take a higher priced asset that's now trading lower, and you can offset some gains by selling it and creating a loss. And I think January especially saw the rebound of tech, and that's people buying back those positions because the companies were broken. They were just using it for a tax matter. So, but looking forward, I'd rather look 3 to 5 years out, to tell you the truth, than 18 months. But I think that tech really is going to grow. AI is intriguing, and a lot of companies are going to put their toe in the water, and they are going to soak up semiconductors because you need a lot of compute power. You need to be able to collect data, and it all says everything like that runs through a semiconductor.
Sure. Is there anything, corners of the market, corners of tech, corners of the semis that don't excite you?
I guess maybe the older technologies, but even they may have a place. Like TI does a lot of analog. We'll say that they are the interface between the real world and the digital world, and they may even have a place at gathering data. But we'll see.
Then are you preserving capital to put to work if we get lower valuations in a macro downturn? Or do you just have to say, listen, that may or may not happen. I'll just take what I can get at these levels and, not be overly cautious.
Ero diritti questo.
Somebody that
Allora
tries
chiediamo,
to
ma
avoid a recession, because we've had, I don't know,
Cioè,
something
che
like
va?
several hundred recessions forecast. I'm kidding. We haven't had that many. But there has been, over the past 10 years, a lot of recessions that have never come. And I would rather plan for the future, have my cash flow, have my cash needs met, but invest now and invest into the future.
All right. I appreciate it. Kim, thanks for checking in with us today.
Thanks.
Kim Forrest with Boca. Coming up, what do the Air Force, Uber, and the NFL all have in common? They're using new private weather satellite technology, and SpaceX has a hand in it. Details next on The Exchange. Dow's down 244.
Lily, welcome to our third Barkery.
Oh, I can tell business is going through the woo.
But seriously, we need a reliable way to help keep everyone connected from wherever we go.
Well, and AT&T will help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
Conventional thinking delivers conventional results. At Allspring, we break away with purpose. Harnessing data-driven insights and boundless curiosity. We dissect the market from every angle, helping to build portfolios that redefine what's possible. Because investing isn't one size fits all. Allspring. Purposefully divergent.
We planned well for retirement, but I wish we had more cash.
You think those two have any idea?
That they can sell their life insurance policy for cash, so they're basically sitting on a gold mine? I don't think they have a clue.
That's crazy.
Well, not everyone knows Coventry's helped thousands of people sell their policies for cash, even term policies.
I can't believe they're just sitting up there.
Sitting on all this cash.
If you own a life insurance policy of $100,000 or more, you can sell all or part of it to Coventry, even a term policy, for cash or a combination of cash and coverage with no future premiums.
Someone needs to tell them. But they're sitting on a gold mine, and you have no idea. Hey, guys! You're sitting on a gold mine! Come on,
Do you hear that?
I don't hear anything anymore.
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-571-7900 or visit coventrydirect.com.
Choosing Miracle Ear was a great decision. Like when I decided to host family movie nights. Miracle Ear made it easy. I just booked an appointment, and a certified hearing care professional evaluated my hearing loss and helped me find the right device calibrated to my unique hearing needs. Now I enjoy every moment. The quiet ones and the loud ones.
Make a sound decision. Call 1-800-MIRACLE now and book your free hearing evaluation.
I can do this. Luxury that lets you feel infinitely you.
June 15th, join CNBC's Financial Advisor Summit. Hear from top advisors and market experts on creative risk solutions, potential buying opportunities, tools to generate consistent returns. Register now at cnbcevents.com/FA.
Welcome back. Software turned satellite company Tomorrow.io is working to transform weather forecasting, and it's attracting high-profile clients like Microsoft, Raytheon, and Porsche. Diana Olick is here with the details on its latest launch and what's next. Diana?
Well, Kelly, Tomorrow.io just confirmed it quietly launched the first commercially built weather radar satellite ever last month, and it's about to launch a second, changing weather forecasting capabilities globally.
We're going to create a significant revolution when it comes to weather forecasting and climate modeling, and be able to help the National Hurricane Center hopefully have better hurricane forecasting, and help insurance companies insure farmers in India and Brazil, and help airlines fly from JFK to London in a much safer route and wasting less fuel.
3, 2, 1.
Before the SpaceX launch of Tomorrow.io's satellite, the U.S. had just one atmospheric radar weather satellite operated by NASA. The lag time for its information could be 3 days or more. Alphabet said he intends to launch more than 24 over the next 2 years, in combination with sensor microwave technology, creating a constellation that he claims will sample every point on Earth nearly every hour. Tomorrow started as a software company, uploading hundreds of weather data points to show clients specifically how future weather would impact operations, supply chains, and employees. Major clients now include Delta, United, JetBlue, Fox Sports, Uber, Google Cloud, Amazon Web Services, Microsoft, and the U.S. Air Force, among many others. That list will likely grow as the expanded radar data feeds new AI models.
Because if you don't have radar data, either from the ground or from space, then by definition, the initial conditions of the model are just wrong. And you cannot train the model to get to a higher level of accuracy.
Tomorrow.io has more than $200 million in funding. Combining its existing software with the new radar satellite data could be a game changer for global resilience and even global economies in the face of climate change. Kelly?
Might it be used in my iPhone, for instance, and become kind of ubiquitous?
Everywhere. It literally can be everywhere. It's just upping the ante, giving them so much more data than they have now available, even from land-based satellite, which can be limited due to the terrain.
Are they the only ones? I mean, there have been so many satellite companies the last couple of years, especially with when money was a little bit freer to come by. What makes them stand out from the pack?
Because this is the only commercially built weather radar satellite up there right now. We have the one from NASA for the U.S., and there are a couple of other governments that have some globally. But some parts of the world are not covered at all by weather radar. And so this is really kind of putting the private sector up in space in the weather sector, which they haven't been yet.
All right, Diana, thank you. We appreciate it very much, covering Tomorrow.io. Still ahead, it's been a rough month for SoFi. The shares are down about 25%, and that was despite stronger than expected Q1 results and inline guidance. The street focusing on its lack of loan sales, but one analyst says bears making the case are mathematically and intellectually off. He joins me on set to explain why after this.
With Allegra, allergies don't hold us back. Allegra starts working 2 times faster than Claritin. And unlike Zyrtec, it won't make us drowsy, so you can live your greatness. And Allegra Hives works from the inside to relieve itching and reduce hives for 24 hours.
My plane has mechanical problems. I'll try to get there as soon as I can.
Breakfast looks delicious, as always. Having a chauffeur car plane side helps keep me on schedule. Hi, Jeff.
With all the plane shortages, did you have trouble finding one?
I never have any trouble. I simply pick a plane, pay, and I'm ready to badge it to my destination.
Are there any taxis around? I'm really late for my meeting.
Do we have a deal? Missed you at the meeting today. Badge it and don't miss out on the most important moments of your life.
Call for a complimentary flight.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. When you sponsor a job, you immediately get your shortlist.
Jævlig bra, Horny. Top G, veldig lite, har ikke gjort så mye. Sitter bare rolig. Jeg synes markedet er veldig rart, så jeg gjør ikke så mye. Jeg gjør alt mulig annet hjemme.
There's a better way to get a fast small business loan. Go to ondeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Looks like allergy season is back. Time to start saving on your prescriptions. Another good reason to check GoodRx.
CNBC. Live ambitiously. Breaking target numbers. What they reveal about the consumer. Plus, Martha Stewart. From the cover of SI to building her global brand. Squawk Box, 6 Eastern.
Wendy only met Margot 8 days ago while searching for freelance.
Han gjør seg så jævlig til. Faen og slitsomt, ass. Sånn. Jeg orker ikke sånn, ass.
Are you a small business owner who could use a few $100,000? Employee retention tax credits are an incredible opportunity for you. If you kept W-2 employees during COVID, you may be eligible. Turn to the team you can trust. Get My Funds. They've helped thousands of small business owners receive $300 million in pandemic funding. Their expert team of CPAs files your ERC accurately and will give you an audit safeguard. They only get paid if you get paid. Call Get My Funds today.
Sure, you'll teach her how to drive a car. Then use Greenlight to power her independence with crash detection with 911 dispatch, family location sharing, and emergency SOS alerts. Invest in your best investment with Greenlight.
Welcome back to the exchange. SoFi has become a major battleground stock lately. Since reporting earnings at the beginning of May, the online bank has been hit with major skepticism on Wall Street. Credit Suisse forecasting a growth deceleration in the back half. Morgan Stanley worried about personal loan risk. And just yesterday, Wedbush downgraded the bank, saying it might be at a tipping point when it comes to loan originations and sales. SoFi is down over 25% in this month. But could all the negative buzz be misplaced? My next guest says the bears are weighing down the stock and investors should start paying attention to the yield on the loan SoFi is already holding. Joining me is Dan Dolev. He's managing director at Mizuho Securities. It's good to see you again. Why do you feel the need to come out and defend SoFi here? Or what, let's put it differently, what's the real opportunity that you see?
Yeah, it's a great question. And I think people are just like, I think the bears are mathematically and intellectually completely wrong on this one. So let me explain to you the 3 things they're saying and why they're wrong. The first thing is they're saying they can't sell the loans. And that's why they didn't sell any loans. It's not that they can't sell the loans. We did some work that showed you that they're earning a better yield by keeping the loans on the balance sheet, about 6.4% versus selling them for 5%. So if I told you, hey, you can keep it here, right?
Right.
Why buy the cow if you can get the milk for free?
And that is also a function of high interest rates. When you go back a decade ago, or not quite, but the opposite might have been true. But today the situation has changed.
Exactly, and they're very high quality loans, right? They've got a book of about $9 to $10 billion personal loans.
Well,
750.
Quality might be in the eye of the the consumer when it comes to a macro downturn that we appear to be heading into.
I totally agree, but if you think about it, though, the average FICO on SoFi is like 740 or 750, right? I think it's even higher than my FICO. Don't tell anyone, but it's a very high quality. It's as good as it gets, right? This is not sort of the low quality subprime loans. These are very high quality loans. So if they can keep them for 6.4 rather than selling them for 5, that's a huge trade, and that's why they didn't sell them.
So that was the first point. There were two others.
The two other points is that their accounting might change. That's actually very false because regulators do not allow you to change the accounting. Once you choose an accounting methodology, which for them is the fair value accounting, they cannot change it to the other accounting. So that's not going to happen. Those loans are not going to be valued at par. And then the third one is there was a disclosure that if they needed liquidity, they might have to raise capital. That same disclosure was around, when the S1 or the original 10K came out. So there's nothing new there. So I could refute all three of those bear points, and I think they're completely wrong, both mathematically and intellectually.
Do you say that even being somewhat cautious about prospects for fintech, broadly speaking, right now?
I think this is actually a super interesting question. I think they're at the sort of juncture of fintech and sort of small bank, and I think they kind of fall in that bucket, right? And they're saying, hey, we're a small bank, like, look at us, and it just it puts like more fire on them, but it's completely wrong. I mean, they're getting $10 billion of deposits, $2.7 billion of deposits every quarter. People in my industry use them as their primary bank.
Really?
Yes. And every dinner that I go to, people say, hey, I've just started using SoFi as my primary bank.
What attracts them?
I think the high interest rates, it's very simple. The high yields, right? They're offering like close to 5%. Very, very simple, very intuitive. And you don't need the branches.
So I would be, and probably in the past was very bullish on fintech because of the elegance of the model. But some of the offerings from Chase, all the big banks are now extremely good. And the yield that they're using to attract people, to me, is the red flag here, right? Like if all of fintech is competing on yield, that's not a great game to be playing, is it?
But they're also giving you something else. They're giving you $2 million of FDIC insurance, which a lot of other banks don't give you. So the security and the safety is attracting a lot of people to them.
It's interesting that worked because it's a kind of move, in other words, helping on the back end move that money into different accounts that others could offer, or many others have been offering in the traditional banking space for a long, long time.
Exactly. So I mean, you can put everything in one basket because you can feel secure that your money is safe, and that's what SoFi is doing. And I think that's a huge move for them, and I expect them to get even more deposits over time.
Right. Even though others presumably could do something very similar, maybe they just had the first, with the idea or the sophistication to pull it off. Why are you then kind of more cautious about fintech generally speaking right now?
Yeah, it's a great question. I think that there's a lot of headwinds coming to fintech, right? For example, we downgraded Visa, last year, and that was part of it was because of the cash to card, which is driving about a third or 45% of the growth is coming from cash to card migration. We're hitting the ceiling of that. The more important one, July 1st, the Federal Reserve is coming up with a real-time payment scheme. And FedNow, exactly. It's called FedNow, and everyone's dismissive of it. But if you go back to the DOJ indictment of Visa when they try to buy Plaid, the Visa executives actually said that if they can't buy Plaid, this is in the DOJ indictment, they can't buy Plaid, it's a $300 to $500 million headwind to their debit business by 2024. By the way, that's like 6 months from now.
That FedNow will be, because it's coming into the picture and disintermediating some of that by allowing these easier direct payments. It's a clever thing to do to read their defense of why they want a merger to proceed, and it reveals, and that merger was ultimately blocked?
It was blocked, so they didn't buy Plaid. What should we not believe them? I actually believe them. I believe that they were really worried about Visa Direct, and that's why they wanted to buy Plaid, and it didn't work out.
In other words, are you saying that the Fed is casting a shadow across fintech because of FedNow?
It's just changing. I think that the last mile is a huge winner, so companies like Toast, even companies like Square, that have that consumer relationship are better off than the companies that are once removed and are just either doing the processing or the networks. So it's the last mile. It's the bank, the neobank like SoFi, those are the winners. So things are changing.
And what's your price target on SoFi? Because the downgrade yesterday, I think Wedbush put a $250 price target on the stock.
$9.
$9, so almost a double from here?
Correct.
All right, Dan, you're on the record. Thank you for coming in. We really appreciate it today. Dan Dolev with Mizuho. That does it for us for the exchange, but coming up next on Power Lunch, it's going to be a very busy afternoon. Bentley's coming off a record year for profit and deliveries. We've got the CEO. We will be outside looking at one of their sleekest models. Tyler's getting ready. He's got his driving moccasins on, and I will join him on the other side of this break.
Every business has its own unique challenge and problems. And my business is to help solve those problems by discovering new and innovative solutions. I believe any problem can be solved. City National Bank and April share those same beliefs. No matter the obstacle, no matter the idea, they help me to keep innovating.
Nei, jeg tror ikke hun gidder egentlig.
Full prescription strength reduces inflammation. Thank the gods.
Don't thank them too soon.
Kick pain in the Asper cream.
If you have employees, you need to check out the ERC program, Chef Wonderful. Why, Mr. Wonderful? Because it's cash flow that you don't have to pay back. Good to know. This guy's so smart and so handsome. Go to wondertrust.com to see if you're eligible.
Did you know GoodRx can help you get a better price on your family's prescriptions?
I just opened the app, type in the name of our meds, that's it. Savings on my husband's blood pressure refills, and savings on my daughter's allergy pills.
Prescription savings for the whole family. Another good reason to check GoodRx.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed you do. Indeed Instant Match instantly delivers quality candidates matching your job description. Visit Indeed.com/hire.
Are you still struggling with your bra? It's time for you to try Knix, makers of the world's comfiest wireless bras. For revolutionary support without underwires and sizes up to an H cup, find your new favorite bra today at Knix.com.
At 2 o'clock Eastern, welcome to Power Lunch, everybody, alongside Kelly Evans. I'm Tyler Matheson. Coming up, the intersection of Washington and Wall Street. Senate hearings today on what went wrong at Silicon Valley Bank and what could go wrong with artificial intelligence. Plus, the FTC flexing its muscles again, suing to block a major pharma merger. Plus, a big interview coming up on CNBC later today. David Faber sitting down with Elon Musk after the company's shareholder meeting. We'll get you ready for that. Kelly, plus a lot more.
Very much looking forward to it, Tyler. Thanks. Hi there. Let's get a check on the markets. The Dow's down 223 points right now. The S&P down 9 to 4126. The Dow, by the way, still 30 points below its break even for the year, so it's in the red as of this moment. The Nasdaq still up 0.25%, helped by gains once again in Nvidia and some of the other semi stocks. AMD up 5% today. Home Depot is weighing on the Dow, although it's off the worst levels of the day. This, of course, after its earnings and disappointing guidance. We'll have more in a second. Shares are only down 1.5% right now, still down about 10% year to date. And check out Etsy, falling after Morgan Stanley cut its price target, saying it'll be hard for Etsy to grow sales and profit margins at the same time. Their new price target is $74 a share, and the stock right now, Tyler, is below 92, down 6.5%.
All right, Kelly, thanks very much. You know, economic headwinds coming home to roost. Home Depot, as Kelly just mentioned, reporting a big miss, revealing some potential cracks in the economy's foundation, specifically a slowdown in consumer demand. This, along with retail sales coming in a little bit lower than expected, though they were positive. Courtney Reagan has more on all this. Hi, Courtney.
Hi, Tyler. So it was Home Depot's first earnings decline since May of 2020, and disappointing revenue. That marks actually the biggest miss in more than 20 years for the company. It was also the second straight quarter of comparable sales declines. Before we saw that last quarter, the last negative comp number was 12 years ago. Lumber deflation took 2 percentage points off of sales, and cold, wet weather also hurt that metric. But CEO Ted Decker called out, quote, broad-based pressure, which CFO Richard McPhail tells me includes softness in big-ticket discretionary items, things like patio sets, grills, and appliances, with potentially some pull forward of demand and homeowners shifting to smaller projects instead of bigger ones like flooring, kitchen, and bath. More broadly, though, McPhail notes a shift from goods to services, saying homeowners have healthy balance sheets, but there's an impact of tighter monetary policy and credit conditions. On the call, he attributed the Silicon Valley Bank failure to hurting consumer psyche, particularly in the month of March when it happened. McPhail doesn't, quote, think it's a trade-down economy, but said it's more of a situation where our customers who are financially healthy are choosing to defer larger projects or larger discretionary purchases. A lot going down under the hood sort of these Home Depot results, Tyler.
Yeah, and I think how you began by emphasizing how rare this kind of miss was for Home Depot. They've been a stalwart for years and years and years. So stick around for just a minute, Courtney. Elsewhere on the consumer front, retail sales higher in April, up less, though, than expected, as inflation seems to be having an impact on spending. Let's talk more about what this means for the economy with Peter Bookbar, Bleakley Financial CIO, and also a CNBC contributor. Let me go back, though, first to Home Depot. I am assuming that Home Depot's numbers are not inflation adjusted, so that if they are projecting that sales revenues are actually going to be down 3 to 5%, that is in an environment where prices are actually going up. So the sales decline then, to me, is even greater than the numbers would suggest.
Correct. And one thing that
Thank goodness
Home Depot did not mention is the pace of turnover in existing home sales is near the lowest in 10 years. So when you think about just moving to another existing home, well, chances are you're going to paint the walls, you're going to change the carpet, maybe you'll switch out some of the kitchen cabinets. Well, that's not happening. And I think that is also one missing piece to the customer transactions and the same-store sales that they're not now seeing.
Peter, if I could point out one interesting thought, though, to that is the age of the existing home stock, which Home Depot...
Ja, det kommer mye med signaler. Jeg må bare titte på den PC-en hele tiden. I dag har jeg vært ute og flaksa hele dag.
You're not creating new housing. You have to fix where you are.
Right. But what they also said was that a lot of money was spent the last couple of years.
Right. Pull forward, sure.
Yeah, taking care of a lot of that stuff. So, that's one thing with a kitchen or a bathroom. It's going to be another 10 to 20 years before you redo that. So, yes, to your point about pull forward, I think that's clear.
I mean,
go ahead, Kim.
I was just going to say, if anything, it's impressive that the stock hasn't done worse. I mean, we talked to the CEO of Trex yesterday.
Just 1%, right?
Yeah, I mean, and the Trex stock is up 35% year to date. Floor & Decor is up 35% year to date. Some of this is a 2022 effect, but there are still pockets here where the stocks are holding up okay. Maybe people are taking the long view. I don't know.
Well, I think it's that. I also think that people don't want to miss the Fed is done hiking interest rate rally of anything interest rate sensitive. Now, I think the home builders are rallying because the reduced pace of existing home sales is shifting things to new construction and new home sales that have now a third of the overall market. But I think that it's, that algo that says, okay, Fed's done raising interest rates, let's buy home building and anything related to interest rates.
Courtney, let me come back to something that our friend Tillman Fertitta said when he was with us last Thursday. I'm sure you're watching CNBC 100% of the time at home, so you definitely
Never
saw
miss
it.
a minute.
But he said, hey, listen, when you look back at the earnings from the first quarter, they appear to have been pretty good. But remember, you're making a comparison to a year ago when we were still at the tail of COVID. He says look to second quarter and then third quarter where he perceives a slowing of the economy. These retail sales numbers that come out for what? I guess it was the month of April, right?
Right.
Those would suggest exactly that the wind is a little bit out of the consumer sales, right?
Yeah, I think that is a good point. And I think when we're thinking about different retailers, you also have to think about the calendar in a different way too, just to sort of be a little nuanced about the conversation because we started out talking about Home Depot. The spring selling season is going to be way more important for a Home Depot, say, than a Macy's, where the back half of the year is going to be very important for them. So I think that there are some nuances as well in the timing, but I take Tillman's point.
Yeah.
One quick final point before we just close the retail discussion. It wasn't just Home Depot, and you're absolutely right, Tyler, about the real retail sales. In fact, Peter, I'm sure you saw this, down 3 to 4% year on year, declining real sales, increasing claims and continuing claims. I mean, this is not a good recipe.
Right. We see how this is now heading towards.
Yeah.
And also within retail, people are spending more on food, beauty, drugstores, and travel, leisure, hospitality, and just pulling back dramatically on discretionary stuff. Yeah, goods they bought a lot of the last couple of years, but that's also tends to be the higher ticket stuff that they're pulling back from. And we're seeing higher delinquency rates in autos and credit cards. So there's a clear trend here that we need to keep our eye on.
All right, Peter, you're going to stick around. Courtney, thank you very much for your reporting. We appreciate it.
Let's move to shares of Horizon Therapeutics now, which are down sharply after the FTC is suing to block its takeover by Amgen for nearly $28 billion. They're down about 15%, Amgen down 1.5%. And you can just add this to the growing list of mergers that are kiboshed, either in or could be in the same position, facing government opposition. Microsoft Activision, the biggest, but also Spirit and JetBlue, T-Mobile and Ryan Reynolds Mint Mobile, among others. And shares of Seagen are down 5% today on worries its takeover by Pfizer for $43 billion could also catch the eye of regulators. And Pfizer could use the boost. Its stock is down 27% this year, the worst of any stock over $100 billion in market cap. Now, obviously, there's a huge business impact here, and we'll get to that. But let's also start with the human toll. Horizon is working on treatments for rare diseases. Would those treatments get developed more quickly and easily if Amgen took over or not? Let's ask Michael Yee. He's managing director with Jefferies. Michael, what's the implication here for the drug pipelines?
Hey, good to see you. I mean, I think there's two important implications. First is that the acquisition of Horizon is supposed to benefit this drug because of the large infrastructure that Amgen employs both here in the U.S. and globally, where Horizon was not expected to be able to have the capabilities to market this drug outside of the United States. And secondly, with the resources and R&D capabilities of Amgen and the huge pipeline, to be able to further develop that drug and other drugs at Horizon.
So that being said, you know, if there were a case to be made that this would benefit patients to move forward, why do you think it would be, on what basis could it be blocked?
Well, I think we are very clear with both notes out today that this transaction should go through and will go through, and that the FTC behind Lina Khan is making the efforts very aggressively to deter at any cost biopharma acquisitions. This is a platform that they ran on, that the case which is laid out, we believe, and Amgen has a release out, has to do with bundling and all sorts of past behavior, and somehow tying that to future behavior, of which Horizon and Amgen have agreed not to bundle and not to do anything that will harm the consumer. So we believe that this transaction will go through. However, the FTC has just been very aggressive about it.
They're being very aggressive, and I assume you think this is going to chill the M&A market in biopharma.
We do. In the short term, you know,
Hadde jeg shorta nå, så hadde jeg hatt penger. Har jeg shorta nå? Hva sa du for noe?
A little bit, but importantly, we believe that this it would slow and make people consider whether or not they will go ahead with larger transactions. You know that this deal is about a $30 billion deal. Pfizer Seagen about $43 billion. However, think about this, Tyler. These companies still need to pipelines. There's still IRA risk in the future from any
Hvordan løser man det?
Nei, det er at du skal ta den flite av kappen som ligger ut.
Ja.
Så bare her står den kan skyves ut og inn.
Må en jobbe også, kanskje?
Nei, det spiller ikke rolle at oppåseskjøpene. Men finner høyde på skjermen, så vil den foten på
Thank you for joining us. We appreciate it. Talking about the toll there. What about the business impact, Peter? I mean, I guess to put it more broadly as well, this is hardly just about healthcare and pharma. We are seeing an administration that almost feels like they don't want any deal making to happen. What will the ramifications be?
Right. Originally, the FTC would block a horizontal merger because they don't want you to get too big. Now they're blocking vertically integrated mergers and mergers of a company buying a business where they're not even in that business yet on fears that that company would dominate that new business. So if I'm the CEO thinking, okay, I'm going to make an announcement, I got to go through months, maybe years of the regulatory process, and then have Lina Khan just strike it down, I'm just not going to bother. And it's going to freeze any type of M&A.
Do you think deal making has
been suspect?
I don't mean to interrupt, but is there a case in which deal making or combinations have been bad for markets, bad for the economy? You know, is there a case to be made that all of these combinations just result in, you know, 5 big tech companies and are bad for business or bad for everybody?
We've learned that the economy is so dynamic, technology changes so fast, that to think that somebody can dominate a particular area for that long, I just think is not realistic. And technology is the perfect example. I mean, the government went after Microsoft when they had an 85% market share, thinking they're the dominant player, and we know what happened since. So I think that there's a tremendous amount of overreach here that is just freezing behavior, and it's that the FTC just wants us all to stay in our individual silos forever, and there'll be no change, and we're all going to be stuck in this, and not believing in some sort of progress or technological innovation that creates its own competitors constantly.
Yeah.
All right, Peter, thank you very much.
Thanks.
All right.
Thank you.
Peter Bookbar. Coming up is the worst over for regional banks. We should throw you that one too, Peter. The KRE is up 3% this week, but obviously down quite a bit for the year. Overall, the tide seeming to calm for the moment, but what comes next? Some firms like Morgan Stanley say a short squeeze could be ahead for the group. Others think more declines could come.
Plus, OpenAI's Sam Altman testifying before the Senate as the surging popularity of ChatGPT and other AI platforms triggers a debate over the possibilities and the perils of AI. We will wrap up the key takeaways there.
And as we head to break with the Dow down almost 260 points, a quick power check. On the positive side, AMD today. Dan Loeb's Third Point took out a new position in that name along with Alphabet and Alibaba, according to filings. Shares are up 5%. On the negative side, Paramount. Few bearish takes from Wall Street today, including a price target cut at Barclays. Those shares of Para down 5%. Power Lunch is back after this.
This CNBC program is sponsored by Bright House Financial. Build for what's ahead.
Hi, I'm Todd. I'm a veteran of 23 years. I served 3 overseas tours. I love to give back to the community. I offer what I can, when I can. I started noticing my memory was slipping. I saw
Mikro.
a commercial and I did some research on it.
Ja, men jeg blir mange med der. Jeg må bare sitte foran PC-en, så blir jeg det. Ikke kjøre bil, så går det bra.
Memory has improved and generally just more on point.
Prevagen at stores everywhere without a prescription.
Før så tjente jeg så penger at jeg fikk ikke brukt dem opp. Det var tidligere.
I'm listening.
Voilà, skal kjøpe han huset i morgen. De ringte banken, vil lånkaffe, smøre vel. Lånkaffe, smøre vel.
Yep, that's a big one.
Ja.
Now you've built something better for everyone.
Da hadde jeg jo inntekter på 1 million i måneden, så jeg fikk lov til å faen jeg ville. Trengte ikke egenkapital engang. Jeg hadde ikke egenkapital da jeg kjøpte huset. Det var bare jævla høyt.
The return on investment for the investment club has
Ikke
been
noe
very
oppspart.
positive for me. One is the education, but then it's also the ability to understand what's happening in the markets.
With the investing club, I've learned that
Har Morten blitt junkie med Ulysve? Nei, han er blitt min assistent. Og han fikser til alle. Fy faen, det blir fint der altså. Dere aner ikke. Bare dritt at Sahar ikke får sett det, men her blir det fint altså. Fy faen. Jeg fikk meg TV i dag da. Største TV-en jeg har sett i mitt liv. Jeg fikk så svær TV i dag at jeg har ikke sett så stor TV for en liv. Den er så svær. Det blir fint her nå.
Can't wake him up. So it's Instacart to the rescue for my new rescue. Food gear and plenty of cleanup. When you want to give your new pet the world.
Jo, jeg har kinorom.
Visit instacart.com or download the app.
Den er gigantisk. Den er på 150 tommer. Og så er det en TV her nå som jeg fikk i dag. Som er så svær. Den er gigantisk.
It's okay to ask for help. Find a licensed therapist at betterhelp.com.
I hvert fall oppe i eska. Den er ikke skjær som en vegg. Jeg tror ikke man kan henge på veggen. Jeg tror ikke veggen tåler det. TV-en veier 70 kilo. Tror du tåler det?
But Bank of America is starting to get selectively bullish on the industry, resuming coverage of Western Alliance and First Horizon. And why is the dust starting to settle here? Joining us for more on his call, Ibrahim Poonawala is B of A Securities Analyst. It's good to see you, Ibrahim. Welcome.
Hey, Kelly, thanks for having me.
So this is a tough area, but we have seen quite a bit of investor interest. Michael Burry, even Sheila Bair the other day told us she thought maybe some of the regional banks could even be buying opportunities. So tell us what triggered your buy calls here.
Sure, and I think, as you mentioned, it is a tough area, and the outlook for the banks and regional banks was tough coming into the year, right? You knew margins were going to be under pressure, growth was slowing down. We are all worried about an economic recession at some point in the next 6 to 12 months. So I think it was a tough backdrop. What you've seen following the SVB failure is this concern around just deposit flight. It does feel things have stabilized a little bit. What's not
Hallo.
stabilized and what's going to play itself out over the next
Halla.
quarter or two, and
Et spørsmål.
investors are trying to figure out is
Jeg har kjøpt sånn der, sånn spilevegg, ja, jeg har kjøpt det. Men den er jo alt for svær, den er for lang. Jeg må kappe den kanskje 20 centimeter. Klarer jeg å gjøre den saga, eller blir den ødelagt da?
Let's talk about the two banks that you have just
Er det ikke en saga et eller annet sted?
at buy ratings. One is Western Alliance. Take that one first, and then First Horizon. What do you like about
Jeg må kappe hele toppen, for den er alt for lang. Den er 20 cm for lang. Ja, går det? Jeg er alene her, skjønner du.
The distinction we made, and we called this out in the report, was when you look at the banks that have failed, 80-90% of their deposit base uninsured. When you look at Western Alliance today, about 80% of their deposit base is actually insured. So it's the reverse.
Jeg gidder du det, for da fikser jeg det.
And from deposit insurance, beyond that,
Jeg bare kappe den, bare for kappe den liksom, så får jeg satt den opp på veggen.
This bank was extremely profitable. So coming into the year, Western Alliance had a return on
Perfekt. Når du kommer da, så har jeg klart det andre. Jeg fikk meldingen hos deg. Det skal kose deg i morgen da. Jeg skal være alene. Halla. Ja.
They've been in the eye of the storm, and I think management team, and we've seen this over the last 2 months, has done a decent job navigating all of this. And when we look at the
Ikke da ringer deg på dagen vår da.
40% discount to tangible book,
Ok, greit, takk.
And we like the risk reward. So it's not out of the woods. I think we need some sense of stability, but you have a bank that's highly profitable, a management team that's done a good job navigating this last couple of months. And when we look at the outlook, I think the risk is skewed to the upside with Western Alliance.
All right, Ibrahim, thanks for your time today. We appreciate it.
Thank you.
Ibrahim Poonawalla.
All right, the other big hearing today in Washington focusing on AI, and Deirdre Boza is following that one for us. Hi, Deirdre.
Hey, Tyler. Well, you know, this time around, we've seen many tech hearings over the years. This felt way less combative and a lot more collaborative. Sam Altman, the CEO of OpenAI, and lawmakers, they seemed on the same page a lot of the time in terms of the opportunity, but also the dangers of AI. And they seem to understand that the stakes are very, very high here. Within the first, let's call it 15, 20 minutes of that hearing, generative AI was compared to the first cell phone, the creation of the internet, the industrial revolution, the printing press, and the atomic bomb. They talked about nightmare scenarios, and Sam Altman talked a lot about how he thinks regulation will have to go hand in hand with responsibility from companies, as well as public education on this. So it was a lot in there, guys, but it was a very different kind of tech hearing than the one we've become accustomed to over the last decade or so.
Så kjører jeg hjem for å pakke, og så skal du til byen.
Than accusatory, right?
Yeah, exactly. And they seemed, you know, the lawmakers wanted to learn, and Sam Altman had a lot of these questions because this is really early, right? This is not reactive like we've seen with social media when we've seen all of the unintended consequences come out and try to put Pandora back into the box. That's not the case with AI. This is all coming out right now, and lawmakers are trying to be early. In terms of actual concrete legislation, didn't hear a lot with regards to that. Again, this is early, so I think that they're trying to understand it before they put in sort of those harder guardrails.
You know, let's go back a couple of years ago when people were saying about blockchain, that it was going to be bigger than the internet. It was going to make all of these revolutionary, and maybe it has, maybe it will, I don't know. And now many people are saying the same thing about AI. Can you draw any comparisons between the two here in terms of how disruptive and explosive AI will be compared with blockchain, which was so last year, so 2020?
Yeah, I think with blockchain, we haven't seen actual impacts, actual use cases from it, even though the promise is still there. And many people here in Silicon Valley would tell you that that remains intact, even with the rise and fall of different cryptocurrencies and blockchain businesses. Generative AI is far different because this has already been changing the way that we search, the way that we view Netflix, the way that our social media is delivered to us. It's already been happening behind the scenes to great effect. Generative AI, of course, is now putting artificial intelligence in the hands of consumers to do tasks that previously could only be done by a human. So it's doing things, and we're seeing that impact day by day. We're seeing business models rise and fall on the back of it, which is different than blockchain.
Absolutely.
Gotcha.
Deirdre, thanks. Further ahead on the show, a drive-through here at CNBC headquarters. You know, I can name about 5 drive-throughs I'd like. This might be one of them, though. Some show and tell with Robert Frank, alongside the CEO of Bentley. That's coming up in just a couple of minutes. We'll be outside. Beautiful day for it.
Chick-fil-A in your new Bentley.
Exactly. Maybe we take it for a spin, go pick some up. We're back after this.
Tech Check is sponsored by Comcast Business, powering possibilities.
Lily! Welcome to our third Sparkery.
Oh, I can tell business is going through the roof. But seriously, we need a reliable way to help keep everyone connected from wherever we go.
Well, at AT&T, we'll help you find the right wireless plan for you, so you can stay connected to all your drivers and stores on America's most reliable 5G network.
That sounds just perfect.
Terrierific.
I Labrador you.
Round of applause.
AT&T 5G is fast, reliable, and secure for your business.
IC High Pro starts working instantly with 2 max strength pain relievers. So you can rise from pain like a pro. IC Hot Pro.
Double check that. That's pretty good. Not crying, are you? Let's tighten that.
Ooh. Wait, what was that?
What? No, don't worry about that. Here we go.
Asking the right question can greatly impact your future.
Are you qualified to do this?
What?
Especially when it comes to your finances.
Do you have a question?
Are you a certified financial planner?
Yes, I'm a CFP professional.
CFP professionals are committed to acting in your best interest. That's why it's gotta be a CFP. Find your CFP professional at letsmakeaplan.org.
From roof to foundation, the damage to your home can be devastating from clogged gutters, leaking roofs, and flooded basements. Protect your entire home with Leaf Filter. Leaf Filter's micromesh screen is guaranteed to filter out everything except for water.
It's protected my home. I love it.
Call 833-LEAF-FILTER or go to getleaffilter.com for your free gutter inspection and estimate. Call or log on today and save 15%.
It's hard to run a business on your own. Make it easier on yourself. With Shopify, you can have everything you need to streamline your shipping, returns, and product storage so you can focus on growing
Skoleprosjekt.
The future is bright.
Ja, de var tom for penger i... Er ute i 2024, da er de tomme for penger. Hvordan var det året da?
Elon Musk with David Paper, a CNBC special presentation. Immediate reaction to the Tesla annual meeting. Insight on what's ahead for Twitter, SpaceX, and AI. Live 6 p.m. Eastern today. CNBC.
Men utbytte, hvor ofte har det hvert kvartal eller måned eller hva er det for noe på OKEA?
Let's get a check on the bond market with yields right 355 on the 10-year. I thought I saw, Rick. What's going on?
Yes, yields are definitely starting to move up a bit. And one of the reasons, of course, well, let's start out with the very short maturities. Let's look at a 1-month bill. 1-month bill hovering just ahead of 550 on yields. You can see there, these are historic moves. All the rest of the T-bill market is doing well. That one, of course, stands out because many are using it to handicap the debt ceiling issues.
Det selskapet var priset til 700 millioner eller noe sånt, 4 greiene.
That are experiencing inflation, especially in the last 24 hours, the story is how sticky they appear to be. Look at it, 2-year note yields, you can see at 8:30 Eastern, they shot up a bit. Retail sales hasn't had a great year, but it did rebound a bit, and the most recent data pushed yields up a bit. If you look at a 2-year going back towards early April, you could clearly see we're moving towards some of the highest yields of the month. And one thing you want to pay particularly close attention to is how that 10-year note yield closes right around that 357
Kommer tilbake alle sammen. Veldig glad for å ha med trykk og trykk. Tusen takk for at du tar tid til å være med i episode.
All right, Rick, thank you very much. Oil is slightly lower on the day, but today
det har skjedd mye innenfor bitcoin og kryptospace, men liksom det siste som liksom var sikkert litt i nyhetene med det, så kanskje folk har fått med seg, så vi kan bare starte og liksom trådle litt rundt det, og på en måte det som har skjedd i El Salvador. Hva synes du betydningen av det, at det på en måte blir et lovlig betalingsmiddel der nede, og hvordan ser du på det?
Jeg synes det er spennende.
direkte spennende, spesielt når vi, I hvert fall de som henger på Twitter, har jo fått mer eller mindre live både fra Erik Dale og fra Torkil Hogstad, hvor de mer eller mindre kruste rundt I hele landet og prøvde å finne hvor de kunne få brukt bitcoin til noen forskjellige ting da. Og det at man, ja, for oss, eller for meg I hvert fall, som har på en måte levd opp I et liv hvor bitcoin og sånt ikke har vært en del av det hele, så det på en måte en historie som skrives. Og selv om det ikke var det, så føltes det på en måte veldig ekte. Jeg var der gjennom de to, på en måte. Det var på en måte høydepunkten å våkne opp om morgenen og følge med hva de har funnet på. Og det at et land som El Salvador nå har gått og innført det som lovlig valuta, og så ser du jo at Ukraina har gjort det samme her I Europa. Det blir spennende det også. Men du ser jo andre land I Sør-Amerika som nå snuser på det samme. Så om noen fortsatt I tvil, så det jo at bitcoin har kommet for å bli. Det jo det ikke akkurat noe smått med, hvis du har fulgt med I hvert fall de siste 12 månedene. Alle som investerer, banker som tidligere har sagt nei, som nå har sagt ja. Så vi har en spennende tid I møte, men det utrolig mye som må bygges videre da.
Du må kjøpe krypto for de som har sagt nei til bankene sier ja nå. Så mye spennende som skjer. Det veldig bra, ekstremt dypt analysert svar. Du vet at krypto har kommet for å bli, fordi det ser du det siste året. Fordi bankene har sagt ja.
Med det også. Men du ser jo andre land I Sør-Amerika som nå snuser på det samme. Så om noen fortsatt I tvil, så det jo at bitcoin har kommet for å bli. Det jo det ikke akkurat noe smått med, hvis du har fulgt med I hvert fall de siste 12 månedene. Alle som investerer, banker som tidligere har sagt nei, som nå har sagt ja. Så vi har en spennende tid I møte, men det utrolig mye som må bygges videre da, for at det faktisk skal ha den masse adopsjon som...
Altså, har han peiling, eller hva det for noe? Men har han peiling, eller er han utdannet progrer, eller hva greia for noe?
Alle har drømt om I ganske mange år.
Definitivt. Hvis du liksom går liksom da sånn helt tilbake på deg selv, da, hvor tidlig I oppveksten din hadde du på en måte en interesse for teknologi? Kom det ganske tidlig, eller er det ting som liksom har modnet underveis?
Ja, det kom ganske tidlig. Jeg har en eldre bror som også har gått teknologi videre, og han var på en måte den som satte interessen I meg. Han var jo den som bygde datamaskin, så var jeg som fikk lov til å spille Pac-Man. Det var jo sånn det hele startet. Selve utviklingsdelen kom kanskje litt senere. Kanskje så sent som midten av bacheloren egentlig. For jeg var veldig usikker på hva jeg egentlig ønsket innenfor teknologi. Spill har jo på en måte alltid vært en sånn vesentlig del av livet. Men for meg så jeg det jo ganske klart at jeg tror ikke jeg god nok I matte, rett og slett, til å drive på med alle disse modellene til enhver tid. Og det var ikke det som appellerte egentlig. Det var på en måte følelsen å kunne spille. Og føle seg, gå inn I en verden, komme ut igjen så plutselig klokken 3 om morgenen. Mens selve det som jeg driver på med nå, på en måte det jeg har funnet ut, på en måte jeg brenner mest for. Å kunne bruke teknologien til å bygge ting. Bygge noe som folk bruker. Og jeg fikk veldig mye mer smak etter masteren, rett og slett.
Nettopp. Og hvordan år vi I første gang du hører om bitcoin da? Hvordan år det?
Jeg hørte jo faktisk om bitcoin I 2012-2013. Jeg hadde en kollega som sa bare jeg har tatt hele lønnen min og kjøpt bitcoin. Jeg bare, hæ? Hvorfor har du gjort det? Altså, jeg skjønte på en måte ikke helt bitcoin før 2015-2016, før jeg virkelig fikk tid til å sette meg inn I det. Før det har jo på en måte vært fokus på feil I skole. Fokus har vært på å spille og kjæreste, og skole har på en måte vært tredjeplassen. Men Når jeg på en måte gikk inn i arbeidslivet og fikk mye mer tid, og det ble på en måte en del av det å være konsulentliv og bruke fagtime, hvor jeg kunne dykke meg veldig dypt ned i ting og lære meg om dette her. Og da jeg på en måte ble veldig solgt da, en sånn ekte FOMO-følelse. Og det jo, det var veldig spennende på den tiden. Det var jo på en måte også en av de første gangene jeg kjøpte noe.
Morten, hva heter det? Vegghenger? TV-vegghenger? Det jeg skal henge TV på. Hva heter det for noe? Veggfeste. Veggfeste, for faen.
Annet enn fond.
TV-veggfeste?
Fond var jo veldig enkelt. Pengene bare forsvant fra konto rett etter at lønnen kom inn. Mens dette med Bitcoin var sånn, ok, nå skal jeg sende masse penger ut av kontoen min, rett til Coinbase. Da skal jeg kjøpe noe Bitcoin, og så ser vi hvordan det går. Og denne berg- og dalbanen man føler som man gikk gjennom det var ikke noe jeg ønsker å komme tilbake til, så jeg har endret helt investeringsstrategien etter det. Men det var på en måte, ja, jeg angrer på at jeg ikke gjorde det samme som min kollega på den tiden. Det var sånn der Bitcoin var på sånn $1000. Ikke det engang. Det var jo sånn der, han sa bare, ja, det går jo mye opp og ned, bare. Hvor mye går det opp og ned? Sånn, 30-40% om dagen, da. Er du gal? Jeg er jo student, jeg kan jo ikke bruke penger på den måten her, og det må være litt forsvarlig. Så risikoviljen har kommet mer etter at jeg har begynt å forstå, rett og slett.
Men han her kollegaen da, han innenfor kryptospace nå også, eller lever han bare det gode livet?
Jeg har faktisk ingen anelse. Vi snakket ikke etter at jeg sluttet der. Det var jo... jeg håper for hans del at han holdt. Om han holdt, så kan du i hvert fall si at han lever virkelig det gode liv nå. Så... ja, kanskje jeg skal sende det en melding. Om han fortsatt holder noen bitcoins. Det er jo ikke akkurat lite en bitcoin nå.
Definitivt.
Hva var det for noe, Morten?
For de som ikke så teknisk anlagt, da, hvordan liksom, du har pitchet bitcoin og krypto og oppbygging av børs til sikkert tusenvis av folk. Hvordan har du funnet noen måter du liker å definere det på for folk som ikke så teknisk anlagt, for de som skal forstå det?
Ja, vi har jo ganske mange gode folk i kryptospacer som har forklart det. For min del så liker jeg på en måte å på en måte gjøre det mer åpenlyst at Bitcoin jo på første gang du har et pengesystem som virkelig et system hvor du ikke kan printe ut sånn uten videre helt ukontrollert. Men det Bitcoin tilbyr at du faktisk for første gang i ditt liv kan sende penger mellom to parter. Altså du kan faktisk eie pengene dine. Det jo det som gjør det så spennende, spesielt for meg. Det å eie penger, sånn virkelig eie penger, jo på en måte helt unik egenskap ved Bitcoin. Og så har du jo en teknologi som mange mener på en måte dårlig, svindel, men at man har jo nå muligheten til å forme teknologien på samme måte som folk formet internett.
Jeg trodde det var han
Ingen som hadde fantasi på at internett skulle bli sånn som det blitt nå. At du har alt ved fingertippene dine på en liten mobil. Det jo altså, det jo litt sånn jeg føler Bitcoin men for folk flest, Bitcoin jo mer enn bare et investeringsobjekt. Det en faktisk eiendel som du kan ha, som kan flytte og ta med deg. Og det jo kanskje det som ikke veldig mange tenker over. Det gjelder jo egentlig strengt tatt en god del kryptovaluta, men jeg jo hovedsakelig fokusert på Bitcoin og Ethereum. For det der jeg mener i hvert fall mye av innovasjonen skjer, men nå kommer det så mange opp som gjør masse forskjellige ting. Men Bitcoin i seg selv, det jo det første håndfaste eiendel du har hatt de siste 11 årene.
Når du sitter i de her møtene da, med folk, hva de beste motargumentene du har hørt da, hvor du virkelig har måttet ha tenkt, eller virkelig argumentert videre på en god måte?
Ja, jeg har hørt mye. Det første jeg hører jo rett og slett dette argumentet folk har brukt om at Bitcoin sløser med energi. Det jo på en måte det som har vært veldig populært. Det jo nærliggende å tro når man sitter fra utsiden og ikke forstår hvordan hele hele sikkerhetsmodellen til Bitcoin fungerer. Altså, du trenger energi for å sikre det, fordi det er jo mye datakraft som må til for å generere disse mattestykkene som skal sikre nettverket, men man ser jo også at det hele greien er jo på en måte et spill da. Det er jo første til å finne den billigste måten å få energi, til å kunne generere, eller få mer strøm, til å få mer maskiner, til å generere raskere for å vinne på en måte gevinsten som kommer ut når man utvinner Bitcoin. Når du sitter og hører på diskusjonen nå, så er det jo bare Bitcoin bare sluker energi, uavhengig av hva den gjør, og en transaksjon koster mange tusen kroner. Men det er jo ikke sånn det funker. Strømmen brukes uavhengig om du sender en transaksjon eller ikke. Det er å forsikre på en måte hele verdien Bitcoin står for. Så det er jo et av de største argumentene. Det andre er jo at hvorfor trenger man Bitcoin? Vi i Norge, vi lever jo i et land, og vi har jo fortsatt veldig stor tillit til hele systemet. Vi har det veldig godt. Vi har det egentlig veldig godt på alle mulige måter. Ikke bare utenfor når det er snakk om penger, men altså hele det gründerlivet. Vi lever jo i et samfunn som har laget opp et veldig fint sikkerhetsnett, hvor du gjerne kan prøve å feile, og det er jo ikke noe galt å feile. Så
det lukter litt rart av kameraten her. Jeg hører han prate.
Ingen forstår på en måte hvorfor du trenger Bitcoin, og hvorfor noen i hele tatt skal kjøpe Bitcoin. Er jo på en måte det El Salvador og egentlig alle u-land kan bevise. Vi har jo mange som kommer på intervju hos oss, gjerne folk også fra utlandet, og de har jo for eksempel gått flere prøvelser hvor de har eid penger i banken, og så har det gått dårlig, så har banken bare på en måte stengt alle uttak. Og 2 år senere så får du pengene ut igjen, men nå må du veksles til lokal valuta, og så har du jo bare mer eller mindre shape av 15% av dollarbeholdningen du holdt for 2 år siden. Men de bestemmer også når du får lov til å ta i pengene dine.
Gir mening. En annen ting som liksom har tatt helt av, det er jo NFT-er. Og kanskje bare et litt enkelt spørsmål for liksom å få dine syn på det. Liksom, hvorfor har du selv valgt liksom å bruke penger på å kjøpe et bilde av en pingvin? Vi kan jo liksom bare starte der, og så...
Ja, selve pingvinen startet jo egentlig bare at jeg synes det var veldig søtt. Rett og slett. Det var så simpelt som det. Det er jo NFT-er i seg selv, det er jo på en måte en sånn sosial status. Vi har fått mange spørsmål hvorfor jeg i Hullestad har brukt penger på en pingvin, og hvorfor i det hele tatt det skiller seg ut i forhold til alt annet. Og NFT-er er på en måte klart å bygge en annen form for community. Altså den følelsen av at du eier noe, på lik linje som mange mener at Bitcoin er unikt, og det er det, og det er veldig få av de i omløp, så er det samme med NFT-er. Altså det hele er jo kryptografisk signert hele gangen. Så du kan se hele transaksjonshistorikken. Det at jeg nå har tatt bildet ut av pingvinen jeg eier og lagt det på Twitter, er jo mer eller mindre en sånn gentleman's agreement. At hvis det er flauere for å bli tatt for å ta bilde av en pingvin du ikke eier, enn det du faktisk eier. Så jeg har fortsatt til gode å se noen som har tatt en bilde av noe, og så ikke fått rett for det. Så hvorfor jeg kjøpte pingvinen? Nei, det var en ren torsdagskveld. Kanskje litt impulsivt. Nei, den pingvinen her, den var søt. Den likte jeg. Jeg likte hatten, så da kjøper vi den. Så jeg har jo ikke noe bra svar på hvordan jeg kjøpte, annet enn at jeg ikke riktig å si at jeg kjedet meg, men jeg var rett og slett interessert i hva jeg husker disse pingvinene var for noe. Så var det bare å kjøpe.
Men det er jo kanskje liksom et godt poeng også innenfor krypto. Altså, det skjer jo ekstremt mye. Liksom, det skapes nye ting overalt. Og på en måte, en av kanskje de beste måtene å liksom forstå og lære seg ting er jo på en måte liksom, få insentivet til å lære og kanskje kjøpe litt og være en liten del av prosessene for å lære seg ting. For det er noe med at hvis du sitter bare og leser, så kan ting bli veldig teknisk. Skal du liksom lese deg ned på NFT, så har du liksom en tung kveld foran deg, men skal du liksom utforske litt og være på OpenSea og kjøpe litt, så er det på en måte en helt annen, det er mye mer artigere å lære da.
Ja, helt klart. Altså, jeg lærte ikke hva Bitcoin var før jeg på en måte kjøpte min første Bitcoin. Altså, hvordan man kunne sende. Og det å sitte der og spinne opp masse lommebøker bare for å kunne sende mellom, for å forstå hvordan det hele her fungerte, og så gå ned i den. hvis jeg ikke hadde kjøpt bitcoin og bare sluttet å lese på utsiden, jeg tror det hadde vært mye mindre attraktivt for meg. Det er ikke alle som på en måte lærer å sitte og lese teori. Du må nesten ha den praktiske følelsen av det. Og jeg tror det er akkurat det samme, det gjelder egentlig hvilke som helst ting du går inn i. Altså utenfor krypto. At du må nesten, ja, for det første ikke investere mer enn du har råd til å tape. Det er jo alltid viktig. Det er jo et poeng egentlig alle burde si hele tiden. Men at du bør sette deg inn og på en måte ha litt skin in the game. Det skal på en måte gjøre litt vondt, men ikke nok til at hele livet